And so there's this kind of massive exponential curve of increase in infrastructure. And then you add on top of that things like security because of Mythos and what's happening over there. And you see different models that are going to be there from OpenAI and from Anthropic that are going to be very, very potent. I think there's going to be a tremendous amount of emphasis placed with every class of customer we have, whether it be a hyperscaler, whether it be a neo cloud, a sovereign cloud, a service provider, or the enterprise, in completely kind of changing their architecture to go out and accommodate for these new patterns of work, the new ways that security is going to be implemented, the new kind of exploits that the agents are going to be participants in and drivers of sometimes, and they'll also need to be participants of the defense against the agents through machine scale.
I'll address that and what you're doing on that front in just a second. But that was pretty mind-boggling what you just said, that in 2 years, all legacy code will be re-architected as far as Cisco is concerned.
There will be no such thing as legacy companies anymore. That's a thing of the past. Because.
But what does that mean exactly?
So what does a company, by the way, this.
Hello, good morning. You're tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. With me is my colleague Rachna as well. Rachna, a very good morning to you. And
good morning, Vinny.
Expecting a good start today for the market.
Hopefully we have a good start. But let's start with the headlines. Wall Street indices closed lower in a choppy session as investors await June job reports data for clues on the Federal Reserve's policy path. Nasdaq leads the fall due to rotation out of semiconductor stocks.
And chip rout spills over Asia. South Korean market Kospi leads losses as shares of Samsung Electronics, SK Hynix shares stumble over 7%. The GIFT Nifty is suggesting a higher start for the Indian markets.
Both US and Tehran conclude indirect talks with mediator Qatar, signaling positive progress on issues related to the Memorandum of Understanding signed on June 17. Tehran says a communication channel will be established with Washington to report and discuss breaches of the MOU.
And oil prices continue to see a downward trajectory, falling to over 4-month lows as progress in US-Iran talk cooled supply concerns. Meanwhile, gold prices gain on soft US jobs print and easing inflation risk.
A parliamentary finance panel will meet RBI over crypto regulations in what will be the committee's 8th stakeholder consultation on crypto regulations as the government intensifies deliberation on shaping India's crypto policy.
Those were the top headlines for you all this morning, but let's look at how the Asian markets have opened up, right? While we're seeing Hang Seng, which is managing to hold on to gains in the trading session today, strong gains, 1.9% to 2% gains there. We're seeing Taiwan index on the flip side, that's seeing cuts of 0.8%. You have the Nikkei, that's the Japanese index, that's seeing cuts of almost 1% as well. And when you talk about the Kospi, that's the Korean index, that has also seen a fall in the trading session as well. Kospi is down more than 2.8%. And obviously what's leading the fall in the Kospi as well is that AI trade and AI worry that is coming in here as well. So the stocks related to that in Korea are seeing a decline. Even the small cap index of Korea, that is the Kosdaq, that is also seeing a fall of almost 4% in the trading session in the morning trade. So that AI worry seems like that's coming back, and that's why you're seeing Korean index also see a fall. In the US markets also, you're seeing some of the names like Micron Technologies, SanDisk, which also saw a fall overnight as well. But Nifty implied open for the Indian markets. How is that looking, right? We're expecting a green start today for the Indian markets. A gap up start, 83-point uptick is what the Nifty implied open is indicating as of now. Yesterday, we managed to close just about the 24,000 mark. Today seems like that run-up is going to continue. Today is a Sensex weekly expiry as well. So let's watch out for what happens in the trading session, whether we see any volatility. But as of now, a green start, Rachna, is what we are keeping an eye out on.
All right, then. Now to understand how will overnight cues impact the Indian market, we have our research team joining in with how the trade setup looks like and the stocks that are likely to be in news today. First up, Vivek joins in to get us all the market cues we need to watch out for. Good morning, Vivek.
Well, good morning. What we are looking at essentially as far as equity markets as well as commodity markets worldwide are concerned is a bit of a risk-off sentiment that we've seen, especially as far as US markets are concerned. They've started off H2 or July on a slightly muted note. All of the US markets actually saw a bit of a weakness, especially as far as yesterday's trading session was concerned. Along with that, oil prices actually fell almost 2% overnight, and today we've seen further cuts. So Brent now hovering around a little over the $70 a barrel mark. Like you mentioned, Asian markets have opened up quite weak. It's a bit of an unraveling as far as the AI stock rally was concerned. Kospi, like you mentioned, fell over 5%, saw a temporary trading halt, but Asian markets actually giving very weak cues today. But surprisingly, given the fact that we didn't participate in the AI rally today, the GIFT Nifty is indicating a bit of a gap up start for our own markets, giving encouragement that we could build on to some of the gains that we started off the July series on. In terms of how we fared in yesterday's trading session, markets managed to snap a two-day losing streak. Ended in the green, the Nifty went above and closed above the 24,000 mark. FMCG was one of the top sectoral gainers, but the Nifty IT, and all eyes will be on that as well today. Nifty IT was the weakest. KPIT actually saw over double-digit or mid-teens losing streak, especially given the kind of profit warning that they gave. And overnight, Wipro ADRs too fell significantly. In terms of what is it that we'll be watching out for today, keep an eye on the entire banking pack. Whole host of quarterly updates have come in, and you'll also keep an eye out on the Sensex expiry that you did mention.
Okay, thank you so much for that, Vivek. But let's get the updates in the world of F&O as well. And Sudarshan is here to take us through all of that this morning. Good morning, Sudarshan.
Good morning, Vinny. So it was a good start to July series. Yesterday, we saw Nifty closing above the level of 24,000. Now the question is, will it continue to hold the levels about that? So the range for Nifty now is from 23,900 to 24,200. It's unlikely that we are going to cross the level of 24,200 because between 24,100 and 24,200, major supply range that we are seeing. So you need to keep the support around 23,900, be long on Nifty, and expect to see a move above 24,100. What has FIs done? So in the index futures, they were sellers, 586 crore. In the stock futures, they were sellers, 492 crore. They have reduced long positions by 1,000 contracts. They have added short positions by 2,600 contracts. In the options data, if you take a look, 24,000 has seen maximum increase in the open interest, and 23,900 was followed by that. On the call side, 24,000 and 24,200 have seen maximum increase in the open interest, and also premium for both these call options has seen an increase. So support 23,833, that's your 50 DMA. Resistance 24,120, first resistance. Next resistance comes around above 24,200. Some of the stocks that have been in the focus, Avenue Supermart or say D-Mart ahead of its quarterly updates, stock has been seeing fresh shorts. Page Industries over the last few days has been moving higher, and yesterday also the stock has seen fresh longs, and among all the realty names were higher in the trade, and Godrej Properties looks the strongest one.
All right, Sudarshan, thank you so much to that. Now we go over to Ria, who has a list of all the stocks we need to watch out for in today's trade. Ria, good morning.
Well, good morning. Let's start off with the business updates for today. The first one is NMDC. The June sales have gone up by 11% compared to the previous year, with the Q1 sales going up by just about 2% on a year-on-year basis. For Canara Bank, for their provisional business update, the Q1 global advances have seen an increase of 18% and global deposits are up nearly 12% on a year-on-year basis. For Indian Bank, advances have increased by 14% and deposits have also seen a growth of nearly 13% on a year-on-year basis. For VMart, there has been a strong Q1 update this time around, with the total revenue seeing an increase of over 23% compared to the previous year, and same-store sales growth also increasing by 9%. For V2 Retail as well, they have seen 58% Q1 revenue growth this time around to 997 crores and 7.5% same-store sales growth this time around. For coal, moving on to Coal India as well, they have announced an LOA for setting up a 2,831 crore solar unit within the next 18 months, and also on Coal India, they have announced the June auctions at 108.7 lakh tons, which is at 42% over the notified price versus around 36% that we saw in May. Adani Energy Solutions has given its approval for a 10,000 crore QIP, so that will be in focus. Hero Moto has announced a cumulative investment of over 3,200 crores in Andhra Pradesh, which also includes a 750 crore global path center in Tirupati. Z Enterprises, the board has given a nod for a preferential issue of 25 lakh warrants to the promoter entity Sunbright Mauritius at 126 rupees per share for a total amount of 3,144 crores. And lastly, Brainbees will also be in focus today, as they will be participating in an OFS of their arm Swara baby for an amount of up to 300 crores in its proposed IPO.
Thanks so much for that, Ria. But on that note, we're going to sip it to a very short break. After the break, we'll come back, give you cues from Wall Street. Stay tuned for that.
Welcome back. You're watching Power Breakfast on CNBC TV 18. And in the US market, Wall Street ended lower as the Dow Jones hit a record intraday high before giving up its gains to close flat. The S&P 500 and Nasdaq ended lower, with chip stocks weighing on the sentiment after a strong recent rally. Now, this week is also important because the jobs data is expected early, given the July 4th holiday on Friday, Winnie.
Absolutely. So a lot of updates that we are keeping an eye out on from the US markets. But here is Steve Leisman of Fed, who's Fed Chair Kevin Walsh's comments that came in on inflation. What is he making of this, the rate cut expectations, the impact of AI? Let's go, Christian.
Fed Chair Kevin Walsh at the Sintra Conference in Portugal, sticking with his firm commitment to bring down inflation, but leavening it just a bit with the observation that inflation risks in the U.S. have eased and the hope that AI productivity could help inflation longer term.
We don't want to overdetermine things, but if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S.
It was that firm commitment at the meeting last month that prompted markets to more than double the probability of September rate cut from 32% to 69%. It came off just a bit after War spoke to 66%, with a modest drop also in the 2-year yield, but still a heavy favorite for a hike in September. Worth noting, though, there's only a 27% probability of a July hike, so there remains a chance for the decline in oil prices and Warsh's tough talk to do enough to bring down inflation and stave off those hikes. Warsh also held out the prospect that high productivity and the AI boom could help with inflation, but down the road.
In the U.S., the AI shock is leading to a boom in capital expenditures. We see that first and foremost in demand, but I'm confident we're going to see it in supply at some point.
Warsh repeating his long-held view that the Fed's $6.7 trillion balance sheet is too big, and he wants to conduct monetary policy mostly through interest rates, but he emphasized any changes will be put in place slowly in time for banks and investors to react.
All right, thank you so much, Steve. And that was Kevin Walsh of the Fed. But now on to updates from the peace talks in Doha. The United States and Iran wrap up indirect technical talks in Qatar, with local authorities reporting positive progress on issues related to the Memorandum of Understanding signed on June 17. Iran's Deputy Foreign Minister said a communication channel would be established between Tehran and Washington to report and discuss breaches of the MOU. US President Donald Trump also said earlier that the talks were going very well. Listen in.
Denuclearization of Iran is moving along well. They've had very good meetings, and we'll see. We hit them very hard for 3 nights, as you know, but we're getting along very well.
All right, now getting you all the updates from the commodity space. We have Manisha Gupta joining in. Good morning, Manisha.
Morning, and thank you so much for that. I'll start with the crude oil prices, where we have seen the prices now fall towards $70 a barrel. This is the lowest level that we've seen since Feb 2026. As you were mentioning, well, it is about Qatar saying that Iran and US have made positive progress in indirect talks on Strait of Hormuz. We still have to get the details of this, but a statement coming in from Qatar has led to some more easing into the prices. And then investors also are looking at U.S. crude inventories are continuing to decline. That will keep the prices supported. But the oil shipments through the Strait of Hormuz now stand at 10 million barrels per day as per U.S. officials, and that's quite a coming back in case of the oil flow there. And not just the crude oil price decline, we also have seen the base metal prices continue to decline on the back of strong U.S. dollar. Aluminum is trading at a 4-month lows. Steel near 8-month lows. You have iron ore prices, which have declined towards 1-year lows as well. And in the overnight markets, the copper prices have declined 2% as well. The only segment that I see that has seen some gains is precious metals, where gold gained 2% and silver 3% in the overnight markets. What the markets are watching out for now is the U.S. non-farm payroll data that comes in tomorrow.
All right, thank you so much, Manisha, for that. But now getting you all the latest on the Trump-related developments, we have Vinny joining us in our special segment, Trump Watch.
Hi, Rachna. So first up, obviously, what the recent comments that came in overnight. US President Donald Trump, while speaking to reporters, said that he has no direct involvement in his personal finances. This was released yesterday in terms of the details and financial disclosures. Now, obviously, they came in that the family's crypto venture, and that generated more than around $1.4 billion in terms of income. He furthermore added that many Americans were also being benefited as the markets and the stock market continues to see an upward run-up with his own investments, he said, which were being managed entirely by outside funds rather than him personally. Listen in.
I don't get involved in my personal. We have funds that run my money. And I never speak to any of the people that run the money. But they're at big institutions, and they invest in whatever they invest in. Well, you know why I'm profiting? Because the stock market's going up. Everybody's profiting.
Moving on, he said that a sharp decline in oil and gas prices was announced by him on his Truth Social post timed to coincide with America's 250th birthday celebrations. Now, he said that the prices at the pumps have not been falling as fast as they should have, and despite the broader drop in oil prices, adds that the 25 Freedom fuel stations across the greater Philadelphia region were set to be cutting prices starting 3rd of July in a move framed as a birthday tribute to the city of Philadelphia. He also said that other retailers were urged to follow suit. Prices at the pumps were also said to be on track to return to record lows last seen before the US military action on Iran. Now, moving on, a $250 million investment that has been made into the so-called Trump accounts by the chipmaker Micron was announced by President Trump himself on his Truth Social post. Trump accounts, what are they actually? They are new government-backed savings accounts that are actually created for American children under the age of 18. Now, these accounts were set to be formally announced and launched on 4th of July, coinciding with the nation's 250th birthday. Trump also praised the CEO of Micron, calling the investment a significant boost to his administration initiative. Lastly, let's also talk about the Supreme Court's ruling on the birthright citizenship, which had come in, was flagged off by Trump again while speaking to reporters. He said that the birthright citizenship was never intended for the children of wealthy foreign nationals, but was originally meant to protect the children of former slaves. Further, he added that the country is now being run on the basis of merit rather than automatic entitlement. Listen in.
We'll take care of the birthright citizenship because that was not meant for rich people from other countries. That was meant for, actually, it was meant for the babies of slaves. If you look at it, it was a month after the Civil War ended that it went through. That's because it was meant for the babies of slaves. It wasn't meant for rich people from China.
And in the final update, Spain's commitment to NATO was criticized by President Trump while speaking to reporters amid the ongoing tensions over the country's refusal to raise defense spending in line with the alliance's targets. Separately, he also spoke about Cuba. He described as coming our way after many, many decades of estrangement, with reference drawn to the Spanish-American War previously.
All right, thank you so much for that comprehensive update coming in from the US President Donald Trump. But now let's slip into a break. Up next, we get you all the updates from the world of artificial intelligence and technology. So stay tuned.
Welcome back to Power Breakfast on CNBC TV 18. Now let's move on and get you the latest updates from the world of tech and AI in our special segment AI Pulse. Rachna has moved on to the wall to take us through those details. Rachna, over to you.
Well, first up is the Indian government that has sent WhatsApp a formal notice over its new usernames feature, giving the company 3 days to respond. The notice warns the feature could enable phishing, impersonation and much more. Now, WhatsApp says it is not yet live and will roll out gradually through the year. Then there's Abu Dhabi's MGX that has closed its first AI fund at $49 billion, beating its $45 billion target. The fund has backed 14 companies so far, including Anthropic and OpenAI. Staying with AI infrastructure, then KKR and South Korea's SK Hynix have launched a $1.3 billion renewable energy platform. It starts with 1.7 gigawatts of capacity with a pipeline targeting 10 gigawatts to power AI data centers. Now, KKR will hold 51% stake in this venture and management of SK will control the rest. Meta is reportedly building a cloud business to sell its excess AI compute. Now, according to Bloomberg, the initiative would sell raw computing capacity and access access to Meta's own AI models. Meta has not yet confirmed the plans, but shares rose sharply last night. Micron CEO Sanjay Mehrotra says customer pricing pressure contributed to the memory shortage. He said prices fell to one-third of prior levels in 2023, leaving the industry under-invested. Micron is now investing $200 billion in new manufacturing. Then there's Apple, that's reportedly been in talks to buy memory chips from China's Changshin Memory Technologies and Yangtze Memory Technologies. This is according to reports from Bloomberg and Financial Times. Now, both the firms are on Pentagon's 1260H list, which is the ban list. Now, Apple is said to be seeking assurances from the Trump administration. And finally, there's Anthropic that says the Trump administration has lifted export controls on Claude Fable and Mythos 5. And we see the feature go live last night. Now, controls were suspended on June 12 and lifted on June 30th, with access restored July 1st. Palantir CEO Alex Karp has hit out at OpenAI and Anthropic's token-based pricing. And it's pretty interesting what he says, so listen in. All right, we'll get you the bite later, but that's all we have on Power Breakfast. But first, we go back to Winnie.
Absolutely, Rachna. Thank you so much for that. So that's the update in the world of tech and AI. But like Rachna said, it's all the time we have on this edition of Power Breakfast. Thank you so much for tuning in, and seems like a gap up start continues for the Indian markets as well. So let's watch out for that. And, a quick check in terms of the Nifty implied open as well. A good gap up start is what we're keeping an eye out on for the Indian markets. Now it's 95-point uptick. So yes, let's watch out for the continuation in terms of the uptick that continues. Yesterday we closed at the 24,000 level. And given that Asian markets have not opened up on that positive note, will be interesting to see whether this is something that Indian market follows suit with the Asian markets, or whether we actually manage to outperform today. Only Hang Seng is managing to hold on to gains. Apart from that, Nikkei, Kospi, Taiwan Index, all of them have seen a fall. US markets didn't see anything exciting happening as well. And some of those bit of an AI worry that continues. But given that we were not participating in the AI rally, so we shouldn't be seeing a downtick in the Indian markets. 90 points uptick. When we started the show, we were around the 70-point uptick as well. So let's watch out for that. But yes, with that, we're going to wind down this edition of Power Breakfast. Thank you so much for tuning in. Next, you have Bazaar Morning Call to take you through the market action.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Mangalam. It's Thursday morning, and I think we can safely say, guys, it's not pitter-patter, it is not splish-splash, it is what?
Downpour? I'd go with the downpour.
It is what, July is known for. I would call it the animal variety, the feline and canine ones. That's exactly what's happening. All of last night and this morning as well. There are places where there is some bit of waterlogging, so a lot is happening, yes. So it's raining both on, D Street as well. We close about 24,000. The GIFT Nifty is indicating a positive start. And safely, you can say that there is monsoon in Mumbai.
And crude is also closer to now $70 per barrel, so that's positive.
Yeah,
so as they say, when it rains, it
pours.
More oil, there's more water, hopefully, as well. And hopefully it continues, right? We need it. So that's really good news. And I think at some level, the slight amount of pickup, I mean, it's human nature, it's human tendency. You see stuff happening around you and you kind of sort of extrapolate. Although you speak to people in Delhi, they're still waiting for rains. It's a better situation with rains in July in high time. So that said, let's just start from the top in terms of the cues. That's the change, right? Nasdaq down 0.5%, S&P down 0.2%. Not very much to really read into it or take away from it because they've done so well, and they just sort of came off a little bit. So Meta was the big standout gainer. The stock was up 9%. And now they're saying that they're going to set up a cloud infrastructure business. So they're basically going to sell cloud space to anyone who wants it. So in a way, direct competition to Microsoft Azure or Amazon's AWS, etc. So the markets liked it. So it's another line of business and a big move on Meta. Financials was the other pack, outperformed 3% higher. The earnings start 2 weeks out, but there's already a fair bit of commentary which is starting to come in that maybe that's a space to watch, and they'll have it'll be a good earnings season. By the way, if you just look at earnings expectations for the S&P 500 group of companies for the quarter, for the upcoming quarter, it's already running at between 18 to 22% earnings growth. So the markets have done well, but has been backed up by pretty strong earnings growth so far. Now, you had some commentary coming in from the new Fed chief, Kevin Warsh, essentially saying, and this is the line which stood out to me, anyone expecting Fed would tolerate inflation above 2% goal would be disappointed. So that was the commentary. And by the way, the US Treasuries rallied, but then they sort of cooled off. By the end of it, there wasn't very much. Yields, I think, were changed by about 1.5 odd basis points or so. Yesterday, just to come to our markets here, we held on to the level which has been held many times in the past, and the 23,800 is the number that we started out with this week as a support. Hopefully that will hold. It has held out, and we saw a move on the upside after that, and pretty healthy participation. Market breadth was positive. The beaten down real estate space, names like Lodha, DLF, etc. did well. You had FMCG and consumer as a pack, which did very well. And we sort of, Mangalam will speak more about this. We've got a discussion coming up a little later as well. So those guys, and then of course, platform companies, so sector agnostic, but everything from Paytm to Lenskart to Eternal, I mean, those companies did well. So pretty broad-based. IT, of course, was the sore spot, and that was lower once again. 6% damage for the IT index so far from over the last three trading sessions this week. So now we can, with 23,800, let's hope it doesn't come back into the reckoning. You can look ahead. So we need the first very immediate near-term resistance, or what the market needs to get past, let's put it that way, is 24,081. It's the midpoint of the range, exactly the midpoint of the channel, the upward sloping channel. On the downside, there was about 23,800 or so. The midpoint is 24,081, and once you take that out, we're looking at about 24,300, which is the upper end of the range, which we will work with. So 24,100 roughly, and then 24,300 are the upside levels. The support, of course, as I said, 23,800. GIFT Nifty, I think, is indicating another higher start. So let's see if we start higher and build on it, hopefully. 90 points up. There's the indicative open. Mangalam has walked across with the F&O cues and positioning. Mangalam, take it away.
Well, today will be the test of, the tenacity of the bulls. After having closed above 24,000 yesterday and the GIFT Nifty indicating a positive start today, the question is whether it sustains or not. After underperforming for most part of the year, the last 1 month has actually belonged to the Indian indices. And that's not necessarily because we did well. That's because everyone else saw a bigger gash. So Kospi is down about 11.5% over the last 1 month. The Nasdaq down 3%. And we have the Nifty, which is up by 2.5%. The picture is vastly different when you look at it from the start of this year, but nevertheless, we'll take this as a small win. The important part, yesterday the market crossed that 24,000 mark on the Nifty. We had the mid and small cap indices as well to relatively okay-ish. So, yesterday's trade comes up for you on the screen. But more importantly, if you look at, the sectors that did well in yesterday's session, that told you that they were all domestic-facing sectors. So the indices that did well in yesterday's trading session belonged to the IT pack, belonged to the real estate pack, belonged to the FMCG pack, it belonged to the consumer pack, and it belonged to the auto pack. So all those sectors did extremely well in yesterday's trading session. The ones that did not do too well were the ones which actually saw an impact because of exposure to international markets or other reasons. So you have the IT pack, which was underperforming. We had the pharmaceuticals, which were underperforming. And we had the metals pack, which was also underperforming. But if you look at, the cash market flows, the FIs sold about 1,100 crores in cash, whereas the DIIs went ahead and bought 3,100 crores. So there was net inflow coming in. I told you that the FIs started this series with just 10% long exposure. Yesterday as well was no different. Despite the up move that we saw, the FIs did not go ahead and cover any short positions. In fact, they unwound some long positions. So they sold about 580 crores in index futures, and their long positions still stand at a mere 10%. The only thing we need to track, if the market crosses the resistance zone today, will short covering begin at the start of the series itself or not? There has been a lot of call writing and put writing. Call writers fairly active at the 24,100 mark and the 24,150 mark. Put writers equally active at the 24,000 mark and the 24,050 mark. What all of this basically means is that the street is expecting some sort of support coming in around that 23,850 to 23,900 mark. Whereas if you look at resistances, they start from 24,150 to 24,200. So that's the rough range that the street is working with. The GIFT Nifty indicating start smack in the middle of this resistance range and a little above the 100-day moving average as well. A closer above the 100-day moving average for the Nifty will actually be the biggest positive for bulls.
Thank you. And today is the Sensex weekly expiry. And for me, I think the auto sales numbers that came out yesterday or the banking update so far seem to suggest that the economy is in a fine shape. But let's get back then to the latest on the US-Iran war. United States and Iran have wrapped up indirect technical talks in Qatar, with local authorities reporting positive progress on issues related to the memorandum of understanding signed on the 17th of June. Iran's deputy foreign minister said a communication channel would be established between Tehran and Washington to report and discuss breaches of the MOU. Meanwhile, US President Donald Trump also said earlier the talks were going very well. Listen in.
Denuclearization of Iran is moving along well. They've had very good meetings, and we'll see. We hit them very hard for 3 nights, as you know. But we're getting along very well.
All right, there is another interesting conversation that we'd like to get to you. That's Palantir Technologies CEO Alex Karp. He was in CNBC's Squawk Box yesterday. And in that interview, he basically criticized OpenAI, Anthropic, saying that they fundamentally mispriced their AI services. He's saying that, they're charging way too much for tokens. They have no value. And indirectly, they are taking away the IP, the alpha of most of the enterprises. And he also went on to say that all the enterprises are livid. So this is an explosive interview, a very scathing, blistering attack by Palantir's CEO. So let's just quickly give you a snapshot of that.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax, only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
All right, I think that interview is doing the rounds, and we'll try and get you more of that. But yesterday, in response, all the enterprise software names in the United States did well. Palantir closed up with a gain of nearly 8%. SAP, Salesforce, Accenture up 5%. ServiceNow up 6.5%, while Snowflake gained close to about 2.5%. Does that spell good news for Indian IT here today after yesterday's fall? But let's get in. Ed Yardeni, President Yardeni Research, on the show. Ed, first a comment. Do you think what Palantir's CEO said, what people are saying in closed rooms, but didn't have to say it, didn't have the courage to say it loudly, the tokens, or maybe it's an extreme view, the tokens are creating no value because that AI capex juggernaut continues to go on. Come in on what's happening in the software names and even these hyperscalers, big tech companies.
Yeah, I think clearly there's a lot of confusion of how AI is going to affect a lot of businesses. There's a lot of confusion about whether all this money being spent is going to achieve a rate of return. I think this is going to be an ongoing issue, and some people will come up with reasons to be outraged about what's going on. But I think the markets are going to solve these issues over time. We're already seeing that token prices are going down, and that's partly because of competition among OpenAI and Anthropic. It's partly because the companies are having rather interesting conversations about how much this is all costing them. The fact that agentic AI just kind of runs on its own and tells itself what to do, that just keeps these models working 24/7, just ka-chinging, like the cash register, constantly ringing up the bill for running these models. And I think that's the problem that companies are dealing with now. Even Microsoft walked away from Anthropic and seems to be thinking about using a Chinese model, which is much cheaper.
Ed, have you heard of this company? I managed to watch half of it. Company called Etched, ETCHED, started by two young guys in the US, and they claim the new AI chip, and by the way, well funded. They just came out and announced that they've got massive funding from some of the biggest names, and their new AI chip is like 10x more efficient. And
well, that's great.
So
I mean, this is creative destruction on speed. It's extraordinary. Creative destruction is what happens in a capitalist system, particularly in the technology sector. The technology sector literally eats its young. As soon as they produce one version of a new software or hardware, they're already working on creating another one that'll make that obsolete. We see that with NVIDIA. NVIDIA will sell you a very expensive chip now that requires a lot of energy, and they're already working on solving that problem of these things requiring too much energy. IBM has just come up with a chip that looks very interesting in terms of being much more powerful and yet requiring less energy.
We had someone from BlackRock yesterday and asked him the same thing. There is, of course, all this new hardware itself, which is, new chips, which and it's incredible, right? NVIDIA spends $20 billion a year in R&D, and you've got these new young sort of, I think 24-year-olds, who at least they're claiming with a fair bit of funding, that they've got this chip going, which is 10x faster than the sort of regular GPUs. But anyway, hardware aside, there is of course the hardware bit, but there is also just how AI is being used, right? Rerouting of, not every query that you type on a LLM needs to go to a AI cloud data center, right? Like a hyperscale data center.
Yeah.
So that rerouting is also perhaps starting, and there are so it gets done on your computer. It doesn't need to get sent to the cloud on some data center. Are these risks, Ed? And you think these will get talked about more and more, because at the end of the day, this is technology and is evolving as we speak.
Yeah, I don't think I would describe it as risk. I would describe it as the nature of the beast. AI is potentially a monstrous program that could do a lot of good and can do a lot of bad things as well. And I think we're just seeing that the rate of technological innovation is, can just make your head spin. And these hyperscalers that are spending all this money using today's chips may, within a year or two, or regret that they spent so much, because if they just waited 6 to 12 months, they might have gotten a better chip that's actually cheaper and runs on less energy. So there are going to be a lot of winners and losers. It's just you can't tell. It's hard to assess who it's going to be, and the game just changes all the time. But look, I use AI all the time during the day as a research assistant, and I find it very helpful, very useful. It is kind of like Google search on speed, but it's very helpful.
Right. We speak about AI, but in the very near term, we are also listening to what Kevin Walsh said overnight. He said that inflation is perhaps a little too high. After, when most read his first statement as slightly hawkish, this other, comment coming in that inflation above 2% may not be tolerated. Looking at the US bond yields, they're closer to 4.48 right now. This time there was a smidge of a change in bond yields after these comments that came in. What do you make of them? Is it just a comment, or does it suggest some sort of action in the near future?
Yeah, it's all very interesting, because Kevin Walsh has said that he wants to reduce forward guidance. He doesn't want the markets to be polluted by what the Fed says. He wants the Fed to learn from the markets, and in effect, he's sort of saying that he's going to follow the bond market. So the bond vigilantes seem to be in control in terms of the way Walsh is running monetary policy. And I think you're absolutely right. He made it very clear, both at his press conference and then at Central Portugal today, that in fact the Fed's number one concern, his and the rest of the FOMC committee's concern, is to get price stability, which meant, and he defined that very clearly, is getting inflation down to 2%. So for all the talk that he's provided about not providing forward guidance, every time somebody asks him a question, he says, well, we're going to have a task force look into that. But the reality is they've already provided a lot of forward guidance. The FOMC statement and .com was in fact very hawkish, and Walsh has also been very hawkish. So either inflation is just going to miraculously come down to 2%, or else the Fed is in fact going to have to raise interest rates to make that happen.
Who would have thought, right? Just a couple of months back, we thought Kevin Walsh, when he comes on, is going to be extremely dovish. He's going to come out there and cut the rates because of pressure from, the U.S. president. Well, that's not playing out. We're now talking about the potentially rate hikes coming out of the U.S. Fed. But he also spoke, Ed, about the potentially profound effects of AI on inflation in a way, because he said that there are implications for monetary policy, and we're already seeing that play out with the kind of memory chip price and the fact that Apple had to go ahead and increase prices quite dramatically. So on one hand, we've got this commodity deflation, crude is down, but we've got AI inflation. So do you want to weigh in on this? And quickly, in case time runs out, do you still hold on to that $10,000 an ounce mark on gold?
Yeah, good questions. Look, I think that clearly the Kevin Walsh Fed has surprised people in terms of how quickly it's turned hawkish. And I think that's because the reality is the economy is doing really quite well. The unemployment rate's still around 4.3%. It's just that inflation, the Fed should be embarrassed, and the Walsh says he is embarrassed that the Fed hasn't brought the inflation down to 2% for more than 5 years. With regard to gold, I've been half right. When gold rose above $2,000 an ounce a couple of years ago, I said, you know what? I don't know much about gold, but I do know that if central banks are going to be buying gold because they're concerned about their reserves being frozen by the United States in the event of a geopolitical crisis, then that should be bullish for gold. And that got us up to 5,500. And now we're back down to 4,000. 4,000 is a very important level. I think we are going to find support at this level. And I'm still going to hold on to the 10,000 by the end of the decade. And I think a lot of that will be because the stock market is going higher. And I've got the stock market going to 10,000 by the end of the decade. And I think there's going to be a lot of rebalancing. You know, when people make a lot of money in the stock market, they get a little bit nervous and want to diversify. And They go into bonds and they go into gold, and I think gold will still work. I did lower my year-end target from 5,500 to 5,000, and I acknowledge that the gold has been kind of a sloppy trade ever since the war. You would have thought, everybody thought that a war would lead gold prices to go even higher, but instead some central banks like Turkey's saw their currency under a lot of pressure and sold gold in order to intervene in their currency. So it's a tricky market.
Thank you. And great conversation spanning so many topics about AI, commodities, what the Fed is likely to do. Thank you very much for joining in.
Thank you.
All right, let's tell our viewers the interactions lined up on the show today. So first up, 8:35, the management of Pesa Digital will join in. The promoters have increased their stake by nearly 5%. Are they planning to buy more next year? 9 a.m. We'll be joined by Abhishek Pathak of Motilal Oswal Financial Services. He tracks the technology space very closely. So we'll talk about the big gash that we had in tech names yesterday. 9:20, S. Narain of ICICI Prudential AMC will be our market master for the day. 9:35, we'll bring you a discussion around the FMCG sector and what to expect in Q1. Following that, a special conversation with the management of Thermax. Towards the end of the show, Lata speaks to Mithil Kotecha of Barclays and Suyash Chaudhary of Bandhan AMC on the rupee and bond markets.
Right, we'll take a short break now, but on the other side, a lot of stock-specific reaction to track. We'll get to it in just a bit. Our special top 10 segment comes up. We're looking at NMDC, Coal India, Hero MotoCorp, Z Entertainment, Canara Bank, Indian Bank, V-Mart Retail, V2 Retail and Brainbee Solution as stocks that are positive and are likely to open higher. Whereas we have mixed views on Adani Energy Solutions. We'll explain why. Just take that short break, come back.
Welcome back. Let's talk stocks. This is CNBC TV 18 list of top stocks to watch today. Vivek is first joining in with the news on Adani Energy Solutions, NMDC and Coal India. Good morning. Vivek, take it away.
Well, good morning. Keep an eye out on all of these names. Like you just mentioned, Adani Energy Solutions, the company has gone ahead and received a board nod and enabling provision to go ahead and raise up to 10,000 crore rupees via the QIP route. The other stock on the radar, of course, is NMDC. They've updated, the exchanges both on June production as well as sales, as well as the Q1 FY27 productions and sales. So when you're talking about the June production, it's up almost 44%. June sales, however, up by around 11%. When you're talking about Q1, production is up 26% on a year-on-year basis. Q1 FY27 sales up marginally by 2.1%. Now, talking about Coal India, remember yesterday the company updated the exchanges with a very encouraging update as far as production and sales data was concerned. Today, the company has said that they have received an order for a 600 megawatt solar power plant at Jalwan in Uttar Pradesh. The estimated cost for this particular power plant that they will be setting up is a little over 2,800 crore. The PPA rate is at 2.73 rupees per kilowatt hour, and they will be constructing this particular project in the next 18 months. Now, along with that, another encouraging data point that the company has updated the exchanges is that as far as the e-auction premium is concerned, in June e-auction sales, the premium has come in at 42% versus 36% on a month-on-month basis. Some positive news flow coming in for Coal India as well.
All right, take that point, Vivek. Thanks a lot for that. Let's go across to Sudarshan. Sudarshan, Hero Moto sales data and Z Entertainment. The fundraise has finally been announced. The details of that.
So Hero Motors sales data had come yesterday, but today its news is about the investment that company is making in Andhra Pradesh. It has announced that total investment it will be making is of rupees 3,200 crore. Of that, 750 crore investment has been announced, and it's for the second global parts center that company will be setting up at Tirupati. And after that, Tirupati plant's production capacity will increase in the range of 1.2 to 1.5 million tons. So that can be taken positively. Zee Entertainment Board has approved raising fund via convertible warrants, and that will be issued to promoter group that's the name is Sunbright Investments, and total fundraising is up to rupees 3,144 crore, and it's being raised at a price of rupees 126 per warrant.
All right. So thank you very much for that. Canara Bank and Indian Bank are the other two in focus. Ananya has got details here. Ananya, morning.
Good morning. So a lot of PSU Bank reported their Q1 provisional business update. Let me first start with Canara Bank. So the bank global business crossed 29 lakh crore mark a strong set of numbers from Canara Bank coming in. Now rising 14% year on year, the global business, while global advances grew a robust 18%, comfortably ahead of 12% growth in deposits. Now the domestic retail, agriculture and MSME, that is RAM, portfolio also remains strong, growing 21%. Now importantly, management has guided for 10 to 11% global business growth, 11 to 12% advances growth, and 9 to 10% deposit growth for FY27. And the Q1 update suggests the bank is off to a strong start. Now, however, it cautioned that margin pressures from higher deposit costs and the ECL transition will be seen from FY28. So that remains a key monitorable year. Now coming to Indian Bank, meanwhile delivered an inline Q1 performance. Advances grew 14% year on year to 6.85 lakh crore, while deposits increased 13% to 8.43 lakh crore, broadly in line with expectations. Now the key positive was the 56 basis point sequential improvement in the domestic CASA ratio to 39.6%, which supports margin expectations. Now management has guided for 11 to 13% advances growth and 9 to 11% deposit growth in FY27. Overall, the bank maintained steady growth in Q1. So a lot of PSU banks likely to be in focus in today's trade.
All right, Ananya, thanks a lot for that. So those are a bunch of financial updates that have come in. I'm looking at a couple of the retail names as well. Good updates coming in for the first quarter. V-Mart Retail, we had the management on last week itself. They said that, the performance in the first quarter has surprised them. So it's a strong update. 23% revenue growth. It's turned into 1,089 crores versus 885 crores same time last year. SSSG, or same-store sales growth, is up 9%, led by V-Mart at 8%, and Unlimited, which is a smaller part of the business, growing much faster at around 13% as well. They've added 15 stores during the quarter, total just under 600, and the company had told CNBC TV18 earlier that they are looking at mid to high single-digit SSSG and double-digit revenue growth in the first quarter, and sentiment post-election in West Bengal is strong. V2 Retail as well, strong update coming in. Revenue growth of 58%. They too have delivered about 7.5% same-store sales growth and added 57 new stores during the quarter. So that is a positive. And finally, on Brainbase, which is First Cry, the stock has seen a sharp knock from its highs down to about 227 rupees from earlier levels of upwards of 650. And now they've announced that they will sell up to 300 crore worth their stake in subsidiary Swara Baby's offer for sale. Remember, they have about 76.5% stake in this company. The company plans to raise about 1,000 crores via IPO, of which up to 300 crores will be given by Brainbees. Swara Baby, FY25, the known revenue is 85 crores, profit at around 5 crores, but thereafter there were a couple of acquisitions that they made as well. So 300 crores coming into Brainbees should be a mild positive. So seeing green for all three.
Thank you. I didn't know Swara Baby makes diapers.
They make diapers. Ask me about it.
So, yeah, I thought I had 2 kids, I would know about the diaper market, but clearly this is a new one. But thank you very much for that. A quick recap then of the top stocks with positive news flow are NMTC, Coal India, Hero Motor Corp, Zee Entertainment, Canara Bank, Indian Bank, V-Mart Retail, V2 Retail and Brainbase Solution. We've got a mixed view coming in on Adani Energy Solutions. But that's equities. Let's talk commodities, because here crude prices continue to slide lower. Manisha is joining in with the complete action.
Thank you so much for that. I'll start with the crude oil prices, as you said, and we have seen a fall towards $70 a barrel. This is the lowest price since Feb 2026. So clearly, before its pre-war prices back into the markets there, The slide came in after Qatar said that Iran and the US have made positive progress in talks on Strait of Hormuz. The details of the same are yet to be known. But then we do understand that the oil shipments through Strait of Hormuz are at 10 million barrels per day. This is as per statement from US officials. The Iran oil exports are above 40 million barrels since the lifting of US naval blockade. The markets will also watch out for the OPEC meeting, which is on 5th of July, which they may increase August output by yet another 188,000 barrels per day. So markets are looking at higher and higher supplies continuing into the street there. So while the crude oil prices have gained, there are gains also that have been seen in precious metals. Gold prices gained 2% overnight. Silver was up 3%. This is after the Fed chair's statement saying that the inflation expectations have eased over the past month. The markets, though, are still pricing in a 60% chance of one rate hike in this year. And finally, to the base metal prices, where the strength in US dollar continues to weigh onto the markets here. We've seen 2% decline in copper prices overnight. Iron ore is trading towards one-year lows. Steel near 8-month lows. Aluminum prices are trading at a 4-month lows after that 16% decline in the month of June. So no place to hide really when you look at base metal prices.
Got that. Thanks very much, Manisha, for that. We'll take a quick commercial break here. We've got the management of Paisalo Digital with us to discuss the promoters' increasing stake by nearly 5% in the road ahead for the company, coming up in just a bit.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a strong start for the markets. Let's see whether this continues or not as we open smack in the middle of resistance zone. But one of the stocks that has been doing extremely well all through this year has nearly doubled is Paisalo Digital. And this, as the company's business has been doing well, the outlook that the company has been giving is strong, and it's backed by promoters increasing their stakeholding in the company as well. They've bought about 5% stake, and now their overall stake stands at around 46.7%. Shantanu Agarwal, who's the Deputy Managing Director, joins in to discuss, obviously, their growth roadmap, AI-led lending and competitive advantage, but more importantly, the promoter increasing stake. Thanks a lot, Shantanu, for joining in. 4.9% or 4.97% is what you've bought in the first quarter through open market purchases. The promoter's stake from a little under 42% has gone up to a little under 47%. Now you're done for this financial year in terms of the creeping acquisition that the promoters are making. So one should rest assured that no more purchase, at least in the next 9 months. But then again, the question is your intent to take it to that 51% mark as the next financial year starts?
Hi, good morning. Thanks for your time. So we have, if you look at how we've been planning it, we have been increasing our stake. We went all the way down to 26.04% a couple of fiscal years ago. Post that, we did a warrant issuance, which gave us additional 5%, which we converted within the stipulated timelines. And ever since that, we've been adding about 5% every year. So yes, eventually the promoters would like to keep increasing their shareholding to about 50%. And as per the creeping guidelines, I have hardly anything left. I have maybe 0.03% worth of acquisition left for this year. But yeah, I think you'll see that number coming up very soon.
All right. So open market purchase is all that you're going to consider, or is there going to be any other route as well via which you would want to increase your promoter stake? Because creeping acquisition right now, you're done for the year. But, would you want to wait for another year, or are you in a hurry?
So, no. So what we'll say is that, as per the understanding that I have of the SEBI guidelines, when it comes to promoter stake increase, even if whether I'm doing a creeping or I'm doing a warrant issuance or I'm doing any kind of pref issuance, the maximum promoters allowed to put in a year is about 5%. So this year, for sure, we have nothing coming up. But next year, probably we'll do a mix, or we'll think about doing a mix. But that's pretty much it.
Got that. So now let me, once you get to 5%, 50% next year, would you be comfortable with that? Would you stop there, or do you want to even continue to increase by 5% every year? What's the goalpost?
So, about 4 quarters back, we did a $50 million foreign currency convertible bond. About 50 out of the $50 million, about $6 million has been converted. We are left with about $44 million worth of convertible still standing on it. So even if the entire $44 million converts, say less in the next 9 months within this fiscal year, the promoter shareholding will drop down by about roughly about 5.5-6%. So the idea is to keep adding for the time being and be consistently between a 40 to 50% level. We have been practicing this for a long time. In 2010, when we did a GDR issuance of about 175 crores, that's when we got down all the way to 26.04%. We increased our stake into the company. And then obviously the second part came where we did our convertible, or we did another SPO, or we did another equity round. Then we go down again, and then we keep increasing. So the idea is to maintain a significant shareholding in the company as we continue to do raises. In our business, raw material, goods in process, and finished goods is money.
Yeah, absolutely. That's what I was thinking, that the raw material is money. Absolutely. Santanu, morning. Stocks done phenomenally well, 100% this year. It's a doubler.
Yeah.
Any thoughts on it?
So, if you look at, we got listed in 1996. Since 1996 till date, we have been providing about roughly 20% CAGR on PAT to all our equity holders. We have never had a loss-making quarter. We come from a mindset that it's a collection-first kind of a business. So yeah, I mean, eventually we see that the market rewards us in a good way. And at the end of the day, it's not just me who's had a significant increase in the stake. It's 125,000 shareholders of the company who've gone from holding about a 1 rupee face value stock all the way to now, I think, 70 rupees worth of wealth creation that we have done for every single one of our shareholders.
Right. Shantanu, I think we are speaking for the first time, I think. But just give us a sense of what's the AUM now? What are the focus areas? And clearly, I mean, you've been listed for a long time, but you made a pivot at some point, right? Which is
absolutely.
So just briefly, if you can give us the broad sketch.
So, the company's been there since listed since 1996. I came into the company somewhere around 2017. Largely in 2017, pre-2017, we were pretty much a bricks and mortar kind of a lender. Came into 2017, leveraged on the Pradhan Mantri Jam Yojana to launch a retail platform for the people of the country. Scaled that retail platform from about 32 branches to now 5,299 touch points spread across 22 states with a customer franchise of 1.7 crore people and about 16 million customer franchise addition in the last quarter itself. We are standing at an AUM of 6,100 crores, about 17% year-on-year increase. We witnessed about a 35% year-on increase in our revenues, or 30% if you compare fiscal year to fiscal year. PAT increased by about 19% to 237 crores. Promoter increase has been like that. Asset quality remains very stable. We have been collection focused from day one, except for those COVID years where we saw a spike in NPAs. We have been able to maintain our gross NPAs at 0.76%, 0.61%.
What segments, Shantanu?
So we primarily operate in 4 segments, which are subcategorized under about 8 subcategories. So the 4 segments are SME, MSME, retail, and small income generation. Under each of these the main groups, we have subgroups. So for SME and MSME, we would do equipment finance, industrial equipment finance. We will do agri equipment finance. We will do fleet financing. If you go to the MSME sector, we have enterprise loans. We have, again, you can also do a movable machinery finance in that space. When you come to the retail side of business, which is categorized in 2 sectors, there we have LAP up to 20 lakh rupees, and we have a small income generation loan sector, which is from about 25,000 rupees to 3 lakh rupees, wherein you can have an unsecured lending, which also has a primary collateral in place from 25,000 to 3 lakhs. Or if you want to go 3 lakhs to about 5 lakhs kind of sector, that's like a 2 lakh rupees space. That's where we do micro LAP.
How much is what loans? Out of the 6,000 odd crores in AUM, how much is retail, including LAP?
So retail will be about 30% of the book. Okay. But in terms of the industry-wise split, we are at about 24% in food and hospitality, about 14% in agri and allied agri, about 14% in street vendors, about 11% in industries, 8% is in health and education, 4% is textiles. I mean, these are roughly what I remember.
Okay. But since you are present in food, agri, did the West Asia crisis, it went through an LPG shortage. Then there was no water available for many of the enterprises. Has that affected business in terms of, say, slowdown or in terms of asset quality?
So there hasn't been per se an direct impact on the asset quality. There was some stress which was observed, but it was largely at a large group OEM level or a business level. It did not come all the way down to the retail level or the MSME level. I feel that the government policies that were introduced when we saw this crisis coming in really provided a very sort of ring fence space to this category of borrowers and businessmen. So there wasn't a big impact in that space. But yes, from an industry point of view, if I talk, there was some impact on the larger business sectors at an OEM level.
All right, take that point, Shantanu. Short on time, not on questions. We'll obviously, have another conversation with you post your first quarter numbers to get a better sense of how business is performing as well and what your outlook is going forward too. But the stock of yesterday was Z, up nearly 7%, and the street was wondering why. And now we know the promoters have announced, or the company has announced that they will raise about 3,150 crores via a warrant issue to the promoters. Abneesh Roy, who's the executive director, Nuvama Institutional Equities, joins in on the phone line to chime in on this. Abneesh, the last time this happened, the shareholders weren't very happy with that because the company already has cash on its books, no real strategic rationale for the usage of the funds that have to be raised, along with the fact that they've issued it to promoters. So what's your sense on how different is this one versus the last time, and how is this likely to go down?
Yeah, sure. Thanks and good morning. So I think it's different. There is a business case this time versus last time. There was no big business case. I think FIFA and sports is a game changer for Z longer term. So my sense is if you see FIFA scale up for Z has been, I think, extremely good. Overall reach, if you see around 100 million is the total reach on TV, digital, everything combined. And there is almost 190 minutes kind of average viewing time. Plus, if you see non-cricket in India makes a lot of sense. If you remember around 10 years back when Z vacated sports, that time cricket-heavy calendar was there for them. And cricket makes in India huge losses. But definitely FIFA, Olympics and Kabaddi and all that, my sense is they will go into a lot of these gradually. But from FIFA, they have got 39 events for the next 8 years. That, I think, is a game changer. And that is a positive. Second thing is slightly different in the next 2-3 quarters. The Q1 will be bad for Z. There will be almost 16-17% kind of dip in ad revenues in our view. But that was linked largely to the Iran crisis. Currently, if you see, Z Network is at a 8-year high in terms of viewership, partly aided also by the United viewership. 20% market share is an 8-year high for Z as a network. That's also positive. Plus, with Iran crisis now normalizing, crude correction is a positive for Z because FMCG advertisers cut advertising sharply in Q1 by 16% for Z. My sense is in Q2, Q3, clearly that will not be as bad, and that's also positive. So yes, how minority shareholders will now analyze will be different versus last time because of sport and because network share has also improved.
Right.
So I do see bit more probability.
Okay. You are clearly, on the positive side on this one. In terms of just the overall direction, right? Avnish, just break it down. The market cap is about 10,000 crores. I think they have some cash on the books. They've got this music business, and there's been lots of speculation whether they'll do something with it, etc. How does it broadly, and of course, they've got the television business for which you said viewership is doing very well. So how do you assess value across segments here? Market cap, of course, as I said, is about 10,000 crores.
Yes, absolutely. That's why you see the warrant price and the ESOP price is also around 15-16% higher than yesterday's closing, which also is a slight positive only. Last time also the price was very close to that 132 rupee. If you see around 6-7 years back, the stock used to be 400-500 rupee also. So
yes,
valuation comfort is very high. You are absolutely right. Music demerger or value unlock is something which investors would appreciate. Even Saregama gets a very good market cap. Of course, Z Music is much, much smaller than Saregama. And also from a cash perspective, you're absolutely right. Balance sheet has around 2,500 crore of cash. But if you see FIFA and sports, obviously will need some deployment also. And my sense is they will go into Olympics, bidding. They will also try to create more non-cricket property. I would say that those are positive. So,
Avnish,
yes,
just to probe a little further on the non-cricket market, I'm looking at data. Non-cricket market in 2020 was 17% of the market, and right now it's 11% of the market. So, despite the noise around non-cricket increasing, the monies towards cricket is a lot higher. So the share of cricket has only increased in the market. And you speak about Olympics. Obviously, a lot of the other large players, including the likes of Jio Hotstar and the others, would be looking to get Olympics, because in 2028 is the first time where cricket will be introduced in LA Olympics. So obviously, all these factors would play out in some form or the other. And FIFA as well. The overhanging sword is that. The overhang is that the most important matches will be telecast on Doordarshan for free, which takes away the exclusivity of Z.
So 3-4 key things. Very good question. So first, of course, my sense is if this minority shareholder approval comes, that's a big if. Then only I think a lot of the Olympic bidding and kabaddi and all those will happen. So that's an important thing. My sense is Z will be aggressive in bidding. This time also we did see that Z and other players are also bidding, but ultimately Z won the FIFA rights because other players already have a very good viewership. So your point on Jio Hotstar bidding is absolutely there. But the good thing is Jio Hotstar already has so much of viewership that for them that incremental viewership from Olympics or FIFA on a say 30-35 million payout to FIFA, I don't think it makes sense. For Z it makes a lot of sense. So that's one important point. You're absolutely right. Non-cricket has fallen. But ultimately, it is all about monetization, right? Cricket is increasing viewership, but BCCI is also increasing the rights. So rights are getting more expensive only. Non-cricket, if you see, viewership might decline, but these market properties of FIFA, Olympics, etc., for a network which doesn't have sports, that makes a strategic sense. And definitely now, if you see the overall ARPU is going up, right? Who would have paid Z5 $7.99 ARPU for a 3 months? That is unthinkable. So I would say that's also important. So marquee properties, non-cricket makes a lot of sense, especially for a non-sports network. Yes.
Yeah, no, 100%. But we'll have to see, right? July 19th is when the FIFA gets over. Will they sustain some of these numbers with more events, etc. But maybe some of the parts is more than the whole at this point in time. And as you said, more reasons to be a little optimistic. Although we'll have to see if this, what do minority shareholders really say about this attempt to raise funds? and where does this go? Thank you very much, Abneesh, for joining us. Good speaking with you here on CNBC TV 18. All right, take a quick break. We focus on some volume buzzers from yesterday. Sudarshan Sukhani and Mitesh also join in with technical trading ideas. Stay tuned. 11 minutes to go for the pre-open session to kick off. Let's get Hormuz in with the big movers from yesterday and the delivery, whether those moves were backed by delivery or not. Hormuz, take it away.
Good morning, Prashant, and can't not start with the KPIT-Tech after that 17% down move that we saw in yesterday's trade, the biggest since March of 2020. In fact, over the last 3 sessions, the stock has already declined 25% after yesterday's fall. The 560 put option yesterday was the second most traded option. The premiums went up by almost 5x in yesterday's session. The volumes were the highest on record for the stock. Over 2.5 crore shares were traded. The 20-day average is only 15 lakh shares, and a quarter of those were marked for delivery. So close to 66 lakh shares marked for delivery. The 20-day average of around about 5 lakh shares. And after yesterday's fall, the stock is almost at JP Morgan's price target, which it had after its downgrade, which was close to 550 rupees. Of course, there was a block deal as well in the stock, but these were elevated volumes seen in KPIT-Tech. Page Industries was one stock that did very well yesterday, gaining over 5%. The biggest single day move since November of 2024. The stock has gained in 5 out of the last 6 trading sessions. The 43,000 call option was heavily traded yesterday, premiums going up by around 140% as well. The volumes in yesterday were the highest in over a month. Close to 90,000 shares were traded, 3x their 20-day average. A third of those shares are marked for delivery, so 27,000 shares for delivery. The 20-day average was 16,000 shares, and the stock is up around about 22% so far this year. They're still around 12% away from its record highs, which is close to around 50,000 rupees. And lastly, Inventurous Knowledge Solutions, or IKS, was one stock that did well, was up around 8% yesterday. The snapped a 3-day losing streak, the biggest single-day gain since June of last year. The volumes were the highest in over 2 months. Over 15 lakh shares were traded yesterday. The 20-day average is just over a lakh, and a quarter of those were marked for delivery. So around 4 lakh shares for delivery. The 20-day average is less than 70,000 shares, and the stock is up around 43% from its 52-week lows of 1262 that it fell in the month of March. So in the next 3 months, the stock has gone up close to 50%. And after yesterday's move, the stock also turned positive on a year-to-date basis.
All right, we take that point. Thanks a lot for that, Hormaz. A bunch of stocks, but let's look at some of the brokerage calls of the day as well. Sudarshan, as always, joins in with the list.
So we'll start with Coal India. UBS maintains buy call with a target price of 550 rupees per share. It said that coal offtake has risen with strong summer electricity demand, and now for Q1 FY27, offtake was up 4% YOY while production was down 7%, which indicates strong demand, steady coal movement and inventory liquidation. Now, as far as e-auction premium is concerned, it has improved as international prices remain elevated. The premium was 42% in June 2026, that is against 36% in May, and now Q1 FY27 average was 44%. On Ambuja Cement, it's a contrarian call from Bernstein. It has updated the stock to outperform but cut target price to 486 from 542 rupees per share. It says gap in valuation between player 1 and player 2 is too big to continue, and now Ambuja is available at a valuation of Greenfield Cement plant, which is a big discount to UltraTech. It expects company to converge EBITDA per ton gap opened with UltraTech and Shree Cements over time.
Thank you very much for that. So that's some brokerage notes. More coming up a little later. We'll take a quick commercial break here. We'll have Abhishek Pathak of Motilal Oswal Financial Services to focus on the recent pressures in the IT space. That conversation comes up next. Welcome back. Sudarshan Sukhani is with us, and so is Mitesh Thakkar with what they'd want you to do as far as trading and trades today go. Gentlemen, good morning. Great to have both of you here. Thank you for joining us. Sudarshan, so 23,800 held, and we are hopefully we've resumed a bit of an uptrend here. So how would you play it this morning?
Yeah, good morning. Well, if you have long positions, keep them. If you don't, or if you want to add, look at for small dips or small consolidation patches during the day to add to long positions or renew or make new ones. So the Nifty is a buying opportunity. It is true that we are in a trading range, but within that trading range, we are finding support repeatedly at lower levels. So the trade still is look to go long at any small dip or consolidation.
Right. Look for consolidation or any dip to go long, and if you're long, continue to hold on to your positions. But generally, are you feeling a lot better about the markets over the last couple of sessions, given yesterday's move? And what would your stock picks be?
You're asking me, right?
Yes. Yes, Sudarshan, we are asking you. Okay, we'll just try to repatch that connection with Sudarshan. In the meanwhile, let's go across to Mitesh Thakkar, who joins us as well. Mitesh, your index calls and stock picks.
Good morning. On the index, I maintain that we'll possibly be in this range of about 23,800, 750 to about 24,300. And we kind of rebounded from the levels of 23,830, which was the low on Tuesday, and now are most likely heading towards the upper end of the range. Again, my idea is that as we get closer to about 24,250, 300, I think I would be in some profit booking kind of a zone. So close about 24,300, which is possible in a ideal scenario. I think would suggest 24,600 as the near-term target. But for the timing, I think 24,300 till it's crossed on a closing basis will remain a significant hurdle.
All right. And individual stocks?
Yeah. So I have a buy on Bajaj Finserv with a stop at 1775 for targets of around 1750. Buy on DLF with a stop at 636 for a first target of 672 to about 675. Ashok Leyland is also a buy. Keep a stop below 159.9, broadly below 160. Look for a first target of 170. And Coforge had a very negative kind of candlestick pattern yesterday. Breakdown kind of is indicated. So that's a sell with a stop at 1395. Look for targets in vicinity of 1320.
Sudarshan, what would your stock calls be?
To answer that question first, yes, I'm much more comfortable about the market, not because of the Nifty, but because individual stocks are building bases. They're doing that slowly, but in all categories, small, mid cap, large cap, many stocks are saying, okay, we are now trying to build a base from where we can break out. So that's the reason. And for the stocks, AU Small Finance Bank is a buy with a stop under 1025. BEL is a buy with a stop under 405. M&M is a buy with a stop under 3088. And finally, PGEL, which is PG Electroplast, that's a buy with a stop under 533.
Okay, thank you, gentlemen, for joining in. Let's invite on the show Abhishek Pathak, Vice President, Institutional Research, Analyst, Tech and IT at Motilal Oswal Financial Services. Abhishek, if you could just begin by asking you, any idea why Wipro ADR was down 17%?
Yeah, I think there's some technical glitch there regarding the ADR issuance for buyback. My broad sense is that there was no headroom, 15 days back for the ADR issuance in relation to the buyback, and that headroom has basically opened up, leading to almost the ADR converging to the Indian stock price, the Indian scripts price. So nothing fundamental there, largely related to buyback-related glitches, and I think it's probably going to be smoothened out soon.
Okay, then let's come to KPIT Technology. Now, you had a bullish call on KPIT Tech. Do you still hold on to it? What have you made of the warning, the profit warning that the company gave?
Yeah, no, I think it was a little bit unfortunate, what's happened over there. I guess first half was anyway supposed to be slightly weak, considering they had a couple of project ramp downs planned in. However, we did believe that as far as AR&D as a pack is concerned, it probably has less of a structural headwind as compared to what managed IT services do. And in that context, we do believe that AR&D from a 3 to 4 year perspective is still a sector that, we should be kind of considering. That said, the profit warning kind of also indicates that the next quarter, Q2 as well, could be potentially weak, leading to steep earnings cuts with KPIT. So until that situation stables out and we get clarity around when that when those short-term niggles kind of wear out, we currently remain on the sidelines on the R&D space as well.
So have you lowered your EPS estimates, because you were working with about a 23% EPS CAGR growth from FY26 to FY28? So to what extent have we seen EPS downgrades, or you have downgraded it, and what is the fair target valuation multiple now?
Yeah, Rima, I think I'll probably refrain from that because the PR came after we released our preview. So we're kind of working out the estimate cuts there. So once I publish the estimate, the updated numbers, we'll come back to you with an updated target multiple. That said, like I said, it is difficult to kind of imagine the stock trading at elevated multiples beyond 20x, considering the earnings cuts could be pretty steep. But yeah, I'll get back to you on that.
Okay, so that's about KPIT Tech, and the advice right now is to stay on the sidelines. So don't nibble and get in till the situation plays out, and we know the extent. All we know is Q1 is going to be weak, and so will Q2 be. Also, I wanted to get your view on your expectation from Infosys and HCLTech. You believe that in the current quarter, both the companies will lower the upper end of their guidance. Now, for Infosys, the current guidance is 1.5% to 3.5%. For HCLTech is 1% to 4%. And you think the upper end is going to come down. Why? I mean, it's just 3 months back that they gave the guidance. So what changed so dramatically?
Yeah, no, I think, Rima, specifically to Infosys, the guide remains extremely dependent on the first half being quite strong. And our channel check suggests that the demand pressures that, most companies called out in March related to, a war, they've kind of, spilled over into Q1. And of course, AI remains almost an omnipresent headwind to the sector right now. So coupled with the geopolitical situation and AI, we believe that H1 across the space could be much, much weaker than expected. And as revenues kind of, fall off a bit of a cliff eventually in second half, as is the case, for seasonal reasons, we do believe that the arithmetic for the top end of the guide now becomes slightly impractical. In that context, we believe it would be prudent on Infosys' part as well to kind of trim that upper end to manage the expectations around what can be delivered. With HCL as well, we do see, of course, the dependence on a very strong first half is slightly lower. However, if there's a macro level headwind sort of in the first half, we do believe that the top end needs to be trimmed a bit to get to the expectations in line again.
You're broadly constructive on the IT sector. I think out of the 16 stocks in your coverage, on 11 of them, you've got a buy call. Stocks are constantly getting cheaper and lower than what they were even a month prior. You would have thought that maybe they're attractively valued at 15 times. They've come down even further to 13, 14 times. Is this a good time to buy IT?
Rima, probably not. I mean, I do remain constructive, from a medium-term perspective. I do believe that, eventually managed services has to pick up and AI implementation revenues have to come in. But right now, the evidence remains very, very slim. Our channel checks suggest that there are slivers of demand, when it comes to AI implementation. But the macro pressures, along with AI deflation, currently seems to be, creating a tremendous amount of pressure. We don't know whether this is the bottom right now in the near term. If you look at global peers like Accenture and Cognizant, they're trading at multiples which are in the single digits. So it may get worse before it gets better. That said, I do believe that some mid-cap names where pivoting to, let's say, AI native managed services could be easier. There's an opportunity over there to kind of enter and sit tight, and over the next 2 to 3 years, they could deliver handsome returns.
Which of these mid-cap companies pivoting to AI native services?
So I think Coforge stands out in terms of how they're executing, their sales rigor and their Encora acquisition kind of fills a massive gap that they've always had in product engineering. Across our surveys, we do believe that product engineering as a space is not seeing as much deflation as CIO-led managed services spends, right? So Coforge is a name that we like a lot. Infosys is another name that we believe could be a decent bet over the next couple of years. They're into application modernization, another service area which we do believe picks up significantly over the next couple of years.
Okay, got that. On the point of valuation, you're saying that in a way we're unsure if there is going to be further derating from here on. Do you think there's a possibility we get to the levels that Cognizant, Accenture, many of the global peers are? They're doing exactly the same work that the Indian IT companies are, but they are trading at 7, 8, 9 times valuation multiple. I know that historically Indian IT has traded at that premium, but I think people are going to question that why should even Indian IT trade at the current valuations and why not at the levels that an Accenture is?
That's a fair point, and I don't have a logical answer as to why they can't trade at those single-digit premiums, right? And if FY27 ends up being a washout, and FY28 AI implementation services don't pick up, we may believe that that the sector keeps eroding and goes in the direction it's currently heading at. So yeah, I mean, I don't have an answer as to why they can't trade at a multiple at which Cogni is trading, and it's entirely possible that it happens.
Okay, so we could, derate significantly further from here on. That's a possibility. But the only two stocks that you're comfortable buying right now and hold tight would be Coforge and Infosys. Is that correct?
That is correct. And selectively, despite the Nagarro acquisition, we do believe that, if Persistent kind of corrects a bit sentimentally, there could be an opportunity there as well. With the same framework, proven capabilities and just a fantastic sales engine. Already building a lot of AI native AI services led work over there. So I just want to wait a bit to kind of decide on what happens with the Nagarro integration risk. But otherwise, Persistent is another stock that we believe that could be set for a medium-term appreciation from here.
Okay, Abhishek, we'll leave the conversation here. Thank you very much for joining in. All right, that is the view coming in from Motilal Oswal. Let's get back to some of our experts. Sudarshan is still with us. Mitesh is also here. Gentlemen, before we get to the 9:10 call, you want to quickly weigh in on the kind of fall that we've seen in Indian IT companies. For the Nifty IT itself, it's the worst start to the year since 2001. From January to June, the index fell more than 30%. And even in 2008, we didn't see this kind of a fall in the first 6 months. Any levels, any trade that you want to highlight on the Nifty IT or individual stock? Sudarshan?
Well, I think the ETF, the IT ETF, the Nifty IT is a buying opportunity. These sharp corrections, declines, then eventually recover. So if you are a portfolio investor or a pure investor, buy the ETF.
All right, buy the ETF. That's the call coming in. Mitesh, your 9-10 call?
I will go with a buy on DLF. That looks interesting to me for a target of around 675 to begin with.
All right, so that's about... Sudarshan, your 9-10 call?
It's AU Small Finance Bank, buy with a stop under 1025.
All right. Sudarshan, you know, one of the stocks that actually underperformed surprisingly in an otherwise decent market for domestics yesterday was DMart. Is there anything chartically that explains the weakness on DMart? Because all the others have reported decent first quarter previews.
No, DMart doesn't have anything going against it. So I would assume it's probably a random occurrence.
All right. And Mitesh, do you have any preferred FMCG pick after the outperformance that we saw yesterday?
A couple of names did record a reversal. I think, Dabur was one which had flagged out yesterday. Britannia is now showing signs of a bottom base building and reversal. So, yes, I think these names could be good.
All right, we take that point. In the meanwhile, let's recap some of the updates that have come in from the first quarter so far as well. Before we get in, Ananya, on the financial sector updates coming in, I'll look at a couple of these names. We have V-Mart Retail, a strong update coming in. Total revenue growth at around 23%. 1,089 crores is what the company reported in the first quarter as revenue. This compares with about 885 crores. And the same-store sales growth was led, obviously, by the large part of their business, 9%. V-Mart did 8%, and Unlimited, which is a smaller part of their business, growing faster, did about 13%. They added about 15 stores during the quarter, total at 591. V2 Retail is the other one, which saw a 58% revenue growth. And as per their update, they've reported revenues of just under 1,000 crores in the first quarter, 7.5% same-store sales growth. They too have been strong on store opening. 57 new stores opened during the quarter with one store closure. Brainbees Solution is the third stock that I'm looking at, and that's largely because the company's announced to the exchanges that they will sell up to 300 crore worth stake in their arm Swara Babies offer for sale. So some money coming in a stock which has not done well at all should be a mild positive. But speaking about the first quarter update so far, let's go across to Ananya, who joins in on Canara Bank and Indian Bank. Ananya.
Yeah, so a lot of business updates from bank coming in. Let me first start with Canara Bank. Their global business crossed 29 lakh crore mark, grew 14% year on year, while global advances grew a robust 18% comfortably, ahead of 12% growth in deposits. Now, the domestic retail, agriculture and MSME, that is RAM portfolio, also grew 21% year on year. Importantly, management had guided for 10 to 11% global business growth, 11 to 12% advances growth and 9 to 10% deposit growth for FY27. And the Q1 numbers suggest a strong start to that. However, it cautioned that margin pressures from higher deposit costs and the transitioning into the ECL norms will be seen from FY28. So that will be a key monitorable. Now, coming to Indian Bank, meanwhile, the numbers were in line. Advances grew 14% YOY to 6.85 lakh crore, while deposits increased 13% to 8.43 lakh crore, broadly in line with expectations. The key positive was the 56 basis point improvement in the domestic CASA ratio to 39.6%, which supports margin expectations. Now, management has guided for 11 to 13% advances growth and 9 to 11% deposit growth in FY27. Overall, a good set of numbers from both the banks.
All right, take that point. A good set of numbers from both the banks. That's about the first quarter, but we're also getting in auto numbers trickling in, and TVS Motors and Bajaj Auto really stood out. Sudarshan?
That's correct. So first talking about Bajaj Auto, it's a strong set of numbers. If you remember, after May month sales, company had spoken to us that they are looking at doing exports of more than 2.5 lakh units, and company has achieved that. In this month of June 2026, exports have increased to 2.53 lakh units, and that's an increase of more than 46 or say 47%. While talking about total sales, it's come at 28% higher versus our expectation of 26% increase, and domestic sales total increased by 11%, exports were up 47%. TVS Motor, it's the strongest print amongst all the two-wheelers named. Total sales have increased by 47% versus our estimate of just 26% increase. And here also, domestic and motorcycle sales were up 42%. EV sales have increased 3.5 times, and total exports were up 47%, and two-wheeler exports have increased by 48% as well.
Okay, all right. So thank you very much for that. So we'll keep an eye out on many of these names. It promises to be, at least, I mean, if you look at the end of the pre-open session, the Nifty is up about 56 odd points. So it's not up 90 as the GIFT Nifty was indicating at 8 o'clock in the morning. But let's hope we are able to hold on again. Some of the stocks with news flow and how they've settled after the pre-open: NMDC, Coal India, Hero MotoCorp. The moves. Z is flattish, 108. Canada Bank, Indian Bank are some of the others which are coming up with, some moves. Nothing large, actually. V2 Retail perhaps is the one, 3%. V-Mart Retail is up about 1% or so. And you got Brainbees, which is First Cry, 1%. And Adani Energy Solutions, which is up about 0.25%. And so it goes. So I think... the first kind of sort of rates which are all coming up are muted, modest. 50 points in the Nifty, by the way. I think Mitesh is with us. I'm not sure if we'll have time for a question. Mitesh, real estate as an index, should one look for ideas, opportunities there? It's kind of a bombed out space. Stocks have corrected sharply.
Yeah, I think, if you look at the Nifty Realty, in fact, we have had buys on Oberoi Realty. Lodha looks good. DLF is a buy today. Nifty Realty has made a good pattern in a breakout. While there is a minor pivot around 867 and it's at 859, 15% higher. The overall pattern suggests we have a chance of heading towards 935 to 950 on the Nifty Realty Index, roughly giving about 7 to 9% kind of. So very positive on these names. Though I think tactically you would want to keep a close eye on levels where you would, be okay to take profits.
Got that. Lodha and DLF were the top gainers in that space yesterday. Did very well. And Mitesh saying that there is a buy that he's got on DLF this morning. What do we have? First rates about 1/3% higher. 24,062 is the market open, and we're at 24,071. Okay, the Nifty Bank is up 0.25%, 58,150. And we're about 0.25% higher there. The Nifty Bank is up 130, 58,150. Midcap index is starting 1/3% higher. So this is up, small up, and let's see, if you're able to build on it. Small cap index is up about 0.4% or so as well. So that's essentially the indices. Nifty heat map will give you a sense of how we are starting. The IT, midcap IT is all starting up, 2.5, 2. So that's actually all of it. 2% and Infosys, Oracle and are up as well. Large cap IT is also up. So this is interesting. Infi, HCLTech, TCS, Tech Mahindra, Wipro. Across the board, the top gainers are all Nifty IT companies. Okay. ONGC on the other end, Bajaj Finance, Dr. Reddy's and NTPC are some of the names which start on the negative side. A third higher on the Nifty. Rima.
Well, as you said, like the top gainers are all the IT names. It's a 3% gain now. Infosys rebounding after yesterday's losses. Adani Group stocks are also higher. So Adani Green is looking to raise money. But Adani Enterprises has a gain of nearly 2% this morning. Adani Ports also moving up quite smartly. Eternal adds to the gains from yesterday. Yesterday up 5. Today follow-on buying 1.25% up, taking its weekly gain to nearly 11%. Beneficiaries of the decline in crude prices also helping. So Interglobe Aviation has a positive start. HDFC Bank, Shriram Finance are higher in trade. Well, on the way down, you've got ONGC. That's the top loser, 1% gone. Again, the decline in crude prices hurting. Then Bajaj Finance and power names, Power Grid and NTPC are weak in trade. Eicher Motors should also come up for you on your screen. Came out with their numbers largely in line with expectations. Total sales have seen a growth of about 27%, with the premium 350cc plus sales seeing a growth of 36%. So that's one of the big movers. And Hero MotoCorp is the other one we should pull up on the back of sales numbers. Below estimates, total sales have come in down 2.4%. The street was working with flat numbers, but on the whole, Hero MotoCorp is flat. But it's a good start. And yesterday we conquered that 24,000 mark, and today we built on it. But as you said, it's the 100-day moving average, which will be critical to track.
Yes, the 100-day moving average will be critical, but a couple of these auto sales data numbers that came in yesterday evening, Force Motors really stands out. A 26% jump in their domestic sales, 23% jump in their overall sales, has that stock higher at open. We've also seen, TVS, as Sudarshan pointed out, over 40% jump in their overall sales as well, so that's doing well for them. The stock of the morning has to be V-Mart Retail. A near 3% jump is what we're seeing on that one after a strong first quarter update. Vishal Megamart is taking a leaf from that, up around 2.5% at open for Vishal Megamart as well. And then we are seeing some traction in the jewellery space, which continues from yesterday. So Kalyan Jewellers, for one, has opened about 2% higher. The good part is that after seeing a big gash yesterday, some of these IT names, as Rima pointed out earlier, are seeing some bit of recovery, maybe, a bit of nibbling into. So we have Persistent Systems, which is up 2.5%. We have L&T Tech Services, Tata Elxsi, which was a big loser in yesterday's trading session, up about 2% at open as well. And then if you look at, some of the names beyond the F&O space, you do have ADF Foods, which is open with an 8% uptick and a fair amount of volumes backing that stock as well. G&G Electronics has been doing well for the last many trading sessions. In fact, this week itself, it's up 21%. This year, over 120%. That up move continues. Waterways Leisure, Cordelia Cruises, which had a very bad outing on day one of its listing, is finding some buyers at lower level, up around 5%, has crossed the 700 rupee mark, and we are seeing continued traction on Vikram Solar as well. Z is the one which opened flat and now has swiftly given up those gains. In fact, after a 7% up move in yesterday's trading session, the stock's actually down about 4%. So we'll obviously get in some more details on how the street views this fundraising which has been announced by the board, the warrant issue to the promoters. Z Entertainment comes up for you, a cut of 4% at the open itself. For the Nifty, holding around 24,100.
Well, I think the fundraise announcement is not negative. I think but people bought into all of this, right? So there's, I guess, some profit booking which is underway, which is happening at this point in time. This still, of course, needs shareholder approval. So it's not a done thing. And we'll see how this kind of plays out from here. But this morning, it's lower. Let's just take a quick look at the overall it's about 3:1. It's still very, very early and things will settle, change. More stocks will come into the reckoning. But 1,800 up and about 600 lower. That's the advanced decline ratio. And IT is, of course, on the other side of it. I mean, I saw a brokerage downgrade their ratings across the board on IT services. And the first thought was maybe, you're coming at the end of the, at least the latest downgrade cycle. I mean, it's 6% cut just this week. That is from last Friday's close to yesterday's close. The Nifty IT is down 6%. And this morning it's coming up about 3% or so.
So actually, the downgrade is coming from ICICI Securities, and there's a very sharp cut in the valuation multiple.
I see.
Earlier, their target valuation multiple was 15, 16, 17 times, and now they're valuing large cap at 11 to 12 times. In the past, these are levels at which we've seen valuations trough out. We're closer to 13, 14, 13. Now ISEC is putting the valuation multiple even lower at 11 to 12 times. So that's the downgrade.
12, 13. I mean, you're basically marking the market in that sense, right? I mean, you're changing your view.
Changing your view. You were at 16,
prices
17. Prices are down to 13. You brought it down.
I saw a note yesterday. I don't remember now. It was an upgrade. It was a massive upgrade from 700 to 1400 on this name. And I checked the price, and the price was 1500. So it's kind of in that sense, marking to the real price out there. Of course, I mean, changing a view as well, fundamentally, on the back of it. But I think 24,100 is where we are at right now. Let's welcome in S. Naren, Executive Director and CIO at ICICI Prudential AMC. Naren, good morning. Great to have you with us here. Thanks very much for joining us. Naren, of course, is the #1 equity fund manager in the country with the largest assets. So the view matters. Naren, congratulations again. I said congratulations earlier, but I think on television for the first time. So good going. Talk to us a little bit about the markets and your view now. We are speaking after a while. So why don't we mark to market in terms of what your views are now?
See, clearly the macro is in much better shape than what it was. If you look at the way crude has fallen and the last two days improvement in monsoon in many parts of the country, I think clearly the macro is in much better shape. Unfortunately, we are not part of this AI bucket, which has seen the maximum amount of interest in the last 2 years. And we have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows. And, the domestic flows have been buoyant, and that has ensured that the markets have been static in large caps, because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap. So, but at the same time, we are still not in a period where you can give a thumping the table call on equity. Over the last 3 years, what has happened is people have been investing only in equity. And in the last 2 years, they have not seen any returns in large caps particularly, and even in small caps to a significant extent. And that is the challenge, because over the last 3 years, the amount of money which has come into equity markets, both directly and in derivative positioning, etc., suggests that there has been too much of an interest in equity and too little interest in areas like debt.
Okay, the bigger view still, Naren, is that this AI thing, which is red hot, has to cool off for foreigners to really get interested. That's what you're saying, right? In India.
Exactly, because in those segments, the kind of growth. See, India used to be a growth market relative to the world. And today in all the AI segments, the kind of growth that people are able to show is so much higher than India, that bulk of the money comes for growth, and people find that many of the AI companies are showing much bigger growth than India. So the money goes to those companies. So that has to deflate. Otherwise, you still have a situation where bulk of the money will go to all those AI countries and AI stocks. And I think even in those countries, I think it is only the few AI stocks which are growing or linked to AI, like chip companies. Those are the companies which are seeing huge moves. And in fact, if you exclude the moves of the AI-oriented companies like chips and other semiconductors, I don't think the rest of the markets are doing that well, even in those countries.
Yeah. Naren, in India, people have been, of course, trying to look. Is there a way to play this red hot AI theme, data centers, infrastructure, electrification, power, all of that, right? Industrials, basically, generally. And I mean, the rub-off is real. And the ordering, etc., has also been real. So many of these stocks are up, have doubled this year, just this year, 6 months of the year only, right? How do you... what's your view on this part of the market? Power, industrials, the entire electrification theme?
So in my team, there are people who are growth investors who look for primarily growth opportunities. They have actually bet on some of these stocks and had a very good experience. Within the team, I am more defensive, and so I have missed some of these opportunities in some of the funds that I run. See, I believe that, these kind of sectors, if the global AI were to deflate, these would also deflate. So that is something, that is a risk which I keep cautioning my colleagues on a regular basis. So, it's unfortunately the real challenge with investing is timing. And it is very tough to predict how long this AI-related boom will go on, to what extent it will go on. And that is a challenge. If we knew, it would be very easy. Unfortunately, investing is not arithmetic. And that is the challenge we are facing at this point of time. But I would say that these will also fall along with US AI stocks or the Korean and Taiwan companies as and when the boom deflates. But when the boom will deflate, last year I had a view it would happen in 1 year, but it didn't happen. So even today, when I see some of the events like, for example, many of the IPOs which happen in different parts of the world at unheard of very high valuations, I think it should deflate. But they still don't deflate. So just because I think they should deflate in the next 3 months doesn't mean it will deflate in the next 3 months.
When it will deflate, this will also get hit. My question is, at current multiple, even if it doesn't deflate, will you buy these at current multiples? Then they are okay.
See, obviously, my colleagues who are on the growth side, clearly, if you look at it, these are all growth companies. These are not growing at 5 to 10%. They are growing much, much faster. And consequently, what happens is that they will find value, because at the end of the day, if you believe that these are all companies which are going to grow for the next 3 to 5 years, and obviously you will find value. You need the growth mindset and not a defensive value mindset for you to play these themes.
Timing the market is not possible, but definitely looking at value is. What's your sense on the IT space? Everyone's been talking about this for the longest time. At current reckoning, do you get tempted to nibble?
No, actually, where we have nibbled, we are holding, and that is what we have been doing. But there are colleagues of mine, for example, again from the growth side, who don't find the entire growth story of Indian IT services appealing. So they are all underweight. Because see, what happens is, if you look at it from a value mindset, certainly these sectors seem to have value. The trailing PE of these companies have come down to a level not seen of for a decade. So if you have a value mindset, you look at it, but we also are worried that if this lasts too long, that would be a challenge. So with a value kind of fund, definitely we would own these stocks, and we would think about nibbling, but we have been scared because the pace at which all these developments which are happening in AI and the kind of PEs at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies, because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage, because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. And that has been the biggest worry for us as investors.
It's an interesting one out there. We'll obviously monitor those valuations as well. But just to complete the point on market, you said that you feel a lot more constructive about the macros of the country right now. Irrespective of whether, we participate in that AI trade and there are some names, etc. From a market construct standpoint, what is it that you're liking right now, and what seems attractive to invest in?
The three things that we like is AUM. Not that I have any requirement to raise AUM in the company. My job is to manage public money properly. But the three things we believe is A stands for asset allocation, U stands for unconstrained fund, and M stands for moderate return. Why do we believe in moderate return is because of all the risk due to AI, because none of us know at this point of time what AI leads to in India. Because if you had expected that when the mobile revolution came, there would be so much impact on productivity because of mobile revolution and what is happening through various ways, we wouldn't have guessed it. So this is what we believe in. So we believe in asset allocation, unconstrained funds, because we believe that at some point of time, the AI boom can deflate. So if you bet on only constrained areas, you can make money in the near term and lose money in the medium term. And moderate return, because we are very confused on what AI is going to do to many of the developing countries. Are all the profits going to be made by only the US companies and the ecosystem around it? Is a confusion we have at this point of time.
Naren, morning. Rima here. And between large caps and, say, the NSE 500, because the large caps are not performing, we've seen a smarter rebound in many of these smaller companies. And they're the ones where you are seeing the newer ideas that India is betting on in terms of business models and growth stories. So the breakup between large caps, mid caps, small caps?
See, clearly, if you ask me, mid caps are the most overvalued relative to large caps and small caps. But even in mid caps, my colleague who runs the mid cap fund feels that if you do systematic investing in mid caps, you will be able to make money. But on large caps and small caps, there are clear opportunities. Whether those opportunities are going to play out in the near term, because many of the large cap companies became large cap companies because they are strong. They may be growing slower in the recent past, but I don't think that is necessarily the trend for the long term. See, we have always had these periods where large caps have done badly. If you go to 2016-17, people said large caps are not a way to invest, but 18 to 20 was a superb period for large caps. So you go through these alternating periods, and today we are constructive on both large caps and on small caps. And we believe that there are opportunities. My colleague who runs the mid-cap fund feels that as long as you systematically invest in mid-caps, there is no problem because the long-term opportunity remains in mid-caps and because they can grow faster. But overall, the challenge is, we don't believe that, the 2 years back when we tried to convince people that we are no longer in a high return world, it was very difficult. Today, when we tell people moderate return, and they should consider investing in debt also through various ways, at least hybrid funds. I think they are more looking at it. But I still think that the Indian investors today have been investing too much in equity and too little in debt, that there is need for much more inflows into hybrid funds so that their asset allocation is made more logical.
I got that. Naren, within large caps, financials is a clear area. We looked at returns, right? PSU, and within the financial space, from 2020 to 2025, I think 2 days back, we looked at numbers. The Nifty Private Bank Index has given a 10% CAGR, and PSU Bank in the same period is some 35-37%. Do you believe there perhaps could be a period where this rotates for a little bit? Not that PSUs have to underperform for private to do well, but what are your thoughts?
I think, what happened is in the 2010 to 20 period, the government did a lot of work to reduce the NPLs. The last 5 years, public sector bank returns is a function of the good work done. So that if you look at the NPLs today and look at the NPLs in 2016-17, you'll find that you'll think they are in different countries. So I believe that is the reason for the super performance. But I think going forward, I think it is not going to be only public sector banks. I think the private sector banks have derated significantly, that you should clearly expect decent returns from private sector banks as well. If you look at the entire FCNR scheme, which the Reserve Bank thoughtfully brought in recently, I think many of the big private sector banks are likely to get meaningful inflows. And that is going to be a re-rating event for many of the private sector banks. I'm not saying that the leading public sector banks also will not participate. They will participate. But I think the larger banks are going to be a bigger beneficiary of the steps taken by the on the FCNR side. And that is going to lead to the re-rating of the larger banks in the index vis-a-vis the smaller banks. Because the smaller banks have got re-rated significantly in the last 5 years. And therefore, the scope now is for the larger banks to again re-rate from where we are here.
The large cap sector, financials is one clear. IT you spoke about in terms of just the framework to think about it. Any other large sector which you think is poised in a more constructive way?
Clearly, we are very positive on oil and gas sector. Because at the end of the day, if you look at the oil and gas sector, the government handled the last 3 to 6 months in a very, very difficult period in a nice way. I think the amount of loss of oil production led to this increase, and now it has come down. I think the entire government policies which have happened on the oil and gas side should lead to a re-rating in the sector. And it is often an ignored sector by the market because people have not made money in the past. But I think this is a very interesting sector at this point of time to invest in.
So if you could, detail a little more in oil and gas itself. Are you looking at upstream? Are you looking at downstream? Or is it the entire sector that you like? And to further the point on commodities itself, do you have a view on any of the metal plays that we have?
Normally, we used to invest in metals in the 2010 to 20 and look at China. This time, without China being a part, actually the metal stocks did well. And therefore, we missed it because we always used to focus our research on China. And that didn't work out, and that's why we missed it. But we don't think we'll chase it at this point of time. I mean, not that we are reasonably constructive on steel names, but at the same time, I don't think it is a sector to chase at this point of time. In oil and gas, obviously, upstream is the only area where the outlook was very good 2-3 months back, and now it is much worse. But if you look at the rest of it, whether it is refining, whether it is CNG, and as gas prices come down, a lot of gas should come to India. So I think there is a lot of scope in the entire sector. The upstream is the only sector where I would say there would be earnings revision on the downside. But I would say I would say the rest of it. But the upstream sector is possibly the only sector trading at 5, 6, 7 Ps. So overall, I would say the entire sector, because the sector with the downward earnings revision is trading very cheap, and the rest of the stocks have a good outlook for the next few years.
What's your view on gold? I mean, 11% of asset allocation, it's been underperforming for the last few months after a stellar rally that we saw. One would have thought that war-led uncertainty would, lead to gold prices being higher. Do you think the best of returns are behind, or you continue to hold?
See, in 2022-23, we were very positive. In 2025, we turned negative earlier than what was needed. So in 2026 January, when the biggest inflow came into gold and silver ETF, we actually explained that what people were doing at that time is anti-asset allocation. Unfortunately for those investors in January, anti-asset allocation hurt them and they have lost money. Our view is it plays a role in asset allocation. It's a very important role in asset allocation. After the fall in the last 4 to 5 months, definitely it deserves a place in asset allocation. But do we believe that investors should invest in gold and silver ETF? The answer is no. Because if you look at it, the 15% customs duty can also come down. So beyond looking at it from a multi-asset construct where we are very positive on investing in multi-asset, we are not positive on gold, silver standalone at this point of time.
Got it. Naren, now let's talk about, this. I noticed that you've got you're a champion of multi-asset strategies, right? I mean, I think for the last many years, and now, of course, it's become a big, full industry category. You've come up with a multi-asset active fund of funds, right? So you already have a multi-asset fund. Now, this is a multi-asset active FOF. So there's another layer on top of it, which so this will invest in all kinds of funds, right? Not directly own securities.
Exactly. It will invest in all kinds of funds. I think SEBI has created this category, which is very helpful to the investor. It is not that you pay much higher expense ratios. The SEBI has clearly created this category and ensured that you can't pay beyond a certain level. Because you are investing in another fund, you can't, there are clear rules on that. See, our belief, as you know, after 2023 March is that the money has been coming only into equity. And that is very worrying because equity is not a riskless asset class. So we looked at multi-assets. Now we have brought in this multi-asset active fund of fund because it is one of the most interesting ways to invest in equity fund, debt fund, gold and silver. And gold and silver in a smaller way is what we would do at this point of time. And I believe that this is the best way to actually invest for the long term because you get debt, you invest in the debt funds, you invest in equity funds. We take the decision. Our belief after being in this company for a very long time is investors invest in the theme after it has done well. whereas we can choose to invest in the theme with the best long-term view from here rather than look at past returns. If you look at the history of the mutual fund industry, in 99, 2000, too much money came in tech. In 2020, too much money came. 2007, too much money came in infra. And the last 2 to 3 years, bulk of the money has come in small and mid cap. So we can choose to invest in the categories where we see future returns are likely to be good. So we get the benefit of asset allocation, we get the benefit of active management of choosing what fund is, and then the fund manager independently runs the fund. So we believe that this is one of the best ways to invest for the long term, because the burden of trying to time the market goes down.
Yeah, and this will invest across funds, not just within ICICI funds, or?
Technically, I think we can invest across funds, but are we likely to? We have a much better idea to know what to invest in our own funds. Whether we will choose to invest outside, I don't.
It allows you to, but you may not. Just one thing, what is the advantage of doing a multi-asset FOF over like just a multi-asset fund? Like, is this another wrapper, or are they real tangible benefits? Yeah.
No, there is a clear tangible benefit. In our multi-asset fund, we keep equity level at 65%. And in this fund, there is no requirement to keep equity level at 65%. We can keep it lower. And therefore, you have the benefit of having a much higher variation in equity level, unlike what you have in the multi-asset fund. And so that is a benefit, particularly in a moderate return environment, where the role of debt can be higher. We can choose to invest more in debt here than what we could invest in the multi-asset fund which we have been investing in. So we think that this is a superior product for a moderate return environment. It's a superior product for an investor who has been investing too much in equity from 2023 onwards. And it is very unconstrained. So it meets our requirement of AUM. And we believe that in this moderate return environment that we believe in, it is one of the best ways to consider investing. If you believe in very high returns, I think you should choose an equity fund and not consider the multi-asset fund.
Got it. Got it. By the way, just last question. I think you've got a hybrid product as well. We can talk about that later. Just a quick word, since we're running out of time, I wanted to squeeze this in. Last month, Naren, the mutual fund data showed that there was a sharp dip month on month. You would have broadly the numbers. Industry data will come out in a few days. But how's this month been? I mean, the last month been?
No, I think I look at investing, and at least from what I can see in my own funds, we have been seeing inflows. Maybe because of the fact that, markets have done well. There are people who book lump sums. But what I hear from my colleagues is that SIP continues. And we believe that, as most of you know, we believe that people should do asset allocation and not consider only equity. And so I think the trends are similar, I think broadly similar to May, but I'm not aware.
Okay, so you're saying SIP inflows in June seem to be strong, right?
Seem to be strong and in line with the previous months.
In line with the previous months. Got it. Got it. Naren, a great conversation. Thank you very much for joining us. And we covered a fair bit. And thank you once again for being here on CNBC TV 18.
Thank you. Thank you. Thank you.
Okay, 150 odd points on the Nifty. 24,150 is where we are at. Mangalam, I think you've got consumption back in focus.
Consumption back in focus. We have Mayank Shah, who's the VP of Parley Products, joining in. Naveen Trivedi, the consumer and FMCG analyst, institutional equities at MOFSL, joins us as well. Thanks a lot, gentlemen, for joining in. Just before starting the show, I remember, I noticed Prashant chomping on Parle G as well. So he may have a thing or two, or maybe a request or two to make to Mayank here. But, by and large, the way the sector has been and the sentiment has been around the sector over the last few months. I just wanted to understand how the demand in the first quarter has been and what the overall expectations are. We'll ask Naveen that first to set up the listed part of the play, and then obviously get that, vetted by Mayank, whether he's seeing the same on ground as well. Naveen, expectations, demand in the first quarter, and what are your top, bets here this time around?
Sure, Mangalam. So if I look at, I think what we have been seeing in the last 6 months is quite a good pickup in the demand side. So quarter four was better than quarter three. It looks quarter one is also better than the quarter four. So I think the uptrend in the top line side looks on a positive side. Volumes are kind of holding up, and there is also a little bit pricing across, I think, discretionary and non-discretionary basket. And thereby, I would expect that Q1 YOY growth will be better than to Q4. On top of that, we have seen a bit volatility in the cost inflation side also, which also headline cost inflation looks on a softening side. So at least outlook side, we can expect that margin can kind of restore. If not in quarter two, then at least looks to us that second half can be restored. So trajectory looks good. We need to see and we need to watch out how volumes trajectory will kind of sustain over the coming quarters. But at least last 6 months and quarter one gives a good confidence about across discretionary and non-discretionary basket holding up well. And that's where we've been kind of bullish on market leaders where they are less dependent on macro and their own metric playing out well. So Titan, Radico, we've been kind of quite positive and kind of pushing in the downside when market corrected. Incrementally, if I look at FMCG side also, since 1Q performance is good and all commentary also is expected to be positive for the second half on the commodity softening. And across the board, we have seen around 20 to 25% derating in the stock. And thereby, at this price, I see limited risk on the downside, and there can be a decent money to be made in this name. So in this name, so Marico, we've been kind of a bullish on the name. We still see the copra deflation and overall their performance on the non-core business has been top-notch, and they can deliver a decent alpha to be made here. GCPL also corrected a bit lastly. Looks to us that incrementally, if they can deliver double-digit sort of EBITDA growth in the coming quarters, given the valuation, there can be a decent upside to be made. So they've been sidelined for a bit of last 6 months when the commodity again become inflationary. It looks to us that in coming quarters, if they delivered double-digit sort of earnings, then valuations can catch up again.
All right, take that point.
These are the two names.
So GCPL and Marico are the ones that you like. You do believe that there is some amount of money to be made in the staples space, given the sort of underperformance and improving outlook. Let's get the on-ground feedback now. Mayank, how has demand been in the first quarter for your own company? How has revenue growth been? And if you could split that up between price and volume, and whether you did better than the industry or not.
Yeah, so demand has been good. It has been modest. The growth has been modest compared to last year. And as Naveen was sharing, because we are seeing softening of inflation, and thankfully there has been no price hikes which were there. We had geopolitical tensions, and because of increase in fuel prices, there were concerns with multiple categories and industries. But I think because of volatility, most companies have not taken a price hike, and few companies which had taken a very small price hike. So demand has remained robust, and thankfully now with things sorting out, I think, and inflation softening, I don't really see a major issue as far as demand is concerned, because we will not be seeing price hikes by players. Most of the rates are coming back to the pre-war levels. I'm talking about the cost. So most costs are coming back to the pre-war levels, and that may not necessitate a price hike by companies, which I think would really augur well for demand. So while Q1 has been modest, as I said, we are expecting Q2 to be better than that of Q1, given there would be also onset of festive season.
So when you say modest, could you give a number in terms of revenue? Is it high single digit? And how much of that is? Yeah, go ahead. High single digit. And is it split largely between volumes and no price hikes? Or is it half and half?
No, it's the same. Volume and value growth are same primarily because there were no price hikes which were taken, as I shared.
And you've done as much as the industry or better than the industry?
We've grown a bit better than the industry. Industry has grown at low single digits. We've grown at mid single digits to high single digits in certain categories.
And was there any margin impact in the first quarter because you exhausted all your low-cost inventory? So obviously, before you start benefiting from lower raw material costs, you will still have inventory of higher material costs, right?
Yeah, so there would be some impact on margins in the first quarter. Because while in the initial part there were some inventories which were there which were bought at the lower cost, but the third month, which is June and maybe probably July, may see some erosion in margins, primarily because of the higher cost inventory which would have been bought early, especially in April and May.
Growth questions done and the industry questions done as well. We'll speak about that in just a bit. But the last time we joined, it was the viral moment when the Prime Minister actually, gave the pack of Melody to the Italian Prime Minister. That time you joined us and you said that this would cause a huge spike in at least the search and excitement around Melody. It's been a month, a little over that. How have the numbers panned out?
Oh, they've been, very well. So we've seen a lot of buzz created around the brand, as I shared earlier. There was, good demand as well. On certain platforms, we saw almost about 3x jump in sales. On certain platforms, it was difficult for us to ensure that we have inventories available. It was that kind of a surge. In general trade, we saw good growth coming from across. It was not just the urban India. Even in rural India, we saw good growth coming in.
And you thought you would consider exports. What's the development there?
Exports, I've shared this earlier as well. We export to more than 40 countries, Melody. Our products go to more than 125 countries. So we export to more than 125 countries globally. Melody is exported to more than 40, and the attempt now is to increase now. So we are currently in process of getting the approvals and other things in those countries to ensure that we send Melody there and we start selling it in those countries.
All right, just a final
Eastern European countries.
Right, just a final question before we let you go, Mayank. You did speak about the sentiment in rural India. The first month of monsoons have been seeing a 40% plus deficit, and Kharif sowing has been weak as well. Do you expect that to impact demand in the later part of this year?
Yeah, there would definitely be impact on demand, but that would be largely restricted to discretionary products. We've already seen that happening. There is some softening of demand happening in discretionary items. Foods, a large part of foods is, essential in nature, and hence we're not seeing a major impact there. Demand has remained more or less modest. There's a modest growth in demand, but discretionary, we are seeing a softening of demand happening. And if we do not see, rains coming back or monsoon, recovery in rains or recovery of monsoon in next few days, I think, there would be a significant impact on discretionary items. Essentials, relatively, that we are spared, and we are not expecting a major impact on demand of essential categories, largely all food categories.
All right, take that point. The only question, if I would ask Naveen to ask you, he would probably say, when are you listing and why are you not listing? Because that would then, allow him to speak about another company in the listed universe. But I'll throw it to Prashant. Prashant, Parle Ji is what you were munching on. You have another spare right now?
I'm out of it.
You're out of it, which means good, which is good news for Mayank.
Oh, there's a new variety, right?
There are a bunch of them on quick commerce. The one that I don't like, and I say it in front of Mayank, is the dark Parle Ji. It's not my favorite, let's put it that way. But the one that I like is Parle Ji Royale, which is basically a slightly bigger one as compared to what we get right now. It reminds you of the Parle Ji of the childhood before shrinkflation ate into the current biscuit that was there.
Just the word there, dark is something that's loved by Gen Z. We've seen amazing response coming in from Gen Z of the dark variety. I mean, they are the ones who are very...
Sir, Mangalam is only a few years, he missed the Gen Z by a few years. So he's there.
I guess that's what is doing that thing. But younger population, Gen Z loves it primarily because, it doesn't have creme, which has fat and sugar in it. So minus the creme, if you're getting the choco flavor, I think they're all for it.
I think Mangalam should get a spread tomorrow morning.
Should get a spread tomorrow, and let's just see how that goes. To be very honest, biscuit is such an indulgent category that when you want to eat it, you don't want to eat it without the good stuff, which is the fat and sugar itself in it. But with that, what we'll do is allow both Naveen and Mayank to leave on that note, and we'll obviously do a conversation once again to get a sense of how demand is keeping up as well, and whether all these companies' commentaries which are coming in are living up to the expectations on the ground as well. We take a short break, come back. Don't go anywhere though. On the other side, a special conversation with the management of Thermax.
Welcome back. Let's talk about one more company, Thermax, which is targeting double-digit growth over the next 5 years. That's the word coming in from MD and CEO Ashish Bhandari, who says revenue and order opportunity in the company's data center cooling business could more than double. This is an exclusive conversation with my colleague Vinny Motiwala. Sir Ashish Bhandari also went on to share his outlook on the order book, revenue mix, and the company's growth strategy. Listen in.
Look, I'm not going to get into the ask of forecasting what the future looks like. And you can see, the war, it's just gotten over. What may change? India is just coming out of a tough cycle in a way with, it was tariffs first, then the war. Now we don't know what the monsoons are going to look like. So it's tough to say, look, this is what you would be. I can say I am extremely bullish on almost every part of Thermax. We have a very good international pipeline right now. Domestically, our large boiler business is seeing and projects business is seeing a big recovery on the thermal side. In our industrial products, the need for water-based solutions, the need for cooling solutions, broad-based heating, pollution control, all of those, we are seeing tremendous opportunity domestically and internationally. And things like bio and the entire green solutions business, with just a couple of tweaks, can really become rockets for the future. So I think this last year was an example of what Thermax can do. I expect to see similar possibilities and opportunities, at least for the foreseeable future.
But order book looks good, right? You all are getting a lot more inquiries across the board for your segments. All the 4 segments we talk about, you all are there. Chemicals
all the 4
too?
Chemicals too, all across, I would say, and because we are just finishing the quarter, it's not right to share numbers either.
No, absolutely.
But overall, continue to be bullish. We have got commodity price increases that are going in. You have to be cognizant. You have to factor all that. But from an order book and opportunity pipeline,
and the long-term story continues to stay in.
The long-term story is India's long-term story. And India needs to build 2 to 3 Indias in the next 20-25 years, or what we have done in the first 75. And I do feel this is the time for Indian companies and Indian technology.
2 important points I want to highlight. Last time we spoke a lot about data centers because that continues to be in focus, right?
Big time.
You had spoken about 2 areas that you all are in, 2 revenue streams for you all, cooling as well as boilers.
Boilers.
Now, analysts are saying that this cooling opportunity alone itself for Thermax could double in the next few years. Would you agree with that case?
I would easily agree. Could be double or more, but it requires Thermax to be able to seize that opportunity. And this opportunity is in all aspects of the data center market, but it is especially relevant to the US data center market. So for us to establish our capability, convince customers in the US that this is technology that is important and relevant, to make sure we deliver products with quality and service and all that, that is the ask of Thermax. The opportunity size is extremely large.
And Ashish, from the last time we spoke 6 months ago, have you seen more orders come in, or how has it been given the current global scenario? I want to understand how is orders for data centers moved as well, or inquiries for data centers?
So inquiries for data centers has moved substantially. Okay, it has moved substantially, I would say multifold. From an opportunity closure perspective, in this last quarter, we closed one opportunity for supplying boiler pressure parts for data centers, again to the US. Okay. But overall, the pipeline is much stronger. And
Conversion may be a bit of a delay right now, given the process with the clients?
Conversion is the longer part of the process. And that is where I think I talked about. It depends on convincing customers that Thermax has the technology, the capability, and the wherewithal to service their needs.
Okay. Ashish, one more question. Exports, how has exports changed? Where does it stand for Thermax right now? And given the West Asia war and the current crisis that we were seeing, how have things evolved now?
So the West Asia war, I'll start with that first. I'll talk about the rest later. In the short term was a negative and continues to be a bit of a negative impact, because you can't ship products out there. Customers are taking just a little bit longer to finalize orders. But in the medium term and the long term, I see that as a positive, because there'll be a big reconstruction effort that will come in, and new effort that will come in, because many of those countries have got money to spend and will now look to do projects, even in response to some of what happened during the war itself. Overall, exports is an area that I'm very bullish on for Thermax. Over the last few years, we have invested a lot in improving our capabilities. We have started legal entities in multiple countries, ability to do projects in those local countries. Our manufacturing plant in Indonesia is also starting to scale up. So with all these investments that we have done, I'm personally very, very bullish on our ability to compete, and there being a market that is ready for Indian exports.
What would exports be in the next 5 years for Thermax?
So exports are growing right now at good 20 to 30% for Thermax. I expect that rate to continue.
That rate to continue. And overall, Thermax, FY26, around 10,600-700 crores we closed at. Let's talk about 5 years down the line. What would it look like?
I don't know what, what India would look like, but our goal is to grow 2 to 3x of India's GDP. Yeah,
2 to 3x of India's GDP. Okay, so could we expect around double-digit growth, right?
Of course.
To continue
Yeah,
for Thermax.
of course.
In a
Of course.
CAGR term.
Of course, yeah.
Well, that was the management of Thermax, a positive outlook there. Though just keep an eye out on the market. We are seeing a wee bit of moderation from the highs, which has basically been the order of the market between 24,150 to 24,200 is where we see some moderation on the Nifty. But speaking of expiry, we do have the Sensex weekly options expiry play out today. And the BSE index as well has been led higher by the IT pack. We have the IT index, which is up by about 3.5%, and that's caused the Sensex to stay above that 77,250 mark too. Here too, we're very close to the 100-day moving average. 77,532 is where the 100-day moving average of that index is, where it is facing some supply, very close to today's high, and that's exactly what the option writers are positioning themselves for as well. Support at 77,000. So the 77,000 put, which expires today, premium of 50 rupees, telling you that around 76,950 thereabouts is where support comes in. And we are seeing writing at the 77,500 call, where a little around the 100-day moving average is where supply is expected. 77,500 call has a premium of 100 rupees, telling you between 77,550 to 77,600 is where the supply for Sensex comes in. So that's the sum and substance of how Sensex is positioned ahead of its weekly options expiry and the active options as well. We take a short break. On the other side, we get chatting about the commodity space with Manisha Gupta.
Well, guess what? 6% cut in the Nifty IT index over the last three sessions. That is from Friday's close to yesterday's close. And today, the Nifty IT index is, I think, reclaiming, it's not 4%. That's a pretty large pop coming in a single day. And we've got the bulk of the day in front of us in that sense. So 26,720 on the Nifty IT. Infi, TCS, Persistent, Coforge, KPIT, HCLTech, Tata Elxsi, Tech Mahindra, Infosys, Oracle Financial Services. I mean, these are, a list of companies that I'm reading out. They're all some of the top volume and price movers at this point in time. So it's like a sector move, which we are seeing on the other side. A pushback coming through after the index, of course, dropped to new lows yesterday. Well, I think that's the only thing which I think is happening as far as the index, as far as markets are concerned. Otherwise, it's pretty, scattered out there. This is a sector which is moving as a whole. Let's shift focus for a bit to the commodity space, as we always do. Manisha is here with what is top of mind. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm putting focus on the soft commodities. We don't talk about them very often, but the last 1 week does command attention with the kind of moves that we have seen in many of these. So whether you look at sugar and coffee and cocoa, we are looking at great price increases in the last 1 week itself. I'll start with sugar first. And the three important countries that you have to keep an eye on is India, Thailand, and Brazil in sense of production. So when you look at the US future prices, we are trading at a 6-week highs, and the sugar prices have gained up by 6.5% in matter of this week itself. It has turned positive for the month-on-month basis as well. But as I said, it is going to be about India, Thailand, and Brazil. So India first. And when you look at the rainfall, well, that is quite dismal, 38% below normal till date. And the month of June was 40% of a deficiency, the worst June that we have seen in last 12 years. If you also look at the kind of production that we are looking at, that also is expected on the weaker side. The next season, the markets believe you could be looking at yield loss as well. India's sugar is absent from the international markets because the exports have been suspended till September 30th, and that is when the government will take cognizance of sowing and the final numbers, and we perhaps would see the next word in sense of exports there. But that's about India. Thailand also is facing El Nino impact. We're looking at dry weather there, and that is expected to hit the crop into Thailand as well. Most of Asia, Southeast Asia actually is dealing with El Nino right now, and dry weather conditions, lower rainfall is what all of these countries are facing. And then comes Brazil, which is the largest producer of sugar and by far in sense of numbers there, also has seen weak output, harvest delays. All of that has led to the international sugar prices continuing to gain there. It also has to do with the higher energy cost that seems to have incentivized a lot of countries into going towards ethanol rather than sugar, keeping the sugar prices higher there. If you look at the Indian markets, then we are looking at various concerns here as well. The cane FRP and the sugar MSP mismatch is something that we've been talking about for some time now. It also has to be about the ethanol price revision, which hasn't happened in the last 4 years. Industry waiting for that. And the grain competition in ethanol. So as of now, when you look at ethanol making, sugar is 30%, while grain is taken as 70% of a contribution therein. And the markets also are looking at export suspension. That, of course, has been a bit of a hit, given the fact that the international sugar prices are trading quite well. Going forward in 2026-27, most of the international agencies believe that we are looking at a sugar deficit, and that has been supportive for sugar prices. ISO, which is International Sugar Organization, has talked about 262,000 tons of a deficit. 550,000 tons is what Stonex is talking about, and Rabobank even higher number at 1.1 million tons. It's much higher number that Greenpool has come out with at 4.3 millions, and then you have 3.1 Datagro. Zarnikov is talking about 100,000 tons as well. So the numbers may vary, but there is one thing there's consensus on, that next year we are looking at a global sugar deficit, and that has been supportive of prices. A quick word on coffee as well, and it is Arabica which has continued to gain. Robusta coffee prices have been on the weaker side, but Arabica is trading at April highs, 14% of gains just about in this week, and that is because there are tight global supplies. If you look at the ICE inventories, well, they have declined quite sharply as well and trading at the lowest level since March 2024. So right now, it's about 377,000 bags of a stock that we have. Last year was 841,000. So that is what seems to be supporting the coffee prices. And then there are delays in Brazil harvest as well. That has been the case with more soft commodities in Brazil also supporting prices. For the Indian markets, the export numbers have been on the positive side, and that is where the Indian coffee companies actually see a positive coming from. In the month of April and May, the exports have jumped up by 20%. For the Indian markets, the production is at 6 million bags. Consumption less than 2 million bags. So much of the rest really goes into export. And that's just where it's a positive coming in for the Indian companies there.
All right, Marisha, thank you very much for that. Pretty interesting stuff there. Well, I think that we've got some visuals coming in from Delhi where Prime Minister Modi is meeting with his Japanese counterpart, Prime Minister Takaichi. I think it's her first maiden visit to India since becoming Prime Minister. And I think that is the ceremonial reception that she's of course being given. Prime Minister Modi shaking hands with the Japanese delegation, and next to Prime Minister Modi is PM Takaichi of Japan. So pretty interesting stuff coming through. Remember, we've seen so much Japanese capital come into the country. We've seen some large FDI deals come through as well lately into financial institutions. And of course, I think in the past as well, we've seen lots of inbound FDI from Japan. Japan, of course, from being a very value-driven economy, a market has now become pretty much a growth investment-led economy, and from worrying about no inflation. Things have completely changed over the last 2-3 years as far as Japan is concerned. With this entire AI semiconductor boom, Japan very much a foot in the door. So I guess talks will be centered around many of these issues. Partnerships across different industries should be the focus area. Okay, we'll take a quick commercial break here. Markets, I think, are holding on, but they're off the highs of the morning. Lata will speak on the other side with Mithul Kotecha of Barclays and Suyash Chaudhary of Bandhan AMC and the rupee bond markets, and of course the road ahead. Stay tuned.
Welcome to It's the Economy. India's rupee and bonds have seen a decent rally since the Reserve Bank announced its FCNR deposit scheme. The rupee has rallied from a low of 96.96 rupees per dollar to a high of 94.5 per dollar, while bond yields have fallen from a high of 7.1% pre-June 5th to a low of 6.72 actually as I speak. That's the kind of rally we have seen in bonds, almost like a quarter percentage point rate cut. However, we are now hearing some more hawkish noises from the Fed chair, Kevin Walsh, yesterday, and the rupee too fell sharply yesterday. How are these two markets likely to shape up here on? Are there more rallies to be expected in bonds and in the rupee as well? Mithil Kotecha, head of FX and EM macro strategy at Asia Barclays Bank, and Suyash Chaudhary, CIO fixed income at Bandhan AMC, join us. Good morning, gentlemen. Thank you very much for your time. Mithul, this rupee yesterday sent a shiver up the market spine at 95 and 95.3 almost. No one expected that 95 would be crossed after this massive expectation of $50 billion or more via FCNR deposits. What's your sense? Should we be prepared for rupee weakness because of dollar strength?
Yep. Hi, Lata. Look, I think the reality is, we were talking about this even last time I was on the show. I think this has taken, the steps on the RBI have taken the tail risk out of the rupee, but it doesn't necessarily mean the rupee should be strengthening much more from here. I think, obviously, as you mentioned, we've come off the lows against the dollar and there has been some rally, but I do think it's going to be difficult for the rupee to strengthen much more. And look, I agree there's going to be substantial inflows, potentially up to sort of $70 billion or so through FCNR and ECBs, and then further out, we're going to see potential inflows through FAR bond channel. But for now, these inflows are largely going to be swapped with RBI. They're not necessarily going to be converted directly into rupee. It doesn't automatically lift the rupee from here. What does lift the rupee is obviously the shift in sentiment, less panic of importers in dollar buying. The drop in oil prices has obviously helped from a terms of trade perspective. So I think we're not going to see that sort of sharp depreciation that we saw just even a few months back, but it will be much more of a gradual move. But our view is that near term, we'll still see some consolidation. Further out, we see a gradual rupee depreciation, much slower pace than we saw previously. And of course, the backdrop is also a strong dollar here. So got to bear in mind, as you mentioned, the comments from Walsh and the market pricing in now at least one rate hike in the US this year. That's kept the dollar pretty well supported. And most of Asian currencies are on the back foot, and including the rupee here.
Okay, point taken. I will want you to parse Kevin Walsh a little more for us, but let me get Suyash into the conversation on the yield side. Suyash, I mean, this is like a 35 basis point fall just in the benchmark. I would assume that CPs and CD yields have fallen much more. Do you think this Diwali is over as far as bond prices go, or is there more left?
Lata, if you look back, the number one pain point for India has been the balance of payment deficit, led by muted capital flows and not an expansion in current account deficit. Now, these set of measures for the time being have lifted the pressure of the balance of payment, although on a 3-year basis, nothing changes, as Mithil said as well. So having said that, the rate transmission to some extent is getting restored, because remember, the overnight rate is still at 5.25%. Bond market and market yields had disconnected with the overnight rate owing to the balance of payment pressure, and they are now coming back. Now, continuation of this rally will depend upon some of the global factors turning, if they do, which is chiefly the high level of global interest rates linked very closely to the global AI theme. And continuation of the soft commodity prices that we are seeing here. Now, should there be some turn to the global AI plus bond yield trade, we would think the India rally can also continue for some time more. One also looks forward to what kind of measures are forthcoming from both government and RBI, apart from the FCNR and bond tax changes that have been done so far. One remains optimistic that the intent is very much there to try and solve for the BOP pressure on a more sustained basis.
Fair enough. I will come to expectations from the Reserve Bank as well. We are staring at an El Nino year, and there are some people who are forecasting 6% inflation, at least in a few months, even if the average will be much lower. But Mithul, tell us how you parse what Kevin Walsh said about his discomfort with inflation. What are you pricing in? What should we be prepared for in terms of both bond yields in the US, the risk-free yield, and the dollar?
Right. So I think Kevin Walsh is clearly a chair that doesn't want the Fed to increase communication. If anything, it's the other way around. And I think he's still sticking with this view of a reduction in the balance sheet. And his comments yesterday at the Sintra Forum seem to suggest that he thinks inflation is coming lower. But of course, as we saw in the first FOMC meeting under his helm, the Fed came off as he's perceived to be more hawkish than anticipated. And because of that, and the strength of US data, and of course, today we have a big number in the form of non-farm payrolls, but the US data continues to remain firm. The economy is holding up well, driven by AI capex. Inflation, as we saw for PCE and core PCE, is still well above target. And while it may move lower this year, it's still going to remain elevated. So it's going to be very hard for Walsh and the other FOMC members to sound dovish in this environment. And I think that's why the market is pricing at least one and between 1 and 2 hikes for the rest of this year. And I think it's hard to see that change. That said, our view is that the Fed doesn't actually hike this year. We still think the Fed is on hold for the foreseeable future. So we do think the market pricing is perhaps a little bit too aggressive, but much will depend on that move lower in inflation. And of course, the jobs market will be important. Any softening in jobs could also result in some rally in rates. But for now, markets believe growth is strong, and that's keeping rate markets under pressure. And I think that will continue for now. And look, the dollar has reacted to that. The dollar has been very firm on the back of all the factors we've talked about. US markets are still roaring higher. A lot of the flow going to the US is unhedged or very low, has very low hedge ratios. That's keeping the dollar supported. So again, near term, there may be risk because we think positioning is stretched and sentiment is stretched. But medium term, we remain constructive on the US dollar.
Okay, well, actually, all developed markets are in a rate hiking spree. We saw it from the ECB. We saw it of all countries from Japan. We were just having the Japanese Prime Minister in India and pictures. So it does, I mean, the world is clearly giving indication of, if anything, tighter or higher yields. In that context, Suyash, how would you look at what we should expect in India? Do you think Indian yields can also inch lower because the FCNR flows haven't yet come? When they come, they will park themselves first in whatever 3-month yields or whatever. More importantly, beyond that, do you think either El Nino or this global higher yields is going to, make the second half much different?
So, Lata, unfortunately, the global backdrop has not been particularly conducive. First of all, there is an AI capex theme that is ongoing in developed markets, chiefly the US, which is also absorbing capital as well as keeping rates high. On the other hand, there is excess capacity available in traditional manufacturing in this part of the world, which is doing two things. It is not letting a domestic broad-based manufacturing cycle take hold in India. And it's also keeping core inflation rates pretty low. So we do think this tension remains. It has been partly alleviated for the time being because of the FCNR. But like I said before, it's not really RBI rate hikes that one fears, because RBI may not have space to hike too much, given that currency pressures for the time being are abated, commodity prices have unbound. And notice that the governor keeps referring to core inflation like gold, which is not the target, but clearly points to what the permanency of underlying inflation is like, and it just doesn't seem to be there to a very large extent. What one eventually thinks about is, can market rates start to again de-anchor from the repo rate if BOP pressures over the medium term were to reaffirm themselves? So like I said, we would look for two things. One is more measures which are more permanent in nature from government and RBI. And at some juncture, some cessation of momentum on the global AI trade, which both eases pressure on global bond yields and makes global capital look at some alternate destinations, at least for the time being. If these were to happen, then like I said before, we think bond yields in India can remain lower for longer, but it's an evolving situation as of now. Monsoon and food prices would probably be a temporary effect, and RBI will look through that.
Okay. So you're pricing in no hikes from Reserve Bank?
We, at this juncture, are open to the idea of around 50 basis in total, not in August, October starting. But let me also put on the table, from a bond market standpoint, at this juncture, it's pretty irrelevant because even as things stand, let's say the long end of the government bond curve is 200 basis plus over the repo rate. So therefore, market is still relatively insensitive to 25-50 basis points of rate hikes. We are open to the idea of 50 in total, but we are not very emphatic about it anymore.
Okay. Mitul, what was the range of the rupee that you would look at? And if you have a view on the bond yield as well.
Yeah, look, I think the rupee, like I said, I think we may even see potential near-term upside, and we could see, we're around 95 now. We could see a move slightly lower, but I think in this backdrop, it's going to be tough. And I would imagine we drift beyond sort of 96 in the next, 96 in the next several months. But again, like I said, it's probably going to be very gradual. As for yields and duration, look, I think the outlook is more constructive on duration in India. I think our view is the RBI does not hike anytime soon, potentially could hike early next year, but unlikely towards the end of this year. I think lower oil has helped, and potentially, although inflation has moved higher, I think we won't see it remain elevated in India for too long, and probably will be around the RBI's target, in the center of the target, around 4% eventually after an initial spike. So again, the base effects will be helpful there. So we've seen a rally already very sharply in rates markets. If we look at OIS and if we look at swaps, generally that rally is a lot of that now is taken out hikes from the RBI. And we think, the rates view is still conducive, even with the global backdrop not being that positive. India rates will benefit from these FCNR inflows, the liquidity infusion that will cause in terms of INR liquidity. So we should see rate markets benefit or continue to benefit against that backdrop.
Fair enough. Out of time, I have heard of views that the world is really in the same investment mode that it was between 2004 and 8, and therefore there is no question of any rate cuts. But there is going to be a series of rate hikes in the major central banks, but that would be for good reasons, because growth is very good. But that debate for another day. Mitul and Suyash, thank you very much for joining me and helping us understand both these markets. Have to call it a day on It's the Economy after a break, Chartbusters.
You're watching us here on Chartbusters. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu. With me, Vinny Motiwala. Day 2 of July series. And going to the bulls as well. Yesterday, we closed about 24,000. Today, we're aiming for 24,100. Let's see whether the market sustains at these levels and we see better gains or not. So far, everything's doing well, barring, a couple of these names, which include the likes of L&T, ITC, and SBI Life. The broader markets in a much fine fettle. We have 2,000 stocks advancing for about 850 stocks which are declining, Vinny.
Absolutely. Mangalam, you're on the bull side today, right? You're supporting that up move that we're seeing in the last couple of trading sessions as well. And IT today is making a sort of a recovery, maybe we could say 3% uptick right now for the Nifty IT pack. Most of the IT names are trading with good gains in the trading session. Infosys, Coforge, Infosys, but do not forget that they've seen that fall coming in as well. Apart from that, broader end of the market, like Mangalam mentioned as well, is doing better. Today we're seeing a better performance in terms versus the benchmark indices as well. Small cap is doing much better. So that is what we'll keep an eye out on. But on that note, let's also bring on board Sachidanand of for a technical check in terms for the market. Sachidanand, good morning. Thank you so much for joining us on the show. We're nearing 24,100. Still not there, but what are the levels you're watching out for?
Good morning, Vinny. Good morning, Mangalam. Clearly, I think the bias for the market remains positive. What we have been observing here is that the Nifty has been oscillating within this range of 23,800 and 24,000, 200 for almost 11 trading sessions. But if you look at the placement of its RSI, in the last 10 trading sessions, we have seen multiple days of decline. Despite of this fact, the RSI level was holding above that 50 zone. So it's a good sign of, very steady relative strength development. So I think if you look at the data itself, last week we were of the opinion that 23,800 remains as a stable support, and we may see an oscillation mode continuing and a swift move towards 24,200 again. But if you look at the current placement as well, yesterday we saw a good steady recovery, closing about at 24,000 mark. And going forward also, we believe that the Nifty is well positioned to scale higher towards 24,300, 24,440 kind of a zone. So the bias remains positive. We may see some consolidation here, but from a momentum perspective, 24,140 is the level above which we may see a good thrust, reinstating. And hence, we believe that it's better to be on the bullish side. Even if we see a decline, I think 24,800, 840 remains a steady support wherein fresh long positions can be committed. And from an aggressive point of view, 24,140 is the breakout level above which we may see a very quick move towards 24,300, 24,440.
All right, that explains your view on the frontline index. Sachi, what individual stocks are you backing? I mean, IT is making a bit of a comeback. Do you think that's tradable, or do you short this up move? And other stock ideas that you have?
Good morning, Mangalam. Mangalam, it's better to be with the leaders. And if you look at the overall trend development for IT, it has not been very dependable. Though they have, come in the oversold kind of a category. But it's better to wait for a steady reversal trend and then probably start deploying longs. But when it comes to certain pockets, we have already seen a good steady performance from the Nifty Bank. I think Nifty Bank is something wherein the contribution has been very significant. So overall, what we believe is that there are other pockets of strength wherein some long positions can be committed. The first one is something that we have recommended to our clients today morning, a very good consolidation breakout on SRF. Now, if you look at the overall pattern, it looks like a triangle formation on the daily scale, which is matured. The 2800 call writers were on the back foot today. And in fact, if we see the overall data development, we believe that there could be a swift move unfolding towards 2980. And hence, we are recommending building fresh long positions in SRF. One can keep a stop loss at 2780 on closing basis and review their positions at 2980. The other stock which we have also recommended to our clients is CDSL. Now here, if you look at the turnaround, yesterday we saw a very steady, stable move developing a base at around 1340, 1330 kind of a zone. And if you look at the developments, it looks like a classic bullish flag formation, getting reinstated. The 200-day exponential moving average has been challenged today, and we believe that there could be further momentum in the offing, and hence we are recommending building fresh long positions in CDSL for a pattern target of around 1390. One can deploy fresh long positions here. Keep a stop loss at 1336 on closing basis.
Okay, thank you, Sachidanand, for joining us this morning, taking us through individual names as well as levels in terms of the markets. But on that note, we're going to step into a very short break. After the break, we'll have Sriram Subramanian of Ingavan joining us on the other side to discuss the entertainment's preferential issue. Stay tuned in.
Comfortably above the 24,100 mark, led higher by the IT pack, and now we're seeing some traction come by the financials as well. Bajaj Finserv, for one, has moved higher. The Nifty Bank, too, about 0.25% higher. But the stock on our radar is Z. Did well in yesterday's trading session, and now is coming in for a bit of profit-taking. Overnight, we got the news that we do have a 3,144 crore rupee fundraise via allotment of warrants to the promoters. We do have with us Sriram from Ingavan, who joins in to detail, or decode this move and what his suggestion to shareholders will be. Sriram, the last time you all were fairly vocal about what you wanted shareholders to do. It doesn't seem like in a year anything at least has changed from what the offer has been made or the cash position of the company. If anything, it's only increased. And there is no strategic usage of this fundraise as well, which has been explained so far. Would you still hold on to your view, or has something changed?
Good morning. As you rightly say, the structure of the instrument has not changed. It is a warrant issue where the promoter is supposed to bring only 25% upfront. Historically, or over the past couple of years, the promoters have not shown. They pledged shares were taken away by investors because they did not have money. So it's not clear where they are going to bring these funds from. Two is because of the warrant issue structure where only 25% has to be brought up front. So they still have to show investors as to why they should back for the remaining 75%. So that is a quandary for investors because neither Z's performance itself, if you see in this March quarter, also the company has been losing money. Two is the market, the price at which it was issued last year was at 132. Today it's 126. It's lower than last year's price. So I don't see why investors will change their mind. Neither has the structure change, nor has the pricing change, nor has the promoter or any other third party, if at all, wanting to bring funds. That is also not happening. It's the same investors, same warrant issues around the same pricing.
Okay, around the same pricing, same warrant issues, and everything continues at the similar levels for Z Entertainment. Then this time also, the concerns that you had last time, that continue for you all as well. So do you not expect this to go forward in terms of the warrant issue this time as well? Then could we see that similar concern, right?
I would think so, because why would investors who have held shares for such a long time want to back promoters who lost the vote last time? Why would they change their view? Because everything else remains the same. In fact, the business metrics have deteriorated. So investors would not want to back the promoters increasing their shareholding.
Right. One of the arguments which is different from this time to last time is the prevalence of the interest in sport. FIFA has been, one of the reasons why an increased usage of funds for increasing their presence in sport could be one of the strategic reasons. Do you think that's reason enough?
I don't think so. See, at the end of the day, probably they will still end up with a profit. They have not even disclosed as to what they bid for the FIFA rights. The rumors are they paid $30 million. Two is hopefully they are recovering it to the ads. Two is they have also signed up Bundesliga this past week. So I think so that way, yes, they are trying to be more competitive in the sports segment. But will they make money of it? That is yet to be proven only in the quarterly results, which is forthcoming, probably the June quarter or the subsequent quarter of September. So I don't think, while that is not sufficient enough for investors to back this preferential issue.
Not sufficient enough, but sir, what also, last time, Z's letter to the shareholders that also pointed out, they said that, the stake increase that they're calling out for is not much. Then why the worry? They are not increasing the stake to a level where they'll have majority stake. Then what is the concern? Could that not float the boat if you have all of this coming in on the FIFA front as well?
No, if they were to bring the funds upfront at one shot as a preferential allotment, not a warrant issue, that would have been a different scenario. The fact is that they have to show the money to the investors, which they are struggling to do, and so investors are unclear as to where the funds, where is the funds with the promoters to subscribe completely to this issue, not just 25%, the whole 100%. And if they had the funds, they should have done a preferential issue upfront and brought in all the 3,100 crores at one shot. Probably investors would have been happy to back that kind of a structure. But the current structure, no.
Okay, I ask you to put on the hat of the promoters of Z and the board of Z right now for a moment. And something has happened last year. It did not go through. Not much has changed. Why would you then try to do the same thing over and over again without, having anything changed in the middle? Do you think they have something up their sleeve this time around as against the last time?
If they have anything, they have not disclosed that to the market. So the markets or the investors will continue to be skeptical. In fact, last time, at least, the deal with Sony had just been taken off. So to that extent, there was probably a much greater logic for the promoters to increase at one shot, not a warrant issue, but at one shot. Now that is not panning out. There is no strategic investor in the pipeline. There is no other investor or anybody who is going to back the promoters. So from that perspective, I think it is sort of the promoters are and the company is trying to repeat the same old structure, which investors may not like. And it is not clear to outsiders as to what was the thinking of the board in coming out with this issue, which is the same as last year.
So your advice to shareholders would be to vote against this until it's changed to a pref where 100% money comes in immediately?
I would think so. As of now, this warrant issue is definitely a no-go.
All right, take that point. Thanks a lot for joining in and giving us your views on this one. A warrant issue no-go coming in from IIAS. We will continue to monitor this as developments around this do take place. Z for now. The stock is seeing some profit taking after an up move in yesterday's session. Though good looking for the market. We'll take a short break. On the other side, a deep dive into CG Power, which is the latest in our CNBC TV18 Unpacked series. Welcome back. CG Power has been a 5-year turnaround story. The company, once termed to be an NPA by lenders, was a wealth destroyer. In the turnaround since, the stock is up over 100 times. Vinny unpacks how the company turned around and what the opportunities for them look like.
Hello, and today we are unpacking the story of CG Power, a large cap capital good company. Now, this story goes way back 5 years. A corporate red making big headlines, 3,000 crores, rupees allegedly siphoned off. Stock was down rupees 2, rupees 5. Lenders calling it an NPA. Then the tide turned. Murugappa Group stepped in. What they saw? The business is correct. There's no problem in the business. The problem came in was in the ownership. So they bought 800 crore rupees stake that was worth around 57% stake in the company. Now, obviously, what was the logic was simple. Business is good. So they got it to debt-free. They made it debt-free by FY22. Previously, they had a debt of 2,000 crores when they took over. And today, the company is net cash positive. The stock has seen a sharp run up, or 100 times run up in the last 5 years as well. Now, CG Power, we'll view it in 3 parts: industrial systems, power systems, as well as semiconductor side of the business, right? So what is industrial system? That accounts for around 54% of their revenue, right? When you look at it, industrial system is the bread butter of the business. They have motors, drivers, as well as in terms of railway equipment is what they manufacture here. They have dominant market share in this, 35% market share in this business. Then move on and talk about power systems. 42% of the revenue came in from this segment in FY26. Now, this is the exciting one. Transformers are made here. Switch gears are something that is made here as well. And that goes into the electricity grid, which is the requirement of the country because power requirement is increasing in the company. The last one is what we'll talk about is the semiconductor business. That's 4% of the revenue. Now, obviously, this is relatively new in terms of a segment. They are making a facility in Gujarat. This is with a JV with a Japanese player that they'll focus on, and they will want to grow this business. Now, let's move on and talk about the revenues of the company. Revenue of the company in FY26 saw very sharp growth of around 25%. 12,400 crores is what the revenue came in at versus last year. Profits of the company also have seen a very strong growth of 23%. Margins have remained largely flattish, but the revenue story is where the excitement comes in. Why? Because the revenues for the company have seen a double-digit growth for 7 consecutive quarters, and that's an interesting play. Now, let's move on and talk about the unexecuted order book. That stands at 17,000 crores approximately for March ended 2026 is what we're keeping an eye out on. 1.4 times to the revenue is what the order book stood at for the company. And what Citi expects as an analyst, they are saying that maybe this is something as a power system segment that could be the big growth driver in FY27, and that alone could account to 22,000 crores in terms of the order. So that will be an interesting play. Now, for the company which was called an NPA, now moved to net cash positive, what is the story that lies ahead? The big story for the country, the bigger picture that when we zoom out is the transmission play. When you talk about the transmission play, India is focusing on a 7.9 lakh crore transmission plan, build-out plan that we have for grids by 2036. Then you move on and talk about the gigawatt that is required. 900 gigawatt by FY36 is the target for the country. Renewable energy is growing. So what does it mean for CG Power? CG Power, obviously, capacity expansion that they're focusing on. Look at the capacity for this, right? 19,000 was the capacity in FY25. Now you move on to FY26, it's already tripled. 65,000 is the capacity. By the year end, what is the capacity target they have for calendar year end? It's 110,000 is the capacity that they are focusing on. So clearly, they are focusing on expanding the transformer capacity. Now let's talk about the OSAT facility specifically because that's a growth driver as well. This facility is in Sanand, and what are they going to be doing here? Chips are going to be assembled here. Quality check will be done here. They'll be packed here, tested here, and then sent to the customers. So what is now the target for the company? When you talk about the target of the company, 6,000 crores in revenue terms by FY30. Margins that they're focusing on is going to be 18% margins by FY30 from the semiconductor side. And it's important because chip manufacturer ecosystem doesn't exist much in India, and CG Power is one of those first players who has entered the space. So they could see and reap the benefits of this as well. Now let's talk about exports. Exports account for around 6% of their top line growth in terms of revenues for the company in FY26. By the next 3-4 years, the target for the company that comes in is 20% that they have as well. What are the data center outlook, right? Data center is something that everyone is focusing on, and that's what the company will focus on as well. So that is going to be benefiting them, and areas like Europe, Africa, West Asia will be the key triggers which will lead to this growth. But this is not the only story, right? You have investor mix that comes in as well. Promoters, slight bit of a reduction versus last year. FIIs largely maintaining their mix at around 12%. The interesting part that actually comes in now is going to be DIIs. DIIs are at 18% in terms of the holding that they have in the company versus just 13% last year. And previously, it was at 10% in March 2024. So good growth in terms of investor mix and interest coming in from the domestic institutional investors. Lastly, let's talk about some of the triggers that come in terms of the negative points or the risks that come in and bumps that could come in for the company as well. Rising competition, one concern. They do not have HVDC exposure versus other players, so that's a concern as well. And peers are working a lot more on HVDC. There's a lot of investments that are made by the government in this segment as well. Semiconductor ramp-up risk as well as slow T&D capex are some of the concerns that come in for the company. Other concern is valuations. The stocks have run up, right? So the peak valuation for this was around 102 times. Then you have the current valuation at 84 times. It's below peak valuation. But when you look at it 5-year average point of view, it's still above that. So still a bit expensive when you look at it versus a 5-year average. And that is a risk. Now, obviously, there are some pros and cons that come in for the company. But OSAT facility, export, as well as transformers are going to be the growth drivers.
All right, a lot of potential in this space going to be unraveled, very well told by Vinny in CNBC TV 18 Unpacked. But you continue to watch the story as we move forward. At 12:15 today, we will have Renu Baid Pugalia of IIFL Institutional Equities to further discuss CG Power, the opportunity, the risks, and everything around it.
Okay, but with that, we're absolutely out of time on this edition of Chartbusters, leaving the Nifty at just 24,100 levels, approximately about that mark. Stay tuned in. Up next, you have Trading Art to take you through all the market action.
Good morning. You're watching Trading Hour right here on CNBC TV 18. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormis Fatakia. With me today is Reema Tendulkar. Reema, good morning. It's been a good start for the markets, but yet again, a familiar script that is playing out of the 24, 150, 160 zone. Supply is emerging yet again. But today is the day of the IT rebound.
Well, indeed, finally, after yesterday's big fall, and also Asia is firmly lower. So you've got the Korean markets with a cut of nearly 5%. The Taiwanese markets, the Japanese markets also under pressure. So I guess that rebalancing is taking place. Maybe some chips are being taken off some of these AI indices like, the Korean markets and the Taiwanese markets. Kospi is the one which you are seeing the biggest cut. That's down 5% to 5.5% today, taking its loss over the last 4 days to close to about 12%. But it's IT all the way. The top gainers on the Nifty today are the IT names. And in that, you throw in the mix the fact that the crude oil prices are also now closer to $70 per barrel. So that's also helping the sentiment on the side. Very strong advanced decline ratio. We've got 5 stocks in the green for 2 in the red. But Hormis, talk about stocks.
The good part of the fact that yesterday too, we opened higher, but we could not sustain at higher levels. Today, we are trying to sustain at the higher levels, being the Sensex weekly expiry as well. That is something we need to pay attention to. And yet again, the 24, 150, 160 zone is something that the bulls would want to cross on a closing basis for further up moves towards that 24, 200 zone. As of now, they are still continuing to struggle around that 24, 100 mark, still 100 points higher on the index nonetheless. But today is a day that belongs to the beaten down names. Reema just spoke about the IT names. The IT index is up 4%. The other beaten down index is the metals index. That is seeing a bit of buying coming in at lower levels, even though the dollar index is now nearing 101.5. That is despite that, the metals index is up close to well over 1% as well. You look at specific stocks as well. Infosys had not closed below the mark of 1,000 rupees since September of 2020. It did that yesterday, but now is staging a rebound back above the mark of 100, back above 1,000. So 5% higher on Infosys, 4.5 on Coforge, 4 on Infosys, 4 on HCLTech as well. And this is despite another downgrade that has come in today from ICICI Securities on a lot of these names, particularly so on HCLTech. You take a look at the Vedanta group stocks, the demerged entities after the exit from the T2T segment. You take a look at the oil and gas entity, 8.5% higher. Iron and steel is up 10. Power is up 5. The iron and steel entity in 12 days of being listed has already doubled. And every single day the stock has been in circuit. That's the kind of moves that you have seen. Look at the newsmakers today. Z Entertainment, of course, after the preferential issue, 3.5% lower. Though in today's trade, Indian Bank is a business update reaction, is recovering from the lows of the day, but the reaction is come on Dhanlaxmi Bank after its business update, 5% higher on the stock, and some strong sales from TVS Motors, exports growing nearly 50%, and that has had a positive impact on the stock as well. A couple of new listings that we have seen over the last couple of days. Waterways Leisure yesterday listed at a discount, ended lower, now seeing a bit of a rebound in today's session, is up 10%, and Advait Jewels, after a very strong debut yesterday, is down around 2.5% as well in today's session. And lastly, some stocks at 52-week highs today. Sona BLW has had a good session, so 4.5% higher on this one. It's a 52-week high. Aegis Logistics is now up 70% in the last 1 month, and all of those gains have taken the year-to-date gains to 80%. So another high on Aegis Logistics today. We spoke to the management of RateGain in yesterday's trade, 4% higher on that one, and ADF Foods after the tariff refund, 8% higher on the stock, and a 52-week high as well, Reema.
Thank you very much for that. Let's just dive in a little bit more into the IT stocks. Well, yesterday, of course, was a 3%. What was the decline in the Nifty IT yesterday?
It was 3.5%.
Yeah, it was about a 3.5%. So compared to that level, we've seen a rebound. But what's also helping sentiment are the statements coming in from Palantir's CEO. So these were comments made to CNBC on the show Squawk Box, which lifted sentiment. And in a nutshell, what he's basically saying is that enterprises across the board are angry. He says they're paying for tokens that create no value, and at the same time, they're handing over proprietary IP and alpha to companies like OpenAI and Anthropic. And he said that this whole token-based pricing, sort of a wealth tax that's extracting value from companies without delivering lasting business incomes. In fact, we should listen in to some of those bites.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
Well, all the enterprise software names in the US rebounded. Palantir was up 7.5%, SAP, Salesforce up 5 and 4, Accenture 5.5%, Snowflake rebounded, ServiceNow was up close to about 6.5%. That said, the question marks about India's the fundamentals, the longevity of Indian IT are still there. So today, ICICI Securities has downgraded the sector. So from a neutral rating, ISEC has turned negative, particularly on large cap IT names, and they're saying that Q1 is going to be a lot weaker than what they had earlier anticipated. Growth rates will range between -1% to +1%. So that's one. In just 3 months, it just appears the sentiment has deteriorated. And they also, share a very interesting data point. So they're saying the Indian IT services exports last year grew 12%, but the top 5 IT companies only grew 3.6%. So that explains that money or work is being shifted to GCCs and other technology players in the AI value chain. So effectively, they're saying that even if IT services does well, large cap IT is struggling, and which is why they've gone ahead and sharply lowered the valuation multiples, the target valuation multiples. We always said valuation multiples and long-term averages, 1 standard deviation below that. They're saying fair value should now be 2 standard deviations below that. And if you look at the current PE versus what the target PE, you would see that it's actually sharply lower. So long-term average multiples for, a TCS, would be say a 20 plus. Right? Currently, it's trading at 13 times. But according to ISEC, that number should even be lower. The new PE should be about 12 times. So even after the de-rating, they're calling for a further de-rating. I think the only stocks that they like right now are Coforge and Infosys. So these are the 2 mid-cap companies that they like on account of the strong deal TCV. There is near-term visibility of revenue growth, and they also say happiest minds. So these are one of the few companies with the potential to deliver FY27 growth higher than FY26. So I guess it's not out of the realm of possibility that de-rating will continue in IT names. And the 3 stocks they're betting on are Infosys, Coforge, and Happiest Minds. As you can see, they're the only ones where you've got a buy rating on.
Well, another day, another downgrade for Indian IT. Of course, in every bearish recommendation / downgrade that has come in on the Indian IT sector, there have been pockets of opportunity that most of these analysts notice as well. That's IT for you. After a 3-day sell-off, the worst start to first 6 months of a year since 2001. The index is up 4% in today's session. On that note, let's also listen in to what S. Narain of ICICI Prudential AMC had to say on the sector valuations and the AI theme.
The pace at which, all these developments which are happening in AI and the kind of P's at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. We have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows. And, the domestic flows have been buoyant, and that has ensured that the markets have been static in large caps because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. and definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap.
Well, the point that he's making is that global IT services companies like Cognizant, Accenture are trading at much cheaper valuation multiples, 7, 8, 9 times. Indian IT is trading at 12, 13 times. So there is still the a premium that Indian IT is trading versus its global counterparts, and people are also questioning that. Today, that's Tata Tech, which is moving up very smartly in the IT pack because they've got a $100 million deal with Telecom, and this is supposed to be a new client for Tata Tech. So it will straight away add significantly to the company's long-term growth trajectory and earnings visibility. So Tata Tech is the one where there is fundamental news backing the rebound. Get into a break. On the other side, we'll focus on bond markets with Manisha Gupta.
Welcome back. As promised, shifting focus to the bond markets then. Manisha Gupta is here with the latest. Manisha.
After all that upheaval in the month of June, July seems to have started on a steady note when it comes to the bond markets therein. And the expectation from the Treasury guys is that you could be looking at July cooling off slightly after what we've seen as in sense of a very sharp decline in the month of June. So when you look at the FPI debt inflows, they may also taper down given the fact that the dollar index continues to hold around that 14-month highs above 101, with reports suggesting that 103 is a possibility as well. And then you have crude oil prices, which declined 38% in the June quarter. Have started the month of July as well, slightly on a weaker note, heading towards that $70 a barrel mark, with most markets believing that sub-70 is a level that July perhaps could be looking at before crude prices rebound yet again in the months of August and September. Risks of rate hikes and additional supply is something that the street also seems to be dealing with. And then you have RBI MPC, where various brokerage reports suggest that we perhaps are not looking at an interest rate hike, not in month of August or in October as well. That is the thought process, at least right now. The June monsoon deficiency at 40% is something that the street has been taking a note of, with an expectation now that IMD says that July monsoon is going to be 94% of an LPA. If anything less than that, if 10 to 12% of a deficiency is what we look at monsoons in this season, that is something that the markets are ready to bake it in. Anything more than that is what you would start looking at in sense of inflation concerns, agricultural stress, rural stress even, and that would be a concern. But at this point in time, July is started on a stronger note. However, it goes forward from here is something that the street will keep an eye on. And then there's a list as well on the private bond issuances today and tomorrow. Top on my list is Sammaan Capital, which is planning to raise 10 billion through reissuances of bonds maturing in 2027. Poonawalla Corp should come in on your screen because they're also looking to raise nearly 7.5 billion. They're doing it via issuances of bonds maturing in 2028. Axis Finance also is in the market today looking for a bid. This is as they're looking to raise nearly 6 billion via the reissuances of bonds maturing in August 2029. Bajaj Finserv is the other one on my screens, and they're looking to raise nearly 1.95 billion, and they're doing it via issuances of 3 bonds with different maturities. And then you have Muthoot FinCorp, which is also looking to raise around 1 billion, looking at issuances of bonds maturing in 2031. All of these biddings are in the day-to-day. Tomorrow you have NABARD, which is looking to raise 80 billion through issuances of bonds maturing in 2029. So quite some action anticipated there today and tomorrow.
Okay, thank you very much for that. My India, moving on to a corporate discussion, is doubling down on leadership as it pushes deeper into the AI native mapping. Rohan Verma is also back as the company's joint managing director months after stepping away to build his own venture. Rohan is now joining in to discuss the leadership changes at the company and the impact of AI on mapping and the quick commerce integration roadmap. Thank you very much for joining in. Rohan, just a little over a year back, you stepped down to build the B2C venture. Now you're back, as a joint MD. So what exactly changed for you and the company? And what happens now to the B2C business and the aspiration that you had there?
Sure. Thanks a lot for having me on your show, Reema. Since I transitioned from CEO of the listed entity, I actually transitioned into the MD role for 2 of our subsidiaries, which was the one subsidiary was focused on SaaS and IoT for logistics and mobility. And the other subsidiary was focused on government and geospatial digital transformation, including for defense and digital twin tech. So I've been focused on that over the last year. I'm happy to kind of say that both of them are 100 crore plus businesses now, which were just 20 crore plus business or less than 20 crores a few years ago. They're doing well. There's a lot of growth ahead in the IoT and government space. But what we decided as a group is that this is the time for AI. And this is the time when we have to leverage the last 8-10 years of AI work that we've been doing into a large push into not just how we are as an AI native organization, that means how we operate using AI, but also as AI native product building, how we use AI to build our data, our software and hardware, and ultimately deliver AI native experiences to our customers, which add tremendous value in terms of proactive intelligence, contextual intelligence, and grounded in the real world data that we have. So it's the most exciting time that has been there for me in the last 22 years of my involvement with the company. And we, along with the team, guided by our co-founders, CMD and CTO, CHRO, we're looking forward in a strong way.
Do you have a number for your AI investments?
So no numbers right now. We're in silent period. But qualitatively, what I can say is that if there are 1,400 people in the company focused on indigenously building products, platforms, APIs, and solutions across digital map data, geospatial software, and location-based IoT, you can imagine almost everybody is using AI right now. And we're spending a lot efficiently, I would say, on AI tokens, applying our mind on how we can use AI, infuse it into our products, and talking to customers in terms of what they need to make them AI-enabled through our set of products across mapping, IoT, analytics, navigation, geospatial, and digital twin tech.
Rohan, thank you for taking your time. First up, you mentioned a couple of your subsidiaries are now 100 crore businesses. You stepped away to build a vertical of your own. Is one of those among those two as well? And what prompted you back to the company right now in an operating role? And why not CEO? Why a joint MD role?
Okay, so again, we decided as a company back then that the big push into B2C is not required for MapIndia at that time. And so we reverted on that decision. What we said is that we will do consumer at the right time, in the right manner, sometime in the future. So my role then became within the group as to take these other investments that we were doing. Consumer could have been one investment, but government and public sector digital transformation or IoT or international were the other investments that also we were making. So I focused on that. This difference between CEO and joint MD is simply this. I report into our CMD as I was reporting into him earlier too. I think in the longer term, you can see this as an orderly move forward for the company in a gradual manner, kind of what you can say is a sustainable, steady transition. But at this stage where we are, everybody from the promoter group is actively involved in the business, playing different roles. As we said, I'm focused a lot on this AI push, supporting this amazing professional team that is fully experienced and a lot of Gen Z in the company, which brings a whole different energy. And with our 30 years of moat around digital mapping platforms, tech that are indigenous products and platforms, when we infuse the best of outside into this inside, I think we'll have another period of growth based on this strong financial foundation, fiscally prudent foundation that we have, and a strong organization that we have.
So are you building your own foundation model capabilities, Rohan, or are you layering that on top of third-party LLMs?
See, there's two aspects to this. Just in terms of the massive data set that MapMindia has about the real world, all the geospatial data that we have across 2-dimensional maps, 3-dimensional maps, and now high-definition maps, which Mr. Verma, CMD, has talked about in the last 6 months. This is a great data set to power a real-world model, these world models that have been talked about, as opposed to in addition to the LLMs. So that's something, a direction that we might go into. The other case is we have been building custom models or training or fine-tuning the typical architectures based on this real-world data for lots of niche specific applications across computer vision or NLP, natural language processing search that we are pushing on, as well as, of course, we are using AI to create these natural language, contextual, personalized experiences and powering our next generation of search, traffic information, routing information, as well as some interesting experiences that are coming down the line. I don't want to talk about it right now. Yeah.
Okay. Rohan, sorry to move away from AI. Just one quick question. About a year, 2 years back, when we used to speak, you had 1,000 crore revenue guidance for FY28. Do you meet that? Because you're facing some delays in deferrals from the government orders and the money. So is the 1,000 crore FY28 target on track, or it gets pushed forward? Ambit expects FY31. Is that realistic?
So again, silent period. I don't want to talk any numbers. Once our board meeting, earnings call, and AGM happens in the next month, I think we'll be talking about all of this.
All right, Ron. Pleasure having you today. Thank you so much for sparing time and joining us. And looking forward to conversing with you after all of your results, earnings calls, and the AGM as well. The management of CE Infosystems there and on the road ahead for the company. Well, the markets have cooled off ever so slightly from the highs. Is still around that 24,100 mark as we speak, so meandering around the same levels as they were when we began the show. Take a short break. On the other side, chart check with Ajit Mishra of Religare and also some trading ideas from him. Stay tuned. Welcome back. Ajit Mishra from Relicate Broking is now joining in with a quick chart check and some trading ideas as well. Ajit, good morning. Thank you for taking out time. Still that similar familiar supply zone that's coming in between 24,150, 24,200. But has the consolidation been strong enough that the Nifty breaks past that sooner or later in the July series? Your call on the index and your trading ideas as well for the morning.
Yeah, good morning, Omar. So, Omar, the tone is definitely positive. Means barring IT and FMCG, other sectors basically are offering buying opportunities or strength in the market on the rotational basis, especially banking, which is holding strongly above 57,000 mark. Though we are seeing a bit of a consolidation, but broadly the trend looks positive. But having said that, the journey for Nifty will remain on gradual path, considering that we are still below the major averages, medium to long term, 100 days, 200 days. So until we decisively reclaim, let's say 24,600 mark, the journey is going to be gradual. But yes, the tone looks positive until unless we decisively break 23,800 mark, one should continue with buy on dips approach when it comes to the index. Now on the stock specific front, like I said, barring IT and FMCG, other sectors are offering, opportunities across the board. Auto space, especially after the auto numbers, we are seeing that Ashok Leyland, which was sitting on the sidelines after the corrective phase, is set for a rebound now. So 176 is what we are eyeing as a immediate target area for Ashok Leyland, with stop at 158. Then we have Sun Pharma from the pharma space, wherein we are seeing steady up move. Post this consolidation, there's a marginal breather around the record high. So we see this as an opportunity to accumulate fresh, where the risk reward is also favorable. So with stop at 1850, one can go long in Sun Pharma with 1940 as an immediate target area.
All right, Ajit, thank you for sparing time and joining us with your views on the index and on specific stocks as well. And while the index has cooled off slightly from the highs of the day, it's a good time to get in just before we go to Mangalam from the FNO desk. You know, there are a couple of names that are buzzing around in the broader markets. IFGL Refractories is one of them, 14% higher now on the stock, among the top gainers on the small cap index. And can't not talk about the smaller IT names as well. We spoke about the large cap IT. Zensar is up 9%, eClerx is up 7%, and Sonata Software too is trading with gains of over 6%. So good going for a lot of the smaller IT names. And Mangalam is now here at the FNO desk on the Sensex weekly expiry day to decode the latest trends. Mangalam.
Well, as far as the Sensex is concerned, between 77,000 to 77,500 is where, the option writers are positioned. And if you look at the Nifty, it's been led higher by the IT stocks. So it's doing extremely well, largely on account of the IT pack. But it's the Nifty Bank which has taken a bit of a breather or a backseat in today's trading session. So it's not dragging the index, but it's just not going as high as the other indices, which is why the Nifty is contained around that 24,100 mark. And that's been a bit of a contention for the market as well. You know, the 100-day moving average, 24,123, is what we've failed to cross. Even when the 100-day moving average was a lot higher, we failed to cross and sustain above that. And as it's moving lower, it'll be important and imperative from a bull's perspective to cross and conquer that. But no problems for the broader markets. Advance decline ratio tells you that far more number of stocks advancing as against the number of stocks which are declining. And those two lines have been parallel from the start of day, which tells you actually that there is a fair amount of stability and support. Those lines look like train tracks here itself. Midcap IT, the ones that took a big nosedive in yesterday's trading session, are making a bit of a comeback. So we have Coforge, Persistent, Tata Tech, all of them spiking right now. A lot of them also on account of short covering, but we'll take that. If you look at the 24,100 put and the 24,100 call, that's where the action is for the Nifty. The 24,100 put has a premium of 126 rupees, telling you around 24,000 is where you have support. But at the same time, the 24,100 call has a premium of 120 rupees as well, telling you that around 24,200 thereabouts, we will see some resistance. For those who are writing, both of them are playing for a range of 200 points on either side. So the broad range would be 23,900 to about 24,300 on the frontline index. As far as individual stocks are concerned, a lot of short positions added on DMart, and then we're seeing a lot of long positions added on XI. DMart is the one that really stands out because yesterday and today, a lot of the consumption stocks are doing well, but this one is a curious loser with a lot of short positions being added.
Thank you very much for that. We will get into a break. On the other side, we'll connect with Rohit Srivastava from IndiaCharts.com.
Welcome back. Around about 80 points higher on the index. So, well, that's a slight cool off from the highs of the day. Since we were talking about the gainers just before we moved into the break, a couple of losers that are underperforming today. Thermax is one such name. You'll be hearing from the management all day long on CNBC TV 18. So 4% lower on Thermax. That's the top loser on the Nifty 500 today. HFCL is down 3.5. So some profit booking setting in there as well from higher levels. And Z Entertainment, after the approval of the preferential issue, is also down around 3.5% in today's session. But the one big name that's underperforming today is Avenue Supermarts. That too ahead of its quarterly update, which it should be announcing anytime now. That too is down around 3%. At the lowest point of the day is Avenue Supermarts. Rohit Shrestha from IndiaCharts.com is now joining in to talk about more on the markets and his preferred picks. Rohit, thank you for taking out time. You know, the Nifty still in a 400, 450 point range, although the range has moved ever so slightly higher from the last time that we spoke. Does that give you enough confidence that we are headed higher sooner or later, we take a leg up before we take a leg down?
Yeah, I definitely think we are overall headed to much higher levels. I think what is happening is probably, some shakeout in some of the other parts of the market. For example, today, I think some of the weaknesses essentially coming from the banking side, even though we are seeing some recovery in the tech space. So I think that's probably the only pressure point. But most of the other segments, I think, have seen their correction. Like you're seeing the small cap index already hitting a new 2-month, 3-month high, and that's probably a lead signal that the individual stocks have started to move already. I think there's only some weakness in financials. Other than that, the Nifty should be heading higher from here. Give it a day or two, I think we should eventually break out above 24,300, which is the level above which I think a lot of people will start jumping in onto the next leg of the market.
So if 24,300 is conquered, then what's the next level in sight?
So then I think you're straight off towards, heading towards the all-time highs. I'm not sure where in between you will stop. We could put an interim number at, say, 25,586. So we look at that next. Maybe 25,800. So that's the range, 25,500 to 800 somewhere is where you'll go and, probably see some pause, if at all.
Does the Nifty Bank now look more stronger than the index? Because compared to the Nifty Bank has seen a faster recovery from 54.5 to around 57, 58. Now we are above the 58,000 mark. Does the Nifty Bank hit record levels first in comparison to the Nifty? Because the Nifty is still quite far off.
Yeah, so I think the issue with the Bank Nifty is very short term. I think 1 to 2 days potential pullback to maybe 57,300 or so. That is the shorter term risk. But eventually, I think Bank Nifty also goes towards all-time highs, maybe around 63,000 is what we look for. But there could be an interim level closer to 61,100 where we could also see some pause. So I do think financials will outperform. I think the interest rate sensitives, which is financials, realty, auto, are likely to do extremely well as bond yields continue to decline. So that's a sector where you are seeing attractiveness. Banks moved first; they're pulling back, but you continue to see now. If you look at all three, you'll see realty holding out pretty strongly. We did have a slight pickup in the auto segment on Friday. We haven't seen follow through yet, but I think that's the next one that should eventually pick up within the three.
Realty has been completely bombed out, and you're saying there are opportunities emerging here. Any stocks or on the trades that you'd recommend?
I didn't get the.
I'm saying Realty. You said interest sensitive should do well, whether it's banks and autos also eventually. In that, there's real estate. I'm saying real estate was completely bombed out. So any individual stocks that you'd like to highlight?
So we have written about, I think most of them are looking good. We've, as SEBI registered RAs, I must mention, we have written about a couple of them. We've covered Oberoi Realty, for example, which is looking good. And we've also recently covered DLF and Godrej Property. So all three of them, we've written about seeing further upside from here.
What is something that you like right now, Rohit? Is the best of gold now behind, or maybe even silver for that matter? There are a lot of other experts who we were speaking to earlier in the day are also of the view that it is possibly not the right time to invest in gold and silver. Is the best now behind, considering we have cooled off 30% for gold and 50% for silver?
I find it very surprising. In January, I was very bearish on gold and silver. I thought 4 lakhs would become 2 lakhs and we are there. Now, when 4 lakhs becomes 2 lakhs, to say that the best is over, more like looking in the rear view mirror. I've just written a note this morning that if you wanted to buy gold and silver at a lower price, the time to buy is today. Now, what that means is we must break that up into two parts. Will gold and silver go lower from here? I don't think there's significant downside. There is more upside than downside in gold and silver. However, gold and silver might not outperform, and specifically, let's say gold will not outperform equities, Indian equities, for maybe a 6 to 12 month period. Now, the reason to say that is when we look at the Sensex to gold ratio, it is the most oversold in sort of 2-3 decades. And when that happens, you will probably see a year or more of outperformance of equity relative to gold is what I would anticipate. So when I say buy gold and silver, I'm saying buy it because you wanted to own it. I'm not saying buy it because it will do better than equities. So you have to make an asset allocation call here. You're getting gold and silver cheap. Is it time to buy? Yes. Is it time to buy a lot? Maybe not, but if you wanted to own some and you are getting the price, then the time to act is now on that portion. But if you're thinking that you'll buy gold and silver today and you'll outperform Nifty on a 6 to 12 month basis, you'll probably be proven wrong. So, so that's the thing that you need to keep in mind. But I do think in terms of price, the worst is behind us.
Rohit, short conversation. Wanted to get your views on the other sectors as well, but thank you very much for joining in. We will get into a break. On the other side, the management of Pace Digitech will join in and we'll get their views on the battery energy storage systems. The company is betting big on it. They've been winning orders. They've got a large capex outline where they'll push up their capacity. So more coming up with the management. Welcome back. Let's invite the next management on the show. That's Pace Digitech. The company's battery energy storage business is scaling up fast. The company said its manufacturing capacity in BESS, that's battery energy storage, will double to 5 gigawatts with the new line coming online this month itself. Venugopal Rao Madisetti, CMD of Pace Digitech, is now joining in. Thank you very much for joining in. This is Rima here. But let's just begin with the basics. Now we know what, broadly tell us about BESS and how much does it contribute to Pace Digitech in terms of revenues and margins, and then we'll come to your plans over here.
The battery energy storage system, which is quite prevalent in India now, because a lot of renewable energy is getting integrated to the grid, and the renewable energy being intermittent, so we always have to have the backup as a battery backup so that you can harness more renewable energy and use it for the non-generating hours. So that is the concept, and it's picking up very well in India. Even as latest as about a few days back during this assembly session, the Honorable Chief Minister of Maharashtra has mentioned that Maharashtra is going for a 1 lakh megawatt hour storage. They are planning for battery storage, which is 100 gigawatt hour for that one state alone. So that is a big step towards getting into the battery energy storage. So thankfully we have our plant up and running, and we are about 1 year old in this manufacturing of the BESS systems. And battery energy storage system is becoming quite popular now.
Concept behind it that we're generating renewable energy, but we need to store it since it's not a continuous source of power at all times. But what is the contribution of this to your overall revenues and margins?
See, now the current financial year, that is FY27, would be significantly contributed by the energy storage business, which is going to be about 55% is what we have planned for. And we are going to achieve that 55% business coming from the energy storage business.
Mr. Marisetti, the entire the BESS space, right? The tendering is also getting a lot of competition from the likes of Tata Power, JSW Energy, Wari, and then there is competition from Chinese suppliers as well. So are you witnessing any pressure in terms of pricing or tendering and so on, or is the space big enough that it can accommodate all of these players and still you would have a healthy margin even if on any project?
Well, the competition is there. It is true, the competition is there from either from China or from other suppliers. But the one good thing is that the manufacturing, we are the only company who is manufacturing right now of that 5 gigawatt scale in India. So that is the advantage of the early mover advantage we already have, and we are able to see that. So, and then we are increasing from 5 gigawatt hour to 10 gigawatt hour in the next 3 months' time. So with that, what will happen is that the establishment is already there and it's producing the these battery energy storage systems, which is a big advantage for us when compared to the others. Yes, we do have the competition from China as a finished product, but I think that is something which government has to look into. How do they restrict these imports so that the local manufacturing has to be given support? A lot of discussions are going on. We do believe that something should come up as soon as possible. Having said that,
Are the Chinese players when they bid in the tenders? Because you're saying the government needs to look into the matter.
See, in the tenders, the government, these government tenders, they have already clearly mentioned that local content has to be there, but that implementing those conditions are still not in place. And we believe that that should happen soon, so that there will be some restriction to import the fully finished products from China.
So, Mr. Marisetti, you mentioned in your FY27 guidance that it will be 3,200 crore to 3,400 crore on the top line front. So that is around about 20 to 30% growth compared to the 8% that you reported last year. So how much of that comes from the BESS? Is that 55% target for this year is what you are highlighting?
Yeah, the 55% would be from the energy storage.
And you mentioned for the 10 gigawatt hour scale up that you have announced, the 200 crore, how much of it is covered? Is everything through internal accruals, or are you planning any further fundraisers as well?
No, that is from the internal accruals, and we have already, construction has already been completed, and the equipment has also been ordered, which is expected by August, and we'll be completing the commissioning by September end or mid of October latest. That's our plan.
All right, Mr. Marisetti, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Take a short break, get you more on the markets on the other side. Stay tuned. Back still 80 points higher on the index, but the broader markets though, they are the ones that need some attention. But more than the broader markets, it is the Nifty Bank that needs some attention. That has moved to the lows of the day, and now the index has come off around about 300 points from the day's high, almost 400 points from the day's high, still trying to hold on to that 58,000 mark. But battery makers are back in the spotlight, and Sudarshan is here to tell us exactly why. Sudarshan.
So both these battery makers have been sharply higher over the last few trading sessions. One of the reasons is being attributed is the sharp fall in the lead prices that we have seen in the last few months. So since the high of January 15, 2026, lead prices are now down more than 11%, and majority of the fall has come in the last 1 month. So in last 1 month, prices are now down almost 10%. Now, talking about the exide industry, why it's majorly in the focus because of a sharp fall in the lead prices. Because lead forms more than 70% of its material cost and almost 50 to 55% of the production cost. As far as Amara Raja is concerned, 65 to 70% of material costs come from lead and 45 to 50% of production costs come from lead. Now, how can you read the impact? So normally companies pass through if there is any increase or fall in the lead prices, but that happens with a lag. Immediately in the near term, we do see the impact. Now in this case, it will impact the margin positively because 10% fall in prices reduce manufacturing cost of lead acid battery in the range of 6 to 7%. This is one of the reasons that's being attributed of a sharp rise in both the battery makers, Amara Raja and Exide Industries.
Sudarshan, hi. What about TVS Motors, Bajaj Auto? How did the June auto sales numbers look?
So both these companies have reported a strong sales print, and that's basically being led by the export segment. If you remember, for Bajaj Auto, almost 50% of the total sales come from exports, and for TVS Motor, it's almost in the range of 40 to 45%. And last month, after the sales for the month of May were out, Bajaj Auto's management had come on the channel and said that from the very next month, we should do the exports of more than 2.5 lakh units, and company has achieved on that front. For this month, basically for June 2026, total exports for Bajaj Auto have come in at 2.53 lakh units. And now if we talk about the total sales, those have increased by 28%. Our expectation was 26% increase. And now domestic sales were up 11%, and just export sales, if you talk about, it was up 47%. Two-wheelers up, sales were up 30%, and here also domestic sales have increased by 12%, exports were up 49%. Coming to TVS Motor, it was the strongest print amongst all the two-wheeler names, and total sales have increased by 47% against our expectation of just 26% increase. Come to the segment-wise, domestic and motorcycle sales were up 42% each. Electric vehicle sales, now TVS Motor is the #1 player. If you talk about the market share, they hold the market share of more than 24%. Just in the month of June, their EV sales have increased 3.5 times to 48,537 units, and exports have increased by 47%, and two-wheeler exports, if you talk about, it was up 48%. So very strong set of numbers, not only from TVS Motor, but also from Bajaj Auto.
Thank you very much for that. I was just looking at one company which came out with their quarterly update. That's Bazaar Style Retail, which is a value retailer. And the company's standalone revenue growth in Q1 has gone up 29%. They say the same store sales growth is up 7%. And the company added a total of 5 new stores in Q1 FY27. So same store sales growth of close to about 7% in Q1. Stock is locked up in an upper circuit of 5%. With that, it's a wrap on trading hour. Stay tuned. Halftime report is up next.
It's another green day on the D Street. The Sensex and the Nifty trade almost 0.5% higher each, led by IT stocks, while banks underperform and midcaps gain in line with the benchmarks.
Palantir CEO Alex Karp just called out OpenAI and Anthropic for IP extraction guised as subscription, adding they would charge for value add if they truly delivered any. His comments spark a rally in IT services companies.
The board of Zee Entertainment approves the issue of 25 lakh warrants to promoters at a price of Rs 126 per share. But a similar proposal was defeated earlier, and proxy advisors say that the present proposal may meet the same fate.
Stocks of battery makers Exide and Amara Raja Energy charge up after lead prices see a sharp cut. The price of lead, which accounts for around 70% of production costs, is now down 11% from the start of the year. Hello and welcome to Halftime Report. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Winnie Motiwala. Winnie, good afternoon. Well, we continue to be in the green but have come off from the highs of the day. The Nifty, which is up around 0.3%. We do have the Sensex as well, which is up that much. Broader markets, they are outperforming the benchmarks right now. But Bank Nifty is the one which has come off sharply from the highs of the day, has been underperforming, and that continues to be the case as well. So Bank Nifty's chart should come up for you on the screen because it has come off almost 300 to 350 points from the highs of the day. And that is indicating the fall that we are seeing, or that is translating to the fall that we are seeing in the Nifty 50 as well as we speak. Nifty IT is the top gainer. We do have Realty pack, which is doing really well. Small caps also adding to the flavor, and metal index is up around 0.6%. So it is a market which is doing really well, but has come off from the highs.
Has come off from the highs, but at least holding on to that green is the word, at least for today. In terms of individual names coming in for the Nifty 50, IT, obviously that's the leading the charts, right? And that's why you have Infosys, TCS, HCLTech, Telecom among the top Nifty pullers, and the names that are supporting the market in terms of Nifty 50 today. On the flip side, you have L&T, Bharti Airtel, Reliance, Axis Bank, which are dragging in terms for the moves. A lot of individual names on the broader end of the market also that are doing well, and especially the mid and small cap IT also are managing to hold on to gains. So Emphasis, Coforge, Persistent System on the broader end and the mid cap side are doing well. But that's about the markets. Let's talk about what's on the show for you all as well. Thermax is betting big on the bio-CNG space and expects it to be around 1,000 to 2,000 crore revenue business for the company in the next few years, 2 to 3 years target is what they're saying. So you will get you excerpts from our interview with the management. Stay tuned in for that. This will be followed by a discussion on capital goods, and we'll talk about CG Power, Thermax, a lot of other names with Renu Pugalia of IIFL Institutional Equities. We'll also be focusing on buzzing stocks and the big movers in today's trading session. In our commodities corner segment, we'll have Jayan Mehta of Amul, who will join us and discuss the outlook here as well, what's happening on the monsoon front, a lot more in terms of the commodity front in that discussion. But first up, let's go across to Vivek, who is at the big wall to take us through all the stocks that are moving around in the trading session. Vivek, good afternoon.
Well, good afternoon. You know, what a difference 24 hours has made, especially as far as the fate of the IT companies and the IT share prices are concerned. Yesterday, saw most of these names languishing in trade, but today, post the comments coming from the Palantir CEO, what you're actually seeing a very, very strong bounce back across the entire IT pack. Coforge leads the charge, almost 6% higher. Tata Technologies, yesterday one of the top brags, higher by 7%, and most of the IT names up anywhere between 2 to 8% today. MapMy India, another stock from the broad end of the markets, up on very good volumes today. We had the management earlier on the show, very positive commentary coming in there. That stock higher by close to 8%. Exide Industries, both Exide as well as Amara Raja on lower lead prices, doing very well in the session. One of the top F&O gainers in the session. And the FMCG rally that we saw yesterday, today has seen a bit of a follow-on rally. In fact, Godrej Consumer up by almost 2%. Britannia too adding on to its gains. On the other hand, quite a few stocks under pressure, especially today, seeing quite a bit of profit booking emerge across the entire capital goods basket. Thermax down 4%, saw a brief bounce back, but cooled off after that. AI Engineering, BHEL, Siemens Energy, all of these stocks under a bit of pressure today. When you're looking at HFCL, one of the top small cap laggards in the session today on strong volumes. Zee Entertainment now a lot of news flow, especially as far as the warrant issue to promoters are concerned, but the street has seen a bit of profit booking on this particular development. And DMart yesterday was one of the top drags today, continues to see selling pressure. This particular stock has underperformed significantly, especially in the last 2 trading sessions.
Okay, all right. Thank you so much for joining us with all those names. Vivek, some of these stocks which are buzzing around in trade today. Let's slip into a short break now. When we come back, we'll get you excerpts from the management of Thermax, the conversation that we had with them on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. Markets obviously holding steady at 24,100 levels as of now. But let's talk about Thermax, right? Increased realization for energy security in the country has led to an increased pace in terms of the movement for energy security development and the equipments required for that. This is the word coming in from Ashish Bhandari, MD and CEO at Thermax. He tells me that the bio-CNG industry is worth several $1 billion opportunity for the country and that he expects this pace to continue and this industry could become India's ethanol story, next ethanol story. Listen in to a slice of that conversation.
The expectation, so first there's this very strong realization all around that the pace needs to increase. Yeah, we are here today at a bio-CNG plant. There was a time when it was expected that India could have 3,000 plus bio-CNG plants. We are not even at 1/10 the number. And that is because some of the initial plants had difficulty achieving commercial viability and the economics were marginal. And there were also some policy decisions that the government was working on. As I understand, in the next couple of months, there are some very big policy decisions that are expected that will really make this industry go on a growth path like never before. I expect bio-CNG to be equivalent of India's next ethanol story with hundreds of plants coming up all across the country.
What would be that market size if we talk about it?
So India today imports more than 50% of our needs for natural gas is imported for India. And what that means is for everything, city gas distribution, industrial use, even without using gas for power, there are multiple applications, transportation, all of these applications are growing fast. So India's natural gas needs are growing very, very fast. Within the energy mix, it's one of our fastest growing energy needs. Bio-CNG plants address this.
Okay.
Done well, the industry is worth several $1 billion in India, maybe even 10 to 20 billion dollars worth of business annually for the nature and the size of the business India can do. Overall, I think as much as 20% of India's natural gas needs can come by this domestic deployment.
And you said economies of scale in the past, given there were challenges, there were mistakes you make, the right proportion has to go in all of this, right?
Yes.
Have they started improving economies of scale for this business?
So the economies of scale, technology have both started to improve considerably. For Thermax, we took 14 plants and those were taken 3 years ago as orders. In the first year, they were just learning. Every day it felt like, wow, will we ever learn this and will we ever come across? But in the last 1 year, our stability has improved tremendously. All our plants are going through commissioning and performance tests. This plant, as an example, has gone through that performance test successfully. And we've got one more big plant in Punjab, which is right now going through performance tests. So we are now getting to the point that we understand the technology very well. We think the economics are also very close to making these commercially viable. And with this last couple of decisions that are expected from the central government, that is the only thing that this industry needs to really break out into something special.
And that is hopefully soon, given that everybody is
hopefully very, very soon.
So now bio-CNG for Thermax is how much of the portion?
So we are doing about 14 plants. In the last 2 years, we haven't taken really any new orders. We have taken some orders which are largely like adding digesters at existing plants. We all also learned, for example, initially that with 3 digesters, you could do the work. Over time, we realized we needed more digesters. So at many of our plants, we added digesters. Beyond that, we really haven't added more. But if the industry takes off like we expect, this could be one of the biggest areas of Thermax.
Does the revenue come for this? It's annuity or?
So we have got 2 parts of revenues. One, when you construct the plant itself. Which for a typical 20 tons per day plant is about 100 to 150 crores of plant setup, etc. And then you get an annuity for O&M, which is maintenance of the plant and operating the plant and taking care of things. Tomorrow, there could also be a service stream for sourcing the biomass, bringing it in, taking care of digestate, a lot of other things that are out there. I think with the right policy decisions that are expected, this could easily be 1,000 to 2,000 crore business for Thermax.
Oh, wow. And that's by when?
So we will see when the policies come in. But I do think over the next 2 to 3 years should be very, very exciting for this industry.
Ashish, what I want to understand, we've understood the whole process. We've said that this is a big market size as well, right? This comes in as a part for Thermax and green solutions side of it, right? Last time we spoke, you said the margins are not as great as the other business.
Yes.
When do we see that improvement, or are the margins for this business going to be at these levels? Is there a possibility or scope of improvement?
It has got 2 parts of my answer. Like many things, it depends. Some of it depends on Thermax, some of it depends on the external environment. First is if the external environment improves, which is expected with the pricing change, and this is now a Prime Minister topic. The highest body of India is expected to provide the right incentives. So if the whole industry becomes bigger and grows fast, then the ability to make money also improves. So that is the first part. Second is the Thermax's ability to build differentiation into the solution. All these plants that we have done has taught us a lot. And there are still at least 3 major areas of innovation that we are working on, which we think can give us significant differentiation.
In bio-CNG?
In bio-CNG. So if both the first part and the second part happens, the opportunity to make margins out there is significant. If the first part happens, but the second part does not, then the volume comes, the profitability, we'll have to see how good and profitable that is. But we are certainly working towards making both of those things.
Okay, all right, that's Thermax on the green solutions business, the big bio-CNG opportunity, and a lot more. The stock recovered from the lows of the day, but then again, it is down 4% in trade. But it's time for a break. Renu Baid of IIFL Institutional Equities will join on the other side. We'll discuss the capital goods space with her. Stay tuned for that.
Welcome back to Halftime Report on CNBC TV 18. Let's continue the conversation about capital goods and take this forward with Renu Baid Pugalia, Senior Vice President, Research at IIFL Institutional Equities. Renu, good afternoon. Thank you so much for joining us on the show. We have a couple of things happening around the capital goods space as well. First up, let's just talk about Thermax, right? If you just heard the interview a short while ago, they spoke about the bio-CNG, possibility of the growth that they see coming in on that side of the business, improvement in terms of margins there, 1,000, 2,000 crore revenue opportunity that they have here. Your thoughts on Thermax first?
Well, we like the company and the franchise, and they're very strong in terms of the product and R&D capabilities. And I would say in segments like coal gasification, bio-CNG, they have done work over many years, which hopefully now should play out because the market for these hybrid and green solutions are now starting to opening up. So they should be well placed on this segment to tap up incremental business volumes. Bio-CNG last 3 years have gone through a lot of things in terms of stabilizing the new products and technology, and they are in a sweet spot here. In Thermax case, the only glitch which at times occurs is there happens to be gap in terms of their numbers, delivery and performance, especially on the profitability side. So hopefully They have had their own learning curve, and incrementally going forward, we don't have any mishaps on the cost front. Then we definitely expect the company to be back to double-digit margins in the next 2 years.
The next 2 years, you expect double-digit margins for Thermax, and the management did indicate that yes, they had some slip-ups in the past, but they will improve on that in the coming years as well. Renu, your take on CG Power, and a lot of these companies, ABB for instance, a lot of them are looking at green solutions and are looking at green maybe energy providers in some or the other sense. Do you think that could be the big margin driver going forward, or there could be some hiccups there as well?
Well, when you look at companies like ABB, their portfolio is very well aligned to energy efficiency related initiatives and drives. So whichever sectors consumes electricity, energy, and they would want to optimize on their energy consumption, then the drive solutions are already a portfolio which get absorbed there. And this comes across manufacturing sectors, in renewables, on the power gen side, across the board. So to that extent, the technology is at their edge, and ABB as a company has been at the forefront of localizing these technologies in India. So be it for data center market or renewable segment and industrial automation, they have anyway been doing a lot of work. So to that extent, we definitely think as and when these portfolios and even the IE3 range, IE3 and IE4 range of motors, they see faster absorption in the market. ABB should benefit out of it. Margin is a function of not just how new technologies are priced, but also how costs are behaving in the market. And in the near term, given the headwinds that we have on the cost side, a couple of quarters are expected to be bumpy. But we think broadly margins today for them are at near bottom. And in the next 2 quarters, as we head towards second half of the year, hopefully these headwinds will ease, and companies should be able to come back to 15-16% margins from an average 12.5-13% that they have been doing last couple of quarters.
Renu, I want to talk a bit more in terms for CG Power, right? CG Power doesn't have the HVDC exposure, which other players have, and where you're seeing so many tenders coming in or the growth story coming in. But they do have the semiconductor side, the facility that they're building on, the Gujarat facility. Also, recently, there was the ISM 2.0 proposal that came in as well. What are you making of this segment specifically for the company? And how is the power system side doing as well?
Well, so for power systems, for power transmission, we have been maintaining that HVDC is not only the growth area. While HVDC does create headlines for companies when they win orders, but if you look in terms of the actual market, the supply chain constraints have been in transformer segment, and that is eventually also reflecting in the switchgear market as well. And if you look at CG Power, they are extremely well placed in both of these product segments of powers and power transformers and switchgears. They have been among the first player in the market to not only go for 2 rounds of brownfield expansion, but the first one to come up with a greenfield expansion within a matter of a year's time. This is getting commissioned in September. So I think from that perspective, CG is very well positioned in the power grid value chain or the grid equipment market today, even without HVDC as a portfolio. Because of the strong positioning and cost leadership when it comes to transformers across voltage levels, including the high voltage, extra high voltage of 765 or 1200 kV levels. And it is this segment of the market today which is delivering significant outperformance and beat, both in terms of revenues as well as margins for CG. And in our view, the story for CG would be not just on the domestic market, but incrementally how they are able to tap and penetrate far more deeper into the export opportunities. And the first proof of that was the large order which they announced last quarter from the US data center market. While that was a notable 9 billion rupee order, we heard that they are comfortable in terms of bagging mid and small size orders on transformers and switchgears in the developed market. US and Middle East are 2 key focus markets for them. And we see exports steadily improving in terms of the revenue mix and order for them. Which is where we think CG will be able to drive outperformance versus other domestic peers without really having nameplate these technologies on HVDC or STATCOM front. So that is a notable differentiator for them. And yes, CG Semis, the OSAT plant is getting commissioned. We understand end of this week, they have an inaugural function for the main plant. And in next 2 quarters, that plant will also start to stabilize and start to ramp up. But that's a completely different revenue stream, a different business model, more capital intensive. And CG has been well placed in this segment as well with technology tie-ups and their partner Renaissance and other work that they're doing with few other Japanese OEMs. in terms of getting the product and value chain tied up there. So in our view, the key growth driver for CG in terms of earnings in the near term is clearly power systems. And hopefully in the next 12, 18 months, as we see the industrial system picking up, that should be able to compensate for any softening in the margins that may happen towards FY 29-30 for the company there.
Sorry, I just want to comment on one point, right? Data center opportunities that we talk about. A few weeks back, we had heard some concerns coming in on the US front from some specific companies on the data center issues. It may not be as much as one was expecting. Is that the concern? What are you seeing on ground from these companies? Have you had a word with anyone on that as well?
Well, on ground, some of the large notable projects which companies are executing there in the US, we haven't seen any slowback or curtailment. While there have been change in EPC contractors and players of these notable large hyperscaler projects, but on ground in terms of equipment sourcing, whether it comes to the main power gen part of the business on fuel cells, companies like MTAR, which are part of the value chain, or on the grid equipment side of the same project where CG has been one of the suppliers vendors, we definitely don't see any slowdown. The project is very well on track. And in general, while markets have seen valuations of AI-driven stocks and the names correcting a bit, that would be, I think, generally in terms of flows and how we see liquidity. But the broad on-ground thesis and growth drivers from the AI-DC market in the US still remains fairly strong. And we continue to see positive tailwinds of growth for grid equipment coming to Indian companies. CG has been among the lead from them, but we will see similar order flow come through other peers in the grid equipment market, notably EVT&D as well there.
So Renu, yes, sorry, we are short on time and I have to squeeze in a quick question on Dixon because that's the stock you cover as well, and the Vivo Dixon JV approval is expected anytime soon. If you can give us numbers, just the numbers, if it does happen soon, what kind of EPS upgrades are you looking at? How much could it add to their overall portfolio?
Well, I would say the Vivo JV for Dixon is broadly already priced in the current earnings estimate by investors and analysts. For current year, as in we have taken 1 quarter of impact, positive impact. If it comes now within any time in the next 1 week, 10 days, it would be half-yearly impact. So there could be about less than 5% of upgrade for the current year. For next year, we have taken steady state volume. So I think the upgrade could be limited, maybe not less, more than 5 or 10%, depending on whether analysts have already priced in these numbers or not. Our understanding is Vivo JV upside or the numbers are already baked in the forecast for fiscal 28 and partially for fiscal 27. So the news is positive in terms of it clarifies on concerns on the JV and the mobile ramp up, but in terms of earnings upgrade, we don't see any material notable earnings upgrade for Dixon as it is already baked in the estimates for now.
Okay. Renu, thank you so much for joining us this afternoon, talking to us about individual capital good names as well as the update in terms for Dixon as well. Thanks so much for that. On that note, we're going to step into a very short break. On the other side, Manisha Gupta will join in with a conversation with Jayad Mehta of Amul. Stay tuned in.
Welcome back, and joining us on the show now is Mr. Jayan Mehta. He's Managing Director at Amul. Mr. Mehta, hi, thank you so much for joining in. We've been discussing for many days now the deficiency that the monsoon has brought around. Gujarat, by the way, is 79% deficient in the month of June therein. It's a well-documented fact that it does impact dairy as an industry as well, in sense of cattle stress, etc. How have you seen the impact of that till time? The big summer and then, of course, an El Nino month.
The summer has been very good from the business point of view, but talking about monsoon, happy to say that monsoon has now set in Gujarat, and we're seeing showers across many of the regions, and hopefully it's a bit late, but I think it will cover up on what we lost out, and things should be better, because otherwise, as you rightly said, there would be a stress on the production side, primarily water, green fodder, and so on. But things should be better now, and we're looking forward to the better days as far as the production is concerned. The sales-wise, the first quarter has been very good. Our June sales was more than 22% growth over last year. And overall also, first quarter growth is about 18 to 20% in value terms, over a double-digit growth over the last financial year in general. So it's overall things are pretty good, and also looking forward to a good season, because post-monsoon we'll have the festive season and a good busy year ahead.
Oh, well, absolutely. Mr. Mehta, the last financial year, of course, has been very great. You've already put numbers out on what you're anticipating in this financial year. And with the first quarter, the way it has gone on, would you say you're on track? Are you revising your numbers right now?
Yes, the growth has been very good in the summer products. Ice cream, our June sales were about 60% over the previous year, and overall also growing at about 50% in the first quarter. Same applies to beverages, curd, buttermilk, all the summer-based products. And which means that we anticipated growth, we built capacities in advance, and the results were also in line with that. So we continue to build on this momentum in the coming months and the quarters ahead, and obviously aligning with the overall plans of growth and also the capacity expansion that has been already factored in the coming months and years.
Mr. Mehta, how are you looking at then the festive season? As you said, there's a full-on preparation. We do understand that Amul talks about 10 to 12 new products at any given point in time. What is on your mind right now?
Yeah, that's true. We need to continue to keep innovating and develop new range of products. So be it protein, be it organics, be it mithai, across different product categories, and including ice creams, a lot of innovations happening, new products, and we are entering into new spaces as well. And that helps us in remaining top of the mind as far as the consumers are concerned, generate more product trials, reach out to more number of homes, expand distribution along with that. So yes, we will continue to build on this in the coming quarter.
The most important question really is about the milk prices. We saw a hike a month back, if not more, and it was a 2 rupee of a hike. Is more in pipeline, or how do the numbers stack up?
No, there is no need at the moment to increase any price of milk. We did increase in the month of May after a period of 1 year. So as of now, things should be okay, and we are not looking at any increase in the coming months.
All right. What states are you looking at? I mean, when you talk about increasing capacities, I was reading up on a note about West Bengal. Are you entering more states right now? What is the pipeline right now?
Yes, we will put up the world's largest curd manufacturing facility of more than 1,000 metric tons per day in Bengal. And the work on this has started, and the foundation stone laying ceremony also will happen very soon. Similarly, we are putting up new capacities in Assam. We are putting up new capacities in Bihar, and also expansion going across different parts of the country. We've set up new facilities in Punjab. We are setting up new facilities in Hyderabad, Chittoor in South Tamil Nadu, and Maharashtra, and the rest of the country as well. So yes, expansion is happening in a very big way. Our Amul-fed Rajkot project also is coming up, and before Diwali, we should be able to commission that as well, which is a 20 lakh litre per day dairy plant. So we are building on huge capacities, anticipating the growth in the demand, growth in the market, and the opportunity which we have in the country.
Much of this is dairy, or are you also moving ahead in your organic and staples and bakery? I remember that too.
Yes. So each of the product categories is witnessing a good traction amongst the customers. And of course, the deeper we need to go into in terms of sourcing and be for products like organics, and then simultaneously building the market and creating a trust-based and also a quality-checked organic brand that we have. So yes, that's also a very big opportunity we see in that space, and we are working on it.
Mr. Mehta, what is the kind of investments that you're looking at in overall of this capacity, the increase that we are talking about across various states?
We've been among the largest investors as far as the food sector in the country is concerned. And I mean, the previous World Food India also, we announced investments of more than 10,000 crores. 2 years back also, we had announced a similar kind of thing and have completed most of that projects. So yes, I mean, our investments start from the village level, putting up infrastructure, bulk milk cooling, the quality management systems there, then modern dairy plants, and then expansion in the market and creating distribution strength based on that. So it's a full cycle of investment across the entire spectrum, which we continue to do as we continue to handle more and more milk. So at the moment, we do more than 350 lakh liters of milk every day on an average. That's also growing at a very healthy rate, and with keeping up with the opportunity that we have in the market, we're creating more capacities across the entire spectrum, starting with collecting more milk in the villages, having infrastructure in place, and creating infrastructure for manufacturing a variety of products and distributing it.
Mr. Mehta, my final question is on the international markets there. And you've spoken about India in detail right now. I remember our last conversations were about US and you were expanding there. Any more of that?
Yes, US, we are now into 38 out of 50 states. The only national brand of milk in US is now Amul. Our 6% gold milk is doing very well, both in the Indian diaspora as well as the mainstream. And year on year, we've almost doubled our sales, and we are expanding further in that. We are exporting dahi, a curd, along with ice creams and butter and cheese and ghee and paneer from India to US, and also creating manufacturing capacities of ice cream and ghee in US. We launched Amul milk in Spain last year, and now this month we're happy to announce the launch in France, in Germany, in Switzerland, along with Spain and Portugal. So yes, we are also rapidly increasing our coverage in the European markets as well. Again, with Amul Gold 6% and Amul Taza 3% brand milk.
So if you're not in India, you are in US. You're not going to miss India because you have so many Amul products there. Mr. Mehta, as always, thank you so much. You are one busy man, but thank you so much for taking time out today and speaking to us.
Thank you. Thank you. It's always a pleasure talking.
Okay, all right, Manisha and Mr. Mehta, thank you so much for that conversation. With that, we'll do one thing. We'll slip into a short break. On the other side, we'll get you more on markets and stock-specific action. Stay tuned. Welcome back. Well, the markets have recovered from the lows of the day. The Bank Nifty 2 is back in the green, 0.2% higher, pushing the Nifty higher as well. And what a rally in IT names today. That is something that was not expected and has come by in the large caps and mid caps as well. We do have Persistent Systems, which is up around 5%. Latent View is up 5%. The Sonata Software, Tata Tech, Coforge, HCLTech. My list has all the IT gainers as we speak. So it's a big surge that we're seeing across the board. We have Infosys, which is up another another 5.5%. Apart from this particular space, we do have Waterways Leisure, which is a new listing, which is up around 10% in trade as we speak. Did not do so well, did not debut for that particular stock, but right now the stock is up around 10%. We do have AB Fashion and Retail. That is the other stock which is up around 6% in trade. So overall, looking like a green-looking screen. And what does that mean for the F&O setup? Mangalam is joining us now with more details on that. Mangalam.
Well, for the F&O setup, it's looking fairly good. The reason why I say that is because the Nifty Bank has now come to the party. All through trade so far, we had the IT index supporting the frontline index, and that wasn't enough for the Nifty to actually go beyond the 100-day moving average. But the last few minutes, we have the Nifty Bank move higher, about 1/5% higher, and that's meant that the Nifty is about the 24,123 mark, and that's an important level largely because it's the 100-day moving average above which the Nifty hasn't closed for a while. So holding on to these levels and closing above these levels are extremely important, and that would be imperative for the next leg of short covering to come by as well. The India VIX is at the low point of trade, so that will give bulls a lot of happiness as well. It's around 12.5, down about 5% right now. And that's what's led to a lot of put writing. So we have the 24,100 put writers fairly active, telling you support of the market has moved higher from 23,800, 23,900 to closer to 24,000 right now. And then we've still seen call writers fairly active at the 24,100 mark. These are options that expire next Tuesday, remember? So, if the market continues to be at these levels, near 1 crore shares of the 24,100 call writers will have to run for cover. And we've seen some writing at the 24,150 call as well. So let's see whether, we continue to hold on to these levels or face congestion as we have between 24,150 to 24,200. If we don't, then all these call writers will have to run for cover. The only fly in the ointment right now is that the put call ratio has moved to 1.14. Not particularly worrisome, but as it crosses the 1.2 mark, 1.25 mark, we start to see some, overzealousness building up in the market. But a bunch of stocks which are on our radar, a lot of these IT stocks which have been underperforming, which are doing well today, a large part of that is also because the shots have been caught on the wrong side. So they are running for cover in Persistent, Tata Elxsi, as well as larger names like Infosys, which is up 5.5%. But a lot of these auto names are finding some buyers today. So we have long positions added on both Force Motors as well as auto ancillaries like Sona, BLW Precision, which is up about 5%. So by and large, looking good for the market. The Nifty Bank, which is woken up, needs to continue to outperform and leave the market above the 100-day moving average, beyond which we will see further short covering.
Okay, we'll watch out for that. Mangalam, thanks so much for joining in with the F&O setup this afternoon. And as of now, we have Manish Sathiramani, proprietor, trader and technical analyst at Deen Dayal Investments, joining us now to talk to us more on the technicals and individual stock names. Manish, good afternoon. Mangalam was mentioning some important levels for the Nifty as well as the Bank Nifty, right? Closing about the 100-day moving average for the Nifty will be key today. And Bank Nifty, what are the levels you're keeping an eye out on here for Bank Nifty specifically today?
Good afternoon, Vinny. Thank you so much for having me on the show. Well, 23,850 continues to be an imperative level to watch out for. We really need a closing below this level for the markets to turn bearish in the short term. Should that happen, we can move downwards to 23,700 and then 23,550. Until such time, I still feel we are currently sideways and we would need to get past 24,200 on a closing basis for the markets to turn bullish in the short term. If we can get past that level, then we can move closer to 24,500. Coming to the Bank Nifty, 57,400 is the key level to watch out for. Again, on a closing basis, a break of this could take us down to 56,800. The current upside is capped at 58,500. If we can get past that, the next level to watch out for would be 59,400.
Okay, 59,400 on the Bank Nifty. What about individual trades, Manish?
Working with one buy and one sell. My first buy is on Titan, which is for a target of 4,550, stop loss of 4,330. We recently triggered 4,441, which was the intermediate high which was recorded on 19th of June. This opens up a target of 4,550. The volumes have been supportive as well. The sell call is on HDFC Life, which is for a target of 530, stop loss of 610. We made a small recovery in this, but that could not sustain. We have resisted around the 600 levels, and that's where we've turned from.
Manish, we have a few queries that have come in from our viewers as well. And this one is coming in from Omkar Jain, who's writing to us from New Delhi. He is holding 500 shares of Eternal. This is at a price of 215 rupees per share. Currently, obviously, the stock is trading at 280. What is the view on this one? Should they continue to hold this on the technical front? Could we expect a bit more upside or exit the stock and book out the profits they've made so far?
So had we discussed this few days back, I would have said to book out, but technical structures have changed. We have seen some kind of supports coming at lower levels. And the very fact that we are now trading above the levels of 265, that was a major hurdle. He should continue holding for a level of about 320.
320 for Eternal. Okay, take that point, Manish. Let's go to the next one. Vivek Khurana is writing to us with an investment query. He's from Mumbai, wants to invest around 1 lakh rupees in data center stocks for the short term. He asks which stocks can he pick and adds, would it be a wise decision to stay short, for a short term period, should he make these investments?
Sonal, the IT space overall has only seen a knee-jerk reaction today. I would still be watchful. We are in what we call a short covering phase, or it's a pullback, but the overall trend still remains bearish. We would need to wait for some more time before we can start getting the early signals on the buy side.
Manish, I think the query is also from a data center perspective. Some of these stocks or some of these companies which are making these huge investments into data center space, be it ABB, be it Cummins, we have other real estate companies like Lodha, which has big investments in data centers. Anything that you think would work in that direction?
Well, nothing that's really caught my attention. So if it's a stock specific, I'll be able to check and immediately tell you.
No worries. We take that point. So we'll ask our viewer to send us stock-specific queries so that we can get them answered from you. But thank you so much for your time today and taking us through your technical bets and the levels to watch out for on the index as well. We'll slip into a short break. When we come back, we'll get you some buzzing stocks on the other side. Stay tuned for that.
Welcome back to Halftime Report on CNBC TV 18. As of now, Nifty at 24,120, above that mark. 127 is what the Nifty continues to trade at. Trying to gather some bit more of a pace. Half a percent gain right now for the Nifty 50. Let's move on and bring on board Devyani, who's going to talk to us about the update that has come in on a Z Entertainment's front, the issue of warrants on the preferential front as well. Let's go across and get more details.
Z Entertainment is in focus after the board approved a 3,140 crore preferential issue of 24.95 crore fully convertible warrants to its promoter entity Sunbright Mauritius Investments. Now, this is going to be done at 126 rupees per share, which is 16.7% higher than the last closing price. Now, 25% is going to be paid upfront, with the balance to be paid within 18 months of allotment. Now, the proposal is now subject to shareholder approval. Ahead of all of this, proxy advisory firm InGovern spoke to CNBC TV 18 and has recommended that shareholders actually vote against this particular resolution. Now, it questioned whether the newer content properties, including the FIFA rights, are actually generating returns for the company, and noted that the proposed issue price of 126 rupees per share is actually lower than the 132 rupees per share that was proposed last year. Now, InGovern has also raised concern over the source of the funds for the subscription and said that there is insufficient clarity on how the 3,000 crores is actually going to be deployed in the company going forward.
Devyani, thank you so much for joining us with all those details. The other set of stocks that we are tracking are battery makers. Sudarshan is here to take us through what's happening here. Why are these stocks up and buzzing in trade today? Sudarshan.
So over the last few days, both these battery makers, Mahindra and Exide Industries, have been in the focus, and two major reasons. First, there has been an EV push both by government and the regulatory bodies. But the major reason for today's move is the sharp fall that we have been seeing in the lead prices. So from the high of January 15, 2026, there is a fall of almost 11% in the lead prices. And of that 11% fall, 9% fall has come just in the last 1 month. Now, why this fall is very significant? Because lead forms major part of the material costs and the production cost for both these companies. If you talk about the material cost, for Exide Industries, it's in the range of 65 to 70%. For Mahindra also, it's almost in the same range. If you talk about the material costs, for Exide Industries, lead forms 50 to 55%, and for Mahindra, it's in the range of 45 to 50%. So how does it impact? Now, if there is a fall of 10% in the lead prices, manufacturing costs of these companies come down in the range of 6 to 7%. Normally, these companies pass on the price increase or price fall, but that happens with a lag of 1 to 2 quarters. So in the near term, the fall in the lead prices will have an impact on margin, and that would be the positive impact. So we can expect a positive impact on the margin in the Q1 FY27 earnings for both these companies, Exide and Mahindra.
Okay, Exide and Mahindra both on our list as of now, both of them holding on to good gains. Exide up 7%, Mahindra up 3% in trade. But let's move on and also talk about Ambuja Cements, that is holding on to gains of around 1 to 2% in the trading session as of now. Earlier on in the day, it was higher by 3%. What has come in here? There's a bullish call that's come in from Bernstein. Back to you, Sudarshan. What are the details of this note? What are they highlighting?
So yesterday we had a downgrade on Ambuja Cements, and now today it's an upgrade. And today Bernstein, in saying that it's a contrarian call, it has upgraded Ambuja Cements to outperform, but has cut target price to 486 from the earlier target of 542 rupees per share. So what's the reason? It says that gap in valuation between player 1 in the cement sector and player 2 is very big to continue. It's very unlikely that it will continue for too long. And now Ambuja Cements is available at a valuation of a greenfield cement plant, and that's a very big or very huge discount to number 1 player, that's the UltraTech Cement. And now it expects company to converge EBITDA per ton gap, and that is opened with between Ambuja Cements and the other 2 major players, UltraTech and Shree Cement. So mainly it's the valuation reason that's the Bernstein has given, and because of that it has upgraded the stock to outperform.
Okay, all right, a stock upgrade, and we are seeing that impact on the stock as well. Thank you so much, Sudarshan, for joining us. And with that, it's a wrap on this edition of Halftime Report. We'll take your leave, but Business Lunch will take all the action ahead.
Stocks gain ground as global cues remain mostly positive, even as the FNO expiry today on BSE promises some volatility. IT and Realty are the big gainers while financials drag. Palantir CEO Alex Karp just called out OpenAI and Anthropic for IP extraction guised as subscription, adding that they would charge for value add if they truly delivered any. His comments sparked a rally in IT services companies. The board of Zee Entertainment approves the issue of 25 lakh warrants to promoters at a price of 126 rupees a share, but a similar proposal was defeated earlier, and proxy advisors say that the present proposal may also meet the same fate. Stocks of battery makers Exide and Amara Raja Energy charge up after the lead prices see a sharp cut. The prices of lead, which account for about 70% of the production costs, are now down 11% from the start of the year. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Fatakia, and it's a good start for the markets, at least for the first half of the trading session on Thursday, the penultimate trading day of the week, also the weekly expiry of the Sensex contracts as well. The Nifty managing to hold above the mark of 24,120, the 120 points higher on the index today. But of course, a similar reversal trend being played out every time the index has made a move towards that 24,150, 24,160 zone. There have been intraday dips. Those intraday dips have been bought into as well. So as of now, the index holding above the mark of 24,000. No reason to complain whatsoever. And the range also remains the same for the index. 23,800 on the downside, 24,200, 24,250 on the upside. The day though, today belongs to the beaten down names. The beaten down names from the IT sector, the IT index, which was down around 5 to 7% in just the first 3 days of this week, is now up 4.5%, extending its rebound from lower levels. So IT doing well for itself, and metals as a pack was doing well in the first half of the trading session despite the strength seen in the US dollar. That though has cooled off slightly from the highs of the day, that at one point was up over 1.25%. Now that gains have now been trimmed to around about 0.6%. So that's the state of the market as of now. The broader market's doing fairly well for themselves as well. The Nifty holding on to important levels, and the second half of the trade promises to be an interesting one as well. But two other auto names, companies reporting the sales figures for the month of June, TVS and Bajaj Auto. Sudarshan is here with a summarization of those numbers. Sudarshan.
So both these companies, TVS Motor and Bajaj Auto, have reported numbers for the month of June 2026, and the numbers looked very strong, led by the export segment. For Bajaj Auto, export forms almost 50% of their total volume. For TVS Motor, it's in the range of 40 to 45%. So first talking about Bajaj Auto, total sales have increased by 28% versus our expectation of 26% increase. And now, if you remember, after the sales for the month of May, company had spoken to us and said that from the very next month, total export volumes should cross 2.5 lakh units, and company has achieved that. For the month of June, export volumes have come in at 2.53 lakh units. So it's much better than what company had guided for. Now, domestic sales for Bajaj Auto have increased by 11%. Overall exports have seen a rise of 47%. And just talk about two-wheelers, here total sales have seen an increase of 30%, of which domestic sales were higher by 12% and exports up 49%. Now coming to TVS Motor, it has given the strongest print amongst all the two-wheeler names. And total sales for TVS Motor have increased by 47% versus our expectation of 26% increase. And talking about the segments, domestic and motorcycle sales were up 42% each. Electric vehicle sales, in which company is the now market leader with a market share of more than 24%. Now, in the month of June, EV sales have increased 3.5 times to 48,537 units. And total exports have seen a jump of 47%. And just talk about two-wheeler exports, it has seen a jump of 48%. So overall, it's a strong set of numbers, both from TVS Motor and Bajaj Auto.
Sudarshan, thank you for that update. Earlier today, we also spoke to S. Narain of ICICI Prudential AMC on the IT sector and the valuations, along with the AI theme. Listen to what he had to say.
The pace at which, all these developments which are happening in AI and the kind of P's at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies. because they trade at 2 to 3 PE lower than Indian IT services companies, we find it difficult to do much more increase in weightage, because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. We have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows. And, the domestic flows have been buoyant, and that has ensured that the markets have been static in large caps, because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap.
That's the rain there on the IT sector and the valuations of these companies. Take a short break. Back with more on the other side. Welcome back. On to updates from the peace talks in Doha. The United States and Iran wrapped up indirect technical talks in Qatar, with local authorities reporting positive progress on issues related to the Memorandum of Understanding that was signed on the 17th of June. Now, Iran's deputy foreign minister said that a communication channel would be established between Tehran and Washington to report and discuss any potential breaches of the MOU. Now, US President Donald Trump also said earlier that the talks were going, quote unquote, very well. Listen in.
Denuclearization of Iran is moving along well. They've had very good meetings, and we'll see. We hit them very hard for 3 nights, as you know, but we're getting along very well.
Now, Federal Reserve Chairman Kevin Warsh at the ECB Forum on Central Banking declined to give any signal as to whether the central bank will or will not raise its interest rates at its meeting later this month. But he also did note that inflation too was elevated. Here CNBC's Steve Leisman on the Fed chair, his comments on inflation, rate cut expectations and the impact of AI.
Fed Chair Kevin Warsh at the Sintra Conference in Portugal, sticking with his firm commitment to bring down inflation, but leavening it just a bit with the observation that inflation risks in the U.S. have eased and the hope that AI productivity could help inflation longer term.
We don't want to overdetermine things, but if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S.
It was that firm commitment at the meeting last month that prompted markets to more than double the probability of September rate cut from 32% to 69%. It came off just a bit after Warsh spoke to 66% with a modest drop also in the 2-year yield, but still a heavy favorite for a hike in September. Worth noting, though, there's only a 27% probability of a July hike, so there remains a chance for the decline in oil prices and Warsh's tough talk to do enough to bring down inflation and stave off those hikes. Warsh also held out the prospect that high productivity and the AI boom could help with inflation, but down the road.
In the U.S., the AI shock is leading to a boom in capital expenditures. We see that first and foremost in demand, but I'm confident we're going to see it in supply at some point.
Warsh repeating his long-held view that the Fed's $6.7 trillion balance sheet is too big, and he wants to conduct monetary policy mostly through interest rates, but he emphasized any changes will be put in place slowly in time for banks and investors to react.
Steve Leisman there on the first address made by the new Fed Chair Kevin Warsh beyond the Fed policy at the ECB symposium. Let's also now listen into what European Central Bank's Christine Lagarde, Bank of England's Andrew Bailey and Bank of Canada's Steve Macklem had to say about the inflation trajectory going forward.
When you have the underlying inflation indicating that it's also trending up as well, and that you're only going back to your 2% target at the end of 28, with a number of things happening in our inflation outlook, which includes, the market expectations in particular, you have the obvious decision, and it was so obvious that we had a unanimity decision within the board of the governing council.
There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and is off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict.
The benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, the economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy.
Well, back to our own markets then. Even as the index continues to remain around about, 120 points higher, there is still plenty of action in the broader markets in today's trading session. And look at some of these stocks as well, coming out with business updates across yesterday and even today. NMDC's business update came out last evening, where there was an 11% sales growth in the month of June. And as a result of that 11% sales growth, the overall volume figure for the quarter, the sales figure for the quarter, turned positive, and it was a 2% growth in the first quarter compared to last year. Jammu and Kashmir Bank was another business update that came in, a strong update there. Advances were up around 25.5%. Deposits grew around 17% as well. Dhanlakshmi Bank is one stock that is doing well in today's session. A similar sort of growth that was reported in that as well in the first quarter. Tamil Nadu Mercantile Bank, again another 27% growth in its advances. Deposits also growing close to 20%. So healthy growth reported on both the advances front and the deposits front by a lot of these lenders. Adani Energy Solutions as well announced an enabling resolution that was approved for a 10,000 crore rupee QIP, and the stock is up around about 1.5%. What's not doing well though is Zee Entertainment, and the board giving its approval for a preferential issue of shares, although the stock has seen a very sharp recovery from the lows of the day. There's a very sharp spike in just the last few seconds for Zee Entertainment movement. At one point, the stock was down 3.5%, and now it very briefly moved into positive territory. It'll be interesting to see if there is any large trades that have taken place on the stock because of this. It's 0.5% now on Z Entertainment. Of course, they're raising 3,144 crore through a preferential issue of shares of warrants as 126 rupees a warrant, and they'll be issued to the promoter group. Of course, a lot of these proxy advisory firms are also mentioning the fact that as the previous fundraising was not approved by the shareholders, this too might meet a similar fate. A couple of other names that came out with business updates today. Capital Small Finance Bank is one name. Asset quality has seen an improvement in comparison to the previous quarter. So that stock is doing well for itself. The stock was up around 4.5%, has cooled off slightly, still around about 2% higher. Bazaar Style Retail is another one. That stock is up in a 5% circuit after its business update, although the stock remains below its issue price, which was around 389 rupees, and now is trading at around about 309 or 310 is Bazaar Style Retail. So lots of stocks moving around. Just pull up Bank of India as well. It just came out with its business update a few minutes earlier. And the strong growth in both the advances and the deposits front for both, and the stock had moved higher as a result of that. So good going for Bank of India as well. Now, Japanese Prime Minister Sanae Takaichi arrived in New Delhi on Wednesday evening for her first ever visit to India and her annual summit with Prime Minister Narendra Modi. Earlier in August of last year, Prime Minister Modi had held a bilateral with her predecessor, Prime Minister Ishiba, in Tokyo for the 15th India-Japan annual summit. Now, PM Takaichi was accorded a ceremonial welcome at Rashtrapati Bhavan earlier this morning, with Prime Minister Modi playing host. Takaichi has flagged economic security and energy security as the urgent priorities, with both sides aiming to deepen the special strategic and global partnerships. Now, 5 sectors have been identified for the strategic collaboration: semiconductors, critical minerals, pharmaceuticals, clean energy and ICT. Now, several MOUs are expected to be signed following the summit. Heavy rains continue to lash Mumbai since early this morning, triggering severe waterlogging across the city and its suburbs, namely Bandra, Chunabhatti, Sion, Mumbai, Shilfata and parts of Navi Mumbai as well. The IMD says that the eastern suburbs recorded the heaviest rainfall, and the red alert was issued for Mumbai, Palghar, Thane and Navi Mumbai until 1 o'clock this afternoon. Now, on the water reserves front, Mumbai's 7 lakes stand at a combined 8.1% of their total capacity as of this morning, a marginal improvement over Wednesday's 7.2%. Take a short break, back with more on the other side. Now, when you say that someone made 21,285 trades in a year, you may think, okay, that's normal course of action. But when you say that the US president made these many trades in one single year, you may want to take a bit of a deep dive as well. And that is what was disclosed in Donald Trump's financial filings yesterday. 21,285 trades made by the president as part of his financial disclosures that went up to 927 pages long. And you compare that to his peers, J.D. Vance's financial disclosures were just 17 pages long, and his predecessor, Joe Biden's financial disclosure, was only 11 pages long. Now, these 21,000 trades are even more than what he did in his first term as president. There's 517 trades that were punched in, and across 4 years of Joe Biden's tenure, the number of trades that he had made were only 13. Now, Donald Trump has this affinity for a lot of these big tech names. He's been talking to them a lot about a lot of reforms also taking place, and he has made a lot of purchases of these names as well. On the 23rd of July 2025, he made purchases of up to $5 million in all of these big tech companies, Nvidia, Microsoft, Broadcom, and so on. The same day, the Trump administration unveiled the AI Action Plan, and after which the stocks gained anywhere between the next 5 to 7 trading sessions as well. Now, take a look at the number of stocks that Donald Trump purchased within these big tech companies last year. Nvidia's purchases stood at around $70 million and the stock went up 40%. Of course, this is not necessarily after he made the purchase, but on a full year basis as well. Then Microsoft was 70 million, Broadcom was 20 million, the stock went up 50%. Amazon, of course, was a single digit move, as was Apple, but the investments made here were equally substantial as well. Now, if you take a look at his crypto adventures, we were speaking about this yesterday as well, the fact that he made a total income of $1.4 billion in crypto, and this is courtesy of $635 million that he received in royalty via the Celebration coins and $500 million through the World Liberty Financial Organization. Now, what are Celebration coins? Of course, it is an entity that is supposed to be behind that Trump meme coin, and that the value of that meme coin from a peak of $74 is now down to sub $2, and over 7.5 lakh retail investors have lost over $2.5 billion via Donald Trump and his family-backed crypto ventures. There are multiple of them, including this one. Now, what is World Liberty Financial? Now, here's where a lot of the conflict of interest plays out as well. Now, this is a crypto firm that is founded by the sons of both Donald Trump and his special envoy, Steve Witkoff. And Steve Witkoff's son is the CEO of World Liberty Financial, through which he has also received substantial income. Now, there's an interesting way to show you how times change. Now, back in 2021, Donald Trump had called Bitcoin a scam, and he said that he does not like it because it is another currency that is competing against the dollar, and he wants the dollar to be the biggest currency in the world. 3 years later, while campaigning for president, while running for president for the second time, he said, and I quote, "I am laying out my plan to ensure that the US will be the crypto capital of the planet, and Bitcoin will be the Bitcoin superpower of the world as well." Now, when you make so many trades, when you make so many incomes, so much of income, there are bound for questions to be raised as well. And a lot of his critics have mentioned the fact that he's running this as his personal business empire and not as a president of the country. And here he has issued his clarification, saying that he does not get involved in his personal finances, his funds that are running his money, and he made a lot of money before he became president, and he does not talk to the funds that run his money. But from Bob the Builder in our childhood, we are now dealing with Trump the trader, and that is what we are currently grappling with the US president. But staying with the developments from the White House and in the world of AI, reports are now suggesting that OpenAI has proposed a 5% stake sale to the United States government. Here's another example. Rachna is getting you the latest and more from the AI universe. Rachna.
Well, Sam Altman has discussed giving the US government a 5% stake in OpenAI. This is according to Financial Times. At the company's current valuation of $852 billion, that 5% stake would be worth over $42 billion. But all of this isn't happening all of a sudden. Similar talks have been running for over a year. Trump said last month a government stake in AI firms would be a beautiful thing. The US already holds a 10% in Intel and has invested in IBM and critical minerals companies too. OpenAI itself had floated a public wealth fund plan earlier, and Anthropic has proposed its own digital dividend. And it isn't OpenAI alone on the table. According to the report, Google, Meta, and Anthropic are named as potential participants too, though it's quite unclear at the moment if the government will pursue this or if other companies will sign on. But Palantir's Alex Karp has been warning AI CEOs on nationalization risk for months now, flagging Bernie Sanders' proposal for a 50% public stake in the largest AI firms. And just a day before this FT report, Karp was on CNBC calling OpenAI and Anthropic's pricing a wealth tax, saying enterprises are livid and that AI models have been oversold. Listen into what he said.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
Now, every time we think that this World Cup cannot get any more exciting, it surprises us again. Now, first, Congo took on England, where Congo, the underdogs, led 1-0 until the 74th minute, where England looked headed for elimination, but Harry Kane scored twice in quick succession to complete a stunning comeback and save the blushes for his team. Next, Belgium took on Senegal, where Senegal raced to a 2-0 lead, but Romelu Lukaku pulled one back in the 86th minute before Yuri scored a dramatic equalizer in the 89th, taking the match into extra time, where Belgium converted a penalty to complete an incredible 3-2 comeback. Finally, the United States defeated Bosnia and Herzegovina 2-0 to book their place in the next round as well. We take a leave on this edition of Business Lunch. The markets have taken a bit of a leg up as well as we move into mid-cap radar on the other side of this short break. From me and the team, thank you for watching.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always Vivek Iyer. A good day for the markets. We did see a fall from the highs of the day led by Bank Nifty, but there's some recovery there as well. Midcaps are participating, and what a rally in the IT name. The midcap surging, so is the large cap space.
Good afternoon, Sonal. What a smart recovery as far as the IT pack is concerned, and that's clearly given cheer as far as the market itself is concerned. Nifty doing very well in the session, and broad end of the markets moving in tandem with the benchmark indices advanced decline ratio in favor of the advances. A lot lined up on the show. Let's start off with the top headlines. Stocks gain ground as global cues remain mostly positive, even as the F&O expiry today on BSE promises some volatility. IT and Realty are the big gainers, while financials drag.
The board of Z Entertainment approves the issue of 25 lakh warrants to promoters at a price of 126 rupees per share. But a similar proposal was defeated earlier, and proxy advisors say the present proposal may meet the same fate.
A slew of banking updates sees stock trade with gains. Shares of Tamil Nadu Mercantile Bank, Dhanlakshmi Bank, J&K as well as Punjab and Sindh Bank report steady Q1 updates.
Shares of Bazaar-style retail trade with gains after reporting a 29% rise in its revenue in its Q1 business update, while same-store sales growth for the quarter stands at 7%. The company also opens 18 new stores, taking the total count to 276.
And shares of NMDC trade with gains after the company reported 11% rise in its June sales and a 4% jump in total production.
Okay, all right. Those are the top headlines that we are tracking. The markets continue to edge higher. Mid-caps are participating as well. So let's talk about some of these big mid-cap movers. We've been getting quarterly updates. It's the start of Q1 earnings and updates coming by already. So this is our special segment, Mid-Cap Movers. We have Ria to take us through the mid-caps that are moving around in trade. Ria.
Well, yeah, starting off with the movers first, we have Zensar Technology seeing a big move today, although the stock is down nearly 45% in the last 1 year. CE Infosystems as well making a big move today, but this stock also down nearly 45% on a year-to-date basis. Aditya Birla Fashion as well as Exide also seeing good moves today, as well as Bharat Seeds, which is up over 6% in today's trading session. The stock has doubled in the last 1 year, and in fact, today the stock is also trading on very strong volumes. It is the volumes traded today are 17 times the 30-day average volumes traded for this stock. Moving on to some of the stocks that have hit their 52-week highs today. This includes Sona BLW, Chem India Projects, MV Photovoltaic, Aegis Logistics, as well as Zydus Wellness in that list. And on the flip side, looking at some of the losers in today's trading session, we have HFCL, although this stock is up nearly 2.4 times just in the last 1 year. EIA Engineering also taking a cut in today's trading session, although the stock has performed well in the last 1 year. It is up over 47%. Thermax also similarly up 44% in the last 1 year, but today taking a knock. RITES also down in today's trading session. This has been an underperformer over the last 1 year, down nearly 23%. And the last stock in today's list is Sirma SGS. This stock also taking a sharp knock today, but this stock has nearly doubled in the last 6 months.
Well, thank you so much, Ria, for joining us, giving us a neat wrap of all the top movers and shakers as far as the broader end of the markets are concerned. Well, it's a good time to bring on Jay Thakur, Head Derivative and Quant Research at ICICI Securities, to give us a quick technical check on the market. Good afternoon, Jay. Thank you so much for joining us. Well, what are you making of the Nifty levels at current juncture? Do you see further upside?
Very good afternoon to you, Vivek and Sonal. I would say, no, of course, the markets are trading with a positive bias. And in fact, Vivek, if you have noticed since past 3 weeks or so, I would rather put it as since 10th of June or 15th of June, what we have seen markets get into that range of 24,200 to 23,800, particularly about Nifty, if I have to talk about. And as far as Bank Nifty is concerned, and that has been 58,500 to 57,000. And we have seen that, whenever, the midpoint of this range has been around 24,000. And at the start of the series, you do see, highest build-up on both call and put at the levels of 24,000. That is what happened in the June series. And thereafter, slowly and gradually, it moves away from the same and builds a new range. So recently, the range has been 24,200 to 23,800. I think, until positional perspective, I would say till 23,500 levels are held, the probability of this range providing a breakout on the upside is quite high. And there are a couple of reasons for it. Is that most of the sectors, the broad-based rally is what we have seen. It started with the bank was leading, and thereafter one by one the sectors followed up. We've seen Nifty Realty, Auto, FMCG, recently had bounced back from yesterday. So apart from Nifty IT, metals and FMCG, I would say, I would put it that way, and oil and gas. I mean, these are the only four sectors which did not participate much. Others all participated, right? And because of which we have seen Nifty at 24,200. So like Nifty IT has bounced back today, if other sectors also bounce back, the remaining three, then I think eventually you'll get a breakout on the upside. Rest, if you look at the India weeks, if you look at the crude oil price, geopolitical tensions, all of what have cooled off now. So there's not much of reason not to provide a breakout on the upside.
Okay, take that point, Jay. You spoke about certain sectors, but tell us what are some of the individual names that you would bet on in current market position?
Sure. So, Sonal, I think that the defense names have seen a good move for recently, and we have seen that there was good amount of short build up there. We have seen a good short covering coming out there. We have seen the index level as well. The Nifty Defense Index has provided a breakout from a consolidation. So, from here on, I think Muscat Dock trading around the levels of 2550 is likely to inch towards the levels of 2700 to 2800 positionally. One can go long on this, placing a stop loss below 2470. And the second buy recommendation, Sonali, is on SRF. Pharma healthcare has done good. I think the chemicals can also see a good bounce back from these levels. So I think that SRF on the upside can see the 100. Can buy this with a.
Well, thank you so much, Jay, for joining us, giving us your view on the markets as well as your individual trading calls. SRF is the second name that you discussed. Well, we'll now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the IT pack is building on to its gains. Names like Telecom have now hit the day's highest point. Infosys too is building on very smartly to the gains that it's seen since morning. But it's a good time to bring in Ananya, given the fact that we've seen a whole slew of banking updates which have stocks reacting. Ananya, give us a gist of all the top updates that have come so far.
So, well, yes, a host of PSU and private sector banks have reported strong provisional business update for the June quarter. Let me first start with Tamil Nadu Mercantile Bank. So, it led the, business update. The business grew 23% YOY. the growth is on advances 27% YOY, 20% growth in deposit, reflecting strong business momentum despite some moderation in CASA ratio. Now, Dhanlakshmi Bank also posted an impressive quarter with total business up 21%, advances growing 27% and deposits 17%. Now, you can see the stock is also surging today. Now, the J&K Bank reported another standout quarter with the total business increasing 20%, led by 26% growth in advances and 17% growth in deposits, while CASA remained a key monitorable also here, with the stock rallying sharply today. Now, Punjab and Sindh Bank also maintained healthy momentum, reporting 15% growth in total business, with advances growing 20% and deposits 12%. Now, meanwhile, fresh updates released today showed Bank of India continuing its strong momentum, with advances growing nearly 19% and deposits rising 15% year on year. While ESAP Small Finance Bank also reported a healthy quarter with advances growing 27% and deposits growing nearly 19%, reflecting a sustained business growth. Now, overall Q1 looks a good start for FY27 for the banking sector, but CASA ratios and deposit mobilization will be a key monitorable in the coming quarters.
Okay, all right. Thank you so much, Ananya, for joining us with all those details. Those are some stocks which are in focus on the back of quarterly updates. With Z Entertainment, there's an update there as well. Divyani is joining us with all the details.
Z Entertainment is in focus after the board approved a 3,140 crore preferential issue of 24.95 crore fully convertible warrants to its promoter entity, Sunbright Mauritius Investments. Now, this is going to be done at 126 rupees per share, which is 16.7% higher than the last closing price. Now, 25% is going to be paid upfront, with the balance to be paid within 18 months of allotment. Now, the proposal is now subject to shareholder approval. Ahead of all of this, proxy advisory firm InGovern spoke to CNBC TV 18 and has recommended that shareholders actually vote against this particular resolution. Now, it questioned whether the newer content properties, including the FIFA rights, are actually generating returns for the company, and noted that the proposed issue price of 126 rupees per share is actually lower than the 132 rupees per share that was proposed last year. Now, InGovern has also raised concern over the source of the funds for the subscription and said that there is insufficient clarity on how the 3,000 crores is actually going to be deployed in the company going forward.
Thank you so much, Devyani, for giving and making sense of the developments as far as the entertainment is concerned. But shifting focus, Oil India's chairman and MD, Ranjit Rath, tells our colleague Sapna Das that they are aware of the vulnerability of volatile crude prices and spoke on the next exploration plans and capex target. Let's listen in.
Look, as part of the energy security mandate, we strongly believe that exploration has to be the mainstay. And being an E&P company, Oil India Limited, we have enhanced our exploration acreage to the level of about 1 lakh plus square kilometer, which includes about 55% of our exploration acreage in offshore. And what happens that we have already got about 40,000 square kilometer in Mahanadi deep water and ultra deep water, and KG deep water and ultra deep water, and shallow water blocks in Andaman Nicobar, Kerala Konkan and KG basin. So as we speak, we are drilling in Andaman Nicobar and Kerala Konkan. These are all shallow water but deeper wells. Kerala Konkan is identified as a high impact well, where we intend to drill 6,000 meter depth. The water depth is about 60 meters. The Andaman Nicobar well that we are currently drilling, and we reported presence of hydrocarbon, that is natural gas, in the Vijayapuram 3 well. The depth of water is about 355 meters, and we could establish natural gas about 1900 meters, but the well depth is about 4,200 meters. In addition to that, we are looking forward to, and we have already participated the part of the OLP 10 bid round, OLP 10 and 11 bid round, and we are looking forward to the deep water blocks of OLP 10 and 11 bid round. Two more aspects as part of our onshore exploration. We are going to kickstart our exploratory drilling in Cambay Basin which we procured or secured during the OLP9 bid round. And as part of our onshore campaign, this year we intend to drill, and last year, by the way, we drilled 76 wells, which is highest ever as far as Oil India is concerned since inception. We did about 300 plus workover operations, which was also highest ever. So this year our target is to do about 100 plus wells in Oil India's exploration license areas and mining lease areas. So that is the exploration target, and we are looking at an exploration capex of about 10,000 crore.
Okay, so these are numbers but which are known. I just want to ask you a slightly different question. The gas strikes, however, have been, far and few in between. I mean, though you have, announced one very recently which you're talking about. So, that's the problem that basically, besets ONGC as well as you, right?
Okay. So I would give you a three-way response to the gas find which we had announced. Look, there are three things happened. One, as an exploration company, when we say that it is reported occurrence of natural gas in 2 wells out of 3 wells drilled, it gives a huge amount of confidence to the explorationist in the organization. 2, it establishes the fact that Andaman Nicobar is a petroliferous basin, so you need to spend more, rather invest more in exploration in Andaman Basin. And 3, what happens is it gives us a heft or a leverage because the international oil companies start looking at the Andaman Basin seriously. So what we are doing further, we have got a collaborative framework as a technology service agreement with Total Energy. They are supporting us. We have already undertaken appraisal of the gas find. So what we did, we reprocessed the 2D seismic lines. We have carried out 600 square kilometer of 3D seismic data acquisition in these 2 blocks. The processing is underway right now. And our idea is to drill 1 appraisal well in that area to establish the structure and then establish the commercial viability or the techno-economic feasibility of the gas find.
Right.
So that is what we intend to do, and that's what is the leverage which is given by this gas find.
Okay.
Thank you.
One more question. Thank you. One more question would be this new pipeline that we are talking about, and the one that you will do between Paradip and Numaligarh. Check me if I'm wrong. So give me a hook on that. It's supposed to be the longest, largest, what
Till
is
the
it?
pipeline is commissioned, it's not. It will not be appropriate on my part to say longest or largest. But the pipeline will be the mainstay for our refinery expansion program. It is like 1640 kilometers from Paradip east coast to Numaligarh, traversing the states of Odisha, West Bengal, Jharkhand, Bihar, and Assam, and West Bengal twice for that matter. Now, this pipeline will be the mainstay in terms of supplying feedstock assurance to the Numaligarh refinery. While this will be the crude sourcing, we have also already commissioned the product evacuation infrastructure at Numaligarh. The product pipeline, which is Numaligarh-Siliguri pipeline, is already commissioned from 1.72 to 5.5. And more importantly, we are also creating POL terminals at Numaligarh, at Guwahati, at Dhubri, and Silchar.
Thank you so much. What's this whole thing about 3 going to 9? The capacity of?
The capacity of 3 million ton will be expanded to 9 million ton. That is additional of 6 million ton. While we will maintain the ratio of MS and diesel production, the idea is that we will cater to northeast and eastern part of the country.
And you'll do it by early 2027.
We intend to commission everything by early 2027.
Yes.
All right, that's the word coming in from Oil India, but we do have a lot of updates coming in from the retail space as well. So Mangla Malu is joining us now with all the details. Okay, all right. Before we do that, actually, let's just take a look at Oil India's stock. It has recovered from the lows of the day. So we'll take a look at that. And before we go across to Manglam, we'll take a short break and come back and talk about all those retail updates.
Welcome back to Midcap Radar. Well, this is our Midcap Spotlight, and Sudarshan today is joining us and speaking about a company we don't discuss too often, but the stock is surging. Bharat Leads. Sudarshan, what's the development over here?
As you have said, it's an unusual name, and normally we don't talk about it, but today it's rising on the back of healthy volumes, and the stock currently is up almost 10%. So the focus on the stock is because the today company completes 40 years of operations, and it's a JV company between Rohit Relan, Maruti and Suzuki Motor Corp. Now, on the completion of 40 years, today Suzuki Motors chief, that is T. Suzuki San, has visited the facility and also talked about taking the JV going forward and how exactly they plan to increase the supplies of seatings to all the OEMs that the company has been doing over the last few years. Now, talking about the volumes, today's volume is more than 1.5 crore. Now, that is 20 times 20-day average volume. 20-day average volume is just 8 lakh shares that company has normally seen over the last 20 days. So it's rising on the back of healthy volumes, and on the completion of 40 years, the stock has been rising.
Absolutely right, Sudarshan. On good volumes, as you mentioned today, Bharat Leads is the stock that you just discussed. But remember, we also have a whole host of updates coming in from the retail space. Manglam joins in with all the details that have come in as far as Q1 is concerned.
Well, the first quarter has been fairly good for a lot of these value retail players, and this despite expectations of there being some sort of moderation. That's not been the case. In fact, the most recent one that we got was Bazaar Style Retail, which is now locked in the 5% upper circuit mark. So 29% jump that we saw in their sales, just shy of that 500 crore mark. So that's a positive. Same-store sales growth coming in at 7% as well. And they've opened a whole host of stores. 18 new stores is what they've opened. The total stores stand at 276. If you look at V-Mart Retail as well, the total revenue grew by about 23%. A large part of that was led by new store openings, because same-store sales growth this time around for them has been 9%, led by 8% for V-Mart and about 13% for Unlimited as well. And finally, we have V2 Retail. The Q1 revenue grew 58%. V2 Retail has been faster growing than the entire industry so far, near 1,000 crores on their top line. They've added 57 new stores, and there too, the same-store sales growth has been 7.5%. So far, not particularly bad for the value retail segment.
Well, thank you so much, Manglam. Not particularly bad as far as the value retail space is concerned. That's the word coming in. And most of the retail names are reacting to the Q2 updates. But earlier today, we spoke to S. Naren of ICICI Prudential AMC. And here are his thoughts on the market. We'll hear a small excerpt from that conversation.
The pace at which, all these developments which are happening in AI and the kind of P's at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies.
Well, and on the back of that, have a look at the way IT services have recovered quite smartly. The comments coming from Palantir CEO as well. The Nifty IT index up over 4.5%. One of the names doing very well there is Persistent Systems from the broader end of the market. Have a look at Zensar Technologies leading the charge, especially as far as the NSE 500 index is concerned. Now, there's also a smart recovery as far as some of these names are concerned. Remember, MCX yesterday, you saw almost a 5% move. That particular stock is in focus. But on the other hand, BSE is one particular stock that's seen quite a bit of a cool-off. In fact, nearer to the day's lowest points. This is after, there appears to be a certain amount of slowdown as far as options trading activity in the quarter gone by is concerned. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. You've tuned into MF Corner, coming from the CNBC TV 18 studio. I'm Winnie Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, a very good afternoon to you. And today we do have some interesting topics that we're going to be touching upon.
We are. So let's start with the first one. First up, we will take a closer look at the world of index construction with BSE. We'll also try to understand more about the newly launched Satwik Index, how it stacks up against existing ESG benchmarks, and what the pipeline looks like for the new fund launches tied to BSE indices. To discuss all this and a lot more, we are joined by Ashutosh Singh, the MD and CEO at BSE Indices, on the show. Mr. Singh, good afternoon. Thank you so much for joining us. Let's start with the most basic question first. Take us through construction methodology, methods of different indices, the way you construct it. What is the thought process when you plan to launch one?
Thank you, Sonal. Thank you, Vinny. Good to be back on the show. And thank you for giving us the opportunity to speak about an index that we consider is a very important innovation in the capital markets. That's BSE Satwik Index. You know, the whole, the core theme of this index is it is a way of life or a values-driven index which is rooted in age-old Indian tradition. It's not based on any religious ideology, so there is no central religious doctrine guiding the index construction as far as Satwik is concerned. We have applied negative screening criteria and companies basically that belong to certain basic industries. So in India, there are about 192 basic industries, which is a harmonious classification of industries followed by both the exchanges. Out of the 192 basic industries, 35 basic industries whose primary business or whose primary way of doing business is not consistent with the Satwik ideology have been excluded from this index. And you know, through our own internal research, we identified 3 core Satwik principles, which we have used to do this exclusion framework screening criteria. And these are: 1, non-violence; 2nd is compassion for living beings; and 3rd, avoidance of companies that are you know, in the business of toxic or addictive substances. So these are the 3 core Satwik principles that we have baked into the methodology for the index. And like what we do for most indices, even this one has a parent universe, which in this case happens to be BSE 500. And you know, from the 500 universe, identified these 35 basic industries, and companies belonging to these 35 basic industries, which we feel are inconsistent with the Satwik principles, have been excluded. So yeah, that's you know, broadly how we have constructed this index. And you know, to your first question on how do we construct other indices, I think the approach pretty much remains the same. If it is a broad market index or a sectoral index or a thematic or a factor index, it begins with defining the parent universe. And then, of course, we get into the nuanced methodology, basis which the stocks are either selected or, in the case of Satwik, excluded. So that's you know, that's the central methodology.
Absolutely. Mr. Singh, good afternoon. Point taken there in terms of the constructing of the Satwik index portfolio as well as in terms of the other indices as well. But how does Satwik index compare with existing BSE 100, the BSE 100 ESG indices? How would you compare that then?
So, see, the methodologies for the indices that you talked about, whether it's a BSE 100 or ESG, is very, very different from the one that has gone into Satwik. So, for example, BSE 100 is your classical market cap driven index, where you you know, just rank order the top 500 companies based on total market cap, and you end up after applying some buffer criteria, you end up selecting the top 100 companies based on total market cap, and then the weightages for each of the 100 constituents is given basis the free float market cap. So that's your classical market cap driven index, where you know, you just rank order and basis market cap you do your selection. ESG, again, the whole selection is basis how the companies are performing on the 3 parameters of environment, social, governance. And this is reflected through a BRSR filing that the companies do with the exchanges. And basis, you know, the filing scores are attributed against each of these 3 parameters. And then the selection of the top 100 on a combined score basis is done for the ESG index. Satwik, like I said, it's a very value-driven index where we applied an exclusionary framework as opposed to doing a positive selection. So after the exclusionary framework has been applied, then you just select from the constituents, you select the top 100. And that's how we get the saw Satwik or BSC Satwik 100 index.
Okay, take that point. Last question before we let you go. Let's talk about the pipeline of fund launches that we have planned, or the conversations that you have had with, some of these AMCs basis the BSE indices.
So we speak with asset managers as part of our regular engagement exercise. Whenever we launch a new index, we obviously take the idea to the asset managers to see if they find merit in it and if we can get some traction in it. So the approach for Satwik is also no different. We have obviously taken the idea to a lot of asset managers. However, what has surprised us positively is the amount of interest that this index has generated, and also the traction we are seeing on social media for the index. And it's pretty understandable, because I think there's a very important segment of customers who also believe that their capital allocation decisions should align with and be an extension of their personal value systems. So I think with the launch of BSE Satwik Index, and once, let's say, the asset managers, after having some products on it, bring it to life, then it gives an option to the investors to participate in funds that very closely track the Satwik Index. Honestly, so how much of this initial interest translates into product launches by mutual funds and eventually into AUM build-up? It's only a matter of time, but I think the initial signs are very, very positive, and let's see how it goes from here.
Okay, we'll have to see how it goes from here. But Mr. Singh, thank you so much for joining us on the show this afternoon and explaining to us about the Satwik Index Fund as well. So thanks so much for joining in. On that note, we're going to slip into a very short break. After the break, we'll come back and focus on hybrid funds as well. And this is a conversation with Aditya Agarwal, co-founder of Wealthy In. So stay tuned in. Welcome back. You're still tuned in to MF Corner. Let's now talk about hybrid funds. This particular category saw flows decline for the month of May. What is this category doing now? What does it mean for you? And should you invest in it in a volatile market? We have with us Aditya Agarwal, co-founder of Wealthy.in, on the show to understand this category. Aditya, good afternoon. Thank you so much for joining us. The most basic question, of course, is do hybrid funds handle volatility better? In a market which has seen so much volatility in the last 3 months, we've seen the flows deteriorate. What explains that?
So thank you, first of all, a pleasure being here. Yes, hybrid funds by design are meant to be lower volatility than equity, because hybrid by definition means there is a combination of equity as an asset class plus some other asset classes, which traditionally has been equity plus debt. kind of structure. So what you see in a choppy market like this is that when equities are going through a fall, your debt markets or your debt component of your portfolio actually cushions that fall. So by design, hybrid funds are meant to be lower volatile than an equity. But yes, of course, it also means that on the upside, you lose out on some gains in the in your long range bull markets, which we have seen in the recent past.
Absolutely. So it's mainly more lower risk versus equity markets, right? So side bit of that adjustment on the return front is what someone has to make. Afternoon, Aditya, how has the performance maybe shifted across market cycles as well for this? Could you highlight that for us?
So performance, I think there is, if you see historical trends, right? I think it's very clear that hybrid funds will give you similar returns, slightly lower returns than equity, but with a much lower volatility, which means that in a market crash, they will move less, they will crash less, or they will be, they will see lesser drawdown. At the same time, if you see in a market where if you see performance as well, I think last 10, 11 years, historical returns of hybrid, by the way, hybrid is all hybrid is not same as well. So there are different kind of hybrids. But if I take the most popular hybrid category, which is, let's say, dynamic asset allocation, or what is also called as balanced advantage funds, you see that 11 to 12% kind of return, but you see much lower returns, much lower sort of drawdowns in crashes. And you also see that typically if market is only going up and up and up, then you see that your hybrid funds will underperform the equity funds. But whenever there is volatility, you always see that hybrid funds end up doing better and end up doing better in both ways. One is, of course, absolute returns. So let's say if last 12 months also, you will see some hybrid funds would have outperformed index simply because they had that debt cushion and they didn't go through that kind of fall that Nifty 50 saw, because we've been in a volatile world. So yeah, definitely hybrid funds have a role to play in client portfolios.
Okay, all right. When it does have a place in anyone's portfolio, there are aggressive, balanced advantage, multi-asset equity savings, there's conservative hybrid funds as well. How should an investor choose? When you do have a lot of choices, that also becomes a problem.
Totally. In fact, that's the most important question, that there are so many different hybrid funds, which one does what? So I think I would sort of first break it down by saying that, okay, which hybrid fund does what? So there are broadly now 5 categories of hybrid funds if you look at the mutual fund space. So let's start with the one at the bottom. And when I say bottom, I mean, risk return profile, where the returns are also lower, but the risk is also lower. Again, in terms of volatility, not in terms of losing the capital. So the first category there, which we have typically seen, is the conservative hybrid, and where you typically will see where the equity component in the portfolio is between 10 to 25%. And that's why it is largely also, that's why this fund is also taxed like a debt fund. And here the objective is very clear, that you have to, objective of this fund is to preserve your capital, right? And typically in long term, like if you see last 10 years returns, you will see that it is done between 6 to 8%. So it is similar to your, what you would call a bank FD, but with some equity exposure. So that starts at the bottom. Then we move to a category which is called equity savings. Now here in equity savings is actually a very smart product, and it was very popular until recently. So here you have 65% equity exposure in the fund, which is a combination of direct equity plus arbitrage, right? So there is some financial engineering there, and here you see low volatility. So for example, if I have a goal which is coming due in next 2 to 3 years, this could be a product for me, and in long term you can expect 7 to 9%, like that's been the historic average for this category. And the taxation here is usually equity. So that's the plus point of equity savings. Then moving on to the third category, which is probably the most popular category in hybrid funds, which are usually called as balanced advantage funds. Now in theory, balanced advantage funds typically can move between different, like for example, in theory, a balanced advantage fund can have a 80% equity allocation when they think equity is cheap, and they can go to 65% equity allocation when they think equity is expensive. So that way, it's a dynamic asset allocation fund. And, because, when we think about making returns, there are 3 factors that people, typically say. One is your asset allocation. Second is your security selection, or the, where the money is going. And third is, of course, the market timing. So your dynamic asset allocation tries in theory to actually, play across all these 3 aspects of return generation. That's why you also see that this category has the highest AUM in the hybrid fund category, and it is good for long-term investors. It's very good fund for long-term investors who want good returns. Its long-term average has been 9 to 10%, but it will give you lesser heartburn when markets are tough, right? So that is your third category. Fourth category, which is the new crowd favorite, is the multi-asset category. And this again is very interesting because so far we have seen hybrid funds largely equity and debt combination. But for the first time, we saw multi-asset where it is truly multi-asset. And it is different for each AMC. So people have largely equity, debt, and gold, and obviously some AMCs are also putting some other assets in it. So this again is for long-term investors, and this is a strategy which has become really, really popular, obviously because of the recent gold and silver performance. But I think long-term also, because fundamentally what happens is that asset allocation is the key for an investor to stay invested for a long term. But because asset allocation is just hard to do as an individual, there are transaction costs, there is capital gain, you have to consider all of that, and it's just an effort. So multi-asset, that's why is gaining popularity, where you are combining all assets and you are actually building kind of an all-weather portfolio. So that is number 4. Number 5 is the aggressive hybrid category, which is actually a lazy kind of strategy where you are saying that, okay, I want largely equity in my portfolio, but some debt cushion so that I don't feel that kind of blood pressure when markets see a 30-40% correction. So that's why aggressive hybrid is, so these are the actually now 3 categories which have the largest, these 3 account for probably 80% of hybrid AUM now. Balanced advantage, multi-asset, and aggressive hybrid. In aggressive hybrid, you will see performance that is similar to your flexi cap strategy, maybe slightly lower. So you will see maybe in long term 10 to 13% kind of returns. And again, here is equity taxation. So these are the 5 categories of funds or hybrid funds, and each one of them has a role to play depending on what your horizon of your investment is.
Yes, absolutely. What your horizon is, Aditya well explained it. Finally, differentiates between all the categories inside the hybrid category fund as well. But Aditya, in terms for is asset allocation actually something that is more important than stock selection in hybrid funds when you may look?
So you are absolutely right that it starts with asset allocation. But typically when you speak to a fund manager, they will say it's 3 layers, right? So one is, as I also said, right, one is your asset allocation, second is your stock selection, and third is your timing. When do you get out of a certain stock or when do you get in? But asset allocation in a asset allocation fund obviously remains the number 1 priority. And asset allocation, see, we have a very famous gentleman called John Bogle, who was the founder of Vanguard. And he said something very nice. He said that asset allocation is not about return optimization. It is about optimizing your behavior, right? Because we all know, we have seen data. We all know that if you stay in the market, you will make money. You will make long-term wealth. You will make generational wealth. But what stops people from staying in the market is, those volatile periods which are bound to come. There will be some geopolitical tension. We'll go through earnings cycle, right? So a multi-asset strategy or an asset allocation fund, which have typically, hybrid funds have played that role, can actually make that whole ride of making your money from, let's say, a few lakhs to a few crores less bumpy, right? And that's why I think these funds have played a tremendous role. And today hybrid funds are close to 25% of the overall individual AUM that our mutual funds manage in this country. And I'll take 30 seconds more, but another kid on the block that has been added to hybrid is the hybrid SIFs, which again is a very exciting development for investors who are looking at a less bumpy ride towards creating long-term wealth.
SIFs, we did have an entire explainer on this the other day, and it is a new category, so it's also very important to understand it thoroughly, considering it does have a big amount being invested at the initial stage itself. But Aditya, when we talk about this category, that's the hybrid category, should investors just look at returns? Are there other metrics that matter as well?
Yeah, I think investors, obviously, if you see, I'll give you a small example. So we shared that comparison also. So I was looking at an AMC and I was looking at 2 kind of hybrid funds. One was an aggressive hybrid, which has about 80% equity. And the other one is a, dynamic allocation, which typically maintains about 65%. So, slightly lower equity. So if you look at, 10-year performance, the aggressive hybrid, which has a larger equity component, has obviously beaten by a 5 percentage point on an annualized basis. So that's like, massive return difference. But if you look at last 12 months, the fund which has lower equity has actually outperformed the one which has outperformed, one which was, outperforming the fund until, 1 year back. So what essentially this means is that if I'm a long-term investor, if let's say I'm investing for next 20 years, a hybrid fund is not something that will improve my returns. It will improve my experience, right? So that's why when we are selecting hybrid funds also, we actually tell investors that you should look at two things for sure. One is the Sharpe ratio, which tells you about that, okay, what is the deviation compared to, like how much risk is the fund taking to generate that returns. So, and hybrid funds also, there's a big range. Even in aggressive hybrid fund, there's a big range. So you have to see hybrid funds is there in your portfolio to reduce your risk or reduce your volatility in your portfolio. Similarly, there's another ratio called downside capture ratio, which actually talks about that when markets fell badly, how much of that downside was, like if markets fell by 50%, did this fund fall by 30% only? Because that fall, when you see markets like COVID crash kind of time, or last 12 months have been difficult, when you see a 15% kind of fall and your hybrid fund has fallen only 7%, that will actually give you a lot of confidence to stay invested. So we advise investors that don't look at hybrid funds as a return optimizer, but as a fund to optimize your behavior. And of course, if you have a 3-year horizon, then you of course hybrid funds is something that can be 70-80% of portfolio. But there again, you have to look at what strategy typically they do, like how much equity and debt and gold do they typically keep in their portfolio, what has been their long-term average. And second is then you should look at some of these ratios, Sharpe ratio and downside capture, because that will tell you that whether this fund will fall lesser when the equity markets fall. And that is actually the primary purpose of having a hybrid fund in your portfolio.
Aditya, just a quick one. In terms for hybrid funds, can they actually generate inflation beating returns over the long term?
Totally. Because see, most of we discussed, 3 categories which are popular. Most of these 3 categories will have anywhere between 60 to 80% equity, right? And if you look at the long-term averages also, we have seen even the balanced advantage kind of funds, which are not aggressive hybrid, but which are sort of, in that 60 to 70% equity kind of range, have delivered 11% kind of, as a category, they have delivered 11% returns in last 10 years, and which is definitely inflation beating. So equity, they have enough equity to help you beat inflation. And at the same time, they have enough cushion in the form of a debt or a gold in a multi-asset fund, which allows you to, sort of have that hedge that if, if things turn bad, if earnings drop for a certain reason and markets go through a bad time, you don't lose your night's sleep.
Every investor wants, right? Nobody wants to lose their night's sleep over some investments which you don't think are working for you. Always a pleasure speaking with you, Aditya. Thank you so much for joining us today and explaining to us what hybrid funds mean and who they would be suitable for at any stage of investments as well. With that, we'll do one thing. We'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
We're seeing Hang Seng, which is managing to hold on to gains in the trading session today.
Denuclearization of Iran is moving along well.
So Meta was the big standout gainer. The stock was up 9%.
Some technical glitch there regarding the ADR issuance for buyback.
In this month of June 2026, exports have increased to 2.53 lakh units.
First rates about 0.33% higher, 24,062 is the market open.
I don't think the rest of the markets are doing that well even in those countries.
I am extremely bullish on almost every part of Thermax.
And if they had the funds, they should have done a preferential issue upfront.
Then the Titan Murugappa Group stepped in. What they saw? The business is correct.
Now, you know, it's been a good start for the markets.
So in last 1 month, prices are now down almost 10%.
A good day for the markets. We did see a fall from the highs of the day led by Bank Nifty, but there's some recovery there as well.
Okay, well, that is the day so far. Markets, I think, in a pretty similar situation to where we were at 2:30 exactly yesterday. 130 odd points higher, 24,140. So another leg up. 2 days down. 2 days down. Monday, Tuesday. 2 days up so far. So balancing it out nicely. Broader markets are doing pretty well. 2:1 is the advanced decline ratio. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. Mangalam is with me. Mangalam, hi.
Hi. You know, two things that really stand out in today's trading session so far. One is that obviously we are seeing the IT index support the frontline index, and the Nifty is above the 100-day moving average. The other part is that the broader markets, the small cap index has moved to the high point of trade, and we are seeing a continuation of a couple of these, domestic themes play out today as well. So the auto index, for one, has moved to the high point of trade. Whether it sustains here or not is something that we'll be tracking. The pharma pack and the metals pack, both those indices which were under pressure in yesterday's trading session as well, are now doing well. The only one which is conspicuous by its absence in today's trading session in terms of gains is the financial space. So the Nifty Bank is down about 1/5%, but no real problems. It's just perhaps paused for breath. So does the market close above the 100-day moving average on the Nifty or not is the big question.
Absolutely. And I think, once we do that, then you are talking about sort of higher levels. So just to recap, right, I mean, the levels that we put out in the morning, the first, of course, was 24,100. We're around 24,100. I mean, we're above it, but I mean, not that by that much. So 24,080 to be precise, but 24,100. And then if you're able to stay above it, the next, of course, level is 24,300. It's an upward sloping channel. Midpoint is 24,100, which is where we are right now, and 24,300 on the upside is the next one. So we'll see. But for now, it's looking pretty healthy out there. Let's just bring in Mitesh, who's with us with what he'd want you to do as far as trades go. Mitesh, good afternoon. Good to have you with us as always. Run us through what do you make of the move, how to position on the indices first, and then, of course, stocks.
So, on the indices, Prashant, yesterday, and in fact, for many days, I've been maintaining this that we possibly do this range, 23,800 to about 24,300, and now we are heading towards the upper end of the range. I think eventually the consolidation will break, and the chances of breaking on the upside are higher. But for the timing till that has been crossed, I think it will be a wise trading strategy to take some profits as we approach 24,300. Once we get a closing about that, 24,600 becomes the next immediate level which the Nifty should head towards, and then maybe eventually even higher. But for the timing, that's how we are keeping our views on the index. And on the stock side, I have a buy on Ford Motors. I think that's a stock which is giving a good reversal after a prolonged decline. That's a buy with a stop below 18,800 for targets of 20,000. And IT stocks have given a reversal. The one which I picked up is Info Edge on Naukri. That's a buy with a stop below 1,004 for a first target of 1,060.
Right, and bunch of these stocks, Sona BLW for one is, again, it's doing extremely well. It's up 8%. We're seeing some traction in Exide as well. And what do you make of the up move that we're seeing on a lot of these mid-cap companies, mid-cap IT companies in particular. Do you think a large part of that, Midesh, is bounce of oversold zones and short covering? Are they tradable?
Which one is that, sorry?
I'm talking about Persistent and Coforge and Infosys.
Yeah. See, Coforge, was trying to give a breakdown kind of thing yesterday, and it reversed midway, I think, because the entire IT pack reversed. Coforge was one stock which had already moved up more than the IT stock. So from a trading point of view, I would still, look at other stocks which are reversing after showing extremely oversold readings. And Persistent, again, is a stock which I would avoid because there's a big falling gap around this 4,700 zones. It started at on the 25th and 29th of June, Thursday to Monday, when the stock kind of opened by about 8-9% lower. So it's hitting that gap area. Between all these IT names, one which could possibly be slightly more smooth when you want to trade could be Infosys, TCS, HCLTech, the big three.
All right. So barring Infosys, HCLTech, TCS, the others offer a volatile ride.
You could, so Mitesh, sorry, you're saying you could go long these names. That's what you're saying here with the bounce today.
That's right.
Okay. They've been, either they gap down 3% or gap up 3%. So that's the, but yeah, I mean, they're coming off beaten down levels. But you see strength in charts, or this is you just think there is perhaps more to go here, just by way of recovery?
See, I think it's more of a bounce back from extremely oversold levels. So typically, if you look at most of the indicators over here for the IT names, they were extremely oversold, and even a mild pullback on the indicator side could see price also reverse nicely. Look at the declines as well. For example, TCS, the last leg of decline happened from levels of 2,600 to as low as about 2,000. Give a 50% retracement, and the stock will be back to 2,300. Similar case for HCLTech and Infosys. HCLTech declined from 1,400 order levels to to close to 1,030 levels. Again, a 50% reversal, will get it beyond 1,200 zones. So there's good trading upside from that point of view for most of these IT names.
Right. The casualty of yesterday, KPIT Tech hasn't bounced back even today after a big cut yesterday of around 15%, and before that it had fallen about 7-8% already, as now marginally in the red. In fact, has a slight bounce on that of 1% has been used by the bears to short that stock. It's at the low point. It's down 25% this week itself. That's about KPIT Tech. This year so far, it has halved. But a lot of these stocks are actually doing well today, and a lot of the enterprise software companies did well in the US yesterday. A large part of that was actually attributed to the Palantir Technologies CEO, Alex Karp, his views, his criticism of OpenAI and Anthropic. They've said that they've fundamentally mispriced their AI services, arguing the token-based model has left enterprise customers frustrated and empty-handed. Let's hear that out and we try and understand that a little more.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job. Yeah. We're completely agnostic. We prefer a world where there are more hyperscalers, where there's all sorts of new hyperscalers, Elon, NVIDIA. We like that world. Why do we like the world? The same reason when you go online and there's 50 kinds of coats, you get to pick the one you like. But what is happening among the most technical players is they're saying, I want something I own. This is my business. I want to own the GPUs. I want to own my data. I want to own the model. I want to control the alpha. In my business, we have much more demand than we can supply. When OpenAI or Anthropic especially are talking about critical infrastructure, it only is being used in our product, my product. And there's a reason for that. These things are very, very valuable. What they have done building models is world historic. And just so you see, I'm not throwing shade. Dario is a literally historic figure. And he came from behind, and he's now #1. Almost no one in the I've been in business, whatever you want to call I do, for a long time. Never seen anything like this. Okay, so the reality is critical infrastructure does not run these models without an application layer. In almost all cases, and maybe it won't be all cases someday, that application layer is our ontology. That's a fact.
Okay, can we, the Nifty IT index will come up on your screen. Can we link what, the Palantir CEO said to strengthen IT services, or is it a stretch? Let's bring in Rachna, who of course tracks is on the AI beat, and you see her every day in the morning on all the AI-led developments. Rachna, take it away.
Well, that was Palantir CEO Alex Karp, and what he was saying is that the fight in AI is no longer about intelligence, because now it is all about control. When a company uses ChatGPT or Claude, it pays for every token, but it also hands over its prompts, workflows, pretty much its secret sauce. So the fear in boardrooms is that the AI lab learns your business and you never really own the machine. You are renting intelligence from a potential future competitor. And as Karp put it, enterprises want to own the means of production because renting is also very expensive. And we saw that when Uber burnt its entire 2026 AI budget in 4 months. Microsoft has now cancelled AI coding licenses across the division, and that is why Palantir has tied up with NVIDIA to sell governments and companies their own AI, their own compute with their own data. One key word here is sovereignty. So the AI stack is splitting into 3 layers pretty much. The models, that is OpenAI and Anthropic, the compute, that is NVIDIA, and the control layer, which is the plumbing that makes AI safe and usable inside a real company. And here's the Indian IT twist. That control layer is exactly where TCS, Infosys, and HCLTech are built to sell. Taking cheaper open models, wiring them into a bank or a factory, keeping the client's data at home. Palantir's thesis at Bangalore prices. That's the idea here. And India is already playing this game. Sarvam, the startup HCLTech just bought into with 1,427 crore rupee investment for a 10.5% stake, has emerged as India's sovereign AI champion, building models from scratch on Indian compute. So read that through Karp's lens. The message is the same. From New York to India, in AI, the winners won't just be those who build the smartest models, but those who end up controlling them.
Okay, very well explained, Rachna. Thanks very much for that. That is the connection with Indian IT services. In that sense, I mean, there's a whole big debate which is underway with regards to, token pricing and newer models, and it's not just actually on the software layer, even on the hardware side, there is a fair bit which is going on. Devin Choksi is with us to run us through what he's making of things. Devin, it's for anyone who's watching the screen on IT, it's either big down or big up, nothing in between. What's your sense, and what do you own here?
Yeah, Prashant, good afternoon. Well, I think on one side, if you want to take the technicals out for the time being, which is basically short covering-led current rally that we are seeing. On the other side, I believe that I think the market has possibly overdone with the valuations of, I think, many of the good quality IT companies. As your analyst was a while back explaining, I think without the application layer, I think running the entire programs on the AI infrastructure, I think is probably, sounding like a hollow vessel. In my viewpoint, I think most of the Indian IT companies who are champions in providing the application solutions to the customers, and the way in which they are transiting from pure time and effort-based model to an outcome-based model in the revenue stream, I believe that I think many of these companies could possibly have larger business to talk about cornered from their customers on the AI side of the development. And that's where we believe that to begin with, I think some of the mid-tier IT companies definitely shows more visibility. But more importantly, some of the large IT peers, I think the frontline companies, they are also reflecting very high on their adaptability to the AI-enabled development into their production environment, and then ultimately providing the solution to customers. So we remain cautiously optimistic about the prospects going forward, and selective companies with the current market price, I think everything is discounted in the price. Probably, I think they hold the potential to give 15 to 20% return in a little clearer environment going forward.
Right. So, do you think it's worth dabbling into right now these stocks after the correction that they've seen, and now that there are comments against, or rather, the comments which are saying that, okay, these companies also have a right to win, and maybe some of the models that the world is betting on in AI are maybe not as perfect as expected earlier. So there is right to live for all of them as well.
Yeah, Mangalam. I think basically simply thriving the entire businesses on LLMs and SLMs, I think is not going to be the rule of the game. Ultimately, Indian companies have demonstrated the ways to develop the applications. And finally, I think the revenue is fetched by the applications. The revenue is never fetched alone by the infrastructure. So even if you provide, I think, the TPU-based revenue model to the LLMs, I would still think that I think Indian IT companies would possibly move into the application service providing activity eventually to their customer, and that is where they would probably fetch higher amount of revenue. So yes, I clearly see a possibility of some of the IT companies, I think, be winner in this entire game plan. And that's where probably I think a selective buying into some of the companies could be, I think, a rewarding. As I was indicating, many of the mid-tier OEMs, mid-tier IT companies were catering to their OEM customers in a very systematic programs. They are the recent ones, I think, who are showing a good visibility of higher revenue and the profits in their business operations.
Could you give us some names that you like?
Sorry, Mangalam?
Could you give us some names that you like?
Yes, I think we have been particularly following Tata Technologies, and we found that I think this is one company which has started making the difference in their customer domain. Even their BMW JV that they have operated in last 1.5, 2 years now, I think this particular JV is gaining larger traction. They also won, I think, the Japanese contract of OEM. In my viewpoint, I think such kind of companies, they definitely demonstrate higher amount of visibility when they have the anchor customers, which are the marquee names which we are talking about.
All right, Devin, just hang in there. We'll get in some more updates coming in from the fourth quarter and, some of the monthly updates that have come in from the auto sales, etc. as well. Ananya joins in with updates on that. Ananya, tell us what you've got.
So, well, yes, auto stocks are buzzing following a strong set of June sales number. Let me first start with Bajaj Auto. Now, they reported a healthy performance with total sales rising 28% year-on-year, led by a sharp 47% jump in export, while domestic sales grew 11%, highlighting continued strength in overseas demand. However, the standout was TVS Motor, which significantly outpaced expectations with 47% growth in total sales, now against estimate of around 26%. Now the strong performance was driven by 42% growth in both domestic and motorcycle sales, while exports also rose 47%. Now a key highlight was the electric vehicle business, where EV sales surged 3.5 times to over 48,500 units, reflecting the company's strong momentum in the fast-growing EV segment. Now overall, the June sales data points to a healthy demand trends across both the domestic and export markets.
Thanks very much, Ananya, for that. Devin, anything stand out to you from the auto space?
I think the numbers are definitely robust, but I think we have to little bit calibrate these numbers. The month of June, because of the ease of transportation situation, particularly in the global exports for the global exports market, I think has played a catalyst role as far as I think most of the two-wheeler companies are concerned. They have been successful with larger amount of dispatches, which is also equally reflected into the numbers that they have disclosed so far. In my viewpoint, I think the domestic business has comparatively, I think, slowed down in the month of June, in some cases, of course. And that's where probably I think one will be keeping an eye on. June can be an exception for many of the two-wheeler companies, including July, maybe partly because of the pending dispatch which is there in the pipeline. But overall, I think we remain cautiously, again, optimistic about the overall electric vehicle portfolios, because what we have seen in case of Delhi government's decision to register new vehicles, only electric vehicles, it could be a beginner. Actually, I think Delhi government example could be followed by many other states going forward. And should that be the situation, then India could accelerate on adoption of EVs far ahead of, I think, 2030 timeline, which we have been talking about 10% of the new vehicle sales, I think from 2030 could be EV. It could possibly happening in 77-28 financial year itself. So that is one good possibility, and that's where probably I think some of these companies deserve to remain, I think, a little bit in a stronger price trend as I see it.
I got that. By the way, if you look at auto components, right, one name which is jumping up is Sona Comstar. Do you own it, track it? Anything on it, Devin?
Not really. Haven't been, I think, tracking this particular company, though. I think we like many of the ancillary companies, particularly those companies which are also having a significantly large amount of heat valuations going into the EVs. I think we like some of the companies, particularly the likes of Minda and the Minda corporations. I think both of them in four-wheeler, two-wheeler space, I think playing a significant role as we see it in some of the cases.
Right, they've been just hanging there. Don't lose sight of the market, though. The Nifty is swiftly moving towards the 24,200 mark, and it's the 24,150 to 24,200 mark where, we've constantly seen some supply emerge, but today it doesn't seem like we're entering the last hour of trade with a bang, and the bang is actually led by the Nifty Bank. If you started the show, you saw the Nifty Bank being down about 0.1%. Now it's swiftly recovered, just inched back into the green, and that push was enough for the frontline index to see about a 50-60 point uptick from the time when we started the show. And the IT stocks continue to see some build up. And the third element here is Bharti Airtel. That's the third highest weight on the index right now. Bharti Airtel, the stock has moved to the high point of trade. So just pull up Bharti Airtel and you would see increased traction coming in on the Nifty on account of that. There you have it. Bharti Airtel has seen a spike of almost 0.2%. But SBI Funds Management's IPO plans are gathering pace. Sources say that the asset manager could launch a 12,000 crore issue as early as this month. Yash will join us shortly with the details. We just try to find out whether Yash is there or not yet. Do we have Yash? All right, we'll try and repatch Yash.
This is going to be an interesting one, right? It's SBI subsidiary, so unlocks value for State Bank of India.
100%.
SBI is, and Yash will join us in a bit, but SBI is selling some stake. Amundi, which is another large holder, is also selling some stake. And, you have the largest, of course, out there right now is HDFC AMC. There is ICICI Pru, the big ones. And of course, there is Nippon as well. And of course, UTI and others. But these are the top three. So it will be interesting to see at what valuation. And by the way, market caps are anything between about 1.2 lakh crores to about 1.8 lakh crores. I'm talking about the top three players out there right now. So will the SBI, and by the way, in terms of just sheer equity size, assets under management, SBI mutual fund is top of the leaderboard. So will they be able to command a premium, or will they want to leave money on the table? That's the question. I hope it is the latter, which is that they leave money on the table and they do well. Hugely profitable company, by the way. I just looked at the numbers, 3,000 crores in profits, net profits last year. I think Yash is with us, so we can go across to him for details on this one. Yash, take it away.
Well, Prashant, as you said, it's a large IPO, which is just a couple of months away from us. This is in the form of SBI Funds Management, the company which, of course, popularly is known as SBI Mutual Fund. As far as the total IPO size is concerned, it will require a 10% dilution. It's a complete offer for sale, which means the existing shareholders, that is State Bank of India and Amundi India, will be, pitching towards this particular 10% equity dilution in the IPO. Total size in terms of shares would be about 20.3 crore shares, and the total size of the IPO in terms of value would be about 11,000 to 12,000 crore rupees. What we are given to understand from our sources is that the IPO is expected to value SBI Funds Management at about 1.15 to about 1.25 lakh crore rupees. That's expected to be the valuation. Out of the total OFS size, that is about 10%, SBI will be about 63% of the total dilution of the total IPO, and Amundi India Holdings will be about 37%. As I said, the IPO is expected to be launched by about July end, so just a couple of months away from this point. Just look at the financials. It's a large fund manager, and comparing it to the other two large fund managers, HDFC AMC as well as ICICI Pru AMC, if you look at the revenue from operations, SBI does about 4,390 crores. So these are FY26 figures. ICICI Pru is at about 5,782 crore. HDFC is about 4,622 crore. profit, SBI at about 3,067 crore, ICICI Pru at 3,298 crore, HDFC AMC at about 2,800 crore. Importantly, look at the valuation comparison. The PE ratio as far as SBI Funds Management on a trailing basis is concerned, that comes in at about 39.1 times, ICICI Prudential AMC at about 42.2 times, HDFC AMC at about 38.7 times. Exactly the point that you were making, that the company trying to put some value on the table for the incoming shareholders, if you look at the comparative valuations between the three large players.
This is, of course, as you said, yeah, on trailing basis, right?
Yes.
Those numbers.
Yes.
Got it. And of course, I mean, since they are in the IPO period, we will not have forward-looking projections, etc. We'll start to get that once they make their way to the market. But it's going to be an interesting one, Mangalam.
Yeah, will be an interesting one. But I don't know how much it will move the needle for SBI itself.
No,
10 lakh crore market cap for SBI. The other thing is that all of them are valued as a percentage of AUM, as against just PE and all of that. So let's see. They have a near 13 lakh crore AUM right now, among the largest that we have. So even if you give it a
no, but Mangalam, the problem with that is then you will have to look at the fixed income AUM does not make very much money.
Yeah.
So you have to look at the profitable part is the equity AUM. But then that's the problem. And then within equity AUM, you will have to, the way money is made is on the active side, not passive.
Not
so
the passive side.
you have to.
We'll get all of that. I'm sure the ones who are putting in money will look at all those.
But I think the PE gives you a sense. I mean, I think it's around 40 times, which is where the others are also sort of broadly trading at.
Got that. Take that point. Devin, your thoughts on this wealth management space? Obviously SBI MF will bring in a fresh wave of interest into this space. Everyone's speaking about capital markets as a theme. Do you think this one will bring in a fresh wave? And if yes, from the listed space, what is it that you like?
Well, I think most of the AMC companies, they have demonstrated significantly large amount of AUM, I think, garnering that they have done in last 5 years. The total number of mutual fund portfolios, which are somewhere around 26 crores, they are expected to be in the vicinity of around 55 to 60 crores going forward in next 5 to 7 years' time. Now, given that kind of a trajectory that we are looking at, many of the asset management companies are likely to show relatively, I think, much stronger performance going forward. And the kind of passive products inclusion that they are having in the portfolio, that is also suggesting that I think the AUM size could be much larger. So there may be some possibility of, I think, the valuation management, I think, of these particular companies might get under some amount of calibration, given the size of, I think, the passive products coming up in a bigger way. So that could possibly challenge part of the valuation than what it is currently today. But nonetheless, it is not taking away the size that we are talking about. All of these companies which are leaders today holds the potential to double the size from what they are into next 5 years' time. So certainly the tailwind remain very strong for these companies. Maybe some amount of valuation calibration might happen in the course of time.
Great chat. As always, Devin, appreciate your time here on CNBC TV 18. And thank you for being here with us today. We're going to take a quick commercial break here. We will come back and, we'll talk to Weber Sangvi of ASK Head Solutions. So that's coming up in just a bit.
Welcome back. The infra stocks are doing extremely well. We have Titan, which has moved higher as well. And as we are moving towards close, all the stocks that did well yesterday are back in action. M&M has moved to the high point of trade. HUL is doing well. Trent is moving higher. ICICI Bank as well has moved to the high point of trade. So domestic fixing sectors back in play as well. Good time to then welcome our alpha manager of the day, Vaibhav Sanghvi of Ask Health Solutions joins in now. Vaibhav, you know, the sector of today has been IT, and the question of the last couple of years has been IT as well. You know, the AI-led disruption, whether this continues, have these stocks priced in enough? Are they at attractive levels? And with the kind of commentary that's coming in from the US, what's the outlook? I mean, have you guys been tempted enough to buy some?
Mangalam, I think our view on IT is that yes, of course, you've seen this sharp reaction purely because there was inherently, you know, quite a lot of participants being short on the whole sector. At the same time, badly beaten, the valuations on face actually looking pretty cheap as compared to your averages. Your free cash flow yield is also pretty attractive. So the probability of that to kind of come up at any of those kind of news is pretty high. Till the time that you get a fresher set of news from the global standpoint, where you start to see again that whether an Anthropic or Claude or you know, OpenAI can do things which can really keep replacing the you know, software services. So I think we may see some amount of bounce back, you know, but eventually we would continue to be you know, away from the sector.
All right, you continue to be away from the sector. What are the sectors that you're positive on right now? The financials are doing well, yes. A lot of people positive on both public, private and NBFCs right now. So you're pecking order in the financial space. And if you could give us some more sectors that you have increasingly found attractive and nibbled in?
Sure. So I think, as you rightly mentioned, financials, after a very long period of time, we are actually turning not only constructive, but pretty bullish, you know, from an overall sector standpoint, which is led by, I think, rightly so, with private banks, NBFCs, you know, and then the other capital marketplace, which may probably be there. So that is something which we really like. Apart from that, we continue to be bullish on the industrial space. Yes, the valuations are looking that expensive, but probably at every correction is where we will see this sector to continue to kind of keep investing and getting good opportunities there. Lastly, I think we've been consistent in telling that we continue to like the CDMO players, and that's a story we would like, again, from a medium to longer term perspective. And especially within industrials, data center related opportunity. This is something, again, we've been saying for quite a long period of time. The whole supply chain with the data center is something we are very, very keen on.
I see. Makes sense. By the way, look at Map My India. I mean, you know, it's like it's a bummed out name. For the year, by the way, it's down 47-50%. It's up 8%. I'm not sure if there's anything which is happening, but high was $3,000 and at about 900 odd right now. That's Map My India. The C-Info is a listed company name. Paras Defense is continuing to have a phenomenal run. It's nearing the 100% mark for the year so far, 96% on this one. Chempro, which is, of course, I mean, previously this is ITD Cementation acquired by Adani's, 80% for the year so far. I mean, you know, it's been quite a year for many of these names coming through. Look at 5-Star Finance, right? Another one which has not done anything for years. The low this year was about 340. Stocks up $200 from there. That is 5-Star Finance, not ITDC. I was talking about CEMPRO, the company, which was formerly ITD Cementation, which is the Kolkata-based EPC company. So that was what I was referring to, not ITDC, which is, of course, Tourism Development Corporation. Vaibhav, what else are you really focused on at this point in time?
I think, Prashant, why we are a long short fund, and we do look opportunities from both the sides of the spectrum. While I did mention about what we like, what we want to avoid as well is currently we continue to be away from commodities as a space because of where the oil prices have kind of reacted close to about $110 to now about $70. We do think that the base metal prices also will start reflecting. In fact, we are reflecting the overall correction, as well. So we stay away from commodities. Probably look at any rise to look for some short opportunities there. In addition to that, I think what we also want to kind of avoid in some ways is probably any sectors which have an exposure to the El Nino effect on the weather as well. So probably anything which is getting adversely impacted on that account is something also we were kind of avoiding. So those are the sectors broadly where we would be positive and negative on as well.
All right, take that point. The other thing is that on MapMind, there was a leadership change which was announced, and the management joined us here on the channel as well. They've officially appointed Rohan Verma as a joint managing director for a fixed 5-year tenure, and this is something that the street perhaps may be looking at from here on as well.
Rohan Verma was basically the son of the
exactly.
So
he's the joint MD for the next 5 years to lead GIS growth coming in for
Wasn't
them.
he already the MD? He's been extended.
It must have been extended. Or former CEO Rohan Verma has been now named as the joint MD. So it must have become one of those nomenclature changes that took place. The management joined us here on CNBC TV 18 as well. Fairly bullish about the prospects coming along for the company. Obviously, the stock, like you pointed out, has been bombed out. Just to get a few more questions out, Vaibhav, on the consumer space, the debate is discretionary or staples. Staples not having done much, but maybe first quarter onwards you get the price growth element coming in as well. So share price underperformance and revenue price growth coming in are two factors that will do well for them. Whereas discretionary, obviously, despite the valuations, the long growth tailwind is something that everyone's favoring. So do you have a view here?
Yeah, of course, I think, this quarter at least, we will see a combination of both volume and price growth, especially on the staple side. Having said that, we also need to be a little cognizant of that. What is the effect of the El Nino on the wider rural economy as well? Now, if it's extra strong and we see monsoons relatively weak, then there is a possibility of probably downtrading in terms of the staple universe. So I'm just waiting a bit circumspect and waiting for the weather patterns to kind of flow before taking a very aggressive call on the consumer space. Lastly, on consumer discretionary, we've seen, some jewelry companies, clocking numbers which have been fantastic. But this is where we do think that because of the weakness in the gold prices on an overall basis, probably this quarter you may see great numbers, but it is where probably you will see the valuations, at the elevated levels and probably some amount of deterioration in terms of the growth as well. So probably the spike in the jewelry companies, I'll probably look to kind of book some more profit for the shorter term. And lastly, on autos, continue to post fantastic retail numbers. Will be mired by the higher raw material prices, but medium term looks pretty okay as such.
All right, take that point. Thank you so much, Vaibhav, for joining in and giving us your view on a whole host of stocks and sectors. Wish you good luck for your, investing journey and nibbling into the markets as we go along. So we got some more clarity. Rohan Verma was earlier the CEO and executive director. Now he's been named the joint managing director with effect from July 1. So obviously 2 days into his job as that, and will, along with the team, lead the advancement of the company's AI native deep tech products and solutions, strategic focus on building future ready tech driven innovations, leveraging AI and geospatial intelligence and IoT, a whole lot of internet native and AI jargon that we have that explains the move that we're seeing on CE. But again, in the last 12 months, the stock has halved. We'll now go across to Nimesh, who will obviously give us the insight into what the dealing rooms are saying and what individual stock tidbits does he have for us this Thursday afternoon. Nimesh.
Hi, Mangalam. So, a very strong momentum for the second day running, especially for the July series. Good start to the July series, so to speak. I guess, it's a combination of both. A bit of short covering in the IT names today. So, IT was a bit of a surprise move today. The index is up almost 4.5%. But to me, looks like most part of the rally is on back of short covering. And the other part is the lack of selling or supply of paper. I've been highlighting this for the last couple of days that from a DI perspective, the selling has actually come down. One of the large insurance player was a seller in the month of June. That's not happening now. And also because of there won't be further supply of paper largely from the promoters, because most of them are now getting into the silent period. So that probably explains a bit of up move in the broader market names and broadly in the markets for the last couple of days. From a flow perspective, again a mixed day, but my sense is some bit of buying has resumed in the private bank names in today's market. So that's something to track going forward. Even the breadth is quite positive today. The mid and small cap index has rallied nearly 2%. So good momentum in the broader markets as well. And but I guess the Nifty move in the last couple of days, especially to the start of the July series, seems to be a combination of short covering as well as lack of selling from large institutions.
Okay, so selling seems to have reduced from some of the local guys. Nimesh, in terms of specific stocks, what's the chatter?
Well, a couple of names first. J&K Bank and Britannia both stands out for me because of very aggressive delivery-based buying in today's market at FIDS. So watch out for delivery volumes. Looks like both the stocks have moved up today on the back of strong buying interest. So that's something to track in terms of delivery volumes there. The second name is 361. That's been consolidating with the negative buys in the last couple of weeks. My sense is one of the leading long-only FI has been an active seller in 61, and they have a large holding. So that pressure may just continue in the very near term in 361. The third name is Piramal Finance, almost at 52 week highs. He's been consolidating with a positive bias. But at least even at these levels, there are multiple domestic buyers who are looking for bid blocks and buying interest in Piramal Finance. So that's the feedback there. The last name is Choice International. We normally don't talk about this stock. But again, it's not a small company, so to speak, a good market cap company, buzzing off late, but the city and also the city are anticipating some corporate development in Choice International. Potentially, there could be a large fundraising from a global strategic investor in Choice International. So that's the buzz in that particular company.
I see. And Piramal Finance, is there any news around all this, all the interest, Nimesh?
No specific news as such, Prashant. I'm not sure what the Q1 is going to be. But at least from a domestic institutional interest point of view, there is a lot of interest, and blocks been either changing hands or there is an interest from large institutions to buy into Piramal Finance even at current levels.
Just one more name, Nimesh, which we discussed yesterday was Ixigo, right? And I think it was part of your list yesterday, and there was again some corporate development around it. Stocks done well. Actually this week it's up 15%. Anything else you're picking up?
So I guess it's widely reported as well, Prashant, that they are looking for an inorganic move, a potential acquisition, and that's something which even I'm getting a sense on that maybe it's very much around the corner and might get announced very soon. So that's potentially a trigger for Ixigo to be tracked, at least in the very near term.
Okay, thanks very much, Nimesh, for that. Well, that's the chatter. Well, Bank of Baroda news on the first quarter update is coming through. BOB news has not been great this morning. There is a big one-time, almost one-of-a-kind, I would say, payout which they're making after having settled an issue in UAE. That's about 5,700 crores kind of one-time outflow. But this is, of course, Q1 numbers. They look pretty healthy. Advances are up 17%. Deposits are up 14%. And those are the basic numbers that we have, and we'll put out more as we have it. There's a bit of a recovery from the lows which is coming through. We'll just take a quick commercial break here, some trading ideas on the other side with the technical experts, and more discussion on markets.
Well, the market continues to do well. We have a lot of stocks which are buzzing around right now. Coal India has seen a big pickup. Yesterday we did get their e-auction volumes data that came by, which is actually more margin accretive for the company. And we are constantly seeing some traction continue in the tires space as well. Apollo Tyres has moved to the high point of trade alongside all the others. Auto stocks in general and auto ancillaries doing well this afternoon. Good time to get in the tomorrow trade then with Mitesh Thakkar. Mitesh, I reckon you are considering buying today for an unwind tomorrow.
That's right. I think very clearly, I think, the market is showing good momentum, and as I said, we might head towards the upper end, which is 24,300, and then we'll take it from there. So for the time being, real estate things are doing good. We had buys on we had buys on Oberoi and Lodha. I think Prestige Estate has come into the picture. I think that's a weekly SP with a stop at 1660 for targets of around 1700. And the other one which I like, that's SBI Life, that's a buy for BTSP with a stop at about 1770 and look for target of 1805.
Okay, I got that. Thanks very much for that, Mitesh. Bank of Baroda, right? I mean, just reported Q1 updates, and we'll get to that in greater detail later. But the big story, of course, is the settlement, which is, which they've reached out of court with NMC Health in the NMC Health insolvency case. This is worth about 5,700 crores. Typically when we talk about insolvency proceedings and settlements, it's inflow, but this is not inflow, this is outflow. Ananya is here with details. Ananya, take it away.
So, well, yes, Bank of Baroda back in focus after the settling a long-running legal dispute linked to the collapse of UAE-based healthcare giant NMC Health. So let us go back to 2020, where NMC, one of the region's largest private healthcare company, collapsed in 2020 after billions of dollars of hidden debt were uncovered, leading to one of the biggest corporate frauds in the Middle East. Now, during the trial, NMC's administrators alleged that the Bank of Baroda's Abu Dhabi branch failed to follow adequate AML and KYC procedures and continued processing transactions linked to the alleged fraud. Now, they also claim that the bank failed to carry out proper due diligence on accounts of alleged sham suppliers through which funds were routed. Now, Bank of Baroda consistently denied these allegations, maintaining that it had followed all regulatory procedures and had no role in the fraud. Now, after years of litigation, the bank has agreed to settle for out-of-court settlement, paying $600 million, roughly 5,700 crore, to NMC's joint administrators without any admission of liability or wrongdoing. You can see the stock is also under pressure today.
Oh, yeah, absolutely. It's a big one, and stock's down about 4% on the back of it. Sudeep Bandyopadhyay is with us. Sudeep, good to have you with us here. As I said, it's a bit of a one-of-a-kind case, right?
Absolutely. It's a kind of unique thing. Things like this, Prashant, doesn't happen in India, but I think, the global markets, the regulators are extremely strict. And, if there is a fault on part of any of the counterparties, they are also penalized. And that's exactly what is happening. And I'm sure Bank of Baroda was not on a very strong wicket. And that's why probably they had to shell out this kind of money for an out-of-court settlement.
Yeah, absolutely. Markets are doing their thing. IT is up today, so it's just if you were on yesterday, IT was down 2%, and you're with us today, Sudeep, and IT is up 3%.
Well, I think Prashant, the Palantir CEO's statements created some excitement, but I will still be extremely cautious on IT. I think the AI-led disruption is real. We can talk about valuation, the charging which AI companies are doing and things like that. And they may be right or wrong, but the disruption is real and is going to happen. We are probably seeing just a trailer of the disruption. Much more is yet to come. Indian IT companies are predominantly on the services side. They don't have their own products. They have to adjust to the new AI world. And they will, I'm pretty confident. Strong management, strong balance sheet. But this transition will take some time. And, during this transition, I think balance sheet, P&L, everything will be under pressure. Revenues will suffer, margin will suffer. And I think it's better to stay away. at this stage?
Yeah. Actually, we put that question to S. Narain as well in the morning. He's, of course, CIO, ICICI Pro AMC. And he basically made the point that he'd be a lot more comfortable if Indian IT starts to trade at US software company valuations. And there is, difference of a few handles there between, here valuations are about 13 times, there it's about 11, 12 times. It's not that large, but that was his point. Still, pretty unclear in terms of the road ahead. But listen in, we're going to play out that soundbite and more from S. Narain.
It is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap. So, but at the same time, we are still not in a period where you can give a thumping the table call on equity. The pace at which, all these developments which are happening in AI and the kind of P's at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. We have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows. And, the domestic flows have been buoyant and that has ensured that the markets have been static in large caps because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap. I think the private sector banks have derated significantly that you should clearly expect decent returns from private sector banks as well. I think the entire government policies which have happened on the oil and gas side should lead to a re-rating in the sector. And it is often an ignored sector by the market because people have not made money in the past. But I think this is a very interesting sector at this point of time to invest in.
Well, 160 odd points higher, 24,165 is where we are at. The high is about 24,194, so about 30 points off the day's highest level. So there's a small drop-off which has happened. But I think we should now be comfortably up for the week as we sort of wrap up the fourth day and go to the fifth day. Monday, Tuesday were bad, and the last 2 days, of course, have been good. 0.5%, by the way, to show for it on the Nifty. But you know, it's a pretty healthy broader market, and I think that should be the focus area if you're looking at it. You know, housing finance as a segment, and lots of listed names, right? Which, if you look at it, should benefit from a more benign interest rate environment. You know, defaults generally are low, but kind of moved away from the spotlight, moved away a while back from the spotlight. What do you think? You think as interest in financials comes back, it'll all come into private banks because they themselves are cheap? Or you think it'll go into some of these specialized sectors? I mean, you know, sectoral NBFCs like HFCs?
Well, at this stage, Prashant, I think the private sector leading banks do really look attractive. I think, there is hardly any downside, and the upside is definitely there. The valuation at which they are quoting makes them the best bets at this stage. But after that, I think we can look at other segments in the BFSI space, and housing finance definitely features. We always have been liking housing finance. I mean, it didn't do much in the recent past, but I think pretty much the housing finance companies also, specifically Canfin Homes, LIC Housing Finance, valuation-wise, we do find attractive.
Yeah, but you think that you can valuations have really come off, and that's the other point that Naren made earlier that we played out. He thinks private sector banks should do well, but the point is you could have said it any time in the last 1 year, you'd be right, and it's just that the wait goes on. But at some point that will start to play out. Impossible to time these things in that sense. Have you ever looked at this company Piccadilly, which is of course into the alcoholic beverage segment? Sudeep?
No, not really, Prashant. Sorry, we haven't looked at that.
I see.
Big mover. Apparently, one of their products is the Indri whiskey. We're not too sure of whether that is held inside of Piccadilly or it's part of the unlisted group companies or not.
No, I think it is part of the listed entity. I think that was the whole excitement.
That was the whole excitement around that. So it's been doing extremely well. Though I just wanted to get your views before we start wrapping trade on Electronics Mart. That stock, obviously Bajaj Electricals doing extremely well in the southern part of the country, a leader there, and now is exploring North India and alongside that West Bengal as well. How do you like this space? Because electronics retail, not necessarily one of the easiest businesses to be in. They've become leaders in one part of the industry, but the others, there will still be margin dilution.
Well, I think, Mangalam, there is significant potential, and we have seen how organized retail has performed over the years. There are enough examples in the unlisted space. We in Mumbai know of Vijay Sales and what kind of performance they have been in the private space doing. They are not listed, so all the figures are not public, but I think definitely there is scope. And that is the scope which is being explored by these companies. If you recollect, at one point of time, the mobile retailers were also doing very good. But I think that those days are gone. And now I think it's a kind of a larger electronic retail format, which is kind of gaining momentum. And that's why these companies want to expand and get into newer geographies to kind of increase the pie.
All right, I think Sudeep, we'll leave it there. We're just going to look at the market closing as the rates come in. But do stay on. Markets forward will take the action forward. So IT with a 4% pop, recouping bulk of the losses over the last 3 days. And Infi, TCS, Wipro, HCLTech in the large caps, but in the mid caps, Persistent, Coforge, so many Tata Technologies, Tata Elxsi, all participating very well. So the entire mid and large and small cap IT services space really shone through. But so much else as well, right? I mean, look at Force Motors, look at Dixon, TVS Motor, AG's Logistics continues to rally, Paras Defense, Sona Comstar, Apar Industries, Viatec Vabag is back at 2200 kind of levels. It sold off from there. Tangamail, simply an amazing move. There is CE Info, which is Mapma India, which was kind of the mover out of the blue, has not done anything for a while. There was Info Edge, which was 4% higher. Oberoi Realty was up 3% up. CET with a 5% pop today. Godrej Consumer was up about 3.5%. It's a really long list of big volume-led gainers today. And there's no dearth, really, as far as the broader market action is concerned. Losers as well. BSC and MCX were down about 2.5% and 1.5% respectively. And there was a DMart, which was down about 3.5%. Thermax, by the way, was the other one. Thermax down 4%. Had a big rally recently. Of course, had the management with us earlier with my colleague Winnie. Well, it's a wrap on this edition of Markets Forward. More comes up on the other side. Stay tuned.
The market ends largely in the green with benchmark indices outperforming. The Nifty closes above the mark of 24,150 and this is despite the Nifty Bank underperforming.
The CEO of Palantir, Alex, says that the launches an attack on the business models of frontier AI labs like OpenAI and Anthropic, accuses them of imposing wealth tax on businesses by charging high fees for AI tools. Shares of software companies rebound worldwide. The Nifty IT index gains over 4%.
Bank of Baroda draws the curtains on one of its longest-running overseas legal disputes. The lender has agreed to a $600 million out-of-court settlement in the NMC Health insolvency case, while maintaining that there was no admission of wrongdoing. The stock slides. You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormas Patakia, with me Vinny Motiwala. Vinny, good afternoon. A good day for the markets today, and unlike the previous sessions, we did not come off the highs, but we've closed at a very, very important level, the supply zone of 24,150, 24,200. We are right at the midpoint of that, and the bulls would now want to hope that the week ends on a high.
Absolutely. Hoping to end the week on a high. We hope to say Friday tomorrow. And Hormas, I think we believe that we've closed below the 100 DMA, above the 100 DMA as well, right? So closing above that 100 DMA mark was also important. Nifty closing 0.7% of gain, almost near the day's highest point, and most of the sectors managing to close in the green today, right? IT leading the charts there. Then you have Realty, autos, all of them managing to do well. What didn't do well today was PSU Banks, a bit muted. We have the Nifty energy side in terms of the sectors which didn't perform well. But apart from that, I think Hormas, today is a day of IT, right? And that's what we'll be talking about, discussing a lot more developments in terms of that as well. In the next 20 odd minutes, we'll cover all the big news for you. What is the top corporate voices saying, events to track for in tomorrow's trading session as well. So first up, on the show, while I spoke about the top headlines, we'll start with the movers and shakers with Vivek. We'll also have a talk about the IT stocks, which saw a very sharp rebound. Many business updates that came in from banks, all of that also is something that we'll break down through the show as well. Last but not the least, we'll delve into the key market events to watch out for as well.
And on to our first segment of the day, Vivek is here with all the movers and shakers of the day. Vivek.
Well, thank you so much for that. Another session where we did see the advance decline ratio very much in favor of the advances, and the IT pack clearly rebounding very smartly from the recent lows that they saw. First up, of course, we have to look at the entire IT pack, especially in the broader end of the markets or the mid-cap IT names. Most of the names like Coforge, Infosys, Infosys, Tata Tech, all of these stocks are up anywhere between 5 to 10%. The other stock on the radar was CE Infosystems or MapMyIndia. The management came on our channel earlier today, gave very good guidance, and that particular stock managed to end the session on strong volumes, almost 8% higher. Both the battery stocks, as Exide as well as Amara Raja, were cheered in the trade today. Exide up over 7%. This on the back of the fact that you did see a significant fall as far as lead prices are concerned. And the FMCG rally, that started yesterday, that particular rally continued. You did see significant gains in Godrej consumer names like Britannia. All of these names built onto the gains that we saw in yesterday's trading session. And tire stocks too. Remember, all of these auto ancillary companies are actually seeing the benefit of lower raw material prices. So look at tire stocks, Seat, Apollo Tyres, all of these stocks up anywhere between 3 to 6%. On the other hand, quite a few laggards as well. First on the list has to be Bank of Baroda. Some negative news are coming in terms of a provision that the company has had to take, a 5,700 crore hit that the company will take as part of its settlement. Capital goods, all of these names saw significant profit booking today. So names like Thermax, AI Engineering, BHEL, all of these stocks fell. You also saw Z Entertainment, this after the company actually did, or the board gave a nod for a warrant issue to some of the promoters. And DMart, remember, the underperformance continued over here. It's been a stark underperformance the last two trading sessions, especially comparing to its other consumer durable or consumer rather discretionary peers.
Vivek, thank you for that entire list there. But the day, of course, well and truly belonged to the IT names, and they rebounded today after 3 straight days of losses. The Nifty IT index climbing nearly 5% in today's session, so recovered almost everything, almost 2/3 of what it lost over the last 3 trading sessions. Now, this comes after Palantir CEO Alex Karp said that enterprise AI has been, quote unquote, irresponsibly oversold. Now, speaking to CNBC, he argued that OpenAI and Anthropic have fundamentally mispriced their AI services, saying that the token-based model has left enterprise customers frustrated and empty-handed. Listen into what he had to say.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job. When OpenAI or Anthropic especially are talking about critical infrastructure, it only is being used in our product, my product. And there's a reason for that. These things are very, very valuable. What they have done building models is world historic. And just so you see, I'm not throwing shade. Dario is a literally historic figure. And he came from behind, and he's now number one. Almost no one in the I've been in business, whatever you want to call I do, for a long time. Never seen anything like this. Okay, so the reality is critical infrastructure does not run these models without an application layer. In almost all cases, and maybe it won't be all cases someday, that application layer is our ontology. That's a fact.
Okay, now let's move on and take the discussion forward and bring on board our experts for today. We have Sudeep Bandyopadhyay from IndiTrade Capital as well as Ruchit Jain of Motilal Oswal Financial Services joining us right now. Sudeep, Ruchit, hi. Thanks so much for joining in as always. Ruchit, are you happy seeing these levels today? 24,170. We're closing about the 100 DMA for the Nifty as well. How important are these levels and what should we keep an eye out on tomorrow in terms of the range?
Yeah, hi, very good afternoon, very good afternoon to everyone. Well, I think today's move was much important because we already had a good consolidation over the last couple of weeks on the markets, especially on the benchmark index. And the good thing was that in this entire consolidation phase, the index did not break its 20-day EMA. Now, if you look at the historical data for the month of July, the seasonality for the month of July, and out of last 10 years, July has been positive 8 times. So 8 out of 10, we have seen a positive July in last 10 years. And that too, if you look at the percentage gains, it's not that the market gives a very small return in the July. July has always been a trended month. On the Nifty 500, the average Nifty 500 gains of for month of July is 3.5 to 4%. So I think clear the indications are there as per the seasonality, as per the historical data. We are set in for a trended phase in the month of July. And since the markets have kept its 20-day support intact, last couple of weeks, we have already seen a good time-wise correction. I think we are on the verge of resuming its a positive momentum. So today's action clearly, being a start of the month, it shows that we are on that path. So we should see that 24,500 very soon on X.
24,500 very soon, and a lot of these analysts who have been speaking to have also been mentioning the fact that 24,600, of course, which is the recent swing high, should be the level to watch out for on the upside. Sudeep, we've had enough and more conversations on IT on this very show itself. The kind of move that you saw, of course, there is absolutely no change in sentiment even after the statements that the Palantir CEO made. Yes, there is some bounce from the lows. But on the cusp of yet another earnings season, what are you expecting from all of these companies, or you have absolutely zero expectations this time around?
Well, I have very little expectation. Almost the AI-related disruption is real. We can talk about whether they're overcharging, whether the confidentiality of whatever they are trying to maintain about certain models is worth or not. These are the debates which we can have, but the reality is on ground, a lot of things are happening, and these are changing the way we work, the way the companies deliver. So Indian IT companies will have to adopt to this new world, and that adoption, that pivot will take between 1 to 2 years. They are good companies, good management, strong balance sheet. They will definitely reach there. But this transition period will be extremely volatile with pressure on revenue and margin. So we have to be prepared for that. Yeah, last quarter, there were a lot of pressure on the Indian currency. There has been sharp depreciation in rupee. So that may lead to some P&L positive benefit on the P&Ls of these companies because their earnings are predominantly in dollar. So there will be some one-time benefit on account of rupee depreciation. But beyond that, I don't have any other expectations.
Okay. Point taken there, Sudeep. But let's move on and switch gears to the banking space now. We had Bank of Baroda that is drawing the curtains on one of its longest running overseas legal disputes. Now, the lender has agreed to a 600 million out-of-court settlement in the NMC health insolvency case while maintaining there was no admission of wrongdoing. Let's go across to Ananya to get more details on this one and what it means for the bank as well. Ananya, over to you.
So yes, Bank of Baroda, a lot of buzz today around the stock after settling a long-running legal dispute linked to the collapse of UAE-based healthcare giant NMC Health. Now, let us go back to 2020. NMC, one of the largest private healthcare provider in the region, collapsed in 2020 after billions of dollars of hidden debt were uncovered. Now, triggering one of the Middle East's biggest corporate fund fraud scandals. Now, during the trial, the company's administrators alleged that Bank of Baroda's Abu Dhabi branch did not adequately comply with AML and KYC norms and continued processing transactions linked to the alleged fraud. Now, they also claim the bank failed to carry out proper due diligence on certain supplier accounts. Now, Bank of Baroda denied all the allegations, maintaining that it had complied with all the regulatory requirements and was not involved in the fraud. Now, bringing the litigation to an end, the bank has now entered into out-of-court settlement, agreeing to pay $600 million, roughly 5,700 crores, to NMC's joint administrators without any admission of liability or wrongdoing. Now, you can see the stock was also under pressure today following this news.
Ananya, thank you for that update. Just before I get a chart check from Ruchit, Sudeep, Bank of Baroda, the next viable PSU Bank investment after SBI, or do you have any other choices within the PSU banks because of the fact that, okay, this is the issue coming to an end would possibly be viewed as an overhang done, but of course the outgo is something that the street did not like in this case?
No, I absolutely agree with you. Number one, let me point out this continues to remain the number 2 choice as far as PSU banking pack is concerned after SBI, of course. And there's a big gap between SBI and Bank of Baroda, and that will remain in the foreseeable future. But this specific incidence of settlement, of out-of-court settlement worth 600 million, I think is one chapter behind them. And this was hanging like a sword on them. And the settlement clears that air, and we know now what to expect going forward. As far as their performance is concerned, I think it was decent with roughly 17% advance growth and 14% deposit growth. It was a decent performance as far as Bank of Baroda for the last quarter is concerned. So we continue to remain positive on Bank of Baroda.
Okay, continue to remain positive on Bank of Baroda numbers, nothing bad about it. And, this which was a bit of an overhang, which was lying as a sword on their heads, now that's moved out is what Sudeep is saying. Ruchit, but on the charts for you, how is Bank of Baroda now looking? Is it an interesting point maybe to look at entering, or what is your suggestion here?
Not at current level. The stock has closed below its 200 EMA support today, and that too today's sell-off post that news was supported by high volumes. And generally, when we see supports getting breached with good volumes, then those stocks can tend to underperform in the near term. And also, if you look at the recent up move, which has been there in the Bank Nifty index from the swing low of 53,000 to 58,000, the participation from PSU banks has not been that great. In fact, this entire 5,000 point up move in the index has been led by the private banking space. I think since the relative outperformance is not coming from the PSU banking space and such negative news flows are there, it can tend to underperform in the short term. Major support would come around 240, 235. So I think the risk reward ratio could become favorable only if you get the stock around 240 to 235 range.
Right, so 240, 235, the range that you would want to watch out for. Now from Bank of India, Bazaar Style Retail, there were a lot of first quarter business updates that were reported earlier in the day. Upasana is now joining in with all of those. Upasana.
Well, certainly we saw a lot of business updates on the back of the Q1 update. Now, first up, let me start with Bank of India. It reported a healthy quarter. Mind you, the advances growth reported by the bank stood at 19%, which was much above a deposit growth, which was seen at around 15%. The total business, including the global, was up nearly about 16.7% on year-on-year basis. Next up is ESAF, Small Finance Bank. The strong business momentum seen last quarter continued in Q1 as well. The advances grew 27% year-on-year and 3.5% sequentially. And the bank also saw healthy
deposit accretion at 19% on year-on-year basis. Next up is Bazaar-style retail. Q1 was certainly strong with a revenue uptick of nearly 29% at 486 crores. The company's same-store sales growth also stood quite healthy at 7%, and it opened nearly 18 stores, taking the total store count to 276. And lastly, JTL Industries was also in focus on the back of the Q1 update. The sales volume saw an uptick of nearly 18% on year-on-year basis. So all in all these stocks were in focus today on back of their Q1 updates.
Upasana, thank you for summarizing those for us. Sudeep, a lot of these retailers have come out with their business updates over the last couple of days, be it V-Mart, V2, Bazaar Style. You just heard Upasana there. Where within this space would you lay your preferences in? Would you bet on these smaller names, the up-and-coming, the Vishal Megamarts, or bet on an underperformer like Avenue Supermarts, of course a recent underperformer? Where do you place your bets here?
Well, I will go with the smaller ones, Hermes. I think I have been liking both V-Mart as well as V2. And I think the scope for growth for these companies are significant. They're operating in smaller geographies. They're much more nimble. And the newer formats which they're evolving is also gaining traction. So my focus will be on these companies. And they have shown very decent growth. Even same store sales growth, if you see, it's around 8-9%, which is very, very decent.
Okay, that's your pick there. Ruchit, can you check the charts for D-Mart, Avenue Supermart? How are they looking like as well?
Well, more of a time-wise corrective phase, it seems. Last time post the quarterly results, we did see an up move in the stock. But after that last 1.5 months, we've not seen any kind of follow-up moves coming. I think 3,900 to 4,500 has been the range for the stocks. Some consolidation maybe till the quarterly results are declared. So stock could continue its time-wise corrective phase.
Time-wise correction for Avenue Supermarts, another 3.5% lower in today's session. Gentlemen, Sudeep, Ruchit, thank you for sparing time and joining us today on the show with your views on all of the stocks that made headlines today. Take a short break. On the other side, back with the key market events to watch for the final trading day of the week. Stay tuned.
Welcome back to Markets Forward on CNBC TV 18. Now, earlier today, we spoke to S. Naren of ICICI Prudential AMC on the IT sector valuations and the AI theme. Listen in to what he had to say.
The pace at which, all these developments which are happening in AI and the kind of P's at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. We have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows, and the domestic flows have been buoyant, and that has ensured that the markets have been static in large caps, because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap.
And before we take your leave on the show, Upasana is here to tell you all that you need to watch out for going into tomorrow's trade, other than the fact that tomorrow is a Friday. Upasana.
Well, first up, let us look at the global economic cues. Focusing on Europe first, the manufacturing PMI data for the month of June will be out tomorrow. And mind you, last month, that is in May 26, it was down from the 4-year high seen in April. So certainly a key monitorable that we'll be keeping a close eye out on. Now, ECB president will also be participating in a panel discussion on navigating world of uncertainty. So we'll be watching out for the comments on that as well. And now coming to US first. Now, Fed balance sheet will be out tomorrow past midnight. And mind you that the financial markets are closed tomorrow on the back of Independence Day observed in US tomorrow. Now coming to India now, the manufacturing services and composite PMI data for the month of June will be out tomorrow, and even foreign exchange reserves data. So certainly these are the key monitorables that we'll be keeping an eye out. Now on the IPO front, NAC Packaging, which is a 440 crore IPO, tomorrow marks as the last day for subscription. And FM, Nirmala Sitharaman is in France on an official tour from 1st to 4th of July. So we'll be looking out for all the important updates from there as well. Now, defense panel to consider proposals worth over 1 lakh crore. So certainly defense sector will be in focus tomorrow. And lastly, coming to key stocks in focus on the back of corporate action. So Team Lease and Rolex Rings, both these counters will be in focus as tomorrow marks as the record date for the buyback of the shares. So all in all, looks like quite an eventful day tomorrow.
Okay, surely we'll keep an eye out on those important events. Tomorrow is Friday. That's an important one as well.
Most important.
Last working day of the week. But on that note, we're going to wrap up this edition of Markets Forward. Thank you so much for tuning in. We'll be back with more news and updates on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty gained nearly 1%, led by IT stocks today. Bank stocks underperformed. The rupee weakens by 14 paise against the dollar, remains above the 95 mark. The CEO of Palantir, Alex Karp, launches an attack on the business model of frontier AI labs like OpenAI and Anthropic, accuses them of imposing a wealth tax on businesses by charging high fees for AI models. Shares of software companies rebound worldwide. The Nifty IT index gains over 4%. Qatar reports positive progress as United States-Iran wrap up indirect technical talks in Doha. No signs of a breakthrough on the peace deal yet. Tehran says a communication channel with Washington will be set up to flag MOU breaches. The new U.S. Fed Chair Kevin Warsh says inflation is too high and pledges to get it back to 2%, stops short of giving any hints on the upcoming rate decision, which is later this month. Shares of Bank of Baroda decline over 4%. This after the lender settles the NMC Health insolvency case for 5,700 crore rupees without any admission of wrongdoing. This draws the curtains on one of the longest-running overseas legal disputes. The promoter of Jana Small Finance Bank is ready to sell stake to repay 700 crore rupees to PE firm TPG Asia. Sources say Jana Holdings is also considering a potential merger with a peer bank. The centre pulls up WhatsApp over its user ID feature rollout plan, directs the company to explain why action shouldn't be initiated under the IT Act for a feature that may enable cybercrime, orders the platform to hold off rollout till consultations conclude. The Supreme Court quashes orders by the Company Law Tribunal and the Appellate Tribunal in the SL Infra case after finding AI-generated fake legal precedents, declares zero tolerance and directs the Bar Council to form a community on the use of AI in the judicial process. OpenAI proposes handing the US government a 5% stake in the company per a Financial Times report. CEO Sam Altman reportedly argues that giving the public a financial interest is the best way to share AI's upside. A 5% holding in OpenAI would be worth roughly over $42 billion currently. IT firm Capgemini shuts down its on-campus daycare facility in Bengaluru after allegations of child abuse. Police register a case against 5 women caregivers after videos purportedly show them abusing children, and those were circulated on WhatsApp. New Delhi and Tokyo signed their first defense co-development pact during Japanese Prime Minister Sane Takaichi's India visit. Marks a significant step forward in the bilateral ties. Prime Minister Modi calls Takaichi's younger sister as the two countries reach agreements spanning economic security, artificial intelligence and clean energy. A hurricane brace rescues England from DR Congo's clutches, powers the team to a pre-quarterfinals of the FIFA World Cup. Belgium pulls off a stunning comeback to sink Senegal in extra time. The US beats Bosnia and wins their first World Cup knockout match in 24 years. Well, all of that coming up for you, but let's start with the day's market action. Benchmark indices outperformed in trade today, with the Nifty ending above the 24,150 mark. The Nifty's gains were fueled by ICICI Bank and top IT stocks. So the Nifty up 170, 580 higher on the Sensex. But look at the Nifty IT. Remember, it's been under pressure, rebounding today, up by almost 1,200 points, a gain of 5%, and that snapped that 3-day losing streak that we've seen. All stocks in the IT index closing in the green. Mangalam standing by to wrap up the market action for us. It's a good day for IT stocks rebounding sharply, Mangalam.
Well, second day of the July series, and it's been a good one, led by the IT stocks in today's trading session. After the underperformance, one would have thought, the IT stocks are likely to continue to underperform, especially given the sort of decline that we saw in KPIT and a lot of the mid-cap IT stocks in yesterday's trading session. Today was entirely different. The comments coming in from, the Palantir CEO has led to a rally in the enterprise IT softwares, and our stocks were no different. Infosys up 6%. We saw a big move in Telecom as well. TCS, all of them. So all in all, the IT index ended about 5% higher, and that caused the Nifty to close above the 100-day moving average for the first time in the last many days. The only index that took a bit of a backseat today was the Nifty Bank, which was down by about 0.1%. We saw some traction in the consumer names in the auto stocks as well. Among the top gainers in the broader broader markets, which had a better shade in terms of advanced decline ratio, 2 stocks gaining for every one that didn't do well. We had the autos and auto ancillary stocks which saw some gains. Exide up 7.5%, Sona, BLW up 7%, Tata Tech, Apollo Tyres, Persistent Systems and Force Motors were among the notable gainers. Among the stocks that lost in trade in the financial space, Bank of Baroda definitely stood out. Along with their first quarter update, they made a settlement of nearly 5,700 crores for the NMC deal, and as a result of which this outgo has taken the stock lower by about 4%. And apart from that, some of the stray gainers that we saw from the broader markets, backed by strong volumes, we had the likes of IFGL Refractories, IQ Lighting, PC Jewelers and Waterways Leisure, which had a bad open post listing yesterday, which bounced back with a gain of almost 10%. All in all, a good day of trade, the one that went to the bulls.
All right, Mangala, many thanks for joining us and staying with the rebound that we saw in IT stocks. Here's why. Palantir CEO Alex Karp launched a scathing attack on the business model of frontier AI labs like OpenAI and Anthropic as costs skyrocket. In an interview with our sister channel CNBC, Karp highlighted that the fight among AI companies was no longer about intelligence, but more about control. Taking a dig at his peers, Karp said that they had fundamentally mispriced services, adding that token-based model have left enterprise customers frustrated and empty-handed. Here's that viral CNBC interview with Palantir's Alex Karp.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
Well, Alex Karp, responsible for the rebound that we've seen in IT stocks globally. On to the big global story of the day. Qatar reports that positive progress has been made between the US and Iran as they wrapped up their indirect technical talks in Doha. Let's bring you up to speed on the latest developments. Mediators, Qatar and Pakistan, said that they held separate meetings with delegations from the US and Iran on different aspects of the MOU. The statement also said that both nations have agreed to continue talks in the coming days after the funeral of former Iranian Supreme Leader Al-Khamenei. US officials have said that discussions focused on the Strait of Hormuz. Speaking to reporters, US Vice President J.D. Vance said that both sides negotiated on the commercial traffic through the strait. This as Tehran maintains that the strait will be managed by Iran and Oman. Vance added that negotiations on denuclearization will take place in later meetings. This comes a day after Trump said the talks on the nuclear issue are progressing well. In the oil market, Brent crude prices down for the fourth straight week as indirect negotiations progressed. Shipping movement in the Strait of Hormuz continues to recover gradually. Financial firm ING said that 11 vessels crossed the waterway yesterday.
The technical negotiators are sitting down with the Iranians, with the Qataris, and with others in Doha. You know, talking about some of the details here, making sure commercial traffic really does. It's already started in an amazing direction. We've got now oil at $68. We've got gas prices starting to come down, but really just ensuring that we continue to make the progress on that. And that's what they're focused on. And then, you know, obviously we're worried about the nuclear issue. We're going to start talking about that. So right now the talks are going well.
U.S. Vice President J.D. Vance there. Now, U.S. Federal Reserve Chairman Kevin Warsh has reaffirmed the central bank's 2% inflation target. Speaking at the ECB forum, Warsh admitted that inflation has been too elevated in the U.S. and that the Fed will deliver price stability. The new Fed chief also said that some of the staffing for his 5 task forces in the central bank will be announced next week.
Expectations of inflation over the first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S.
Well, that's the Fed chief, and the ECB conference also saw European central bankers weigh in on the inflation outlook and interest rate decisions. ECB President Christine Lagarde said high inflation has made a rate hike in June necessary, while Canadian Governor Macklem maintained that inflation is critically above the bank's target in the country. Take a look.
When you have the underlying inflation indicating that it's also trending up as well, and that you're only going back to your 2% target at the end of 28, with a number of things happening in our inflation outlook, which includes, the market expectations in particular, you have the obvious decision, and it was so obvious that we had a unanimity decision within the board of the governing council.
There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and is off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict.
The benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, the economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy.
Well, global central bankers, they're weighing in on the rate and inflation trajectory. The centre has pulled up WhatsApp over the username feature rollout plan. The government has directed the company to explain why regulatory action should not be initiated under the IT Act for launching a feature that may enable cybercrime. Remember, this has not been launched yet. WhatsApp has been directed to not roll out this feature until consultations with the government are concluded. As per the government's WhatsApp username feature may be used for online fraud, phishing, digital arrest, scams and impersonation attacks. So that's the concern. WhatsApp, of course, also responding, saying that they are mindful of the concerns and, of course, always stay within the law. The government is reportedly planning to sell stakes in some of its largest state-owned companies. According to Bloomberg, LIC, Hindustan Zinc and several state-run banks are among 8 companies identified for stake sales in the coming months. The report also said that a share sale in LIC alone may raise as much as 10,000 crore rupees, while Hindustan Zinc could fetch another 5,000 crore rupees for the government. Remember, this has been something that the government is looking at this point in time, diluting some stake across a bunch of companies, and that gives it significant revenue-raising measures. The promoter of Jana Small Finance Bank is ready to sell stake to repay 700 crore rupees to private equity firm TPG Asia. Sources tell cnbc TV18 that Jana Holdings is also considering a potential merger with the peer bank, but no decision has been taken. Jana Holding owes TPG Asia roughly 700 crore rupees for 37,000 non-convertible debentures issued in May of 2023, which were due on the 30th of June. Shares of Zee Entertainment traded lower in the trading session today. This after the company announced that its board approved a capital infusion of up to 3,144 crore rupees. The fundraise will be done via preferential allotment of fully convertible warrants to promoter group entity Sunbright Mauritius Investments. Now, the Supreme Court has quashed the orders by the Company Law Tribunal and Appellate Tribunal in the SL Infra case, and this after finding AI-generated fake legal precedents being used in that court order. The top court has declared zero tolerance and directed the Bar Council to form a committee on the use of AI in the judicial process. We'll get you more on that. Bank of Baroda has reached an out-of-court settlement in the NMC Health insolvency case. The bank will shell out 5,700 crore rupees without any admission of wrongdoing. Now, this draws the curtains on a long-pending overseas legal dispute. NMC Health and its affiliates had filed a case in Abu Dhabi and the UK. Both those cases have now been settled. 5,700 crores is the payout for Bank of Baroda, the stock down over 4% today. SBI Funds is planning to launch an IPO by the end of July. Sources say the company plans to raise up to 12,000 crore rupees. Over 20 crore shares will be on offer. SBI and Amundi India Holdings will be selling shares via the offer for sale component. Now, ChatGPT maker OpenAI has proposed to hand the US government a 5% stake in the company. As per a Financial Times report, CEO Sam Altman has reportedly argued that giving the public a financial interest is the best way to share the upside of AI. Rachna joins us now with more details. Rachna, possible government stake in OpenAI? That's what Sam Altman seems to be suggesting.
Well, OpenAI has put a number on the table in its talks with Washington, and that number is 5%. The Financial Times reports that Sam Altman has discussed handing the US government a 5% stake in OpenAI, a proposal that emerged out of conversations with the Trump administration. Now, at the company's current valuation of $852 billion, that 5% stake alone would be worth well over $42 billion, making this one of the largest potential transfers of private tech equity to the US government in recent memory. Crucially, this isn't a sudden or an isolated move. These talks have reportedly been running for over a year now. Trump himself said last month that a government stake in a leading AI company would be a beautiful thing, a sign that the idea has had backing at the top for some time now. And there's precedent for it too. The US government already holds a 10% stake in Intel and has made similar investments in IBM and in critical minerals companies and others. OpenAI, for its part, had already floated the idea of a broader public wealth fund, while Anthropic has proposed its own version of a digital dividend. What makes this moment significant that it isn't OpenAI standing alone on this. The proposal reportedly names Google, Meta, and Anthropic as potential participants as well, though it remains unclear whether the government will actually pursue this or whether the other companies will ever agree to give up equity of their own. So for now, Washington hasn't confirmed that it wants the stake, but the fact that OpenAI is the one putting the offer forward before even being asked says a great deal about where the political pressure on America's AI industry currently stands.
Well, Rachna, many thanks for joining us. And if in fact that does go through, this is going to be a big one to watch out for, and it will lead to more concerns when we talk about frontier labs and frontier models. Well, let's move on now to other news that we have been tracking here on CNBC TV 18, and there is plenty of it. Let's bring you the latest after this very short break. The monsoon has officially arrived in Delhi 5 days after its normal onset date. The Indian Met Department said that this is the first time since 2021 that the monsoon has arrived in July. The Met Department has forecast thunderstorms accompanied by rain over many parts of the national capital during the course of the day. Meanwhile, torrential rains have battered Uttarakhand with over 60 roads blocked due to debris. In just 48 hours, several roads in Dehradun were submerged due to severe waterlogging. The Met Department has issued an orange alert for most districts for the next 3 days. And heavy rains continue to lash Mumbai, causing severe waterlogging across the city. A man died after falling into an open manhole during maintenance work in Andheri's Sakinaka area this afternoon. The police said that 3 contractual workers hired by a private agency removed the manhole cover to carry out maintenance work at the location. The man accidentally stepped into the open manhole and fell inside. New Delhi and Tokyo signed their first defense co-development pact during Japanese Prime Minister Sane Takaichi's India visit, marking a significant step forward in bilateral relations. Prime Minister Modi calls Takaichi his younger sister as the two countries reach agreements spanning economic security, artificial intelligence and clean energy. At least 13 people have been killed after a large-scale Russian missile and drone strike hit Ukraine's capital of Kyiv. The strikes caused a residential apartment building to partially collapse. This comes hours after Ukraine's President Zelensky issued a stark warning of a massive assault by Moscow. IT firm Capgemini has shut down its on-campus daycare facility in Bengaluru after allegations of child abuse. The police have registered a case against 5 women caregivers after videos purportedly showing the abuse circulated on WhatsApp. U.S. President Trump's financial disclosures show that he made more than 21,000 stock transactions in 2025. Compare this to his predecessor, Joe Biden, who made just 13. An analysis by the Financial Times shows that Trump made stock purchases worth $1.4 billion in 2025. And that's not all. He made more than $1 billion through his crypto ventures as well. Hormuz is here with more on President Trump's financial disclosures and his equity portfolio performance.
Now, when someone tells you that an individual executed 21,285 trades in a calendar year, you may say, well, that's all right, that's normal course of business. But when somebody tells you that the US president executed 21,285 trades in a single calendar year, that's not only bound to raise eyebrows, but a lot of questions as well. This is just one of the highlights of Donald Trump's financial disclosures. That's not 1 page long, not 2 pages long, but a full 927 pages long that was filed with the US regulators recently. Now, you may wonder whether previous presidents also had similar lengths in their financial disclosures. The answer is an emphatic no. In fact, Vice President J.D. Vance's disclosure is only 17 pages long, and the length of his predecessor, Joe Biden, was only 11 pages long. Now, 21,000 trades were punched in by Trump only in the first year of his second term. In his entire first term, he punched over 500 trades. And Joe Biden, in his full 4 years as president, executed only 13 trades. Now, let's take you through an example of how policy and trading go hand in hand under the Trump administration. On the 23rd of July 2025, the financial disclosures reveal that purchases of up to $5 million were made in all of these companies, the big techs of the US. That same evening, the Trump administration unveiled their AI action plan, and which was supposed to benefit all of these companies, and as a result of which all of these stocks gained for the next few sessions, taking the market higher with them. Now take a look at the individual purchases made by Donald Trump as well in 2025. He made a purchase of close to $70 million in Nvidia. The stock was up 40% that year. He made an investment in Broadcom of around $20 million. The stock was up 50% that year. Microsoft, Apple, Amazon, all of them saw substantial investments. The stocks may not necessarily have gained after his investment, but they were up a significant deal in 2025 as well. Now, a significant amount of Donald Trump's earnings in 2025 came via cryptocurrencies, and that is a full $1.4 billion, and that came via 2 avenues. The majority of it was a $635 million royalty via Celebration Coins and a $500 million income from World Liberty Financial and some other cryptocurrency holdings as well. Now, what is Celebration Coins? Now, that is the entity that is supposed to be behind the Trump meme coin. Now, that Trump meme coin was in the news when it went up to as high as $74 and then came crashing down all the way to sub $2. And as a result, over 7.5 lakh retail investors have lost over $2 billion in Trump-backed crypto ventures.
Hormuz, many thanks for joining us. Now, Apple is reportedly planning to launch at least 5 new iPhone models by the first half of 2027. According to reports, Apple has instructed suppliers to prepare to produce about 10 million foldable iPhones this year. It's also explored Chinese chip suppliers as AI demand strained memory supplies. Foldable iPhones? Well, we'll have to wait till 2027 to find out. And in the FIFA World Cup, a Harry Kane brace rescued England from DR Congo's clutches and powered the 3 Lions to the round of 16. Belgium pulled off a stunning comeback to sink Senegal in extra time, and the US beat Bosnia and Herzegovina to win their first World Cup knockout match in 24 years. Well, that's all the FIFA action, but we will take a quick break and return with the news right here on CNBC TV 18. Stay tuned, we're back with more in a minute.
Hello and welcome to this special edition of Market Masters. On the program today, we have S. Naren, Executive Director and CIO at ICICI Prudential Asset Management Company. Naren sits on top of the largest equity AUM in the country. He, of course, is a known contrarian as well, willing to always put his neck out. Naren, great to have you with us here on the program. Thanks very much for joining us.
Thank you.
Talk to us a little bit about the markets themselves. We are speaking after a while. So why don't you, in that sense, mark to market your views to what is happening in the market at this point in time?
See, clearly the macro is in much better shape than what it was. If you look at the way crude has fallen and the last two days improvement in monsoon in many parts of the country, I think clearly the macro is in much better shape. Unfortunately, we are not part of this AI bucket, which has seen the maximum amount of interest in the last 2 years. And we have to still wait for that AI bucket to either start underperforming or people becoming disbelievers for India to get a big part of the FII flows. And, the domestic flows have been buoyant, and that has ensured that the markets have been static in large caps because bulk of the selling in FIIs have come on the large cap side. So overall, it is a reasonable market. We believe in moderate returns because we don't know what is going to be the long-term impact of AI on different countries. And definitely more constructive than before because of the fall in oil, which removes all the tail risk for the Indian economy. From a valuation point of view, I think large caps are reasonably valued. In mid caps don't seem to be that cheap, and small caps you can always find stocks which are cheap. So, but at the same time, we are still not in a period where you can give a thumping the table call on equity. Over the last 3 years, what has happened is people have been investing only in equity. And in the last 2 years, they have not seen any returns in large caps particularly, and even in small caps to a significant extent. And that is the challenge because over the last 3 years, the amount of money which has come into equity markets, both directly and in derivative positioning, etc., suggests that there has been too much of an interest in equity and too little interest in areas like that.
Okay, the bigger view still, Naren, is that this AI thing, which is red hot, has to cool off for foreigners to really get interested. That's what you're saying, right? In India.
Exactly, because, in those segments, the kind of growth, see, India used to be a growth market relative to the world. And today in all the AI segments, the kind of growth that people are able to show is so much higher than India that bulk of the money comes for growth, and people find that many of the AI companies are showing much bigger growth than India. So the money goes to those companies. So that has to deflate. Otherwise, you still have a situation where bulk of the money will go to all those AI countries and AI stocks. And I think even in those countries, I think it is only the few AI stocks which are growing or linked to AI, like chip companies. Those are the companies which are seeing huge moves. And in fact, if you exclude the moves of the AI-oriented companies like chips and other semiconductors, I don't think the rest of the markets are doing that well, even in those countries.
Yeah. Naren, in India, people have been, of course, trying to look. Is there a way to play this red hot AI theme, data centers, infrastructure, electrification, power, all of that, right? Industrials, basically, generally. And I mean, the rub-off is real. And the ordering, etc., has also been real. So many of these stocks are up, have doubled this year, just this year, 6 months of the year only, right? How do you? What's your view on this part of the market? Power, industrials, the entire electrification theme.
So in my team, there are people who are growth investors who look for primarily growth opportunities. They have actually bet on some of these stocks and had a very good experience. Within the team, I am more defensive, and so I have missed some of these opportunities in some of the funds that I run. See, I believe that, these kind of sectors, if the global AI were to deflate, these would also deflate. So that is something that is a risk which I keep cautioning my colleagues on a regular basis. So, it's unfortunately the real challenge with investing is timing.
And it is very tough to predict how long this AI-related boom will go on, to what extent it will go on. And that is a challenge. If we knew, it would be very easy. Unfortunately, investing is not arithmetic. And that is the challenge we are facing at this point of time. But I would say that these will also fall along with US AI stocks or the Korean and Taiwan companies as and when the boom deflates. But when the boom will deflate, last year I had a view it would happen in 1 year, but it didn't happen. So even today, when I see some of the events like, for example, many of the IPOs which happen in different parts of the world at unheard of very high valuations, I think it should deflate. But they still don't deflate. So just because I think they should deflate in the next 3 months doesn't mean it will deflate in the next 3 months.
When it will deflate, this will also get hit. My question is, at current multiple, even if it doesn't deflate, will you buy these at current multiples? Then they are okay.
See, obviously, my colleagues who are on the growth side, clearly, if you look at it, these are all growth companies. These are not growing at 5 to 10%. They are growing much, much faster. And consequently, what happens is that they will find value, because at the end of the day, if you believe that these are all companies which are going to grow for the next 3 to 5 years, and obviously you will find value. You need the growth mindset and not a defensive value mindset for you to play these themes.
Timing the market is not possible, but definitely looking at value is. What's your sense on the IT space? Everyone's been talking about this for the longest time. At current reckoning, do you get tempted to nibble?
No, actually, where we have nibbled, we are holding, and that is what we have been doing. But there are colleagues of mine, for example, again from the growth side, who don't find the entire growth story of Indian IT services appealing. So they are all underweight. Because see, what happens is, if you look at it from a value mindset, certainly these sectors seem to have value. The trailing PE of these companies have come down to a level not seen of for a decade. So if you have a value mindset, you look at it, but we also are worried that if this lasts too long, that would be a challenge. So with a value kind of fund, definitely we would own these stocks, and we would think about nibbling. But we have been scared because the pace at which all these developments which are happening in AI, and the kind of PEs at which the US listed IT services stocks are trading has been the biggest problem. If the US listed IT services stocks were to trade at Indian valuations, I would have more comfort in buying in Indian companies, because they trade at 2 to 3 PE lower than Indian IT services companies. We find it difficult to do much more increase in weightage, because those companies have all become single-digit companies at this point of time in US IT services. This is the challenge that as investors, we can't look at it only from an India lens. We have to look at what valuations the US investors are giving their own IT services companies. And that has been the biggest worry for us as investors.
That's an interesting one out there. We'll obviously monitor those valuations as well. But just to complete the point on market, you said that you feel a lot more constructive about the macros of the country right now. Irrespective of whether, we participate in that AI trade and there are some names, etc., from a market construct standpoint, what is it that you're liking right now, and what seems attractive to invest in?
The three things that we like is AUM. Not that I have any requirement to raise AUM in the company. My job is to manage public money properly. But the three things we believe is A stands for asset allocation, U stands for unconstrained fund, and M stands for moderate return. Why do we believe in moderate return? Is because of all the risks due to AI, because none of us know at this point of time what AI leads to in India. because if we had expected that when the mobile revolution came, there would be so much impact on productivity because of mobile revolution and what is happening through various ways, we wouldn't have guessed it. So this is what we believe in. So we believe in asset allocation, unconstrained funds, because we believe that at some point of time, the AI boom can deflate. So if you bet on only constrained areas, you can make money in the near term and lose money in the medium term. And moderate return, because we are very confused on yet on what AI is going to do to many of the developing countries. Are all the profits going to be made by only the US companies and the ecosystem around it? Is a confusion we have at this point of time.
Naren, hold your thought there. We're going to take a quick commercial break here, but this very interesting chat, more of it coming up on the other side.
Between large caps and say the NSE 500, because the large caps are not performing. We've seen a smarter rebound in many of these smaller companies, and they're the ones where you are seeing the newer ideas that India is betting on in terms of business models and growth stories. So the breakup between large caps, mid caps, small caps?
See, clearly, if you ask me, mid caps are the most overvalued relative to large caps and small caps. But even in mid caps, my colleague who runs the mid cap fund feels that if you do systematic investing in mid caps, you will be able to make money. But on large caps and small caps, there are clear opportunities. Whether those opportunities are going to play out in the near term, because many of the large cap companies became large cap companies because they are strong. They may be growing slower in the recent past, but I don't think that is necessarily the trend for the long term. See, we have always had these periods where large caps have done badly. If you go to 2016, 17, people said large caps are not a way to invest, but 18 to 20 was a super period for large caps. So you go through these alternating periods, and today we are constructive on both large caps and on small caps. And we believe that there are opportunities. My colleague who runs the mid-cap fund feels that as long as you systematically invest in mid-caps, there is no problem, because the long-term opportunity remains in mid-caps and because they can grow faster. But overall, the challenge is, we don't believe that, the 2 years back when we tried to convince people that we are no longer in a high return world, it was very difficult. Today, when we tell people moderate return, and they should consider investing in debt also through various ways, at least hybrid funds. I think they are more looking at it. But I still think that the Indian investors today have been investing too much in equity and too little in debt, that there is need for much more inflows into hybrid funds so that their asset allocation is made more logical.
I got that. Naren, within large caps, financials is a clear area. We looked at returns, right? PSU, and within the financial space, from 2020 to 2025, I think 2 days back, we looked at numbers. The Nifty Private Bank Index has given a 10% CAGR, and PSU Bank in the same period is some 35-37%. Is there, do you believe there perhaps could be a period where this rotates for a little bit? Not that PSUs have to underperform for private to do well, but what are your thoughts?
No, I think, what happened is in the 2010 to 20 period, the government did a lot of work to reduce the NPLs. The last 5 years, public sector bank returns is a function of the good work done. So that if you look at the NPLs today and look at the NPLs in 2016-17, you'll find that you'll think they are in different countries. So I believe that is the reason for the super performance. But I think going forward, I think it is not going to be only public sector banks. I think the private sector banks have derated significantly that you should clearly expect decent returns from private sector banks as well. If you look at the entire FCNR scheme, which the Reserve Bank thoughtfully brought in recently, I think many of the big private sector banks are likely to get meaningful inflows, and that is going to be a re-rating event for many of the private sector banks. I'm not saying that the leading public sector banks also will not participate. They will participate, but I think the larger banks are going to be a bigger beneficiary of the steps taken by the on the FCNR side, and that is going to lead to the re-rating of the larger banks in the index vis-a-vis the smaller banks, because the smaller banks have got re-rated significantly in the last 5 years, and therefore the scope now is for the larger banks to again re-rate from where we are here.
The large cap sector, financials is one clear. IT you spoke about in terms of just the framework to think about it. Any other large sector which you think is poised in a more constructive way?
Clearly, we are very positive on oil and gas sector because at the end of the day, if you look at the oil and gas sector, the government handled the last 3 to 6 months in a very, very difficult period in a nice way. I think the amount of loss of, oil production led to this increase, and now it has come down. I think the entire government policies which have happened on the oil and gas side should lead to a re-rating in the sector. And it is often an ignored sector by the market because people have not made money in the past. But I think this is a very interesting sector at this point of time to invest.
So if you could, detail a little more in oil and gas itself. Are you looking at upstream? Are you looking at downstream? Or is it the entire sector that you like? And to further the point on commodities itself, do you have a view on any of the metal plays that we have?
So normally we used to invest in metals in the 2010 to 20 and look at China. This time, without China being a part, actually the metal stocks did well. And therefore we missed it because we always used to focus our research on China. And that didn't work out, and that's why we missed it. But we don't think we'll chase it at this point of time. I mean, not that we are reasonably constructive on steel names, but at the same time, I don't think it is a sector to chase at this point of time. In oil and gas, obviously, upstream is the only area where the outlook was very good 2-3 months back, and now it is much worse. But if you look at the rest of it, whether it is refining, whether it is CNG, and as gas prices come down, a lot of gas should come to India. So I think there is a lot of scope in the entire sector. The upstream is the only sector where I would say there would be earnings revision on the downside. But I would say I would say the rest of it. But the upstream sector is possibly the only sector trading at 5, 6, 7 Ps. So overall, I would say the entire sector, because the sector with the downward earnings revision is trading very cheap, and the rest of the stocks have a good outlook for the next few years.
What's your view on gold? I mean, 11% of asset allocation, it's been underperforming for the last few months after a stellar rally that we saw. One would have thought that war-led uncertainty would, lead to gold prices being higher. Do you think the best of returns are behind, or you continue to hold?
See, in 2022-23, we were very positive. In 2025, we turned negative earlier than what was needed. So in 2026 January, when the biggest inflow came into gold and silver ETF, we actually explained that what people were doing at that time is anti-asset allocation. Unfortunately for those investors in January, anti-asset allocation hurt them and they have lost money. Our view is it plays a role in asset allocation. It's a very important role in asset allocation. After the fall in the last 4 to 5 months, definitely it deserves a place in asset allocation. But do we believe that investors should invest in gold and silver ETF? The answer is no. Because if you look at it, the 15% customs duty can also come down. So beyond looking at it from a multi-asset construct where we are very positive on investing in multi-asset, we are not positive on gold, silver standalone at this point of time.
Got it. Nareen, now let's talk about, this. I noticed that you got and you're a champion of multi-asset strategies, right? I mean, I think for the last many years, and now, of course, it's become a big, full industry category. You've come up with a multi-asset active fund of funds, right? So you already have a multi-asset fund. Now, this is a multi-asset active FOF. So there's another layer on top of it, so this will invest in all kinds of funds, right? Not directly own securities.
Exactly. It will invest in all kind of funds. I think SEBI has created this category, which is very helpful to the investor. It is not that you pay much higher expense ratios. The SEBI has clearly created this category and ensured that you can't pay beyond a certain level because you are investing in another fund. You can't. There are clear rules on that. See, our belief, as you know, after 2023 March is that the money has been coming only into equity. And that is very worrying because equity is not a riskless asset class. So we looked at multi-assets. Now we have brought in this multi-asset active fund of fund because it is one of the most interesting ways to invest in equity fund, debt fund, gold and silver. And gold and silver in a smaller way is what we would do at this point of time. And I believe that this is the best way to actually invest for the long term because you get debt, you invest in the debt funds, you invest in equity funds. We take the decision. Our belief after being in this company for a very long time is investors invest in the theme after it has done well. Whereas we can choose to invest in the theme with the best long-term view from here rather than look at past returns. If you look at the history of the mutual fund industry, in 99, 2000, too much money came in tech. In 2020, too much money came. 2007, too much money came in infra. And the last 2 to 3 years, bulk of the money has come in small and mid cap. So we can choose to invest in the categories where we see future returns are likely to be good. So we get the benefit of asset allocation. We get the benefit of active management of choosing what fund is. And then the fund manager independently runs the fund. So we believe that this is one of the best ways to invest for the long term, because the burden of trying to time the market goes down.
Yeah, and this will invest across funds, not just within ICICI funds, or...
Technically, I think we can invest across funds, but are we likely to? We have a much better idea to know what to invest in our own funds. Whether we will choose to invest outside, I don't.
Okay, it allows you to, but you may not. Just one thing, what is the advantage of doing a multi-asset FOF over like just a multi-asset fund? Like, is this another wrapper or are they real tangible benefits? Yeah.
No, there is a clear tangible benefit. In our multi-asset fund, we keep equity level at 65%. And in this fund, there is no requirement to keep equity level at 65%. We can keep it lower. And therefore, you have the benefit of having a much higher variation in equity level, unlike what you have in the multi-asset fund. And so that is a benefit, particularly in a moderate return environment where the role of debt can be higher. We can choose to invest more in debt here than what we could invest in the multi-asset fund which we have been investing in. So we think that this is a superior product for a moderate return environment. It's a superior product for an investor who has been investing too much in equity from 2023 onwards. And it is very unconstrained. So it meets our requirement of AUM. And we believe that in this moderate return environment that we believe in, it is one of the best ways to consider investing. If you believe in very high returns, I think you should choose an equity fund and not consider the multi-asset fund.
Got it. Naren, a great conversation. Thank you very much for joining us. And we covered a fair bit. And thank you once again for being here on CNBC TV 18.
Hello and welcome. You're watching News Center. I am Ashmit Kumar. Now, the Indian government has issued a notice to WhatsApp over its new username feature. The government has directed the company to explain why regulatory action should not be initiated under the IT Act for launching a feature that the government says may increase cybercrime. WhatsApp has been granted 3 days to furnish a detailed response. It has also been asked to put the rollout on hold till consultations conclude. So what are the government's concerns? The notice says the feature, which allows users to reserve unique usernames without sharing phone numbers, could increase cases of online fraud, phishing and digital arrest scams. The government says it may also facilitate impersonation of individuals, public authorities, financial institutions and government agencies. It could also enable identity spoofing. Now, responding to these concerns, a WhatsApp spokesperson has said that the feature is not live yet and will be rolled out later this year. The company also said that high-profile usernames, including those of public figures and government entities, have been reserved to prevent impersonation. It said that these can only be claimed by their legitimate owners. WhatsApp further added, and I quote, "We will limit how many new people an account can contact, block repeated attempts to guess a username, and use systems to detect and remove common impersonation and abuse patterns." Now, under this new feature, a user will need to exact a username of the contact to connect. There will be no public directory or search suggestions. Well, that's the debate that's currently ongoing in social media. Joining us now to discuss this feature with us and, of course, what the implications could be is with us Nikhil Pava, founder of Media Nama, as well as Mishi Chaudhary. She's a tech lawyer and founder of the SFLC. To both of our panelists, thank you so much for joining us. Mr. Pava, coming to you first. WhatsApp says that this is a privacy feature. This will protect the privacy of the users. The government says this could pave the way for identity spoofing and therefore lead to cybercrime. Which is it, or is it both?
So look, Ashmit, I don't, firstly, it's an important privacy feature because quite often we are in groups, and especially women are in groups where their mobile number is getting exposed. Anyone can basically contact them by messaging that mobile number. Now, this is a feature that WhatsApp had in the very beginning that allowed them to access, the people's contact, their address book, and therefore that's how WhatsApp grew, because you don't need to individually add a user. You could just pull the users from the address book itself. So it protects people and protects their privacy simply because you just can't detect someone's number. That's an important feature. It's there in other apps also. Signal has it. Telegram has implemented it badly because you can search users, you can add users without their consent. There's very little way to protect users on Telegram. WhatsApp has done a very smart thing over here by also adding a PIN code of sorts, which you need to use in order to be able to contact someone whose username you might have. So I think all in all, this is a good thing from a privacy standpoint. From a spam standpoint, firstly, there was one concern that, okay, anyone can have an international number and then mailed as someone else. You have a lot of messages coming from Cambodia, from Pakistan numbers as well. That's try to spoof Indian identities. In this case, it'll actually mention which the country is that someone is messaging from. So it's impossible to. So it's possible that someone can detect, hey, this person's not really from my country. When they get that message, just the way they could detect it from the mobile number earlier. In terms of identity spoofing, WhatsApp has very clearly said, and I also had to validate my user handle from my Facebook account because I have a verified Facebook account. So not everyone can take an identity, but yes, it is possible to get similar identities, like just by adding another character to my name, someone can spoof that it is me. This is not a new problem. I've had friends who are founders of companies whose employees have been contacted saying, just by taking a photo of that founder from the web and asking for money, saying, I lost my wallet, this is my private number, can you send me money on this UPI address? So that's been happening previously as well. It doesn't solve this problem, but people will have to be more wary about it. And perhaps WhatsApp should roll out a feature that prevents similar names as well. Although, honestly, how do you, let's say, protect one Amit Gupta when there's another? Then there are, not to disparage anyone, but there are thousands of Amit Guptas in our country, right? So how do you deal with that problem? Nobody can solve. So I don't think this is a new problem. I don't think this creates new problems as far as my understanding goes. And I think the government is overreacting because we knew this feature was coming almost 20 months ago. So this is a knee-jerk reaction from a bureaucracy responding to social media outrage by ignorant people, in my opinion.
Sure. Let me take that across to Ms. Chaudhary. Ms. Chaudhary, again, Nikhil Pava, they're saying that this is not a new problem. The government was in the know 20 months in the making. That username, again, is not something that is alien to the online universe. What I want to ask is that, I want to put this in context. Recently, the government had very grave reservations about Telegram, which also, again, has a username, has no linkage with the phone number. And there was a Home Ministry report which called it the new dark web. That's the concern that the government seems to be coming from, that, look, if there are usernames, and if usernames can perhaps impersonate, let's say, a State Bank of India customer care support, and what will that do in cases of financial fraud, in cases of phishing, in cases of perhaps seeking personal information? Is that a valid concern being expressed by the government?
So I think the idea that it's only a concern with WhatsApp seems to be the problem here. There are other apps. They did express things with Telegram, but prohibition is not the answer. The username itself is a net privacy gain because it reduces the need to share phone numbers, which expose us to all these SIM swap attacks, phishing, account takeover. Phone number has also become a chief identifier for us, for everything, for banking, for government platforms, financial accounting, etc. So overall, the feature itself is a net privacy gain. I don't discount that there aren't concerns. Scams, financial or otherwise, are rampant in India, and those exist irrespective of the platform which we are using. However, for the government to say, now for each feature, any kind of a company needs to get permission from it or have a discussion about it, destroys the claim about ease of doing business. There is no legal basis for Métis or anyone else to come and interfere at this stage to say, oh, you'll have to run these features by us. Now, in light of increased cyber crimes that are happening and the large-scale user base WhatsApp has in India, there absolutely is a requirement for transparency, for the safeguards which are going to be introduced. What a new connection made through the sharing of usernames does, there should be some security checklist, etc., for verification. However, WhatsApp itself said that this is going to be gradually being rolled out based on what the feedback is. I think the major issue right now is we expect government to be intervening at every stage into a business decision. And also, like in the Telegram prohibition matter, which you referred to, the courts to come and say, oh, we're going to ban this platform, as if that was going to actually solve the root cause of the problem of leakages, and they could not be done on other platforms. We soon saw some other platforms were being used for doing this. That's why I agree with Nikhil about the fact that policy positions cannot be knee-jerk reactions. Oh, we're going to stop this. You must ask us for permissions because somehow we're going to be experts about it. Having said that, I do think more transparency from WhatsApp is definitely required. Meta also owns other properties. It's not just WhatsApp. There is going to be at least concerns, and rightly so, from users that what are you going to be doing about data sharing practices amidst these usernames which are going to be common between Facebook, Instagram, etc. So more and more transparency and tougher questions need to be asked to the platform. However, this approach of, oh, please get permission from the government, that starts a slippery slope of executive deciding what is the design feature a business can introduce or cannot introduce. And I must say, we are really trying to be an attractive place for businesses, and this doesn't bode well for any business.
Sure. Let me take that thought across to Mr. Pava. Mr. Pava, before we go any further, just a fundamental question from the language that has been used by WhatsApp so far in public communication. Is it clear to you whether there is any linkage or the linkage continues between a username and the need for a phone number? Will that linkage continue? That was one of the concerns by law enforcement agencies, that we can't ensure traceability if there is no linkage. Is it clear? Could you help us understand if there is a linkage, if the requirement for a phone number continues?
Right. So, this traceability issue, frankly, is that the government is raising is basically out of ignorance, because you cannot get a WhatsApp username without a mobile number being used to register your account. So traceability exists. It's just that it's not publicly available. And to the previous question that you asked, WhatsApp already has verified business accounts for businesses. And yes, they need to, but that doesn't stop scammers from trying to impersonate businesses. So we need better awareness about the fact that, there are verified business accounts on WhatsApp. And perhaps the company needs to do a better job of basically informing people to only sort of believe verified accounts that are trying to contact them. WhatsApp also has privacy problems in the sense that are spam related problems that they need to address, right? So I should have an option like I do on my mobile number to prevent people who don't have my mobile number from messaging me on the platform. Because my number gets spread around, I get 20, 30 random messages every day. And that is spam. Business users also abuse the platform for spam. There is no mechanism from blocking people from adding you to their broadcast lists. And then anyone can start Meta AI in a chat without your consent. So these are all privacy and spam related issues that WhatsApp needs to solve. The government, honestly, is, I think, just overreacting and out of ignorance. And like Mishi said, I completely agree. It's extremely uncomfortable when every time a platform or any company rolls out a product, do they have to go and take permission from the government of India? Or if someone raises an issue, the government of India just does a knee-jerk reaction, hauling them in. This is how China operates, for example. I don't think this is how a democracy operates. So it's extremely worrying that a ministry out of its depth, not a progressive ministry in any way, is just constantly trying to show that they're doing something. They're playing a ping pong of notice, basically. They're sending one notice now, then WhatsApp will respond, then send another notice, then they'll call WhatsApp for a meeting. They're just showing to perhaps, the public or the PMO that they are doing something. What is the outcome of all of this? Just time wasted. They have no legal basis to stop this.
Well, speaking of the legal basis, let me take that question up with Ms. Chaudhary. Ms. Chaudhary, this notice has been issued under the IT Act as well as the IT rules. Now, we've seen in the recent past blocking orders in some cases, in cases of Telegram, even temporary ban orders being issued under the IT Act. Is there a legal provision that also empowers the state, the center in this case, from blocking future planned rollouts of certain features, provisions, certain aspects, certain business decisions being taken by companies?
So I think one of the major issues is Section 79, which was supposed to be a safe harbor for businesses, has now done enough of twisted gymnastics and subordinate legislation, which we call the IT rules. They have been reincarnated into so many various versions, each version providing government ability to control whatever they would want in terms of what goes online. None of this actually really tallies or tracks with the parent act or the intention why these sections or these laws exist. But because we continue to have different versions of IT rules, everything is jammed into it. And then most platforms are being forced to comply with rules which are just arbitrarily made. Courts have been very, very slow in addressing these issues. So the gray area created by rolling out subordinate legislation, which does not require a full parliament to discuss, and changing how the entire act was supposed to be operating, has now given government this odd power where whether it falls under rules or not, they just come up with things to control. So to answer that, this notice, as it has come, it cannot be used to direct a platform to pause a privacy feature that other messaging apps already offer. The notice issued by METI effectively means that, oh yeah, anytime you come up with something, it's going to be vetted by the government. And again, this does not tell us what the law is. Any business or even the users, what they want is they want predictability of law, and they do want to be protected by the problems a platform creates. Spam is likely to be one of the more significant practical challenges with username, but it will also depend on how WhatsApp implements discovery, messaging rules, what is it that mass unsolicited contact, all of these things. If the platform doesn't address, users will flee. They have many other reasons to actually use other apps such as Signal, much more privacy protecting, no interference from businesses. But if WhatsApp cannot actually control all of these problems, users have all the choices to flee this. However, using IT Rule 79 to always come and say, oh, we have a problem, we don't like it here, and we are just going to use some version of law and stop the platforms, it doesn't bode well for either the lawyers who will advise, because you can never say the interpretation of law won't change.
Sure, Ms. Chaudhary. We're running out of time. I'll come to both of our panelists for a quick comment. Mr. Pava, coming to you first. We have new leadership at the helm of WhatsApp. Kunal Shah, how big of a challenge will this be for him as he takes over, especially one, dealing with this issue of username, and second, on the issue of spam, like you've repeatedly been pointing out. So far, the spam regulations in India, they're more geared towards telecom companies, not so much for participants of the digital ecosystem, the intermediaries, the social media companies. Will he now have to be seen doing more to fight spam, to fight cybercrime on WhatsApp?
No, so look, I think obviously online platforms need to do much more to fight spam, and they have mechanisms to do this. But there is a larger ecosystem that needs to be looked at, spanning telecom to banking to payments, how SIM cards are issued. Because remember, you need a SIM card to be able to use WhatsApp to basically spam someone, and people move from SMS to WhatsApp for the video calling feature. So the KYC is still broken, and so I'm saying that it's a broader ecosystem problem, not just a telecom problem, not just a WhatsApp problem, but also how banks deal with these kind of large transactions and money that gets moved out of them. But I want to just take it to a bigger issue, actually, Ashmit. When Telegram was banned in India, John Russell, who writes the Asia Technology newsletter, wrote a piece called Shooting the Messenger. Across the globe, the news about Telegram being banned for exams was broadcast everywhere, right? And what we're seeing in the startup ecosystem is that there is a freeze in investments, in seed, pre-seed, and Series A investments to quite an extent. Companies are struggling to raise Series A. The kind of signals that our government is constantly giving out by arbitrary implementation of policy, by even with, for example, I don't agree with the real money gaming ecosystem, but the entire retrospective taxation that's come in, this sends a very, very bad signal to the global investor community that India's laws are, as I say, manmarzi. Like it's what Varun Grover calls kabutar ki barfi, just whimsical, so to speak, right? So that's the impression that people get, and no one wants to invest in a whimsical in an economy with whimsical governance.
So that's, of course, the bigger message that Mr. Pava warns that the government may perhaps want to pay heed to before taking such measures. I'm afraid I'm completely out of time. Ms. Chaudhary, Mr. Pava, thank you so much for joining us with your perspective on this hotly debated issue. With that, it's time now for going into a very short break, but don't go anywhere. We'll come back with a special conversation with Harshpati Singhania, only the 4th Indian to be appointed chair of the International Chamber of Commerce. Stay tuned. Welcome back to News Center. Now, Harshpati Singhania, the chairman and managing director of JK Paper, was recently appointed as the chair of the International Chamber of Commerce. He's only the fourth Indian to chair the century-old ICC. I caught up with Mr. Singhania to ask him about what it means to have an Indian at the helm when it comes to shaping trade and investment rules. Let's listen in.
First of all, I represent ICC first. And along with that, I'm proud as an Indian to be at that. I think the larger point here is that coming from India, I am perhaps able to understand the sensitivities and the issues of emerging economies and the issues they face and their businesses face a little more insightfully. And therefore, ICC is, a rule-making body. It sets standards and protocols. For example, way back in the 1930s, ICC was the advocate or the setter of, the voluntary standards on advertising. We have standards around Incoterms by which contracts are made between two parties. There are, terms which govern customs, including things like the letter of credit, etc., the way documentation is done in finance. So ICC really puts together rules, protocols, standards, and tries to harmonize them cross-border. Therefore, having somebody from the global south, from India, will be helpful in advocating the case of emerging economies even more.
Just to bring in the global context here, Mr. Singhania, you're of course taking over. We're looking at disrupted supply chains. There's geopolitical uncertainty. There's also fragmentation and in some cases even weaponizations of trade. What, to your mind, as you take over at the helm of ICC, will be first on the agenda as you assume office?
A good question. See, ICC is non-political and it doesn't have any say on the geopolitics. But where it has a say is in providing greater certainty for trade and business. So therefore, if there are rules of engagement, so let's take an example. Today, there's a huge trade finance gap between availability and what businesses would want. Now, for example, there's an estimate that ICC has made that there is a gap of as much as $100 billion for Africa alone. Now, a trade finance gap doesn't have as much to say whether there is a geopolitical crisis or a conflict going on. We need to work on other things. So, for example, ICC has been advocating relaxation or modification in Basel III norms because the current norms put greater provisioning which prevents or impedes trade finance being available. Number two is, for example, ICC would work with multilateral banks like the World Bank, the Asian Development Bank, and bring them together to work closer with commercial banks. Now, it is in these spheres that ICC can bring in heft. Along with it, really speaking, ICC's role is even more important today because you need more predictability and certainty in a very turbulent world, as you rightly said. So some of these rules of engagement, some of these interoperable standards, harmonization across borders are some of these things where ICC becomes far more relevant.
E-commerce moratorium now, that's where of course all countries have agreed to not place any customs duties on digital goods when we're talking about software downloads, e-books, digital streaming. That's due to lapse. There is still some conversation to be had before we get a global consensus on that. India has had some apprehensions on how this causes perhaps a revenue loss for the developing world, a consumer of these digital goods. Your thoughts on that?
So this is an important issue, and ICC has been advocating that it should not be allowed to lapse, and it has in fact been renewed annually, as you know. India had an apprehension, and rightly so, but I think today, the last ministerial we have seen in the last discussions, India has adopted a far more flexible view and a more open approach. In fact, there have been other countries which have had a more rigid view on this. And ICC will continue to advocate the fact that we should have harmonization on these standards and a continuity of this.
Let's also get some color as far as AI is concerned. That's the big talking point across a lot of boardrooms. We're increasingly seeing, with the increase in capital allocation, we're increasingly seeing risks as well of unmitigated development and deployment of AI. Now, law and regulation usually lag technology. That is a thumb rule, but it could have very real consequences this time around as well. I want to get your thoughts. Is it better to have at least some kind of fragmented regulation rather than to wait for a harmonized framework that all countries can agree to?
I think you raise a very vital issue. There is no doubt, because AI is evolving so rapidly, literally changing by the day, there is a need to have some, if I may say, quote unquote, order, which means some rules, some kind of framework. I don't want to call it only regulation. I want to call it a framework on the basis of which things will happen. Let's rewind a little bit to say what these frameworks, when we talked in terms of ICC's formation in 1990 or 1919, or in terms of how WTO evolved from GATT, it was really about trading of goods primarily. Now we have services, we have entire data flows across borders. There has to be, so like there were certain regulations, I'm not saying restrictions, but there were regulations around how goods could be traded, what are the protocols, what are the standardizations that will happen. There has to be some kind of standardization and governance framework around AI. And that is where ICC is already evolving its thoughts in setting that in motion. ICC will work with people across the globe on doing this. So the danger in fragmentation, I mean, yes, each country has to have something, but the danger is fragmentation. Because if each country will have a different protocol, if each country will have standards which are different, then there will be many more challenges. And AI is not going to stop evolving. Data flows will not stop. Therefore, we need to seriously work towards having some kind of a framework which will enable this.
Well, Mr. Singhania there giving insight into his priority list as he takes over at the helm of the International Chamber of Commerce, talking about international trade, AI regulation, sustainability, what will be on top of his mind at the helm of the ICC. But that's all the time that we have. It's a wrap on this edition of News Center. More news and updates will continue right here.
India's private banking space is seeing a big talent churn. In fact, there is a musical chairs of sorts playing out at the CFO's desk of some of India's top private banks. Axis Bank's loss is HDFC Bank's gain, with Puneet Sharma being appointed as CFO. On the same day, Bandhan Bank announced the resignation of its CFO Rajiv Mantri, who is likely to fill the vacant CFO slot at Axis Bank. This is, of course, yet to be made official. These two exits are only the latest in the leadership churn at India's banks. And it's not just CFOs, by the way. HDFC Bank has named former Finance Secretary and the former Chief Election Commissioner Rajiv Kumar as the next part-time chairman after the controversial exit of former chairman Atanu Chakrabarti, who resigned citing differences in values and ethics. HDFC Bank has the added uncertainty of CEO Sasi Jagdishan's reappointment, which is yet to be finalized. In another surprise move, Kotak Mahindra Bank has said its CEO Ashok Vaswani will not seek a second term, and the search for his successor is currently underway. So what is behind this big bank churn, and will more follow? What will the next set of leaders have to shoulder in terms of growth priorities coming off a Goldilocks period of strong profitability, healthy balance sheets? What will need to be the recipe to grow in a competitive and challenging environment? Well, those are the questions that our editors will answer on the playbook today. Joining me is, of course, our banking expert who had a breaking and a banking evening yesterday, Ritu Singh. She joins us from Bangalore. We're disrupting the boys club today. And of course, also with us, Prashant, Nimesh and Sriram. Yes. Guys, thanks very much for joining us. Well, musical chairs, no musical chairs, at least in our studio today. But let's decode the CFO chair that Indian banks, and more importantly, HDF.
We should also do a musical chair.
Are we doing it or not doing it? What are we doing?
Not doing it. So let's do this.
Okay. Our own version of musical chairs going on.
Now you decide who the question was.
So Ritu, as the boys settle into their new roles, let's decode the changes that we've seen. HDFC Bank choosing yet another bureaucrat to lead its board.
Yeah, and I hope, our boys have left one chair empty for poor Bandhan Bank that still doesn't have a CFO appointed. But, actually, Shireen, I think there are three. Okay, there is space on the table.
But not enough bureaucrats left.
Okay, yeah, I think there are three different stories that are playing out here simultaneously. And, together, I think they fit together quite beautifully. I mean, one, of course, is governance. That is the HDFC Bank story playing out. The second is the question of succession planning. There you have your Kotak Mahindra Bank. And the third is this scarcity of proven leadership talent. And that explains that CFO musical chairs we've been seeing, across Nimesh, Prashant, Sriram, and in the banking system, of course. But let's start with the CFOs, because I think that is actually a talent story. The right question to really ask, Shireen, is why are banks just going around hiding from each other, not looking outside? And I think the answer is because there's very few experienced bank CFOs that fit the bill today. A modern banking CFO is not your accountant. I mean, their role is just across, capital, liquidity management, your Basel norms, your investor relations, looking at treasury with all that's happening, interfacing with RBI, looking at audit and supervision, technology investments, even M&A, and I can go on and on. I mean, effectively, they're the CEO's co-pilot, and there are very few executives in the country with that breadth of experience. So, banks largely hiring from each other because talent pool, I believe, is limited. Now, coming to HDFC Bank, your question on the choice of Rajiv Kumar as chairman, and I think it's quite interesting, opting once again for this seasoned bureaucrat as chairman rather than, someone from banking or corporate, as many in the market had expected. But look at Rajiv Kumar. I mean, he understands government, of course. He's been in the finance ministry intimately. Regulation, he served on the RBI board. Banking, he was the DFS secretary. He was on SBI's board. Governance, of course, and having overseen all of these big banking policy changes during his time as at the finance ministry. So, yeah, on paper, he checks all the boxes and pretty much what HDFC Bank needs today. But then, of course, there's this other school of thought. If you had such problems with a bureaucrat like Atanu Chakrabarti, why bringing in another one? Interestingly, let me also point out, Rajiv Kumar and Atanu Chakrabarti, by the way, were contemporaries in finance ministries, I think around 1920, or so. Both were serving at the same time. Rajiv Kumar as Finance Secretary and Atanu as the Economic Affairs Secretary. I just want to add that, governance also seems to have become a valuation issue, which was probably not the case 10 years ago so much. But now governance directly impacts your market cap. I mean, look at Yes Bank, look at IndusInd or RBL Bank, and now HDFC Bank even caught up with their embargo. So markets price governance almost like NPAs. So appointments are very, very significant.
No, you're absolutely right, Ritu, and many important issues that you brought up there. And I think the talent issue that you brought up in terms of why we're seeing actually this musical chairs playing out is an important one, because it's not just being reflected at the CFO desk. It's also being reflected at the CEO desk. And we'll come to that in just a bit, because that's the other big issue. And that's the other leadership change that we are going to have to contend with. Shashi Jagdishan's reappointment, of course, is still. Of course, you have a whole slew of other banks that are slated to see leadership changes in 27, well into 2028. And of course, the big one that's coming up again in the private sector space is Kotak Mahindra Bank, that surprise decision of Ashok Vaswani not to seek a second term. But, we'll address that in just a second. But Nimesh, let's also look at it from a valuation point of view, because Ritu was pointing out that we've actually seen all of this being reflected in the stock performance as well. But let's change the lens and the color a little. Private sector bank leadership changes. Let's look at the market performance now. Stock performance of private sector banks versus public sector banks. And that story is actually interesting, because it's the public sector banks that have the edge.
Oh, absolutely, Shireen. So I just looked at the last 5-year return CAGR for PSUs versus the private banks, and it is shocking. Hands down, PSU banks have outperformed the private banks, and the chart will come up. All the PSU banks in the last 5 years have minimum given, 15, 20, 30% CAGR returns last 5 years. And if you compare that to the private banks, it's been a rank underperformance from the private banks. Imagine HDFC Bank has given virtually zero returns in last 5 years. Kotak Bank, hardly any returns. There were some banks which have given negative returns as well. This is a list of PSU banks, all in double digits. And look at private banks. Axis Bank and ICICI Bank, the only ones who have given 10 to 15% returns. The rest all are either negative or flat. So, that speaks for the volume that in the last 5 years, and it's not only the stock market returns, even in terms of performance, if you look at the PSU bank's performances, it's been much, much better, and they've improved on all metrics in the last 5 years. So again, from a performance point of view, of course, PSUs have outperformed. But the big question now is, which I keep asking to a lot of investors as well, is the best of PSU priced in, and is the worst of private banks priced in? You're seeing a lot of churn in the private banks. It looks like they're all now, coming to the terms of taking the right person and starting to deliver. So from a valuation point of view, it looks like the worst of private is priced in and the best of PSU is priced in.
Shireen, I looked at, just to amplify Nimesh's point,
yeah.
I looked at the Nifty, there's a private bank index, there's a PSU bank index. So Nimesh talked about all these stocks, right? But if you just take the index close as of 2020 and today's close, today intraday rate, not very different from the close. The private bank index CAGR is 10%.
Yeah.
That is from 2020 to today. The PSU bank index CAGR is 37 point something. 10, 37 is humongous difference.
In the private banks, if HDFC Bank and ICICI Bank don't perform, it's going to show up in the Nifty index as well. So it clearly shows up that PSU banks have massively the private banks.
Yeah, but Prashant, let's just take that conversation forward, and we'll get Ritu to chip in as well. Nimesh raising a very interesting point there, which kind of also takes me back to the conversation that I had with Uday Kotak, and he said, the era of lazy banking is over, and we're all going to have to fight for our business. We're all going to have to fight for relevance and market share and growth and profitability as well. So to Nimesh's point, is the best of public sector banks behind them, and is the worst of private sector banks behind them? Things stabilizing now as far as IndusInd Bank is concerned with the leadership change. The hope is that will, there will be certainty now with the chairman being appointed at HDFC Bank, with the reappointment of the CEO as well. What's the street penciling in there, Prashant?
Shireen, I was thinking where to begin, right? Should we begin in 2014, 2015? I think we should begin in 2015, right? This is when the famous AQR, Asset Quality Review, started. But the point is, we did not, I mean, and of course, these PSU banks have been doing this in a way. The program itself ended, but they've been kind of, on the mend, so to speak, fixing their books, recoveries, etc. for the last, I mean, actually since that time, since 2015. And I'll come to why that is also, the recoveries part is also a big portion of why PSU bank earnings have grown much faster. 2017-18 was, of course, IL&FS, then there was COVID. And it was not as if by that time the PSU banks had fixed all their problems. I mean, the AQR, etc., was still going on. And then there was recapitalization. Then the interest rate cycle turned sometime in 2021, 2022. And of course, I mean, we all know what has happened since. If you just sort of distill it through three things, why the PSU banks have done so well compared to compared to private sector banks, it's three areas. Market share gains. This is a point where which many have made forcefully, and I think it's well acknowledged. People like Sridhar Sivaram has been making that point on our channel and others as well. That if you look at home loans, if you look, retail assets, basically, there has been 10 to 15% swing in market share between what was with private, which has now gone to PSU. That is number one. Number two, credit costs was this problem, right? When there were phone banking and NPAs, and I mean, just go back 10 years. It's now completely changed. Yeah. Actually, if you look at credit costs, they are across PSU banks, they are comparable to what we see with private sector banks. And the third, which is return ratios. If you look at return on assets, I mean, it's like almost, it's incredible. Any PSU bank, and we speak with so many PSU banks on every quarter, right? The 1% number is almost universal now. Most PSU banks are at 1%, getting to 1% or above 1%, right? So I think these are the three areas. And the ROA point is important because it kind of conveyed to the market that the PSU sort of model is sustainable and it is profitable, it is doing well. And I think these are the three areas why they kind of outperformed in such a large way. Now to the question, right, is the outperformance here to stay? I'll just make a couple of points, which is not anti-PSU, but maybe, this is, I mean, the better way to put it is, everything in markets is at some level cyclical. So is the cyclical, is that going to play out here between PSUs and private sector, and maybe private sector rotates back into the limelight once again? So 3 or 4 points. PSU banks funded the credit growth, the market share gains that we were talking about, right? Where did that come from? So one argument is that PSU banks funded these incremental credit growth by drawing down on SLR buffers, right? Which is essentially, government bonds, which they have to hold on their books by law. So if you look at the PSU bank SLR levels, in FY22, that number was 25%. It's close to 20% now, which is they can't go very much below that number, 20%. So that buffer of funding credit growth through these cheaper SLR deposits is no longer exists. Yeah. Number two, the ROA, headline ROA, 1%, great. But if you look at this, the composition of PSU and private bank earnings, the PSU bank earnings are a much larger proportion of these PSU bank earnings is treasury profits and recoveries, which they have been undertaking from written off assets, etc., right? So the core ROA, if you compare private and PSU, while the PSU is still 1%, but the core ROA is, some would argue, is structurally better. I mean, it's not dependent on, the movement in GSECs, government security, GSEC yields, GSEC prices, or recoveries, etc. Number 3, PSU banks operate at a much higher leverage, 12 to 17 times, which means that a small increase in credit costs can have an outsized impact on the return on equity, return on assets, etc. And of course, the last point is pretty clear, which I think Nimesh has been making as well, which is valuations now. PSU banks, compared to their own history, which is 10, 15-year history, they're about 1 standard deviation above their, that mean. And the private bank index is, of course, now almost 1 standard deviation below the 10, 15-year mean, so to speak. So I think, as I said, this is not to say that this is, the era of PSU bank outperformance is over, but maybe it's...
I think we should also remind that it's not always just a binary of PSU versus private, because there are now umpteen new sources of credit. NBFCs are there, so many other. Ritu's story from a couple of weeks ago, I think, 3 out of 4 personal loans are coming from
So entire
NBFCs.
financial landscape has changed in the last 15 years. I think the data will come up.
You said it last week, right? The branch is not a moat.
No, exactly. The branch, that is still done now. It's over. But the amount of NBFCs which have gone up in the last 15 years from 30 to 130, that's the kind of, landscape has changed. So,
yeah, and also, if you look at NBFCs, right? Yeah. 10 years back, maybe 15 years back, 10 years back even, most NBFCs were like single segment NBFCs, right?
Absolutely.
There was Shriram Transport doing truck financing, Shriram City Union, which did, other kinds of loans. There was Chola. There was
only doing gold.
There were sector champion, sector specialists. Now everyone is doing everything.
Everything, yeah.
Everybody's
Much like
chasing
all of
gold
us.
loans. Everybody's chasing.
Much like all of us.
I think I would just add to this, PSU versus private debate. I think even COVID, you brought up the AQR and that cleaned up this corporate banking stress for the system as a whole. And I think following that, the COVID period, I think it brought some sort of leveling across these two banks. I mean, for instance, if you look at it, private banks, during that phase, very focused on retail banking, heavily focused on retail banking. Of course, there were niche banks like IDFC, etc., that were looking at corporate. And for public sector banks, the advantage, to my belief, has also been a wider base, so to speak. So when we saw that cycle of unsecured stress, for instance, playing out, the MSME stress playing out, private banks were, disproportionately hit. And that's why you're seeing some leveling coming in there. And while you say the branch banking method is probably dead, I disagree. I mean, the fact that public sector banks have this wide reach into every nook and corner of the country, the private banks today cannot really compete with fintech or no fintech, reach. That's helping in the CASA mobilization story. So the deposit competition is very much alive in the system. Feet on street, all of that is also making the case for these PSU banks come back. And of course, the pressure on margins. As we see this talent churn, as we see this leadership change taking place at India's private sector banks, what will the leadership challenge really be? What will they need to prioritize? We've talked about the competitive landscape changing. We've talked about the rise of NBFCs, the emergence and dominance now of fintechs and so on and so forth, the fight for deposits, the financialization as far as, assets are concerned. What will the priorities need to be as these new leaders get down to business? Well, exactly as Uday Kotak said, right? The days of lazy banking are over. It's not going to be that branch strategy and the deposit strategy alone that's going to get them there. I mean, look at payments, for example. That's been completely taken away from banks. I mean, not only do they lag behind, I mean, it's been cornered by players like PhonePe, like GPay, like Paytm. I mean, banks are nowhere in the picture in the top UPI players and the top payment players. So, the days of lazy banking, yes, they're over. And I think technology, that's the biggest moat is, people like KV Kamath have repeatedly ad nauseum been saying, if you're not going to innovate with the times, I mean, you can forget about being the stars of the yesteryears. So, I think the expectation of these new CEOs is very much changed. And that also gets us to the point of how, the kind of transition we're seeing in what was the face of banking. I mean, for almost 20 years, if you look at it, from the HDFC banking giants, Aditya Puri, Deepak Parekh, your Uday Kotak at Kotak Mahindra Bank, Chanda Kochar at ICICI Bank, then Sandeep Bakshi later, Shikhar Sharma at Axis Bank. I mean, there was very little movement for, more than a decade or so. And now almost every large bank is looking at changing leadership, suddenly. Kotak Mahindra Bank, that's one we're talking about in the midst of that CEO churn. Axis Bank, Amitabh Chaudhary's term ends in December 2027. IDFC First Bank, B. Vaidyanathan, again, his current term will end in December 2027. ICICI Bank, Sandeep Bakshi goes away in 2028. And of course, Sashidhar Jagdishan, he's up for renewal in October. So all of them face CEO renewal discussions. And, PSU banks have always had to deal with this challenge, of very short 3-year, 4-year CEO tenures. But for private banks, I think this is unprecedented churn. So, for 2 decades, you had this sector defined by these iconic founders and iconic banks, the Puris and the Kotaks of the world. But, I think a Big Four story has moved on. I think Lata very beautifully, just to wrap this, captured it beautifully in her piece. She said these HDFCs, Kotaks and Axis, they're seeing their dominance dilute because performance, because governance issues and succession, all of that is weighing on valuations. And increasingly in brokerage notes, as Nimesh will also point out, you're seeing, these new names emerge. Federal, RBL, CSB, these are the next winners. These are the names that Dalal Street is looking at and betting on as favorites.
Just to add to what Ritu is saying, Shireen, the other thing
and just before you come in, Nimesh, I think that point is often underappreciated. The fact that at public sector banks, like all government organizations, you have a leadership change every 3 or 4 years. So it's inbuilt into your DNA, and there is no one person who kind of becomes the glue that holds everything together. You have the system learns to move on, and perhaps that has been the advantage and the disadvantage, both as far as the public sector is concerned, but clearly as far as the private sector, across sectors, not just banking, but succession has been a challenge, for Indian corporates, Indian corporations, and that seems to be playing out even as far as the private banking story is concerned. Yes, wrap-up comments from each of you. Nimesh, I'll start with you.
Shireen, the other point which we haven't discussed, but that's going to be a big challenge, is the fact that in the last 1 year, we've seen massive FDI inflows into the Indian financial sector. Now, RBL is sitting on, Etihad is sitting on RBL Bank, basically Emirates. There is, Shriram Finance sitting on $4.4 billion of FDI capital. And that's going to be another challenge for the private banks, right? So, again, my point is, when we look at from a market perspective, forget those days of four times price to book for HDFC Bank, 9 times price to book for Bajaj Finance. Those days are over. That's history now. At best, what they can do is from 1 to 1.3, they can go to 2x or 2.5 times price to book. So that is something which investors have to keep in mind, that those glory days of 4x, 5x price to book is done with. And there's going to be massive competition in the financial sector from here on.
Shireen, I was talking to one of the entities which got money off the thing. And I said, well, you've got money. And there was one leg of re-rating which happened. I said, what next? He said, ab bada mushkil hai yahan se. Ab time lagega. Because, and the basic reason was, they said, bahut competition hai. So it's not going to be easy.
It's not going to be easy. Look at the landscape now. The entire landscape has changed so much. I mean, there are so much of listed entities, small finance bank, NBFCs, housing finance companies, fintech companies.
Yeah.
There's so much of choice. Investors are spoiled for choice now in the financial space, Shireen.
And one more googly.
That's what separates. That's what separates the winners, right? When it's never easy, to actually get going, I think that's what separates the winners. Yeah, you were saying, Prashant?
No, I was just on a lighter note. Ritu was listing all the names, right, from the yesteryears, and of course, they're all active now. But I remember this is. A friend who's now pretty senior at one of the banks, he once told me long back, he said, bank CEO should be the banks which do well, you will notice the CEOs are always Punjabi, So I asked him why. No doubt he was a Punjabi himself. So he said, you need that aggression. You need to go out in the market, sell. Of course, he was talking to South Indians, so I took that point.
But that is the problem that a lot of people are also citing, right? Like bringing these bureaucrats on board one by one. I mean, there's nothing. I personally don't think anything wrong with it, except that they will probably ask for 3 Xerox copies of everything. Beyond that, I think but there is one problem in the message that it is sending, that there is enough room for subjective sort of, interpretation of the regulations, so much so that only a person who has the contacts and the context can navigate this, right? Somebody cannot grow into that position and be able to navigate the regulations. I think that's not a great message to send, because if bank after bank is hiring a bureaucrat, a former bureaucrat, I think that's not a great message to send. We need to have more transparent, regulations. And second thing that Ritu also hinted at, right, the CFO nomination, the hirings, right, trying to hire from everywhere else. We really need this. Grooming should be a part of it, because you need to have, I think, Sridharan, banking veteran.
I'll just tell you one thing, Shriyam. In HDFC Bank's case, right, it's not as if this is not a new. By the way, the current the new chairman was also, he was a financial services.
No, I agree. What I'm saying is,
in his early years, it had Shamla Gopinath as.
But like we have been discussing, the landscape is changing so fast. You have your Jupiter and your FI money, etc., coming out with products which like absolutely reimagining the finance as an industry. At that point, like I said, we can avoid with 3 Xerox copies for everything.
No, and I think that links back to the point, the first point that Ritu made, that you may perhaps have to look at talent very differently as this landscape changes. I mean, and I go back to that point that Uday Kotak was making. He said, look, why should you consider only banks as your competition? Why do you not consider an Apple Pay or a Phone Pay or a Google Pay equally as your competitor, as your competition? So perhaps we need to change the lens, and maybe that, the point about regulation, etc., comes in there as well. And maybe get people who are not necessarily bankers, to play with this ecosystem as well and be a part of this ecosystem as well. But all of that is up for discussion and debate. But I can tell you, the last 24 hours, it felt like fast and furious. There was breaking news. There was plenty of changes that we had to deal with. All of that in real time, and I'm glad that we broke it first, courtesy Ritu here on
back to our own
and of course,
we all should be back.
Yeah, actually, let's do that. Let's go back to our places. Yeah.
And okay, fine. They're swapping places.
We will see you next week from these positions.
We started with musical chairs. We'll end with musical chairs. No musical chairs on CNBC TV 18. We're all pretty much still here and have been for many, many years. But for all of us, for now, thanks very much for watching. Stay tuned. Join us again on another episode of Editor's Playbook. We'll see you then. Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty gained nearly 1%, led by IT stocks today. Bank stocks underperform. The rupee weakens by 14 paise against the dollar, remains above the 95 mark. The CEO of Palantir, Alex Karp, launches an attack on the business model of frontier AI labs like OpenAI and Anthropic, accuses them of imposing a wealth tax on businesses by charging high fees for AI models. Shares of software companies rebound worldwide. The Nifty IT index gains over 4%. Qatar reports positive progress as United States-Iran wrap up indirect technical talks in Doha. No signs of a breakthrough on the peace deal yet. Tehran says a communication channel with Washington will be set up to flag MOU breaches. The new U.S. Fed Chair Kevin Walsh says inflation is too high and pledges to get it back to 2%, stops short of giving any hints on the upcoming rate decision, which is later this month. Shares of Bank of Baroda decline over 4%. This after the lender settles the NMC Health insolvency case for 5,700 crore rupees without any admission of wrongdoing. This draws the curtains on one of the longest-running overseas legal disputes. The promoter of Jana Small Finance Bank is ready to sell stake to repay 700 crore rupees to PE firm TPG Asia. Sources say Jana Holdings is also considering a potential merger with a peer bank. The centre pulls up WhatsApp over its user ID feature rollout plan, directs the company to explain why action shouldn't be initiated under the IT Act for a feature that may enable cybercrime. Orders the platform to hold off rollout till consultations conclude. The Supreme Court quashes orders by the Company Law Tribunal and the Appellate Tribunal in the SL Infra case after finding AI-generated fake legal precedents, declares zero tolerance and directs the Bar Council to form a community on the use of AI in the judicial process. OpenAI proposes handing the U.S. government a 5% stake in the company per a Financial Times report. CEO Sam Altman reportedly argues that giving the public a financial interest is the best way to share AI's upside. A 5% holding in OpenAI would be worth roughly over $42 billion currently. IT firm Capgemini shuts down its on-campus daycare facility in Bengaluru after allegations of child abuse. Police register a case against 5 women caregivers after videos purportedly show them abusing children, and those were circulated on WhatsApp. New Delhi and Tokyo signed their first defense co-development pact during Japanese Prime Minister Sane Takaichi's India visit. Marks a significant step forward in the bilateral ties. Prime Minister Modi calls Takaichi's younger sister as the two countries reach agreements spanning economic security, artificial intelligence and clean energy. A hurricane brace rescues England from DR Congo's clutches, powers the team to a pre-quarterfinals of the FIFA World Cup. Belgium pulls off a stunning comeback to sink Senegal in extra time. The US beats Bosnia and wins their first World Cup knockout match in 24 years. Well, all of that coming up for you, but let's start with the day's market action. Benchmark indices outperformed in trade today, with the Nifty ending above the 24,150 mark. The Nifty's gains were fueled by ICICI Bank and top IT stocks. So the Nifty up 170, 580 higher on the Sensex. But look at the Nifty IT. Remember, it's been under pressure, rebounding today, up by almost 1,200 points, a gain of 5%, and that snapped that 3-day losing streak that we've seen. All stocks in the IT index closing in the green. Mangalam standing by to wrap up the market action for us. It's a good day for IT stocks rebounding sharply, Mangalam.
Well, second day of the July series, and it's been a good one, led by the IT stocks in today's trading session. After the underperformance, one would have thought, the IT stocks are likely to continue to underperform, especially given the sort of decline that we saw in KPIT and a lot of the mid-cap IT stocks in yesterday's trading session. Today was entirely different. The comments coming in from, the Palantir CEO has led to a rally in the enterprise IT softwares, and our stocks were no different. Infosys up 6%. We saw a big move in Telecom as well. TCS, all of them. So all in all, the IT index ended about 5% higher, and that caused the Nifty to close above the 100-day moving average for the first time in the last many days. The only index that took a bit of a backseat today was the Nifty Bank, which was down by about 0.1%. We saw some traction in the consumer names in the auto stocks as well. Among the top gainers in the broad broader markets, which had a better shade in terms of advanced decline ratio, 2 stocks gaining for every one that didn't do well. We had the autos and auto ancillary stocks which saw some gains. Exide up 7.5%, Sona, BLW up 7%, Tata Tech, Apollo Tyres, Persistent Systems and Force Motors were among the notable gainers. Among the stocks that lost in trade in the financial space, Bank of Baroda definitely stood out. Along with their first quarter update, they made a settlement of nearly 5,700 crores for the NMC deal, and as a result of which this outgo has taken the stock lower by about 4%. And apart from that, some of the stray gainers that we saw from the broader markets, backed by strong volumes, we had the likes of IFGL Refractories, IQ Lighting, PC Jewelers and Waterways Leisure, which had a bad open post listing yesterday, which bounced back with a gain of almost 10%. All in all, a good day of trade, the one that went to the bulls.
All right, Mangalam, many thanks for joining us and staying with the rebound that we saw in IT stocks. Here's why. Palantir CEO Alex Karp launched a scathing attack on the business model of frontier AI labs like OpenAI and Anthropic as costs skyrocket. In an interview with our sister channel CNBC, Karp highlighted that the fight among AI companies was no longer about intelligence, but more about control. Taking a dig at his peers, Karp said that they had fundamentally mispriced services, adding that token-based model have left enterprise customers frustrated and empty-handed. Here's that viral CNBC interview with Palantir's Alex Karp.
In this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
Well, Alex Karp, responsible for the rebound that we've seen in IT stocks globally. On to the big global story of the day. Qatar reports that positive progress has been made between the US and Iran as they wrapped up their indirect technical talks in Doha. Let's bring you up to speed on the latest developments. Mediators, Qatar and Pakistan, said that they held separate meetings with delegations from the US and Iran on different aspects of the MOU. The statement also said that both nations have agreed to continue talks in the coming days after the funeral of former Iranian Supreme Leader Al-Hormuz. Speaking to reporters, US Vice President J.D. Vance said that both sides negotiated on the commercial traffic through the strait. This as Tehran maintains that the strait will be managed by Iran and Oman. Vance added that negotiations on denuclearization will take place in later meetings. This comes a day after Trump said the talks on the nuclear issue are progressing well. In the oil market, Brent crude prices down for the fourth straight week as indirect negotiations progressed. Shipping movement in the Strait of Hormuz continues to recover gradually. Financial firm ING said that 11 vessels crossed the waterway yesterday.
The technical negotiators are sitting down with the Iranians, with the Qataris, and with others in Doha. You know, talking about some of the details here, making sure commercial traffic really does. It's already started in an amazing direction. We've got now oil at $68. We've got gas prices starting to come down, but really just ensuring that we continue to make the progress on that. And that's what they're focused on. And then, you know, we're going to, obviously, we're worried about the nuclear issue. We're going to start talking about that. So right now the talks are going well.
U.S. Vice President J.D. Vance there. Now, U.S. Federal Reserve Chairman Kevin Warsh has reaffirmed the central bank's 2% inflation target. Speaking at the ECB forum, Warsh admitted that inflation has been too elevated in the U.S. and that the Fed will deliver price stability. The new Fed chief also said that some of the staffing for his 5 task forces in the central bank will be announced next week.
Expectations of inflation over the first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed. We're going to deliver price stability in the U.S.
Well, that's the Fed chief, and the ECB conference also saw European central bankers weigh in on the inflation outlook and interest rate decisions. ECB President Christine Lagarde said high inflation has made a rate hike in June necessary, while Canadian Governor Macklem maintained that inflation is critically above the bank's target in the country. Take a look.
When you have the underlying inflation indicating that it's also trending up as well, and that you're only going back to your 2% target at the end of 28, with a number of things happening in our inflation outlook, which includes, the market expectations in particular, you have the obvious decision, and it was so obvious that we had a unanimity decision within the board of the governing council.
There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and is off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict.
The benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, the economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy.
Well, global central bankers, they're weighing in on the rate and inflation trajectory. The centre has pulled up WhatsApp over the username feature rollout plan. The government has directed the company to explain why regulatory action should not be initiated under the IT Act for launching a feature that may enable cybercrime. Remember, this has not been launched yet. WhatsApp has been directed to not roll out this feature until consultations with the government are concluded. As per the government's WhatsApp username feature may be used for online fraud, phishing, digital arrest scams and impersonation attacks. So that's the concern. WhatsApp, of course, also responding, saying that they are mindful of the concerns and, of course, always stay within the law. The government is reportedly planning to sell stakes in some of its largest state-owned companies. According to Bloomberg, LIC, Hindustan Zinc and several state-run banks are among 8 companies identified for stake sales in the coming months. The report also said that a share sale in LIC alone may raise as much as 10,000 crore rupees, while Hindustan Zinc could fetch another 5,000 crore rupees for the government. Remember, this has been something that the government is looking at this point in time, diluting some stake across a bunch of companies, and that gives it significant revenue-raising measures. The promoter of Jana Small Finance Bank is ready to sell stake to repay 700 crore rupees to private equity firm TPG Asia. Sources tell cnbc TV 18 that Jana Holdings is also considering a potential merger with the peer bank, but no decision has been taken. Jana Holding owes TPG Asia roughly 700 crore rupees for 37,000 non-convertible debentures issued in May of 2023, which were due on the 30th of June. Shares of Zee Entertainment traded lower in the trading session today. This after the company announced that its board approved a capital infusion of up to 3,144 crore rupees. The fundraise will be done via preferential allotment of fully convertible warrants to promoter group entity Sunbright Mauritius Investments. Now, the Supreme Court has quashed the orders by the Company Law Tribunal and Appellate Tribunal in the SL Infra case, and this after finding AI-generated fake legal precedents being used in that court order. The top court has declared zero tolerance and directed the Bar Council to form a committee on the use of AI in the judicial process. We'll get you more on that. Bank of Baroda has reached an out-of-court settlement in the NMC Health insolvency case. The bank will shell out 5,700 crore rupees without any admission of wrongdoing. Now, this draws the curtains on a long-pending overseas legal dispute. NMC Health and its affiliates had filed a case in Abu Dhabi and the UK. Both those cases have now been settled. 5,700 crores is the payout for Bank of Baroda, the stock down over 4% today. SBI Funds is planning to launch an IPO by the end of July. Sources say the company plans to raise up to 12,000 crore rupees. Over 20 crore shares will be on offer. SBI and Amundi India Holdings will be selling shares via the offer for sale component. Now, ChatGPT maker OpenAI has proposed to hand the US government a 5% stake in the company. As per a Financial Times report, CEO Sam Altman has reportedly argued that giving the public a financial interest is the best way to share the upside of AI. Rachna joins us now with more details. Rachna, possible government stake in OpenAI, that's what Sam Altman seems to be suggesting.
Well, OpenAI has put a number on the table in its talks with Washington, and that number is 5%. The Financial Times reports that Sam Altman has discussed handing the US government a 5% stake in OpenAI, a proposal that emerged out of conversations with the Trump administration. Now, at the company's current valuation of $852 billion, that 5% stake alone would be worth well over $42 billion, making this one of the largest potential transfers of private tech equity to the US government in recent memory. Crucially, this isn't a sudden or an isolated move. These talks have reportedly been running for over a year now. Trump himself said last month that a government stake in a leading AI company would be a beautiful thing, a sign that the idea has had backing at the top for some time now. And there's precedent for it too. The US government already holds a 10% stake in Intel and has made similar investments in IBM and in critical minerals companies and others. OpenAI, for its part, had already floated the idea of a broader public wealth fund. While Anthropic has proposed its own version of a digital dividend, what makes this moment significant that it isn't OpenAI standing alone on this. The proposal reportedly names Google, Meta, and Anthropic as potential participants as well, though it remains unclear whether the government will actually pursue this or whether the other companies will ever agree to give up equity of their own. So for now, Washington hasn't confirmed that it wants the stake, but the fact that OpenAI is the one putting the offer forward before even being asked says a great deal about where the political pressure on America's AI industry currently stands.
Well, Rachna, many thanks for joining us. And if in fact that does go through, this is going to be a big one to watch out for, and it will lead to more concerns when we talk about frontier labs and frontier models. Well, let's move on now to other news that we have been tracking here on CNBC TV 18, and there is plenty of it. Let's bring you the latest after this very short break. The monsoon has officially arrived in Delhi 5 days after its normal onset date. The Indian Met Department said that this is the first time since 2021 that the monsoon has arrived in July. The Met Department has forecast thunderstorms accompanied by rain over many parts of the national capital during the course of the day. Meanwhile, torrential rains have battered Uttarakhand with over 60 roads blocked due to debris. In just 48 hours, several roads in Dehradun were submerged due to severe waterlogging. The Met Department has issued an orange alert for most districts for the next 3 days. And heavy rains continue to lash Mumbai, causing severe waterlogging across the city. A man died after falling into an open manhole during maintenance work in Andheri's Sakinaka area this afternoon. Police said that 3 contractual workers hired by a private agency removed the manhole cover to carry out maintenance work at the location. The man accidentally stepped into the open manhole and fell inside. New Delhi and Tokyo signed their first defense co-development pact during Japanese Prime Minister Sane Takaichi's India visit, marking a significant step forward in bilateral relations. Prime Minister Modi calls Takaichi his younger sister as the two countries reach agreements spanning economic security, artificial intelligence and clean energy. At least 13 people have been killed after a large-scale Russian missile and drone strike hit Ukraine's capital of Kyiv. The strikes caused a residential apartment building to partially collapse. This comes hours after Ukraine's President Zelensky issued a stark warning of a massive assault by Moscow. IT firm Capgemini has shut down its on-campus daycare facility in Bengaluru after allegations of child abuse. The police have registered a case against 5 women caregivers after videos purportedly showing the abuse circulated on WhatsApp. U.S. President Trump's financial disclosures show that he made more than 21,000 stock transactions in 2025. Compare this to his predecessor, Joe Biden, who made just 13. An analysis by the Financial Times shows that Trump made stock purchases worth $1.4 billion in 2025. And that's not all. He made more than $1 billion through his crypto ventures as well. Hormuz is here with more on President Trump's financial disclosures and his equity portfolio performance.
Now, when someone tells you that an individual executed 21,285 trades in a calendar year, you may say, well, that's all right. That's normal course of business. But when somebody tells you that the US president executed 21,285 trades in a single calendar year, that's not only bound to raise eyebrows, but a lot of questions as well. This is just one of the highlights of Donald Trump's financial disclosures. That's not 1 page long, not 2 pages long, but a full 927 pages long that was filed with the US regulators recently. Now, you may wonder whether previous presidents also had similar lengths in their financial disclosures. The answer is an emphatic no. In fact, Vice President J.D. Vance's disclosure is only 17 pages long, and the length of his predecessor, Joe Biden, was only 11 pages long. Now, 21,000 trades were punched in by Trump only in the first year of his second term. In his entire first term, he punched over 500 trades. And Joe Biden, in his full 4 years as president, executed only 13 trades. Now, let's take you through an example of how policy and trading go hand in hand under the Trump administration. On the 23rd of July 2025, the financial disclosures reveal that purchases of up to $5 million were made in all of these companies, the big techs of the US. That same evening, the Trump administration unveiled their AI action plan, and which was supposed to benefit all of these companies, and as a result of which all of these stocks gained for the next few sessions, taking the market higher with them. Now take a look at the individual purchases made by Donald Trump as well in 2025. He made a purchase of close to $70 million in Nvidia. The stock was up 40% that year. He made an investment in Broadcom of around $20 million. The stock was up 50% that year. Microsoft, Apple, Amazon, all of them saw substantial investments. The stocks may not necessarily have gained after his investment, but they were up a significant deal in 2025 as well. Now, a significant amount of Donald Trump's earnings in 2025 came via cryptocurrencies, and that is a full $1.4 billion, and that came via 2 avenues. The majority of it was a $635 million royalty via Celebration Coins and a $500 million income from World Liberty Financial and some other cryptocurrency holdings as well. Now, what is Celebration Coins? Now, that is the entity that is supposed to be behind the Trump meme coin. Now, that Trump meme coin was in the news when it went up to as high as $74 and then came crashing down all the way to sub $2. And as a result, over 7.5 lakh retail investors have lost over $2 billion in Trump-backed crypto ventures.
Hormuz, many thanks for joining us. Now, Apple is reportedly planning to launch at least 5 new iPhone models by the first half of 2027. According to reports, Apple has instructed suppliers to prepare to produce about 10 million foldable iPhones this year. It's also explored Chinese chip suppliers as AI demand strained memory supplies. Foldable iPhones? Well, we'll have to wait till 2027 to find out. And in the FIFA World Cup, a Harry Kane brace rescued England from DR Congo's clutches and powered the Three Lions to the round of 16. Belgium pulled off a stunning comeback to sink Senegal in extra time, and the US beat Bosnia and Herzegovina to win their first World Cup knockout match in 24 years. Well, that's all the FIFA action, but we will take a quick break and return with the news right here on CNBC TV 18. Stay tuned, we're back with more in a minute.
Bangalore is really like the valley. Yeah, it is like the valley. Kerala is beautiful.
Where are for the food?
The food everywhere.
Everywhere.
And it's all.
I used to be
it's all
vegetarian.
good. It's so diverse that you could like have an entirely different experience. You know, going from one part of India to the next. So yeah, so it's like really being in different countries at the same time.
California,
Yeah.
the best part is
Yeah.
when you have oak trees
Yeah.
and pine trees,
Yeah.
like Monterey,
I know.
like you saw
I
over
know.
there. With artificial intelligence, I think we're seeing probably a shift that is even bigger, more encompassing. It's way bigger than a SpaceX, way bigger than an Anthropic, way bigger than a ChatGPT. There was already 6 search engines public at the time.
Yeah.
And Google showed up in '98, very late to the game. But the movie was rolling credits. Google shows up to search and says, oh, okay, we'll do that.
Yeah.
And now look at today.
Yeah.
All the other search engines are dead. OpenAI and Anthropic that have already shown up to the party and changed the game because they are the ones to watch.
How does China fit into the global party?
If you would have asked me 10 years ago that question, I would have said China's really good at copying US
Yeah,
technologies.
yeah.
today what they've done is they're actually pioneering certain ways of using technology.
And what's looking exciting to you from the framework's point of view from India?
With AI, it's the same thing in India. You have distribution in India. That is your wedge, your key advantage. It's not the model, it's distribution, 1.4 billion people. If you look at Jio, what they did, they came in and developed 4G and replaced the entire 3G networks that everybody else had. So with that, I would encourage a lot of entrepreneurs, start building on UPI, building within that framework, because I think it's going to keep exporting to other countries. Don't think that American-centric technologies always win, because you can win domestically in India, but you can also start exporting, like UPI. You can start exporting these great innovations to the world.
Hello and welcome to the special edition of Young Turks. I'm Shireen Bhan. We're talking to you about all things entrepreneurship, and we're coming to you from Silicon Valley. Joining me now on the program is someone who's had a ringside view of the many shifts and changes that the Valley has witnessed. And of course, he's now put it all together in his latest book. It's called Blue Shift, and it puts together a 7 framework signal to help us understand the companies that are going to be winners. Steve Harmon, thanks very much for joining us on CNBC TV 18. And, it's great to have you join us here in the Valley.
Thank you. I appreciate that.
So let's start by talking about the big changes that we're seeing here in the Valley and compare this to the many significant consequential shifts that you saw while you were out here.
It's interesting that every 10 or 15 years, we see a major platform shift. Whether it was PC to mobile to cloud to AI, we've seen these every 10 or 15 years. With artificial intelligence, I think we're seeing probably a shift that is even bigger, more encompassing, going to replace a lot of communications, commerce, and even content. So it's a bigger shift than the past ones. I think it's going to, like a dinosaur, eat the others and come up with something new.
Well, speaking of something new, what we are seeing here today are these mega IPOs. We're seeing trillionaires being minted, and, the value has changed completely. You're invested in, you bought into the SpaceX IPO as well. Holding on to it?
Holding on to SpaceX. I think I've looked at Elon's pattern over the last 30 years and said, he enters a platform shift at a certain time and he remakes an industry. I think it's early people are sort of defining what SpaceX is now, and they're trying to figure out, is it something in the future? I think it's becoming something in the future. I'm holding on for that opportunity that I see he's building towards right now.
Are you going to go all in on Anthropic and OpenAI?
I think it's, sometimes as an investor, you might want to make a bet on one or the other, like bet on a horse. I think it's a track bet with both. They're two different horses in the different racetracks. I believe both are going to be very, very successful. We've seen that in the US and even internationally. They're starting to make those inroads into what I believe is the end game. And what is that? Workflow. That's like that. They're going both into workflow. And you've seen those deals they've done with private equity to invest and to have that reach into that last meter, which is that relationship between the computer or the interface and the customer. That is where the value is. So both of them are very smart, and they've made that those inroads now. Have they done it yet? No. They've just done the joint ventures. But you and I and all of us are probably using either Claude or ChatGPT in some way, and we like it. And it's changed our behavior. It's an interface shift. That's one of the blue shift signals, is interface shift. We're now typing and chatting with something, not a chatbot, but more like a companion that helps us do things. And before we know it, we're depending on them. So that's very different than a nice to have. These have become need to have.
You're right in pointing out that these are behavior shifts that we're also starting to see happen. But that was one of the signals that you want to talk about as part of the 7 framework. What are some of the others?
In 40 years, I went back in time and analyzed what are the things that fire when we have a platform shift or a blue shift. What are these 7 signals? Developer gravity is one of them. I mean, a lot of people in business did not used to look at developer gravity. What does that mean? It means developers in software are actually building things on top of that new layer, that new technology. And we've seen that before with like the very first the days of the PCs and Macs back in the 70s. They started building applications for those two pieces of hardware. And back then, nobody cared. Nobody looked at it. In the 80s, 90s, late 90s, we started seeing the web. People started building web applications, websites. Amazon was born out of this. I mean, if you can think about what value is created, look at Amazon alone is just one example of when you see a developer gravity into web development, then what can be triggered and what value can be made from that. Amazon, Google, they're the result of web application development in the new on that interface, the web. Here we are with artificial intelligence. It's a whole nother layer, replacing the web. And what will happen here? That's the exciting part, is I think we're in probably a 20 to 30 year at least blue shift into this whole new replacing of commerce, content, and communications globally. It's way bigger than a SpaceX, way bigger than an Anthropic, way bigger than a ChatGPT, way bigger than a Geo, as I say in India. It's way bigger than all of them, because if you look at the big picture, like looking at the Earth from space, you start to see, wow, there's something going on. It's not just one country, one company. It's multinational, multidimensional. And that is the exciting part and the challenge at the same time.
Well, you know, since we are talking about this being a multinational kind of breakout moment, let's talk a little bit about India and what's looking exciting to you from the framework's point of view from India.
The key to India is, I think, most of the world looks at models as being the way to get into the next phase of this platform shift. Anthropic or OpenAI or some other frontier model, right? Or hyperscalers like Google, Azure, Google Cloud. They think that's the way to get in. But that's the wrong framework. The way to get in is this rule I have. Context is king, but distribution rules. Let me explain that. Context is what the AI is all about. It's what the web is all about, context, really semantics. When I invested in a company that developed AdSense, which Google acquired, I was investing in the context they had around matching a web page to an advertisement. That was context. There was a value, right? With AI, it's the same thing in India. You have distribution in India. That is your wedge, your key advantage. It's not the model. It's distribution, 1.4 billion people. If you look at Geo, what they did, they came in and developed 4G and replaced the entire 3G networks that everybody else had. Yet incumbent hesitation cost everybody else, their customer. Geo came in and on the customer. Got 100 million customers in, I think, 170 days or something. And from there was no looking back. So when you have distribution, you have a key advantage. And that's what I think India has. It should really build on that. And there's other aspects to it as well. And we can talk more about that.
No, and so I know that you've done some research on the companies that you're going to be watching out for from an India point of view.
There's a few in there, and I encourage everybody, the free reports, they can download them on blueshift.world. But I want to really speak to the heart of the Indian entrepreneur. I hope that they get encouraged to not only be doing technology for multinationals, but doing technology for themselves, for India, for themselves. Just like you're seeing happening in China with, Tencent, Alibaba, all these other companies came out of China, and they started from zero. 30 years ago in China, there was no web companies. I was there. 6 million people online. They're just, in China. Now they're leading ways. India has the same thing they can do. What are the key ways that Indian developers and entrepreneurs can do this? Number one is, don't think you're just working for a Google or a foreign national, the hyperscalers. Or look at the unified payment interface, UPI, because they're already exporting that, right, to 7 different countries. This is so valuable because payments is actually the most valuable piece of the whole shift. In any shift is payments. Owning the customer intent with their wallet, not their talking points like a Google search, but their wallet speaks louder than their Google search. So with that, I would encourage a lot of entrepreneurs, start building on UPI, building within that framework, because I think it's going to keep exporting to other countries. It's early enough where the Great South, especially, but even Europe and other countries, they don't have that yet. India is the only one that has this. It's so valuable. I hope that India recognizes UPI as a key weapon to go global. Secondly is this, we're going to go into the age of what I call it, we all know AI agents, right? AI agents are multinational. They can be. not just national. So certainly there's sovereign AI. Let's build for India or China or US, within our borders. AI agents speak all languages. I would encourage Indian entrepreneurs, Indian companies to start building AI agents that are multinational by design. Day one, okay? And use UPI, use these as examples to inspire you. Like, how did they do it? Look at the strategies on how they did this. And then say, how do we do this with our AI agent? And I think we'll have billions of these agents floating around the world doing things. And we won't know if they're from India, from the UK, from the US. That, I think, is a key opportunity, because India already has more than 20 languages, right? But imagine if its AI agent could be hundreds of languages because it's AI. I would encourage people to really look at AI agents multinational.
Well, that's an important point that you make, and what could perhaps be something that India could leverage as an advantage going forward. But here in the US, what's looking exciting to you from the blue chip perspective?
In the US, it's kind of fun watching this. It's almost like a UFC match.
Yeah.
With more than one guy in the ring, they're fighting each other. You know, Google's and your OpenAI's and your Microsoft, they're all jumping in and punching.
Not just outside the White House.
Right, yeah, they did that as well. I mean, that's how big the game is. It's literally that big. They're all fighting each other. It's kind of nice to watch it. It's almost like a wrestling match, WWE, where there's craziness going on. So it's so early, we don't know who's going to win yet. We don't even know. Google who knows? These platform shifts, blue shifts, anybody can come out a winner. Google came out a winner in 98. There was already 6 search engines public at the time.
Yeah.
And Google showed up in 98, very late to the game. But the movie was rolling credits. Google shows up to search and says, oh, okay, we'll do that.
Yeah.
And now look at today.
Yeah.
All the other search engines are dead, long dead. We've all forgotten their names. Okay, Google's still here. So could Google also lose? Potentially, yes. Just because you bundle in AI doesn't mean you've won. Microsoft bundling AI with Copilot and things like this, but doesn't mean you win, because you and I, all of us as end users, we have a preference. We want the best solution, right? And I've heard it mumblings in boardrooms and in enterprises already. They're forced to use one model and they want to use a different one. So they're supposed to use this one from the company's, a workflow, but they're all really using their own personal one because they prefer that model. So I think it's still up in the air in the US. That's why it's exciting. You can be a $1 trillion company like a Google or an Apple. I mean, Apple would be a great example. Look at them. Now they're using Google in their AI. I mean, who would have thought, right?
Yeah.
Who would have thought? Steve Jobs probably wouldn't. Who knows if he would have proved that? Because he was at odds with the Google guys for decades.
Yeah.
So I don't know. It's up in the air. It's exciting. I don't know who will win. I really think we're going to see surprises, like we saw Google come in '98, like a late entrant to the party and change the party. I think we're going to see surprises. I mean, look at Anthropic.
Yeah.
We couldn't even spell that word 5 years ago.
Yeah.
Now we're like trying to type it out. Anthropic. Oh, there's the R word.
Yeah.
And here it is. We're talking about this company.
Yeah.
And Claude. What is that?
Yeah.
4 years ago, what's Claude? Is this some French guy?
Yeah.
We don't know, but now today it is. So these are two, OpenAI and Anthropic, that have already shown up to the party and changed the game because they are the ones to watch in the whole frontier model.
Yeah.
And what they do is going to be interesting. They can displace a Microsoft, a Google, an Apple, anybody. What could you do, Shreen, with an interface if you say, find me all the best movies ever about these topics and things? It can create an interface for you, and suddenly you have a Netflix replacement. And it's Anthropic doing it, because all you're doing is putting an interface on top of a database of movies. Where are the limits for this model?
Yeah.
There aren't any. Same thing with payment. I mean, there's so many areas, right? You can do communications, payments, all these areas. So it's really exciting to be watching this stuff and being part of it. I mean, globally, not just the US.
Yeah, and that's what I want to talk about. China, and what's exciting in China, and how does China fit into the global party?
China is interesting. I think a lot of Americans, it's a sort of like a love-hate relationship sometimes, because most of the products we consume globally are made in China. At the same time, we have hackers on China, hackers in the US. They're going at it like this, and some we can't sell certain chips to China, on and on, right? These sort of tug of war between national and governments. At the same time, China has surprised me. I think if you would have asked me 10 years ago that question, I would have said China's really good at copying US technologies, copying Facebook, copying all the others. That's what they did. And I was there when there was nothing happening in China in '98. I mean, zero. And I've watched it all the way through, okay? Today, what they've done is they're actually pioneering certain ways of using technology, not only web, but AI. And that's interesting, and also a good model, I think, for other countries, India included, is don't think that American-centric technologies always win, because you can win domestically in India, but you can also start exporting, like UPI, you can start exporting these great innovations to the world and grow globally. And I think that's what, to me, the web has always been about borderless. AI is the same thing, and I think technology-wise, it's cross-border. It's always the governments that get into the ring and fight each other, and the companies, they're scrapping it out.
Yeah.
But it's a very exciting time, I think, right now in the next even 5 to 10 years, super exciting, because when something is shifting, everything's in flux. It's like a new world. Nobody's planted flags yet.
Yeah.
Nobody's won.
Yeah.
You can't name the winners yet. You really can't. And that's when there's opportunity.
You know, so if I were to ask you to sum up for us something that entrepreneurs sitting here in the US or in India or in China should kind of be mindful of as the big megatrends to build on to kind of find their place over the next 5 to 10 years, what would those be?
I think you need a wedge. Okay, wedge is a way in. And if you look at the 7 signals in blue shift, there's different wedges. Interface shift is a huge one. When we went to a web search box with blue results to a conversational interface, that replaced the idea of blue links. And Google knew it. That's why the founders came back to Google, you know, after they're off their yachts. They came back and let's fix this ship. You need a way in. You need a wedge. So I would be looking, what's my wedge? You need one. If you have two or more, you have something special. You need one to start with. Find a wedge, be really good at that wedge. Interface shift, cost collapse. Like if costs have come down dramatically, take advantage of that. Like in inference costs, take advantage of that. If you have to use Chinese models or international models for your development, yes, take advantage of that cost advantage in the models. Find a wedge. You need a way in. Like a little foot in the door. You know, the door doesn't close, you stick your foot there and okay, I'm in.
Yeah.
And once you get in, get another wedge. So you can have cost collapse, distribution, developer gravity, capital flood, which is investors. But you need one to get in. Focus on one and be good at that. Establish yourself and go from there.
Well, you know, what are the kinds of companies that you're investing in today backed by the thesis that you have?
Oh, boy. I just got done advising a company that was doing consumer AI search, and they switched their model to be enterprise because as an advisor...
That's where the money is.
That's what I said. Look, I mean, they knew it, but it's sexy to want to dethrone Google.
Yeah.
Yeah, we're going to be Google. And I've heard a lot of entrepreneurs say that. This is the Google killer, or this is the Geo killer, whatever you want to fill in the blank, right?
Yeah, yeah.
Instead of thinking that way, think about how do I change this whole game by not playing football, but cricket. I'm going to let them play football. I'm going to go play cricket and be good at this.
Yeah.
And ignore that field. Be on this field.
Yeah.
That's how you win. You focus on your field, not theirs. And in a platform shift, you do it by using the new tools.
Yeah.
You know, it's like using cannons versus spears. Let them use the spears. You start using cannons and, you know, and stuff, that kind of thing.
Yeah.
You want to use the new tools. That's the key. So that company pivoted to enterprise. Another one is I'm building actually my own thing called Flow Information, where we take and distill, not summarize, but distill information and give executives and investors managing quite a bit of capital, we give them a unique chief of staff briefing where it says, very similar to what Bloomberg may do, but also more personalized.
Yeah.
Like you wake up and say, these are the action steps for today. Not the news, but the action steps. Because I think we're in this place where you can mix and match the various tools available and create entirely new things. I mean, there's others that, I'm looking at to invest in. Some of them are like companies established, but making a shift. But I'm really more a fan of seed level, the idea stage, where two people sit down and go, what could we do?
Yeah.
And they write it out on a napkin over a coffee or something.
Yeah.
And then you go, that's the exciting part. And whether it works or not, but that's where the genesis is. That's where I love to invest and be part of.
You know, so do you believe that we're on the cusp of seeing an explosion of more napkin writing and companies being created in this era?
I think if you're in the napkin business, it's a good time because in the coffee business, the coffee shops, because a lot of entrepreneurs are going to meet, you know, they can't afford office spaces. Meet in a coffee shop with your co-founder. Technical on one side, business on the other. That's the ideal mix. Okay. I don't know if in India, if you have Reese's peanut butter cup, but here we have these things called Reese's.
Yeah.
There's chocolate and peanut butter mix and you go, how does that work?
Yeah.
But it does. So you got to have your chocolate and your peanut butter and get that mix when you found a company and then go from there. But yeah, coffee shops, I mean, keep the craziest ideas that you have, write them down. Jeff Bezos did this. He had like 20 something ideas that he wrote down before he started Amazon. Online bookstore was just one of them.
Yeah.
Okay. And he left a very high paying job to do that. But write down 20 ideas and then the ones your friends don't disagree with, go with that one. If everybody thinks it's a great idea, don't go with that one.
Yeah.
Because that's consensus. You go with the one that's the craziest and go with that one.
Yeah, so go with the crazy ideas.
Go with the crazy idea.
And of course, we can hear all of the World Cup excitement that's currently underway here in the US as well with soccer. But Steve, thank you for making the trip and thank you for joining us on
My
Young
pleasure.
Turks. It's been an absolute pleasure to have you with us.
Thank you. Appreciate that.
Well, that's it on this edition of Young Turks. From all of us here on the team, thanks very much for watching. Do send us your feedback. We always like to hear from you. We'll be back with more newsmakers and headliners. Till then, from all of us here, goodbye.
Grabbing the headlines, but data is powering the revolution. At the heart of that transformation is NetApp, a $30 billion intelligent data infrastructure leader, helping enterprises unlock the value of their data across cloud and AI. After a landmark year driven by record financial performance and growing enterprise AI demand, CEO George Kurian believes data, not chips, will define the winners of the AI era.
When we last spoke, which was about 3 years ago, it was all about the cloud. And now it's all about AI. What do you make of this massive transformation and shift that's taking place?
I think it's built on the foundation of large-scale digital technology being available with an important couple of other ingredients. One is sophisticated computer models, and of course, the ability to harness the power of large amounts of data, which is where we come.
Your thesis on data being at the center of everything is proving right today.
Thank you. Yes. We've long held the view that in addition to talent and understanding your business or your clients deeply, data becomes the competitive moat of an industry. You know, everybody has access to the same chips, everybody has access to the same models, and the models themselves are largely trained on the same data. And so your ability as an organization to deeply understand your business, your clients and employees using your data becomes the competitive moat.
So that is the competitive moat, as you point out. But I want to understand from you, it's been what, a little over 10 years for you here at NetApp. Right. So you've seen many cycles. What is specific to this particular wave that we are seeing, the AI wave that everybody wants to get on top of? What is different this time around?
I think it has the promise of a platform shift in a broad sense. Certain industries are already experiencing that, digitally intensive industries. I think for that to become a reality, the technology has to prove out its promise. I think, the organizations that use the technology need to have an understanding of how the technology works. It can't just be a black box. Yeah. And you need to be able to change the way people and businesses fundamentally operate. So lots of promise, but lots of work to do.
I started by saying that you had a landmark year. How do you build on that? How do you top on that? Because you've had a record-breaking quarter in many ways.
I think it starts with strategic clarity, which is what can you do and be the best in the world at? And that gives you the clarity of understanding, the humility to rethink your ecosystem so that you can build complementary capabilities and serve your customers really well. I think the second is customer centricity. To be able to help clients, you also have to understand how to use the technology yourself. And then the third is culture. We have a belief that whenever there's a transformation, that you have to understand its relevance to your business.
Yeah.
And if it is relevant, then you want to lean into it and encourage adoption. And I think in that case, trust beats policy all day long. It's much easier to have a workforce that you can trust and that loves our company and wants to do right for the company. And it encourages use and adoption versus having a big policy manual of to-dos, what to do and what.
So there is no big policy manual of a long to-do list?
No.
No? And what has it done in terms of workforce and workflow for you inside NetApp?
I think we have two perspectives on that. The first is, we're trying to build an enduring institution. And I think at the fundamental heart of every institution and professional organizations is this idea of apprenticeship. And in this case, we actually really believe in bringing young talent to the company because they will be the future generations. And in some ways, what has been interesting is the mentorship in this case has been reversed. The new talent is much more facile with the technology than the more senior talent. And so it's really encouraging and interesting to see the new generations teaching the older ones how to use it. And so that's one view. It's sort of a long-term view of the talent pipeline and the opportunities there. And then the second is you need to be able to get people to think about the skills needed now that they have these powerful tools. So for example, it used to be in software development, the idea was that, the entry-level person would write code and then would have a more senior person teach them how to review code. Now you've got an agent writing the code for you, and as an entry-level employee, you have to be able to learn how to review the code. So you have to upskill people. And then once you do that, you can see enormous power. The third thing we have done is to really measure business outcomes rather than just usage. So, in software development, for example, rather than look at naive indicators like token use, we're actually seeing, hey, are people able to deliver better, higher quality code to the system? In customer support, we're measuring do our customers actually get the information they need better, faster, easier?
It's interesting that you talk about bringing young people in and how young people are a lot more agile with this technology particularly and understanding it and using it. But what does all of this now mean as far as the workforce is concerned from a jobs point of view? And I think that is what is causing a great degree of anxiety at this point in time. I mean, if you've looked at the graduating ceremonies and what's going on with tech CEOs and the kind of backlash that we're seeing at this point in time, how do you respond to that? What do you believe the workforce of the future is going to look like if we do have this hybrid model where digital labor and human labor will coexist?
I think there are broad implications, and I think it begins with having a deep understanding of the technology itself. Aristotle says the most dangerous thing is the illusion of knowledge.
Yes.
And today, I think broadly based, including the tech industry, we have an illusion of how this technology works and learns and understands itself. So we've got to be able to get a lot deeper in terms of truly understanding where it is useful and where it's not. I think the second is, as a member of the technology industry, we haven't always gotten it right. I think social media, remote working have been examples where the tech industry sort of highlighted the promise of something that had downstream consequences of, very negative consequences, right? Mental health and all of these other negative consequences of those technologies. And so we need to be more balanced in our view. And then I think thirdly, you've got to make sure that we cross the digital divide. This is where, particularly in India, there is an opportunity for India to lead the world, where I really believe the application of this technology to make available affordable healthcare or better food security or mitigate catastrophic risks from happening is perhaps more important than gloating about how powerful the technology is. And I think we have a responsibility to make sure that the next generation doesn't feel as much despair as they feel right now.
One of the other things that I think is now sort of becoming part of conversations is the fact that you need partners. You need to create an ecosystem. It cannot be one individual company or a few companies that are going to drive this and lead this, or it should not be left to a few companies to drive and lead this. How do you respond to that? And do you believe that will policy or regulation force the ecosystem, or is enlightened self-interest going to force this ecosystem to collaborate much more?
We've been in the data center business for a long time, and data centers are multi-vendor, and we've believed always that it's better to harness the power of collaboration and community to build a better outcome for clients. I think that's true across the globe. And I think that, it probably requires a combination of regulation to protect against some of the risks, but also enlightened self-interest. Platforms are better when more people contribute to the value of the platform than a single controlling individual.
So, speaking of partnerships, I mean, you've done a bunch of them through the course of this year, including with Google Cloud, Nutanix, and a whole bunch of other companies as well. What's exciting at this point in time? You've got a pretty solid pipeline of launches. You've launched many products as well. What's happening on the innovation engine that has you excited?
I think it's really to help our clients use their data and to be able to deliver amazing outcomes. We've been fortunate, for example, to work with the European Space Agency to map the universe, right? And I think that that work does not happen alone with us. It certainly starts with the knowledge and insight of our clients, but also the partnerships that we strike with other organizations to be able to deliver amazing breakthroughs. And I think that for us, the importance of partnerships are because it allows us to bring the world's best capabilities that we have, but also to work with other industry leaders. And the joint work brings a much better outcome.
Been very bullish on the Indian market, but how has India changed for NetApp since we last spoke, which was about 3 years ago?
In multiple ways. Certainly we've always believed in the talent in India. We have our largest development center, which is now close to 4,000 employees.
And you think that will continue to be the case? Because everyone's talking about, the agentification of the workforce, and that would probably lead to less hiring or maybe not so much offshore work. How do you respond to that?
We think India is a great place for talent, and we are increasing our employee population there. We have highly skilled employees, and so they will be a cornerstone of our research and development organization for many, many years to come.
Okay.
I think the second is we're working with the innovation ecosystem in India, both through our accelerator program, which has been very successful. It's one of the top 10 accelerator programs in the country, and we've seen both women-owned businesses as well as other innovative startups kind of learn and benefit from our experience. And so that's a contribution to the innovation ecosystem. Plus, we're working with NASSCOM around how to enhance digital literacy. And then certainly we've been privileged to work with large public institutions as well as commercial institutions to help bring capabilities to the Indian population. I think that some of the large digital and mobile platforms, certainly many of the largest government agencies and the large banks and financial services institutions.
So given the opportunity, where does India figure? I mean, outside of being an incubator of innovation as well as a talent hub for you, in terms of growth in the market, where does India stack up?
We see it as one of the fastest growing IT markets in the world. We are fortunate to be the #1 share player in our segment of that market, and we are bullish. We are expanding our investments there. We are working with the local ecosystem in addition to the global ecosystem. So we're excited to be in India.
You said you're expanding your investments. Is there a number that you can share with us in terms of what we can expect?
We've grown our investment in India across all of our functions, and we'll continue to grow that. Over the last several years, we have steadily grown and outpaced the overall pace of investment in the company.
One of the other factors that's weighing on decisions at this point in time is geopolitics. And I think, sovereignty and what that means as far as AI is concerned is gathering momentum. And I don't think there are easy answers. There is a complex problem. How do you look at that issue today? And what will NetApp do when it comes to issues like sovereignty? Do you see that as an opportunity for you?
Yeah, I think, first of all, we are hopeful that there is a uniform sort of commercial and regulatory framework for AI. We think that having a harmonious framework across the countries and across the globe makes it easier for everybody to build safer technologies while continue to bring innovation. And I think there's still work to be done there. With regard to, kind of the fundamentals of how we see the ability to foster sovereignty, I think there's certainly multiple elements to that. There's data residency, which is foundational. We have done that in so many organizations around the world, and part of the partnership with Google Distributed Cloud, for example, is to facilitate data residency without having some of the concerns about, kind of my data crossing national boundaries. The second is we have tools that allow organizations to be able to go beyond data residency to maintain data sovereignty, which is the ability to use the data alongside the innovations that are being available, global set of innovations, but to use the data in compliance with national mandates. And then over time, by contributing to the ecosystem in countries like India, we think that you can bring more technologies to the world. Today, if you think about the AI ecosystem, it's primarily led by 1 or 2 countries. And I think over time, for sovereignty to become possible, you need to be able to have more countries have, kind of supply chain independence for these technologies, and we're part of helping make that happen.
Supply chain independence is a great point, but speaking of countries benefiting and also creating their own competitive moat, what will India's competitive moat be in an AI era?
I think India's greatest contribution to the world in AI is actually to lead the world in the applications of AI. You have a young population, you have a large amount of data that can be harnessed because of the role the government can play in fostering that. You have innovative, entrepreneurial, digitally savvy innovators. And I think that my hope is that India leads the world in that, making it affordable, making responsible AI be able to reach a large population. And by doing so, you can teach the world.
Will that be enough? Because the question being asked is, if you're not playing across that 5-layer cake, AI cake, will you be out of the race?
I think different countries in the world are adapting AI to their national strategies, right? So I think when you look beyond the technology itself, I think you can build a competitive moat, for example, by using AI to be the best in the world at advanced manufacturing, or using AI to build the most cost-effective pharmaceuticals. And so when you think beyond the technology industry, I think the way that you build a competitive moat is to lead the world in specific industrial applications of the technology.
So, since we're talking about the future, 10 years on, what are you most excited about now as far as NetApp is concerned, and how different do you believe NetApp is going to look in the next 5 years as you grapple with all of the stuff that AI is bringing to the table?
I think, for me, what's been encouraging is that at NetApp, we have believed in one or two long-term theses, which is that we want to help our clients harness the power of their data to unleash the competitive advantage, the innovative possibilities for their business. And that has been true over the 30-year history of the company, and especially true now.
Yeah.
I think the second is we have navigated major platform shifts and have taught the company how to lean into those shifts without fear or without the pride that comes from having succeeded in one era. And navigating the first one successfully, which is cloud, gives you the confidence that you can do more. And I think that my hope for NetApp is that, looking 10 years out, that we continue to be an organization that helps our client harness the possibilities of whatever next technology shift there is, but also be seen as a player that knows how to work with the ecosystem, is best in the world at doing something, and has the confidence, the quiet confidence, that when technology transformations or platform shifts happen, that we can lean into it and be successful.
From your origin story, or where you started coming to the US, for a young founder or a young CEO who's watching you today, what's the message that you'd like to send out?
I think that you need to be willing to learn and adapt to the environment you're in. When I came to the US, the kind of social environment in the US was far more different than India. The development gap was wide. And so I learned to adapt. I learned to respect what America was all about, but also to keep connected with my roots, and what made me the person I was. I think that you want to learn from the people around you. I was fortunate to learn from the people around me, and I think that you want to know that many people paved the path for you. And what that does is it brings respect and gratitude when you're successful, and conversely prevents you from being totally down on yourself when things don't work out, because you know that it's not just about you, that there's an ecosystem around you that made you who you are.
Well, speaking of your roots, how often at tech conferences are you asked about Google Cloud?
Quite often.
Really?
And I would point out that the Google relationship started before my brother got there and will endure after me or he leaves our current roles.
What is it like to have your twin doing exactly what you're doing in a different company? I mean, it's probably, is there any other combination? I don't know of any.
I'm not sure. I think it's an honor to work in the roles that we have. And I think that, there's a sort of a mirror transformation that we are dealing with. We are trying to take NetApp and make it a cloud and AI company. And Thomas is trying to take a cloud and AI company and make it an enterprise business. And so we share notes about what's involved in allowing organizations and enabling them to make that cultural shift.
Yes, well, it's been an absolute pleasure. Thank you so much for your time, and we look forward to seeing more of you in India, and wish you all the very best with NetApp and all that you've spoken to us about.
Born in Mumbai, Jeetu Patel arrived in the United States as a 19-year-old with little money in his pocket, waiting tables at Sizzler for just $4 an hour. Today, he is one of the most influential Indian origin executives in global technology. After spending over 2 decades building and scaling enterprise software businesses, Patel was appointed President and Chief Product Officer at Cisco in 2025. Under his leadership, Cisco has accelerated its push into artificial intelligence, cybersecurity, and enterprise software, helping drive record-breaking growth in recurring software revenues and AI infrastructure demand. As businesses race to adopt AI, Patel's mandate is clear: transform Cisco